हेलो एवरीवन, गुड मॉर्निंग, गुड आफ्टरनून, गुड इवनिंग टू ऑल ऑफ यू। वेलकम वंस अगेन टू दिस लाइव एनालिसिस। स्टार्ट करते हैं आज का सेशन। क्रूड ऑयल को देखोगे, कल साइडवेज चला गया था क्लोजिंग बेसिस पे, अभी फिर से साइडवेज है। 2-3 दिनों से देखोगे रेंज बाउंड ही चल रहा है, मार्केट मोमेंटम में नहीं है। नेचुरल गैस कल सेल ऑफ में आया था, इन्वेंट्री बेरिश आई, उसके बाद फिर वापस से आज बेरिश ही है। अभी मॉर्निंग ओपनिंग के बाद देखोगे जस्ट ओपन हुआ और थोड़ा बहुत सेल ऑफ कंटिन्यू कर रहा है। तो प्रॉफिट बुकिंग कंटिन्यू है। थोड़ा बहुत मोमेंटम अपसाइड जरूर आया था, बट नाउ इट इज अगेन सेल ऑफ इन कंडीशन। निफ्टी, बैंक निफ्टी जबरदस्त कह सकते हो, मोमेंटम में है। कल एक बॉटम बनाया था, थोड़ी बहुत बाइंग आई थी, फिर प्रॉफिट बुकिंग आई हाई लेवल से, बट अगेन मार्केट ऑन फायर। ऊपर जाता है। देखो बैंक निफ्टी फ्यूचर में एक रेजिस्टेंस है, क्योंकि गैप अप हुआ है। ऑप्शन नहीं मिला बाइंग का डायरेक्टली 15 मिनट में। ऊपर 26,100 टू 26,130 के अराउंड एक रेजिस्टेंस देखने के लिए मिलेगा। नीचे आता है तो कल का जो लास्ट स्विंग एरिया था 25,900 टू 25,850, दैट विल बी अ नाउ मेजर सपोर्ट एरिया। सो लेट्स सी, थोड़ा सा ऊपर जाता है तो एक सेलिंग का प्लान करना 26,100 टू 130 के बीच में। दैट विल बी मेजर लेवल। अगर इसके ऊपर निकला तो फिर वापस ऑल टाइम हाई जा सकता है। यहाँ से अगर रिजेक्शन मिला तो फिर नीचे के सपोर्ट ब्रेक होने के चांसेस बढ़ेंगे। ये याद रखना, क्रूड ऑयल में जो फ्यूचर का चार्ट आप यूज़ कर रहे हो, नेक्स्ट मंथ का यूज़ करना, बिकॉज एक्सपायरी ऑलरेडी हो चुकी है फ्यूचर की, ऑप्शन की। तो वॉल्यूम थोड़ा सा नेक्स्ट मंथ के चार्ट में ज़्यादा देखने के लिए मिलेगा एज कम्पेयर टू करंट मंथ फ्यूचर चार्ट। ठीक है। तो क्रूड ऑयल जो ऑप्शन ट्रेड कर रहे हैं वो तो जनवरी का ही ट्रेड कर रहे होगे, जनवरी का ही हम ट्रेड कर रहे हैं। बट जो क्रूड ऑयल का फ्यूचर है वो भी जनवरी का ही आप यूज़ करना। ठीक है। प्राइस 5071-72 जो आपके सामने है, वही सेम ही चार्ट है आपका। एक बार लेवल थोड़ा सा अपडेट कर लेते हैं नेचुरल गैस में पहले। नेचुरल गैस में से देखोगे तो दिसंबर का ही अभी एक्सपायरी है करंट मंथ की। थर्ड ऑफ दिसंबर को एक्सपायरी होगी ऑप्शन को, 26 दिसंबर को फ्यूचर की एक्सपायरी होगी, तो इसमें तो अभी टाइम है, कुछ दिन बचे हुए हैं एक्सपायरी में राइट नाउ। निफ्टी में देखना अगर ऊपर आता है तो, वैसे अपॉर्चुनिटी मिली नहीं है, गैप अप हुआ है बिकॉज नीचे दोनों ऊपर सपोर्ट रेजिस्टेंस मेजर हैं इसमें अब फिलहाल। नेचुरल गैस में ही देख सकते हैं। कल एक रेजिस्टेंस को हिट किया था, उसके बाद से ऐसा फॉल किया लाइक ऑलमोस्ट नो लेवल स्टॉपिंग दिस नेचुरल गैस। लास्ट जो स्विंग था उसके भी नीचे निकल गया ऑलमोस्ट, नीचे के लग रहा है सारे गैप पे एक साथ ही अब फिल होंगे। लास्ट गैप तो लास्ट टाइम फिल हो गया था ऑलरेडी, अब नीचे है, काफी नीचे गैप पड़ा हुआ है 330 के अराउंड। तो नीचे आता है तो बाइंग करेंगे, इसमें 340 के अराउंड ही सपोर्ट दिख रहा है, वहां पर अगर आता है 340 के अप्रोक्सीमेटली, दैट विल बी अ एरिया फॉर बाइंग राइट नाउ। वो ये नेचुरल गैस ने एक सपोर्ट ही ब्रेक कर दिया, काफ़ी स्ट्रॉन्ग सपोर्ट। तो इसमें एक रीटेस्ट भी बन सकता है अगर ये वापस रीटेस्ट करने आता है। सपोर्ट भी ब्रेक हो गया, स्ट्रॉन्ग सपोर्ट है। एक स्ट्रॉन्ग बाइंग दो बार देखने के लिए मिली थी। कल क्लोजिंग बेसिस पे भी थोड़ा बहुत रुकने की कोशिश जरूर करी इसने, रुका नहीं, बट अभी अर्ली मॉर्निंग ब्रेकडाउन हो गया इसका। लग रहा है ज़्यादा ही बेरिस हो गया क्रूड, नेचुरल गैस। ठीक है, तो ये एक रीटेस्ट जोन भी है इसमें अब। अगर ये रीटेस्ट करने आता है तो सेल करेंगे, नहीं तो नीचे आएगा डायरेक्टली तो एक सपोर्ट एरिया से बाई करेंगे। ठीक है, रीटेस्ट के लिए आ रहा है तो रीटेस्ट पे ही ट्राई करेंगे पहले। नीचे डायरेक्टली आता तो बढ़िया था, रीटेस्ट स्ट्रॉन्ग रहता। अगर पहले रीटेस्ट कर दिया इसका मतलब फिर बाद में रीटेस्ट के ब्रेक होने के चांसेस रहेंगे। दोनों ही चीज़ें सही हैं। हल्का सा पुल बैक सेलिंग प्लान हो सकती है। बाकी डायरेक्टली नीचे आता है तो फिर बाइंग का एरिया नीचे है ही, वहां से बाइंग का प्लान रहेगा। तो 4 आवर टाइम फ्रेम पे भी है ना निफ्टी में। ठीक है, नीचे भी नेचुरल गैस में देखोगे ठीक ठाक ही सपोर्ट है। बाकी मेजर रेजिस्टेंस तो अब कल का ही है, वो हाई, दैट विल बी अ मेजर रेजिस्टेंस, स्टिल अ मेजर रेजिस्टेंस। कल मुझे लग रहा है शायद थोड़ा बहुत उसने फेक ब्रेकआउट करने की कोशिश करी है हायर टाइम फ्रेम पे, तो नाउ इट पुल बैक फ्रॉम दैट लेवल, सो इट इज स्टिल रेजिस्टेंस एरिया। बाकी लोअर एंड पे सपोर्ट अच्छा है मेरे अकॉर्डिंग, थोड़ा पुल बैक आना चाहिए अब 15 मिनट टाइम फ्रेम के अकॉर्डिंग। अभी भी नहीं आया नेचुरल गैस रीटेस्ट पे, देखते हैं रीटेस्ट पे पहले आता है सब। वे नेचुरल गैस थोड़ा साइडवेज हो गया, ब्रेकडाउन जरूर दिया है, थोड़ा ऊपर आएगा, यहाँ से सेलिंग का प्लान करेंगे। नीचे आता है तो फिर यहाँ से एक बाइंग का प्लान रहेगा। इन दो लेवल को थोड़ा सा ध्यान में रखना। इसको थोड़ा सा ना अपडेट कर देते हैं, ये लेवल थोड़ा सा इसकी जरूरत नहीं है। यहाँ पर 4 आवर टाइम फ्रेम का भी सपोर्ट है, आप ये मान के चलो। इंट्राडे में है ही सपोर्ट, 4 आवर का भी सपोर्ट है। अगर यहाँ तक प्राइस फॉल करता है तो अच्छी बाइंग आनी चाहिए लॉजिकली। ध्यान रखना, ये हो सकता है ऊपर जाने से पहले नीचे भी आ सकता है। नीचे आया तो बाइंग का प्लान कर लेंगे। बोर्ड ब्रेक डाउन हुआ है कल का, तो रिटेस्ट है वहाँ पे।
Bloomberg Daybreak is your best way to get informed first thing in the morning, right in your podcast feed. Hi, I'm Karen Moscow.
And I'm Nathan Hager. Each morning, we're up early putting together the latest episode of Bloomberg Daybreak U.S. Edition. It's your daily 15-minute podcast on the latest in global news, politics, and international relations.
Listen to the Bloomberg Daybreak U.S. Edition podcast each morning for the stories that matter with the context you need.
Find us on Apple, Spotify, or anywhere you listen.
News when you want it with Bloomberg News Now. I'm Doug Krisner. And we begin in New England, where officials say the man suspected of killing two students at Brown University has been found dead in a storage facility in Salem, New Hampshire. Authorities say he took his own life. The man is also suspected of killing an MIT professor in his Boston area home. The man has been identified as Claudio Neves Valente. He is a 48-year-old Portuguese national. He's also a former Brown graduate student. Here is Leah Foley, the U.S. Attorney in Massachusetts.
So investigators identified the vehicle that he had rented in Boston and then drove to Rhode Island. And he was seen, the vehicle was seen outside of Brown, and there was security footage that showed a person who resembled him. There was financial investigations that were going on in the background that linked him not only to that car, but also to the hotels that he had rented and the car that he had used to not only drive to Rhode Island, but then back to Boston.
That's Leah Foley, the U.S. Attorney in Massachusetts. TikTok has signed binding agreements to create a U.S. joint venture majority owned by American investors. According to an internal memo reviewed by Bloomberg, CEO Shou Chew said agreements with Oracle, Silver Lake, and MGX have been signed. Now, this U.S. joint venture will operate as an independent entity. Here is Bloomberg's Mike Shepard.
The idea is that it would be a copy leased from ByteDance, but then retrained to some degree or another by Oracle and also walled off in a way. They would create some sort of a security firewall or barrier that would keep ByteDance from ever gaining access to U.S. data or to the algorithm itself out of concerns that there could be some manipulation.
That is Bloomberg's Mike Shepard. After the bell, Nike reported more weakness in the Chinese market as well as in its Converse brand, and these negatives offset higher than expected revenue for the latest quarter. Here is Poonam Goyal, senior retail analyst at Bloomberg Intelligence.
When we talk about China, I think it's going to take some time. We may not see anything in their fiscal 2026, likely a 2027, 2028 initiative. On the Converse side, getting Converse right is important, but I really think what's more important right now is getting China right. So if I had them focus on one thing right now, it would be how do you fix China?
That was Poonam Goyal from Bloomberg Intelligence. Shares in Nike were down by more than 10% in late U.S. trading. FedEx reported adjusted EPS for the latest quarter above estimates, and the company raised the low end of its outlook for both full-year profit and sales. FedEx is expecting sales to rise in the new year between 5 to 6%. Here is Bloomberg analyst Lee Klaskow.
Obviously, a beat is always better than a miss, so I think that's obviously some good news. It looks like the margins came in a lot better than what expectations were, about 80 basis points better than consensus. Overall, it looks like a very good print for the company, especially given the challenging environment, whether it's them grounding the MD-11s or the end of the de minimis exemptions. Looks like they're working through that through their restructuring programs.
That is Bloomberg's Lee Klaskow. Now, FedEx is also estimating that restructuring plan will produce $1 billion in permanent cost reductions in 2026. Shares in FedEx were up by more than 2% in late U.S. trading. Coinbase Global is suing 3 states over their attempt to regulate prediction markets. The states are Michigan, Illinois, and Connecticut. Now, state agencies and casinos want the authority over prediction markets to rest with states and their respective gambling laws. However, Coinbase will ask for court orders affirming that the states cannot interfere with the Commodity Futures Trading Commission's exclusive jurisdiction over prediction markets granted by Congress. The European Union has agreed to provide a loan to Ukraine of 90 billion euros for the next 2 years. Now, the aim is to strengthen Kyiv's hand and to keep Ukraine afloat. This loan will be backed by the EU's budget. President Trump has signed an executive order to accelerate loosening of restrictions on marijuana, but the president did stop short of legalizing it. Currently, marijuana is labeled as a Schedule I drug, the government's most restrictive class, alongside substances such as heroin and LSD. Well, now the Justice Department has been instructed to begin the steps to shift cannabis to Schedule III. That's a tier reserved for drugs with accepted medical uses and lower potential for abuse. Here is President Trump.
The facts compel the federal government to recognize that marijuana can be legitimate in terms of medical applications when carefully administered in some cases. This may include the use as a substitute for addictive and potentially lethal opioid painkillers.
Now, the president went on to say this move also makes it easier to conduct more research using cannabis. Also today, President Trump signed an executive order giving federal employees days off on Christmas Eve and December 26th. However, both the New York Stock Exchange and the NASDAQ will not alter their trading schedules for those days. The Department of Health and Human Services is taking actions to block access to gender-affirming care for minors. The proposal includes cutting off federal Medicaid and Medicare funding for hospitals that provide gender-affirming care to children, and it would prohibit Medicare dollars from being used to fund those procedures. Here is Health and Human Services Secretary Robert F. Kennedy, Jr.
So-called gender-affirming care has inflicted lasting physical and psychological damage on vulnerable young people. This is not medicine, it is malpractice.
HHS Secretary Robert F. Kennedy, Jr. And that is news when you want it with Bloomberg News Now. I'm Doug Krisner, and this is Bloomberg.
This is Scarlett Fu.
And I'm Paul Sweeney, inviting you to join us for the Bloomberg Intelligence Podcast.
Every day, we harness the power of Bloomberg Intelligence to bring you deep dives into the companies that are moving markets, from publicly traded companies like Apple to those that are privately owned but known by everyone on Earth, like OpenAI.
Now, I helped to build Bloomberg Intelligence to what it is today, Scarlett, and now our analysts are the best in the world, covering more than 2,000 global companies.
That is your legacy, Paul, and we speak to those in-house experts every day. They are Bloomberg's go-to authorities on sectors, companies, and legal processes.
And we do it all live each weekday, then bring you the best conversations in our daily podcast.
So be sure to search for Bloomberg Intelligence on YouTube, Apple, Spotify, or anywhere else you listen.
Listen in the afternoons on your way home from work to catch up on the market news you missed during the business day.
That is the Bloomberg Intelligence Podcast. I'm Scarlett Fu.
And I'm Paul Sweeney. Subscribe today wherever you get your podcasts.
This is Tom Keene, inviting you to join me for the Bloomberg Surveillance Podcast. It's about making you smarter each and every business day. We bring you a recap of what happened overnight in Europe and Asia, the day's economic data, and complete coverage of the U.S. market open. We cover stocks, bonds, commodities, currencies, even crypto, all the information you need to excel.
Because the consumer is real well anchored to the labor market, but it also is the source of that maybe secondary rate cut that they're looking for early next year. So they're looking for two different things coming out of the labor market, but the inflation data today may change that story.
And it would be the first inflation read since September, and we aren't going to get month-over-month inflation reads because guess what? The government was shut down and we don't have that comp. In the meantime, looking for optimism, getting a little bit of a lift from Micron shares after they reported earnings that had a very different tone than what we saw from the likes of Broadcom or Oracle, talking about how demand is just so far outstripping supplies that essentially they can raise prices, which is why you're seeing those shares up almost 11%, a massive beat. Can this turn around some of the AI sentiment?
It speaks to just the narrative whiplash that we've had on AI, that one day we're worried about data center fundings and the next day there are shortages when it comes to chips. If anything, though, Micron just highlights it's still the picks and shovel trade, which is working so well. We've really tried to broaden out, be it with the hyperscalers, be it with maybe software plays that can benefit. That has been really volatile. What has worked are these companies who are saying there's still a shortage and prices are elastic because of that. So we're going to bring in a whole lot of cash.
So how much comfort can we get from this? Right now in markets, we do see a little bit of a lift. Futures higher. Let's try this again to snap a 4-day losing streak. Although we did this yesterday and we did this the day before, up 0.4% ahead of the open on S&P futures. That euro dollar cross 117. And you do see yields markedly inward, Maybe this will give some people a feeling of confidence as they await that sort of push-pull between jobs and inflation. 10-year yields at 4.13%. Coming up this hour, Beata Manthe of Citigroup as stocks look to find their footing. Henrietta Trey's of Veda Partners as President Trump defends the U.S. economy. And Terry Wiseman of Macquarie with a trio of global central bank decisions ahead. We begin this hour, stocks trying to climb higher as investors await the latest inflation data. Beata Manthe of Citigroup remaining constructive on equities in 2026, but writing volatility could remain elevated amid continued reassessment of the AI theme, cracks in the United States soft landing, and demanding valuations, which could cap upside. Beata joins us now. Beata, thank you so much for being with us. There was a new survey from Deutsche Bank talking about the risks ahead into 2026. The overwhelming consensus is that AI valuations and a potential popping of some of those elevated expectations is the biggest risk heading into next year. Do you agree?
Good morning. There are many risks, but as you've read out in our report, it is on the top of our risk list. Definitely, what high valuations make to stock market prices, they make them more volatile and more vulnerable to any news flow. And as you've discussed before, the news flow on the AI story will remain volatile as well. So it's going to be a fight between good and bad news.
At this point, this is a reason why I think some people are saying, okay, what are we missing? Because ultimately, if there is such a consensus in one thing that usually makes people nervous, what is the thing people are not watching that could be a major market driver into 2026, whether it's a shift away from AI, whether it's a shift away from the United States?
So our view is that consensus is for over delivery of earnings, and that's how the market is priced in. So we have that model that is trying to capture what kind of EPS outlook is priced in by the stock market. And I have to say, across all the major markets around the world, all the equity indices are priced for over delivery of earnings. So the pressure is on for earnings not only to deliver according to analyst forecasts. Actually, the expectation is for them to go higher.
Not just earnings, Beata, but what about margins? There were two stories yesterday. One, General Mills saying that they were lowering the price of products among 2/3 of their products in North America. Then there was Lennar, the home builder, saying that they've had to cut costs and offer incentives to get Americans to buy housing too. Beata, are we going to start to see some serious margin pressure materialize next year?
We haven't seen too much happening yet. And where I sit in Europe, actually, in the year when tariffs have hit, we actually have not seen too many margin pressures yet. Where it could come from, of course, is the issue of the tariffs on the US companies. So the fear beforehand has been that we would have double whammy here in Europe through strong FX and also tariff hit, i.e. exporters paying for tariffs. Now we know, it's evident in the data, that tariffs are being paid by the importer side. And for now, 70% of these tariffs in the US is paid by the corporate side and 30% for the consumer. So if that continues on certain parts of the equity market, you could have some margin pressures. But overall, when you, and I'm quoting here our US strategist, Scott Croner, when you look at the composition of S&P, the margin, the companies that could have margin pressures are not the majority, and they are not the huge market caps, right?
And this comes back to AI, right, Beata? Because that's what's been driving this market. But their business models have also changed. They're not asset light anymore. They're taking out a lot of debt. Their cash flow has been substantially lowered. And in the case of Oracle, it's turned into a cash burn. Should these big tech companies get the same valuations? If you are analyzing high valuations, the justification came from the fact that they were asset light. Do we need to completely rethink how we model out the valuations and earnings of these companies?
You could have arguments for both ways. That the valuations are too high, they should come down, but because of the arguments that you've just enumerated. However, an argument for continuation of seeing high valuations could be the fact that actually, when you look at valuations, what do they have in them? They only have 12 months forward EPS, right? For these mega themes, structural or themes like AI, perhaps it is justifiable to price in more than just 12 months forward EPS, and actually it should be right.
Good morning. With AI being a huge driver of the equities globally, how important is the consumer and the consumer resilience going into 2026 in your outlook for the markets?
It is always very important. And of course, in the US, you could have some pressure. So our view is, the view of our economists is that there is more softness in the labor market in the US that it's seen at the top level. This is why our economists have 2 consecutive cuts coming into the next year out of the Fed. When it comes to the consumer elsewhere in the world, in Europe, for example, where I sit, the consumer has been weaker and subdued. However, we have huge amount of savings in the bank accounts right now. Now, there'll be different drivers of the economic activity in different parts of the world. In Europe, actually, Europe is becoming, the growth in Europe is becoming more investment driven. So we have a huge fiscal stimulus going on. That's going to drive the growth, perhaps not so much consumer itself in the first line. It's more the government investments, and then consumer could come along later on. So very different drivers of growth between different parts of the world, I would say. But overall, still resilient growth when you add it all together.
Beata Manthi of Citigroup, thank you so much. And Beata is talking about the potential for fiscal stimulus over in Europe when Germany announced that will increase federal debt sales by a fifth next year to about $601 billion. So it just highlights how the drivers of growth are changing. In the United States, it's both the consumer being strong, but also this idea that we might get fiscal, as we heard last night, 1776, as well as potentially monetary policy easing. How much, does that really support the outlook for the consumer, Neil, at a time where the real existential questions about the fundamental labor market?
Enter a new actor in 2026, fiscal spending. We saw fiscal contraction in 2025, especially with all the Doge cuts. Imagine investment not only in the U.S., but in Europe, in which it leads to more hiring, more capital spending. It could be quite stimulative. And we have the infrastructure projects in need of that kind of investment, not just AI, but physical infrastructure. So it could lead to a boom in some ways.
I think the fly in the ointment in that, though, is does the bond market finally start caring again? Scott Lincecum of Cato Institute pointed out that with the most recent checks that Trump wants to issue that he talked about last night to military families, that's the 10th thing he said that he would fund with tariffs. This is a market that started to treat tariffs as something that can help the deficit. What happens if you get that fiscal spending and it's taken at the cost of the money that supposedly is coming in? And if the bond market starts to care, does that just tighten conditions and act against everything that they're trying to do?
Frankly, we've seen this already, right? The idea of a steepening yield curve. Some people say that it's just beginning. And this is the reason why, even if the Fed cuts rates significantly, it's not necessarily going to be that stimulative just because you are not seeing long-term yields go down in the same kind of way. We're going to get to that in just a second, in particular with that 1776 10th thing, as Scott Lincecum said, that has been promised with tariff checks. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Good morning, Lisa. Calls are growing for the EU to approve a massive loan to Ukraine backed by frozen Russian assets without the support of Belgium. Kyiv's finances are likely to run out in a matter of months without the boost. Meanwhile, U.S. and Russian officials are set to meet in Miami this weekend for continuing talks on a peace plan. Meanwhile, Micron shares are jumping more than 11% in the pre-market after blowing past estimates for the first quarter and posting better than expected revenue guidance. The semiconductor manufacturer is expecting second quarter earnings to be nearly 80% higher than consensus estimates as the firm benefits from the relentless demand for memory chips used in data centers. And oil giant BP has appointed Meg O'Neill as its next CEO. O'Neill comes to the company as an outsider, leaving Woodside Energy Group after previously working at ExxonMobil for 2 decades. She's the first female CEO for any big oil company and replaces Murray Auchincloss, who served in the role for just 2 years. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahira. Up next, President Trump's economy.
We're bringing our economy back from the brink of ruin. Wages are rising much faster than inflation. There are more people working today than at any time in American history.
Henrietta Trey's Aveda Partners joined us next as we look to that speech. What could potentially get fulfilled in the increasing slate of promises? This is Bloomberg Surveillance.
There's a very big difference between AI-enabled content and AI-originated content. Those are two completely different things.
Renewable energy is the only path to a future prosperity. Renewable energy is creating foundation for a renewable civilization. We just cannot put our civilization under limited fossil fuel resources. Renewable energy is everywhere. It's almost zero cost. It is unlimited and renewable.
This is supposed to be a happy time of month where all stocks gain and everybody feels good as they go off to vacation. We're not seeing that. We've had 4 straight days of losses. The losses are mounting for the month, almost down to a decline of 3% for the NASDAQ. This morning, we're going to try again to turn that around, up about 0.5% on S&P futures. The euro-dollar cross seeing a bit of stellar strength coming back into play, but still around that 117 level, and yields in about 2 basis points with the 10-year at 4.13%. Take a look at Micron shares trading in the pre-market. This idea of how much guidance can make a different kind of picture for different tech giants. Broadcom, Oracle, the shares fell after their earnings. Micron shares up 11.3% after this comment from a senior executive. This is the most significant disconnect, Annie, between demand and supply in terms of magnitude as well as time horizon that we've experienced in my 25 years in the industry.
So all those people in that Deutsche Bank survey that were worried about AI being overhyped as the biggest risk for 2026, here's evidence that it's not, that there is so much demand that there is shortage. An interesting turn to this, I think the Wall Street Journal laid it out this morning, that, we talk about the competition for energy assets. This is competition for memory chips. These are also things that go in smartphones and PCs. The threat could be that because all of that is getting routed to AI data spend, what if consumers have to pay more for PCs or smartphones just because of the prices that Micron can now command?
Yeah, they're different bubbles, and they're different ones inflating at different times, and maybe you need to pay attention to which one is the most pernicious. Under surveillance this morning, the focus turns very much to Washington, D.C., President Trump's economy.
We're bringing our economy back from the brink of ruin. Wages are rising much faster than inflation. There are more people working today than at any time in American history. 1,450,000 military service members will receive a special, we call Warrior Dividend before Christmas. I'm also taking on the gigantic health insurance companies. I will announce some of the most aggressive housing reform plans in American history.
Here's the latest. President Trump defending his economic record as he looks to reassure Americans about the rising cost of living. Recent polls showing his approval rating slipping near the lowest level of his second term. Bloomberg's Tyler Kendall joins us now. Tyler, what did we learn yesterday, and how much can some of these proposals come to fruition in the near term?
Yeah, hey, Lisa, good morning. Well, perhaps we learned that the White House has really been trying to go on defense when it comes to the issue of affordability, and this does come at a pretty critical time considering that we're about to head in to the midterms last year. Now, as you heard, we heard pretty consistent messaging from the president last night, including that Americans should be feeling better about the economy. Yet at the same time, it also appeared that he was seeking to reassure that the full impacts of his economic policies haven't really kicked in yet, right? We heard him say that the U.S. is poised for an economic boom. He also said that the benefits from the One Big Beautiful Bill haven't fully been baked in, that we'll see that next year. And he also, of course, pointed to a new Fed chair he says will lower rates. Now, one of the biggest new policies announced was that warrior dividend check you heard the president talk about there, that he says will be coming in a matter of weeks and is funded through tariff revenue. The thing is, we didn't really get a lot of other new policy proposals from this White House last night. It really was recounting a lot of what we've seen from this past year. So it's going to be something to really watch closely, including what could be rolled out. The president did preview that we'll get aggressive housing reforms. In his words, that's important because on the campaign trail, he did campaign pretty heavily on the idea of deregulation. And there is reporting that we could see some enhanced housing entitlements for U.S. service members. Lisa, at this point, we were expecting that we could get more when it comes to health care. Of course, the issue that's been dominating the conversation here in Washington. President Trump did outline his opposition to extending the Affordable Care Act premium tax subsidies, saying that this would be a way to lessen the money going to insurance companies, but he didn't ultimately endorse any of the plans that are brewing on Capitol Hill.
Tyler Kendall, thank you so much, as always, for that. Neela Richardson with us for the hour. Neela, what did you make of some of these proposals, given the fact that there is a focus on supporting the labor market, but it's unclear how quickly some of this could really come into play?
Yeah, it's interesting whether or not these proposals come through the consumer or come through business, because they have very different effects. Some of them are quite transitory. If you think about a paycheck, maybe it goes to savings, maybe it goes to a down payment. But when you think about like the AI tech workforce, I mean, investing in skills and technology for people who can create this AI infrastructure and echo chamber that we need to produce productivity is really, really important. So I think there is a whole spectrum. Some of them are really important for the labor market and the future of AI. Some of them could be gone in a moment.
Which raises a question, how much is this throwing spaghetti at the wall and how much is this truly laying out a potential plan from the president? Joining us now, Henrietta Trace, Director of Economic Policy Research at Veda Partners. Henrietta, what was your take from the announcement, the speech last night?
Well, it definitely wasn't about the Christmas decorations. 90% of Americans, according to the latest Fox poll, believe that inflation is the biggest problem facing them. And what's a little bit off-putting is that the president touted a lot of data sets that just are not resonating with American voters or factually accurate. So anybody who's turned on the news this year has seen AI and data centers driving electricity prices up 13% for residential electricity prices nationwide on average. You know, if you tell me that the cost of drugs is dropping by 400%, 500%, 600%, which is what the president said last night, that means you're paying me to take drugs. And you don't have to be that good at math to know that that's not how drugs work. And finally, I would say the $18 trillion investment that he touted from the trade wars that he's launched and the deals that he's reached is outrageous. I mean, this is like China's entire GDP. So you need to put some things in context that American voters can actually take with them to the grocery store. And that's not what we got last night.
Henrietta, just that point, I mentioned this before, that Scott Linsacombe of Cato Institute was talking about the fact that this is the 10th thing that Trump has promised to fund with tariffs. I'm going to be honest, ChatGPT helped me with this list, but I was just looking at some of the things that were promised. The military checks, tariff dividend, farm aid and targeted bailouts, child care, social programs, tax cuts or elimination of income tax, foreign or industrial subsidy funds. Henrietta, I know a lot of those are a wish list, to Lisa's point, versus actual policy. But what happens if he does try to fund some of these with the tariff income? Is that even possible with the amount of money coming in?
I mean, first off, find me the votes. If you can find me 51 votes in the United States Senate for a $450 billion, $2,000 check to the American public, I would love to see it. I can't count you the votes. I can't get you a reconciliation bill. I can't even get you a budget for fiscal year 2026. So the idea of even getting these things through is not realistic. And then the bond market, of course, is counting on this, what CBO estimates is $3 trillion in revenue brought in by these tariffs over a decade. And we've already spent it. We've more than spent it. It's only been $89 billion brought in by the IEEPA tariffs going back to October. So, I mean, the money's just not there and the votes aren't there either.
Henrietta, it's a great point. I also want to get back to one of the other things you just mentioned, too, this idea of the consumer feeling also the affordability pain of what's happening with their electricity prices. We saw the Blue Owl and Oracle deal. Part of the reason it crumbled was because of the politics in Michigan of lawmakers pushing back against tax subsidies. Earlier in the week, we also heard from Bernie Sanders saying that there needs to be a moratorium on building on data centers, partially because of what you're describing with the prices. Is it likely, as affordability becomes a bigger issue, that lawmakers will really start to push back against some of the data center construction and spending that is happening in America?
Yeah, you can see it all over the place in terms of physical pushback. AOC had some tweets about it yesterday. I saw it's definitely a popular talking point. There's not going to be any legislation to prevent it. So this would have to be active, boots on the ground, district led, sort of protests against the construction of new data centers. And they're going to have to conflict that with the, job creation, which in many of these cases is the only job creation that you're seeing in, say, the manufacturing sector. So it's a pretty heavy lift to get something done legislatively, and then certainly to have the protests be maintained in order to actually effectuate those pauses or stoppages.
Henrietta Trey's of Veda Partners, thank you so much for being with us. There is this disconnect right now, and I think a lot of people have highlighted it. There's a disconnect between how people are feeling and what some of the aggregate numbers are showing. And Neela, I would ask you, how do you reconcile that? The idea that we're not seeing the labor market fall off a cliff, but according to sentiment surveys, some people feel like this is the worst labor market that they've seen in their career.
Anecdotal evidence is powerful, especially on Main Street. And when you have kids coming home from college and they can't get jobs and they're living with you, that is the only anecdotal evidence that you need that the labor market isn't functioning in the same way that it used to. And just getting back to data centers, enormously important. There's going to be a lot of job creation in building the data center, but the data center is not a factory. Once it's built, it doesn't produce ongoing labor support for local communities, and there is a risk that it increases electricity prices. So that kind of investment is great in the 3 to 5 year term, but is it going to fuel an economy, a local economy, over the next 20 years? That's the kind of job creation that we're looking for.
You can see the pain with something like in Virginia. Glenn Youngkin, a governor who's come on this program a lot, has touted the huge build out that's been going on in that state. I think that's a great point. What happens when the build out is done and it's not continuing to fuel jobs, but just fueling electricity prices?
Yeah, with some $500 billion in lease payments that some of these companies have promised to pay. We'll be talking about the labor market. We'll be talking about central bank policy and how government and lawmakers respond to this. Coming up, Yahira Anand with your Morning Movers. Micron jumping on an upbeat forecast as we count ahead to a number of rate decisions. This is Bloomberg Surveillance.
There's a very big difference between AI-enabled content and AI-originated content. Those are two completely different things.
Seeing a lift of futures, trying this again one more time, up about 0.5% on S&P futures earlier this morning, keeping those gains. A bigger gain on the NASDAQ after a significant underperformance so far in December, now up 0.8%, largely on Micron, really doing the heavy lifting. Russell 2000 lagging behind with some real questions around the labor market, up 0.3%. If you take a look at the bond space, 2s, 10s, and 30s, a bid into bonds after a kind of motley session led by the front end of the yield curve. The front of the yield curve is pressing down some of the lows that we've seen this year, 3.46%, down 2 basis points on renewed expectations the Fed will cut rates. Is this because of the jawboning of the president? Do you think so? Do you think that he says, well, I want the next Fed chair, it's going to lower rates? Does that actually matter in any way?
Not right now.
But it could. Coming up. Meanwhile, what you'd see in the 30-year space is just now a basis point decline, 4.82%. Honestly, this is going to be a really interesting end of the week, given that we have not gotten inflation data coming out since September. We also get initial jobless claims 3 hours away from the cash open. Here are your morning movers with Yahira Anand. Yahira.
Hi, Lisa. Micron is the golden child this morning, and a market still nervous around AI. Shares are popping nearly 12% in the pre-market after the company blew past estimates, saying that demand is far outstripping supply, giving them major pricing power. And analysts say that memory chip price increases are unlikely to abate in the near term. Meanwhile, taking a look at Lululemon shares also popping 6.8% in the pre-market on hopes that Elliott management can help spark a turnaround. That's because it built a stake of more than $1 billion in the struggling retailer. And we're reporting that it is said to be working with Jane Nielsen, a former executive over at Ralph Lauren, to try and spark this turnaround. And she is viewed as a potential CEO candidate. And we end on Instacart. Those shares are falling 6.6% in the pre-market on a Reuters report that the FTC is investigating its AI pricing tool. The agency is looking at claims that customers may be paying more on the app than in stores, something that Instacart disputes, saying that retailers are the ones that set the prices. But it's no surprise that the FTC is going after these claims, especially after President Trump's speech last night on affordability. Lisa.
Thank you so much, Yahira. On our radar this morning, President Donald Trump pledging $17.76 warrior dividend, that is $1,776 of a dividend for troops this Christmas, alongside new plans for housing reforms. This coming as the president faces mounting pressure about his economic agenda. Some questions remain, Danny, about the feasibility of this, as well as the pay-fors that really come into place.
Right, Henrietta Trey saying earlier, find me the votes for this, and then I'll have a thought on it. But the pay-fors, he continues to promise different legislation, different payouts from this government via tariff revenue. If he is able to get the votes, what does this bond market do? What does this bond market do that's been counting on the deficit getting eaten away from the tariff revenue coming in at a time when the Fed's also cutting and at a time where there is stimulus coming in? It is dual stimulus. How does that occur, and how does the bond market react to it?
And if we take that thought and we translate it all the way to Main Street, which is where I spend a lot of time, these issues on housing and affordability are not new, but they're amplified in a situation, in an environment where we have higher than normal and higher than desired inflation. So that's why we keep circling back to housing, because it's housing on top of eggs, on top of everything else that we're spending our money on. And this structural difference in housing over the last 10 years has been the deal maker in terms of wealth creation for the middle class. So the question is, find me the votes. Find me the housing stock, and you'll get the votes.
Yeah, which raises a question about how quickly you can actually turn that around, given the backdrop and given some of the structural undersupply. When it comes to some of these payments, though, how much is that going to be sustainable inflation? I mean, this is sort of one of the key questions. We're talking about other types of dividend payments, the $2,000 dividend checks that people also are going to be getting. I mean, is this inflationary akin to the Biden checks that a lot of people are saying is partly responsible for the real elevation in inflation post-pandemic?
Well, I'm a little bit jaded, because I believe an announcement is not necessarily a policy until it's executed. I learned that the hard way. But we'll see. We'll see the effect of how it lands. You know, there were parts of that stimulus package that actually helped working families quite a bit. The child care tax credit, for example, was a big boom to working families. So how it gets distributed is important. I'm not going to dismiss it out of hand, but there is a risk that it does lead to a bunch of spending and not saving, which could be inflationary, something to keep a close eye on.
In the meantime, one stock is getting a little bit of inflation, I guess, in a good way. Micron shares jumping after topping first quarter expectations and posting better than expected revenue guidance. The company sees second quarter earnings to be nearly 80% higher than consensus estimates. Let's just repeat that. Nearly 80% higher than consensus estimates, fueled by relentless AI demand for its data center memory chips. Those shares up almost 12% after rising more than 160% so far this year. I mean, it just highlights how, yes, there are doubts about artificial intelligence, but there's such a robust demand picture that there still are pretty big gains to be had.
There's so much demand, which means that the picks and shovels keep doing really well. But for those that are using it, there's still questions to just how much revenue can come through. So it's this narrative of you need to pick your winners. It is not, if it is a bubble, it's not everything moving in concert higher together. And that's why narratives have become so powerful for this time around, for what's happening in tech. Maybe the previous one, you could kind of say, okay, websites are cool. Anyone can build one. We kind of get that. For this, it's this complicated mess of Who benefits? What type of chip is doing well? What is the cash burn? How does this technology actually work? The complicated nature of it means that you get this narrative whiplash, which is such a fascinating setup into 2026 with so many hopes and dreams pinned on AI revolutions.
Yeah, hopes, dreams, and fears. And I think that right now the fears have really taken center stage when it comes to whether valuations are too high, whether we're paying too much, and how much is this going to steal from the labor market. And this is one thing that people keep talking about. How much is the Fed keeping rates lower than they otherwise would out of fear that there is going to be a structural imbalance that's going to leave a lot of people out of work? I mean, are we seeing that in the evidence that that's actually coming to fruition?
You know, there's some evidence at the margin that there is going to be a transition in the workforce. But I don't think AI is a field of dreams. I actually think it's a dream deferred. And that means that you have to create that AI infrastructure first before you see the outcomes and the productivity and the opportunity. And we are in a transition period. So the question is, in my mind, will the equity markets be patient to allow for that ecosystem to be built? And will the employers be patient to allow employees to adapt to the skills that they need for the future? This is a game of wait and see and wait and build. And I'm not sure that we have the patience for that right now.
Certainly the financing markets have had some wobbles when it comes to patience. And that, I think, is a big reason for why we have seen recent skepticism. This is only amplified by cases of fraud. U.S. prosecutors charging the Tricolor Holdings founder, Daniel Chu, with defrauding investors through a massive loan collateral scheme. Chu faces multiple felony counts and at least 10 years of prison convicted. And I have to say, read the details of this story with Excel spreadsheets and a junior investment analyst saying, wait a second, this doesn't add up, leading to the unraveling of this entire scheme.
I hope that junior analyst is no longer junior, that he got a nice promotion and a pay raise, because look at what he wrote on markets. It is incredible. And I think so many people want to say, look, this is just idiosyncratic. It was a fraud. It can't be extended. But the fact that you had so many eyes and so many well-respected borrowers in this company and no one caught it except a junior analyst, I think says something. I was speaking to Victor Koslev, SVP, earlier last week, who basically said, we're looking at 15 companies right now that are facing the kind of issues in their over-leveraged in debt that Tricolor was facing. They're not fraud. It's just an over-leveraged balance sheet and the lack of people to really appreciate the issue that presents until it's too late. That doesn't sound idiosyncratic to me. It sounds like late cycle dynamics.
A lot of people are concerned that that is the case. In the meantime, people also focused on the geopolitics of the moment. EU leaders are set to meet today, facing a key decision on using frozen Russian assets to fund Ukraine's defense efforts in the war. Bloomberg's Oliver Cook joins us now from Brussels. Ollie, thank you so much for being with us. We have seen a pop in optimism that there would be some resolution to this conflict before, let's say, March. That has waned over the past couple of hours. What is going on over there in Brussels?
Yeah, that's the big question, Lisa. And I think that going into this meeting, this makes it a very sort of exciting leaders meeting here in Brussels. And I'd say probably one of the most consequential in the last several years, because before the leaders, and I have to say, going into this meeting, I spoke to the High Representative Kais Kallas, the highest diplomat here at the European Union. I just listened to a number of European leaders walking in and speaking to reporters, basically all weighing in on how they feel about seizing these Russian assets and potentially monetizing them. We do not have consensus going into this meeting. We really do not know when this meeting will end. We do not know if they will come to a resolution on the frozen Russian assets. We only know that the council president, Antonio Costa, says that he's going to basically lock the doors and say that these leaders cannot leave the room until they figure out a way to finance Ukraine going forward. What they're trying to do is get over the line a 90 billion euro loan that accounts for 2/3 of the funding for Ukraine militarily and the rest of their budget for the next 2 years in order to keep them on their feet in this battle against the Russians. All the while, that is trade negotiations, those peace negotiations going on with the United States in the background, but we do not have a consensus. The German Chancellor Friedrich Merz says there's basically no plan B. The only other option for funding Ukraine, other than seizing these Russian assets, is joint debt. And that probably is the only thing in Europe that is more contentious than actually seizing these Russian assets and monetizing them.
There's also this question of how much they're going to crack down on some of the sanctions on Russian assets, given the fact that energy price is very much in the focus as we do get deeper into winter. How much is there a message for European allies? This is something that a lot of strategists are talking about from what the United States is doing with Venezuela and actually putting some sort of blockade around sanctioned oil tankers.
Well, I think it's very interesting that how far the United States is going on this. We should say that we've had reporting over the last couple of days that the United States is actually considering further sanctions on Russian oil vessels, oil tankers, as well as Russian energy traders. So it's a lever that the Americans are looking to pull potentially. Of course, that they're not going quite as far as Lindsey Graham would like them to go. And we have that bipartisan support for that bill in the United States that would impose secondary sanctions on everybody that's buying crude oil and natural gas from the Russians. Donald Trump has not yet shown the appetite from that, but it does show a little bit that the United States is willing to put a little bit of pressure there on the Russians. For the Europeans, really their last chip to play is on these Russian assets. They've really kind of maxed out their sanction packages so far. So really, of course, energy prices are going to be sort of front and center, but the real question is, are the Americans going to ramp up pressure on the Russians? So far, they've not had the appetite to do it beyond the sanctions they put on Lukoil and Rosneft, which just kicked in a couple of weeks ago, which we should say are fairly significant.
Ollie Crook, thank you so much for that reporting and great interview earlier this morning. A real question here about how much energy prices are really underpinning so much of geopolitics, right? Have lower energy prices emboldened on some level this president and other places to potentially crack down a little bit more on some of these increasing issues?
It's such an important undertone to it all because it's the contrast of what was happening in the Biden administration. When the Biden administration lightened up on some of the sanctions on Venezuela and took a more pragmatic approach, saying you can get some more of your oils, of a barrel of oils on the market if you do certain things. What was the difference that time? It was Ukraine and Russia. It was oil prices moving higher, an administration that felt like they had to do something to keep oil prices lower.
And oil prices are important for the trajectory of inflation, right? And so all of these global events, even though they're complicated and they feel a world away, they hit home eventually. And they are the deal maker in terms of the U.S. economy going into the next year.
Yeah, we heard about that $1.99 a gallon, and that was one thing that was driving prices lower. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. The U.S. government's acknowledging liability for the deadly midair collision between an Army helicopter and an American Airlines jetliner. Court documents state that the FAA violated procedures and that the Army helicopter pilots failed to maintain vigilance. 67 people were killed in the crash on January 29th. Meanwhile, Nick Reiner made his first court appearance yesterday in Los Angeles. He faces 2 counts of first-degree murder in the killing of his parents, actor-director Rob Reiner and his wife, Michelle Singer Reiner. Nick Reiner did not enter a plea. His arraignment was postponed until January 7th at his attorney's request. He is being held without bail. And authorities allege a more than $1 billion fraud by Tricolor founder Daniel Chu was exposed due to an Excel spreadsheet error. One of Chu's top lieutenants failed to reduce the numbers in a column listing the loan's outstanding balances, leaving a glaring mismatch. The discrepancy was flagged by a junior analyst and set off the company's spiral into bankruptcy. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahira. More on that story later. It really is just amazing. Read all the details. I mean, honestly, the idea that that kind of Excel spreadsheet issue could leave big banks with $1 million losses highlights just what potentially could be at stake.
And it also highlights that we can't kill Excel for all of the AI glory that's promised out there. Excel,
that's your takeaway?
That's my takeaway.
Okay.
We can't get rid of it.
And we can't kill grunt work. Some things you just have to go line by line through every single row in order to find the hidden treasure there.
Exactly. Grunt work and Excel spreadsheets. Up next, all eyes on CPI.
I'm more focused on CPI because of what it will tell us as to where we're going next. But the story with inflation is really an uncomfortable one, not because it's too high or too low, but because it's kind of stuck in that middle.
More on the state of the economy with Neela Richardson coming up next. You're watching Bloomberg Surveillance.
There's a very big difference between AI-enabled content and AI-originated content. Those are 2 completely different things.
We're trying to turn the page on 2025 in a positive way. It hasn't worked so far in December. Right now, trying to turn that around, up about 0.5% on S&P futures, up even more on the NASDAQ as a result of what we saw from Micron. Better than expected. Absolutely enormous forward-looking growth. We are seeing yields dip just a bit, about 3 basis points decline for 10 years. A 10-year yield, 4.13%, ahead of the first inflation reading, the first CPI report since September. We will not be getting a comp with October. Nonetheless, it will be some sort of look into what we might be getting come just later this year from the Federal Reserve into next year. When you take a look at these shares in pre-market trading, here is where the lift is coming from, and it has to do with one activist investor. BP shares a little bit lower, down about 0.7% on an executive management change, concerns about some sort of crossover there. But Lululemon shares up 6.7%. Both of these very much in the news due to Elliott Management and their activist stake in trying to enact change. It's just as fascinating to see how this is all coming to roost at the end of the year.
It is. I mean, two completely different businesses, but the common theme is a strategic direction change that Elliott feels needs to happen with a new CEO at the helm. For BP, it's about completely getting rid of renewables and focusing in on a new CEO who, by the way, is the first outsider CEO ever for BP, who comes from a very fossil fuel heavy industry. For Lululemon, it's just the fact that this brand has really been struggling with competition, and it's a consumer that we've been speaking about that's more choosy. So it's not enough just to have apparently a C-suite that's committed to a strategic change. Elliott is saying we need someone at the top, and we have the ability to make that happen.
Yeah, go from spandex to something looser. Compete with Vori. I mean, that's essentially what people are saying with Lulu. They're not actually saying that. Meanwhile, we're looking forward to the economic data we get later this morning. Under surveillance this morning, all eyes on CPI.
I'm more focused on CPI because of what it will tell us as to where we're going next. But the story with inflation is really an uncomfortable one, not because it's too high or too low, but because it's kind of stuck in that middle. What do we do with that? Well, it depends how the Federal Reserve responds to it, and how do consumers respond to it? Well, it depends where that inflation is. The composition of inflation, I think, is going to become even more important on a go forward.
Here's the latest. Traders counting down to November CPI data due in less than 2 hours for the first read on inflation since September, as the Fed weighs both sides of its dual mandate. Neela Richardson of ADP still with us. The expectation is for a 3.1% increase in the headline year over year, a 3% increase in core, still above that 2% level. How clean is this read, given some of the government shutdown and collection issues?
It's not as clean as we'd like. Skipping over October is a major miss. We could do that in the labor market. People kind of skip past that 100,000 plus loss in jobs market because they knew there was a driver. It was government layoffs. We can't easily skip past, even though we're going to be forced to, the October data to see that momentum going into the end of the year. That's such an important piece of information. And, you know, we also know that there are gaps in the CPI data in terms of a few cities that will be missing or metro areas. And so putting it together and having that view is really important. I just wish it was as complete a mosaic as we're used to seeing.
I'm getting ready for the conspiracy theories that are going to inevitably emerge after this report, whether it's too high or too low. I got a number of messages yesterday about owner's equivalent rent and how this is the third of the CPI print, and we don't have a sense of how they're calculating it. I mean, how much will hinge on specific idiosyncratic, if you will, Excel spreadsheets that people are going through and determining exactly how this is measured?
I guess this is the day of Excel. I mean, because the drivers are important. Whether inflation, if we see it or if we don't see it, is it coming from the housing market? Because that's a very different set of factors and drivers than if it's coming from energy prices or the goods sector. We thought the inflation in the goods sector was over. If it starts to rise again, if it blows past services into goods, that's a whole different conversation for the Fed, for policymakers. So those drivers, that momentum, really critical to understanding the complete story.
We'll also go back to some of what we've heard from companies. Of General Mills saying that they're cutting prices. When it comes to home builders, Leonard saying that they're also having to cut prices and offer incentives in order to get people to actually build homes and buy homes. How much are corporates playing into inflation and maybe lessening inflation right now?
You know, the traffic in the home builder space is really interesting to watch because there is all this tailwind of demographic demand, but is the house at the right price? And right now, there is a sense that companies are absorbing some of those price increases, not passing it on to the consumer because things are still uncertain. Tariff policy is still being set. We don't have a strong read on the consumer right now. And so let's absorb it until we know that we don't have this fickle consumer who will go away from us because we increase the price. So I see that in 2025. I'm not sure companies can continue to do that in 2026. And even though they're absorbing higher prices, they are making changes, and we're seeing that in the labor market. They are not hiring at the same volume at this time of the year as we're used to seeing.
Can I ask, because a lot of these companies are saying it's because of AI. We're rethinking our workforce. We're using more technology. We're being more productive. Sorry, we're announcing these layoffs right before Christmas, but AI made us do that. How much of that is just an excuse at this point?
I think it is a factor, but I think that these layoffs, these transitions would be happening anyway in many sectors. And if you look at where the sectors are of growth, it's in healthcare. Yes, many healthcare jobs are not AI exposed. That is the case. But there are other sectors like other services like dog walking services and dry cleaning services and leisure and hospitality and restaurants that are still lackluster. So it's not a complete AI is a replacement right now. In fact, there's a sense that AI may augment certain sectors, and you're seeing that as well. So it's just a factor. I wouldn't call it an excuse. Maybe it's a factor, but it's not the whole reason.
Yela Richardson of ADP, thank you so much for being with us this morning. Always wonderful to get your thoughts, especially on a day that is so important economically.
Thanks for having me.
So meanwhile, we are getting a number of rate decisions coming up. We also are going to be getting some earnings. We're getting Nike after the bell. We did just get CarMax earnings. And what I find interesting here is that they did beat expectations, but their comp stores used unit sales actually declined more than expected. And you did see a decline overall year over year. I'm just wondering, are we setting our expectations low, and are we still seeing misses on the margins that indicate really a pushback to higher prices and, frankly, to some of these concerns that we see in the labor market?
Maybe it's finally some of these negative sentiment surveys actually showing up, because that's been so much of the picture. You were talking about this idea that the sentiment surveys have been really poor, but people are still spending. It feels like, yes, they're still spending, but what they're spending on has changed. Things like CarMax, like vehicles, the big expensive ticket items, there seems to be some serious pushback. So maybe finally, maybe not on the headline level, but in the individual level, some of that anxiety is coming true.
Yeah, the nuance, the details is what we're going to be parsing through as we get the data to try to understand the drivers and just where the sentiment is coming into play. Coming up next, a Bank of England rate decision. Bloomberg's Lizzie Burden breaks it down. Plus, Thomas Kennedy of JP Morgan Asset Management joins us, Erica Najarian of UBS, and Adrian Yee of Barclays as we await those earnings from Nike after the bell. And, of course, the marquee event will be CPI as well as jobless claims for the past week. What we get will determine the move maybe into next year. NASDAQ futures higher, 0.8% gain on the heels of Micron, injecting some optimism into what has otherwise been a pessimistic month so far for the AI trade. From New York City, this is Bloomberg Surveillance.
There's a very big difference between AI-enabled content and AI-originated content. Those are two completely different things.
We have in Singapore the state-of-the-art technology, and then we export that technology into our Meta plant in Georgia.
The Smart Factory brings software-defined manufacturing to life using digital twins, AI, and automation.
Our Meta plant was the largest investment of the company outside of Korea, at 3,000 acres, with an investment of $12.6 billion for a capacity of 300,000 cars a year.
The data we're most focused on, as always, is the earnings.
The earnings backdrop for the S&P 500 looks incredibly strong.
I do think, though, that there are real questions about the cost of doing AI.
This huge run in margin expansion could come to an end.
The reality is, in 2026, AI needs to continue its march forward. We need the fundamental strength that does exist to remain there.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance, trying to inject optimism into an otherwise pessimistic December for stocks, with futures higher now after 4 days of losses. The Bank of England rate decision coming out right now. They did cut rates to the lowest going back to 2023. ECB up next. Then it's on to U.S. economic data with the first CPI report since September. Danny Berger alongside me. And right now what we are seeing is rate cutting continuing, maybe not here in the United States for the very second, but over in England, they got the green light.
And unlike the rate cuts here, 0 people voted to increase the rate, 5-4 to lower the bank rate. So you did have that divide there. But what happens if it's an ECB that pauses and you get more of a pushback? And Isabel Schnabel talking about hiking rates next year. The BOJ maybe also tightening policy. What happens to the UK and US as they try to do the opposite if bond yields globally move higher off the back of that?
And we did see a 5-4 vote. So if the division in the United States was shocking, well, it's just as divided elsewhere. I'm so pleased to say that Tom Kennedy, the head of real estate investment strategy at JP Morgan Asset Management, is joining us for the hour. Tom, really, I wonder how much this puts some cold water on this idea that the rate cutting cycle globally is over. Is it really, or are people still going to be running their economies hot in a very competitive world?
When the central bank of the United States is still on the verge of cutting rates rather than a holder cutting, it's hard to say we're at the end of the cutting cycle, right? This is the global reserve currency, but we are seeing differentiation across economies, which is something we're really not used to, guys. We haven't seen this for the last decade or so, very synchronized movements. But I think when you look across the world and take the big picture step, is yield curves are normalizing. We are 5 years afterwards really normalizing out of this COVID economy. At least that's what I think interest rates are telling us.
Yeah, I'm not sure if the English economy is normalizing or if this is what they want to be seeing, this sort of dual mandate becoming very much tension. Tom Kennedy of JP Morgan Asset Management is going to be sticking with us for the hour. We do want to get more details from that Bank of England rate decision. Let's head over now to Bloomberg's Lizzie Burden in London. Lizzie, a split decision, although the consensus was to cut rates as widely as expected.
Yeah, it looks like that weaker than expected UK CPI print that we got yesterday didn't actually make this more dovish a cut as perhaps was expected. I was speaking to Banu Bueja of UBS this morning. He had thought that maybe it would be a 9-0 vote split for a cut. It is exactly what was expected before the CPI print. 5-4. You've got the governor as the deciding vote, Andrew Bailey going for a cut this time rather than a hold. And you're seeing the market reacting to this. So you've got yields higher on the 2-year gilt yield at 373, up 3 basis points, the 10-year up a basis point at 448. And so reacting to perhaps the fact that they haven't been more dovish in their reaction to that inflation reading. Now, in terms of the guidance, there was no expected change here. They still say that the path ahead is going to be one of gradual easing. They haven't dropped that. It would have been quite confusing, actually, if they had, given that they don't have a press conference today. And in terms of the pound reaction, you're looking at it really pretty much flat as a pancake, $1.33 at the moment. It had been down against the dollar before this. So actually, if you want to call it anything, perhaps this is a hawkish cut, Lisa.
And Lizzie, it does speak to the challenge of the dual mandate that's happening globally at the moment. How does this set us up for an ECB decision in just over an hour's time?
Well, the ECB is expected actually to sit on its hands, do nothing at all. But it's a difficult message for Christine Lagarde to be communicating, because there we do actually have updated forecasts and they're expected to show inflation, Danny, undershooting the target over the next few years. She's got to balance messaging on that with, if she wants to, pushing back against Isabel Schnabel. We know that she has come out with this hawkish commentary in the past week about how the next move from the ECB is going to be a hike. The market strongly reacting to that. Jens Eichensmith at Morgan Stanley saying the repricing is the equivalent to a 25 basis point hike. So if Lagarde doesn't rebut the Schnabel argument, that's going to be saying something. The euro very vulnerable today.
Lizzie Burden, thank you so much for being with us. Tom, I'd love your thoughts on this idea that right now central banks globally are being forced to grapple with the overhang of fiscal deficits that are pretty significant at the same time that they're dealing with sluggish growth. I mean, how much does this create a more compromised independence backdrop for all of these central banks, given these sort of dual mandates coming into play?
I do think it creates a challenge mostly for the market, for the central banks. They need to show transparency about how they weight these two sides of their mandates. And the Federal Reserve, I think, has been doing a good job of, hey, we understand you're worried about inflation, but the labor market is really what drives inflation in the long run in this country. And as wages cool, we should expect core inflation to come down. I think it's just really about transparency, Lisa, and giving us a full, honest picture of how they're weighting these risks. It's not an eeasy challenge for them.
Which is why you're seeing such conflicted responses and the idea of a 5-4 kind of vote here. Pooja Kumra, European and UK rate senior strategist with TD Securities, joining us now for more. Pooja, what's your take on this, given the fact they did cut rates as widely expected, but what you did see was that fissure increasingly on the committee?
Yeah, no, exactly. It's surprising that the committee is still very divided, as seen from the vote, as well as when it comes to the guidance. They have not given a clear path with respect to the pace of cuts, or we know that BOE is in the upper end of the neutral, which is basically 2 to 3.75. But the guidance around how much below they want to go towards the neutral is really lacking. And I think that has come as a disappointment to markets after yesterday's weak CPI print. And that's why you are seeing gilts actually selling off. Even on the budget side, they consider it to add a point or two on growth. On inflation, they are still seeing medium-term inflation to increase by 0.1 to 0.2. So I think overall, the messaging is very mixed. Even if you look at Andrew Bailey's comments here, they are looking at the downward trend on labor market, but they still don't want to overread into it. And same with inflation. They don't want to overreact into the numbers that we've seen last time. So overall, I would just say that the mixed messaging is something that's not changed. Markets were still worried about the pace of easing by the BOE. You know, markets were pricing around the next cut around April. And the current messaging does not really change that situation. There's just no pace or what type of momentum in terms of cuts we'll see from BOE. And it's not been consistent as in the case of Fed or in terms of ECB. But I think it's the data that will be speaking. And if we do see that inflation and labor market easing, the next cut should be by Q1 in our view.
And just to the point of the division, Pooja, and the not clear outlook, part of the statement was that judgments on further easing will become a closer call. How much room is there to cut at this moment if the data stays similar to how it is now, Pooja?
So markets-wise, again, there is not much room within. They're just looking for another cut from the BOE. And the timing was around May, and I don't think that changes right now. To us, again, like we also think that BOE definitely has room for one more cut. They will be still in the restrictive stance. If you see the neutral range for them is, as I said, is around 2 to 3.75. So they're actually in the upper end of the neutral. So there is a lot of room to ease, but the evidence in terms of labor market and inflation has been very slow moving in UK. And that's why they want to keep the easing path slower than what should be the case. So we and markets are particularly looking for just one more cut, but I think the risks are for more cuts when it comes to UK.
Pooja Kumra of TD Securities, thank you so much for being with us. Tom Kennedy alongside us this morning. And I am wondering, just zooming back as we await the ECB rate decision and after this rate cut, do we have a sense of just how much more inflationary the current moment is than pre-pandemic? Do we have a sense of what room there is for central banks globally to truly engage in a cutting cycle?
In most of the developed world, I think you have to look to the wage market to tell you what underlying inflation trends look like. In wages in America, we just got ECI prints, which is the gold standard for the central bank in the U.S. You're still seeing wage growth about a half a percentage point growth higher than what it was pre-COVID. So that would tell you that there is still more inflationary pressure in the economy. But to some degree, that is backward looking. You need to look at more data points. And when you look at the labor market, we finally got the jobs report, and it looked okay. But on the skew, similar to what Pooja's saying, I think you're skewing towards a little bit weaker than what the headline numbers look like. And there I'm looking to breadth of job growth in America. Year to date, most of the job growth is just healthcare. I'm looking to what's happening for young kids coming out of college. The unemployment rate for them is the highest it's ever been relative to the overall unemployment rate. And then just turnover in the JOLTS market. There's not a lot of turnover. So I think if you're a central bank, you say, things look okay, but if we have to do anything, we need to cut. And in the developed world, that's for the most part what's happening, kind of ex-Japan.
But if you're going to be forward looking, don't you also have to take into account that we're getting cuts and fiscal stimulus at the same time? Not even from the U.S. You mentioned it in the last hour, the fact that Germany is going on a record debt spending binge. Doesn't all of that mean we could also potentially be cutting into an upturn and dual inflation when inflation is still not at target?
Yeah, Pooja hit it exactly right. Where is the neutral rate? Where are we across the developed world? I think most of the central banks say they're still above neutral. So they can cut a little bit and see what happens. And this is the exact reason why, Danny. You look out to 26, the big, beautiful bill is going to hit. Best estimates from economists is that's going to add about 1 percentage point to GDP growth. Wow, that's a lot of muscle coming in. And then you can look at, really, as sentiment is turning, what are your forward indicators that you can trust? CEO confidence, small business hiring intentions. So I do think you have to cut, kind of see what happens. I think the BOE and the Fed are kind of in the same exact spot with that. But look, if you're going to really count on the labor market, it's telling you if you're doing anything, you're cutting. I think that's a really important thing for the market, is that the probability of hikes is very, very low in 26. So that can give us confidence to add duration, add diversification portfolios.
Which is what you have been seeing a lot of people saying, although a little pushback recently on the long end of the yield curve. We'll get into that in just a second. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. The Trump administration announcing a massive arms deal with Taiwan. It's valued up to $11 billion and includes missiles, drones, and more. China's foreign ministry attacked the move, saying it would violate diplomatic agreements between China and the U.S. and undermine regional stability. Meanwhile, Medline shares soared more than 40% in their market debut yesterday, though they are pulling back this morning. The company raised over $6 billion in this year's biggest IPO. Medline, which manufactures and distributes medical supplies, has a market value of about $55 billion based on the trading. And moderate House Republicans have joined with Democrats to force a vote in January on expiring Obamacare subsidies. The rebellion comes after Speaker Mike Johnson blocked a floor vote on a plan to extend the subsidies with cost-saving changes. The vote will be forced after a discharge petition reached 218 votes, which is a majority of the House. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahira. Up next, bringing the economy back.
We're bringing our economy back from the brink of ruin. Wages are rising much faster than inflation. There are more people working today than at any time in American history.
Merry Christmas. Bloomberg's Tyler Kindle joins us next from New York. This is Bloomberg Surveillance.
There's a very big difference between AI-enabled content and AI-originated content. Those are two completely different things.
Our ultimate goal was to turn the fridge from a storage box to a smart kitchen manager that helps the users.
That comes down to finding the optimal location for our camera.
I am most proud of our image matching algorithm. The entire user experience has to be fast and seamless. When it worked like we expected, it was really a breakthrough.
Indonesia holds 40% of the world's geothermal potential. It's essential as Indonesia strives to realize its net zero ambitions. Barito Renewables is unlocking this resource with continued investment.
Seeing a lift to two markets ahead of the open after a soggy December. We have seen losses for 4 straight trading sessions today, trying to snap it on the heels of Micron. Some optimism coming from that. Futures up about 0.5%. Seeing a bit of euro weakness ahead of the ECB rate decision. We did see, of course, from the Bank of England, a rate cut on the expectations of slowing inflation. And in the United States, ahead of the CPI print, we do have 2 basis points of a decline on the 10-year, with 4.14% in focus. Under surveillance this morning, bringing the economy back.
We're bringing our economy back from the brink of ruin. Wages are rising much faster than inflation. There are more people working today than at any time in American history. 1,450,000 military service members will receive a special, we call, warrior dividend before Christmas. I'm also taking on the gigantic health insurance companies. I will announce some of the most aggressive housing reform plans in American history.
Here's the latest. President Trump touting his economic record as he looks to reassure Americans' pocketbook concerns. This as polls showing his approval rating slipping near the lowest level of his second term. Bloomberg's Tyler Kendall joining us now. Tyler, this is rare for President Trump. He rarely has given primetime addresses. Last night, there were pretty high expectations. What were the underlying announcements that really came to the fore?
Yeah, hey, Lisa. Well, it's clear that the White House has been trying to hone its messaging when it comes to the economy and affordability, which is part of why President Trump utilized this speech in prime time. As you're saying, not typically expected from him, since we know that he prefers really the larger crowds like we saw the other week in Pennsylvania. Now, President Trump put a few ideas out there, some new, some repeated, some that would require congressional approval. And that's a really important theme to keep in mind here because, of course, every seat in the House of Representatives is up for election next year in the midterms, which could change the political calculus of what ultimately ends up getting passed and turned into law. Now, the newest policy that the president floated was what you heard him refer to as these warrior dividend checks that are going to U.S. service members, and he says will be funded through tariff revenue. Now, he says the checks are already in the mail. At the moment, it is not totally clear the legal authority that's been invoked, though there is reporting this money was already allocated and appropriated under the One Big Beautiful Bill. But of course, it is reminiscent of another idea that he put out there again, which is that we could see tariff refund revenue checks more broadly for Americans. But we do know that that would likely require congressional approval and a whole new separate form of legislation. And I have to say, if you go to Capitol Hill and talk to Republicans about this, many of them would prefer to see that money go towards paying down our national debt. The other bucket of proposals to look out for in the new year, I would say, was focused on President Trump saying that we could see aggressive reforms when it comes to housing. He was light on specifics, though we do know that he campaigned, of course, heavily on the idea of deregulation in the industry. Lisa, I have to say that in the last few weeks, of course, affordability has really been front and center in the conversation here in Washington, and that has to do with health care. We were expecting President Trump to touch on the issue, though, again, light on specifics. He did outline his opposition to those expiring Affordable Care Act premium tax subsidies, saying that he would rather see money go towards consumers instead of as subsidies to insurance companies, but he didn't put his support behind any of the legislation that's currently brewing on Capitol Hill.
Tyler Kendall, thank you so much for being with us. Tom Kennedy of JP Morgan Asset Management still with us. And Tom, the descriptions of the U.S. economy are all over the place. People's sentiment certainly all over the place. Economists' interpretation of the data all over the place. What's your take on why now, ahead of CPI and ahead of a holiday season, did we get this kind of address given some of the backdrop of polls that we see for this president?
It's as if you're around our desk yesterday trying to figure out why the announcement, why now. I think we looked at the polling numbers, too. Also think, to your point, we're getting an inflation data print for the first time in a couple months. It's a curious timing. We don't really know. When we look to CPI, we do feel that customers in America and our Chase customers are feeling some pain. JP Morgan has the best data in the world on the consumer. And we bank over 50% of American households. We have at least one product there. It gives us great insight. What we see right now is a very divided consumer in America, that K-shaped economy that we talk about a lot. Top 10% of income earners, which account for about 50% of all consumption in America, are doing just fine. Their spending growth is above the rate of inflation. And in this holiday season so far, we've seen them spend on big ticket items. The bottom 90% of income earners, though, their spending growth is below the rate of inflation. So their real spending is negative. I think that might be some of this economic pain that people talk about a lot. That's a really tough challenge for monetary policy, for fiscal policy, but that could be the reason why he was talking last night.
Well, if you do have a world, which we are in now, where there's basically 0% jobs growth, 3.5% wage growth, and a 3% inflation, that doesn't leave a lot of room for household spending. But to your point, the K-shape means that the spending has occurred. At what point does that stop? And the K-shape is no longer enough to sustain the economy on a headline level.
Yeah, Danny, this is what's driving this K-shaped economy? Income inequality goes on for a long time. That stat, 50% of all consumption happens with the top 10% of income earners. 30 years ago, they accounted for just 35% of all consumption. So income inequality is happening. But I think what also supports this K-shaped economy is that financial conditions, real estate prices going higher, stocks going higher, those are mostly owned by the top 10% of Americans. So what makes it stop? Well, we could see Main Street focus and consumption at the bottom pick up. Or if we saw a crack in financial conditions, maybe we would see the top side come down. This is also what makes our jobs very hard. There are two different experiences that are happening. You come back to a central bank. What are they focused on? The bottom side of the K. And you come back to, I think, last night, the president, he's very much focused on the bottom side of the K. So hopefully that's what we get. The bottom side comes up. So I think there's reason to think that will happen in 2026, too, though.
You were just kind of hinting there also what that's done to markets. And it's actually something that I was speaking with Ken Griffin earlier this week, too. Yeah. A world in which bond yields are moving higher because of that pressure, inflation's still sticky, and yet equity markets that love the idea that this economy is going to be run hot. There was a survey done by the other side of the house at JP Morgan basically saying that people were ditching constructed portfolios like 60-40, that they were just putting together their own equity portfolios, and their hedge was gold, not bonds, because of the split that we're seeing. Yeah. Are you seeing that among your clients, too, that there's this real desire that we don't want the hedge from bonds, but man, oh man, equities are hot and maybe we find some diversification elsewhere?
I think you have to start with what most Americans own. They own the S&P 500. Top 10 stocks in the S&P 500, 8 of them are tech companies, if you use tech companies broadly. That's 35% of the index. So you start every conversation with, I know you own the S&P 500. You have a heavy concentration in tech. You could be a tech believer and still say, I need to diversify. Looking backwards, our job was just to add bonds. It was just easy. Inverse correlation was there. And we've been saying it, JP Morgan's been saying it for years now. That inverse correlation is not real anymore. Stocks and bonds positively correlate. We need new diversifiers. Commercial real estate stands out as one that should diversify really well. It's positive income and prices. It's the only asset class where prices haven't come back to where they were pre-COVID. And then you could look at infrastructure, hedge funds, gold. I do think it's funny how much we talk about gold and how small it is in portfolios. But that's, an aside.
I know that you do focus on real estate, and this is a big essential part of the president's agenda. And it's also a big question mark because it used to be one of the main stores of wealth for so many different households. That's now obsolete for a lot of incoming household creators who don't have that capacity. How can you get a more healthy market, a healthier market, without prices coming materially lower, right? How can you have a healthier market going forward that doesn't include a good degree of pain that forces some sort of capitulation in this space?
I think you have to start with what is that epicenter of wealth over the years? 2/3 of Americans own their home, and it's the biggest asset they own. Okay, prices go up, they feel good. And it produces a wealth effect as well. But right now, the average first-time home buyer in America is 40 years old. Up from 33 7 years ago. So we're creating this generation of renters that are being pushed into the market where they can't get the American dream the way we thought about it. So that creates an income stream for all Americans to access. The democratization of alts is bringing this new investment idea to them, and we're seeing adoption beyond traditional pensioners and insurance funds. So this becomes a way to diversify in a portfolio that more people have access to. And especially if they can't get the American dream kind of idea, this is one way to fill their portfolio.
American dream light. Own a stream of revenue from rent. Yeah, exactly. Rather than actually the home, because ultimately you've got to diversify. But it's a great point. I mean, this to me is really the highlight. People don't have their money tied up in homes. Right. So it has to go elsewhere. And that's what you're seeing in this space.
And it leads to the anxiety that people feel because they can't tie their money up in homes, because that was the American dream. But yeah, it speaks to the real boom in alternatives right now. How do you find ways to put that money to work if it's not bond markets that's not giving you that diversification anymore?
Luckily, we've got Tom Kennedy with us the entire hour, which I'm so pleased to say, of JP Morgan Asset Management. Coming up, we're going to speak with Erica Najarian of UBS as Wall Street bets on a mergers and acquisitions boost. We've already seen quite the boost with a whole host of mega deals on deck. What could come next? Yahir Anand is also going to be joining with your morning movers. Trump media jumping as it gets into the business of fusion energy. We'll explain. We'll attempt to explain. Tom Kennedy will explain. Tom, you'll read it on that in the break. From New York, this is Bloomberg Surveillance. Good morning.
There's a very big difference between AI-enabled content and AI-originated content. Those are two completely different things.
You have to have very clear global strategy to bring progress for humanity. Thinking from the customer point of view and taking the right decision, taking the right action, it may cost you more money in the short term, but you are creating customers for life.
Seeing a boost to equities after 4 straight days of losses, led for now at least by big tech on the heels of Micron. What you can see is just about an 0.8% gain on NASDAQ futures, S&P up about half that, about 0.4%. Russell 2000 lagging behind as people question just how much heat there is in the U.S. economy in 2s, 10s, and 30s. That's the reason why you're getting a bit of bid into bonds, particularly on the front end as people look to possibly more rate cuts early next year from the Federal Reserve following what we saw from the Bank of England. 3.46% on the 2-year yield. That 30-year yield just pinned there at 4.83%. Take a look at the pound intraday. You did see a pop initially after the decision came out, 5-4, a hawkish cut down to the lowest level going back to 2023. It's now just about flat. But, Danny, really highlighting some of the concerns that people have about the Bank of England's ability to cut more, even with a deteriorating economic backdrop.
And the Bank of England highlighted that themselves, the lower propensity of their ability to cut because of what's happening with inflation. It mirrors the conversation happening with a lot of central banks, be it here in the U.S., largely expected to cut, but a division really growing among the board. The ECB, they're expected to hold today at 8:15 a.m. when you had an ECB official just this month saying that maybe the next move is going to be a hike. That's not consensus, but it's a growing divide because of this pressure from the dual mandates.
Nobody on the Bank of England voted to hike rates. So there is that. Right now, 2 hours away from the cash open, here are your morning movers with Yahaira Anand. Yahaira.
Hi, Lisa. Micron to the rescue in this jittery market. We are seeing shares popping now 14.5% in the pre-market after the company blew past estimates saying that demand for its memory chips is far outstripping supply, and that is giving them major pricing power. What analysts are saying is that those price increases for those memory chips are unlikely to abate anytime soon. So it bodes well for Micron. Meanwhile, moving on to Trump Media, those shares are popping 22% in the pre-market on news in the last hour that the social media company behind Truth Social is getting into the fusion power business by merging with TAE Technologies in a $6 billion all-stock transaction. It is an unusual tie-up, but of course it is tied around this bet on the insatiable power demand needed to run AI data centers. And we end on Medline. The stock is pulling back this morning, down 6% in the pre-market after an explosive market debut yesterday that saw shares pop more than 40%. This is a medical supplies company that does provide everyday gear for hospitals, so it's not a big tech company, and it raised more than $6 billion in the biggest IPO this year, capping off a strong showing for listings here in the U.S. in 2025. Lisa.
Thank you so much, Yahaira. Tom Kennedy of JP Morgan here, having done a deep dive into Trump Media and nuclear fusion and the connection between the two. So what'd you come up with?
I'll have to get back to you guys next week. Invite me back.
I'll have you back. Tom Kennedy's hot take on that on our radar this morning. President Trump saying he will announce his nominee to replace Federal Reserve Chair Jay Powell soon.
Soon announce our next chairman of the Federal Reserve, someone who believes in lower interest rates by a lot, and mortgage payments will be coming down even further.
Fed Governor Christopher Waller, NEC Director Kevin Hassett, and former Fed Governor Kevin Warsh are all considered the top contenders to replace Powell. Really, the ultimate question comes down to how much does it really matter? I mean, Tom, does it matter in any way, shape, or form who the next Fed chair is if it is a committee that has to vote on something and be some sort of consensus?
It definitely matters. But it matters a little bit less when you can acknowledge that it's a committee. And it is a committee when you're in the room. That's exactly the way it will work. But we're used to Fed chairs that gather consensus and they bring the committee along and they shepherd the market in a very smooth way. look, one of the biggest adversaries of an investment portfolio is volatility. So if the Fed chair is adding volatility, that's a big problem. When you look at all three of these, I think the market will accept them and it will be fine. I think Waller is the one who's the known quantity, so will bring volatility down. And he still has been very vocal about advocating for interest rate cuts in a framework, data-based way.
Well, it speaks to this idea that one of the important tools the Fed has is communication, that they're able to reshape markets by building this consensus and having a Fed chair at the helm who can communicate that. On the other side of things, Jason Furman, now of Harvard, previously worked in the government, saying, hey, this is a good thing. He's not the only person saying that, but this is a good thing to have a diversity of ideas within the Fed. It's a healthy thing not to have a godlike figure who's at the Fed, is the chair, and decides everything for everybody else.
I know that Jay Powell is very happy that you're implying that he's a godlike figure. Meanwhile, BP appointing Meg O'Neill as CEO, replacing Murray Auchincloss. The change coming as the oil giant struggles to revive its fortunes after a botched pivot toward renewables. O'Neill will be the big oil's first female leader. We'll get into that in a bit with Elliot's fingerprints on this as well. Meanwhile, OpenAI is reportedly in talks to raise tens of billions of dollars in a valuation of about $750 billion. According to the tech news website, the information discussions are preliminary and the details could change. It just highlights how OpenAI is at the center of absolutely everything when people talk about their worries about overspend in AI.
Yeah, and maybe the benefit that OpenAI has is that its funding rounds happen in private, in the dark. You don't necessarily see ramifications in public debt markets that you would in an Oracle, for example. And the news that Blue Owl wouldn't be a part of this Michigan data center that they're having, because that is the fear. Maybe we're kind of misplaced worrying about a bubble in valuations. Maybe it's whether just or not that they can continue to get funding for their data center build out. What happens if you have more players and more bond markets starting to rebel against the idea?
Maybe OpenAI will just get purchased by NVIDIA. Maybe this will be one of the M&A deals announced. Actually, no one is speculating about that, but there will be a lot of M&A next year. This is the expectation from Wall Street. Erica Najarian of UBS writing, banks might be more motivated to close larger deals ahead of any potential shift in power in Congress. The first half of 2026 could be a robust time for deal announcements. Erica, I'm so pleased to say, joins us now. Erica, great to see you.
Good to see you.
I'm not saying that OpenAI and NVIDIA are going to merge, but there is this feeling that there is an acceleration in the deal space. Just how much pipeline is there behind that?
I think bankers are not going to have a fun Christmas season. I think they're going to be at their desk working because I think 2026 is going to be the year of big. You know, I cover banks, so whenever we talk about M&A, we think about regional banks merging for synergies. But given the deregulatory framework and given that you do have the midterms as sort of an important waypoint in time, you know, I think you could have banks and other companies across the space really thinking about where their strategic holes are and addressing it that way. So I think it's going to be more than just, okay, we're going to do deals to cut costs. I think they're going to use this as sort of a, once in a generation opportunity to redeploy capital in a very specific strategic way.
Because a lot of the deals we've seen have been really big. I mean, whether it be in IPOs, the Medline IPO coming on the market earlier this year with EA, the huge amount of numbers that are being put to that. Whatever is going to happen with Warner Brothers Discovery, maybe we add that in, that whole hot mess of a potato in with that too. How much of this and the resurgence of deals are about big size deals versus volume of deals?
I think you could get both, right? So first of all, the sponsors haven't really, exited much. So we're waiting for that. The market is at all-time highs. Spreads are at all-time tights. So it feels like now is the time. And I was here last week when I had this analogy that this administration was going to put lipstick and contour on this economy to get it through the finish line for, to the November, midterms, right? And so you could have sort of also a macro backdrop and maybe we get one or two rate cuts that's quite favorable for this environment.
By the way, can I just say we should only start using makeup metaphors and no more baseball metaphors. No more innings, only lipstick and contour. I'm absolutely on board with that, Erica. How much of this, though, when it comes to strategics versus private capital? Because to your point, they're still sitting on a lot that they need to exit. Are they willing to take a discount, or has the environment gotten so good that things that they maybe overspent on in 2021 and 2022, they can sell at a price that they agree to?
I think you still have a pretty significant valuation disparity. And I think you also have, your deployment of capital is not going to be as, those investments are not necessarily going to be as good as those that you're trying to exit, right? So I think that's going to be, continue to be a challenge. But nevertheless, I think in particular I think the advisory pipeline is going to be is actually quite strong, and you had the government shutdown. So the fourth quarter is going to look a little bit light. So that's going to have the effect of pushing a lot of these announcements into the first quarter. And so every sort of Sunday evening or Monday morning is going to be boom, boom, boom in terms of announcements, I think, when we kickstart the year.
Talk to me a little bit more about the financial M&A.
Yeah.
On the strategic side, what are the strategic priorities of an M&A for banks at this point if it's going to happen in the first half of next year?
So scale and completeness, in my opinion. And additionally, an edge in tech. So, for example, it's pretty clear that scale is getting to be even more important given the technological demands, the investments that are needed in AI and the like, right? So that's number one. Number two, you work at a company that's very diverse, for example, right? And so the whole idea of a booming money center, complete money center bank, I think is, highly subscribed by the market. So let's say you're an investment bank, maybe you're seeking more of a wealth aspect, or Wells Fargo, has, mentioned potentially expanding in growth areas if it were appropriate. So these are sort of the strategic, points that I think are going to be addressed in the new year.
A lot of people are very excited about financials at the same time that they're very concerned about some sort of glut in private credit, some sort of excess that could potentially come to roost in 2026. Is there a dissonance in this, the idea that people think that there is no credit risk in banks, but there is full credit risk in private credit?
You can't have an explosion without getting shrapnel, right? So I would say a couple of things. Number one, everybody is hyped about bank stocks, but bank stocks rarely outperform the S&P 2 years in a row, right? And when it's happened on the back of a recovery cycle, right? Think post GFC or post the dot-com bubble, right? So the bar is high. Second, we have to watch the sector rather than just say, okay, there's something out there that we have to be nervous about. What do I mean? Is there froth in data centers? Is there froth in, other so it's really a sector issue rather than structure. So really it's going to be, right, what the banks have done is they've indirectly lent to financial institutions that then lent to the companies, right? And we saw in the matter of the, First Brands, for example, that when you have, an explosion, obviously there's fraud, the banks will catch some shrapnel. So we'll see.
Well, Tom, to this point, I mean, how much are people understating some of the credit risks here, given the concerns about the likes of Tricolor or First Brands?
I think what Eric is trying to drive out here, too, is the important piece of this. It can't be just private credit's the issue and not the banks. I mean, let's just acknowledge that up front. But as you're moving through this froth, I think the way you made the comment about the fraud is, when we look back in history, guys, fraud is a bankruptcy. It's not it's fraud, that gets an asterisk. Like, if we have these types of problems that are going to surface, I do think the banks will get tied down to that. So maybe, Eric, a last question. As you separate these, which banks are best positioned into 2026 if we were to hit a default cycle? Just the well-diversified banks, or is there something to that, or an angle that you focus on?
And by the way, it's not a coincidence that Tricolor and First Brands were in the same sector, right? So this goes back to what I was saying. It has to be a sector. Look, I really like Bank of America here, right? So all the things that, perhaps was a negative for Bank of America, to directly answer your question, not growing as fast as others, being a little bit more conservative in an environment where, there's a little bit more uncertainty and maybe we are just band-aiding the economy. I think they, could potentially perform well, and the valuation is, not all that demanding. A company like, Capital One, that lower end of the K has taken hits already, right? I mean, we've talked a lot about the K-shaped economy, but who's been dealing with inflation since 2021? It's been the lower end of the K. So I think that, those two stocks set up really well for 26.
Erica, thank you so much, as always, for being with us. Erica Najarian of UBS. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. Calls are growing for the EU to approve a massive loan to Ukraine backed by frozen Russian assets without the support of Belgium. Kyiv's finances are likely to run out in a matter of months without the boost. Meanwhile, U.S. and Russian officials are set to meet in Miami this weekend for continuing talks on a peace plan. Meanwhile, a Warner Brothers Discovery shareholder has approached New York hedge fund Standard General to acquire all or part of its cable TV assets. The Financial Times reports the fund's founder, Soo Kim, has been involved in the talks, which would include the sale of CNN. It comes after Warner Brothers urged shareholders to reject a $108 billion hostile takeover offer from Paramount Skydance. And Trump Media and Technology Group agreeing to merge with TAE Technologies in an all-stock transaction valued at more than $6 billion. The transaction is set to create one of the world's first publicly traded fusion companies. The new venture plans to begin construction on a utility-scale power plant as early as next year. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahaira. Up next, inflation signals.
We are yet to see the full effects of tariffs on the inflation data. And sure, while it may be a one-time price shock, I think it's a little too early to declare victory on inflation yet.
Adrienne Yee of Barclays joins us next on The Consumer. This is Bloomberg Surveillance.
There's a very big difference between AI-enabled content and AI-originated content. Those are two completely different things.
Global electricity demand is set to surge 75% by 2050. Infrastructure alone won't keep up. To power the future, we must change how energy is used, not just how it's generated. The missing link? Demand-side solutions that unlock efficiency, productivity, and resilience. The Bloomberg New Economy Energy Technology Coalition is uniting industry, innovators, and investors to scale these technologies for a future-ready energy system. Learn more at bloombergneweconomy.com/NTech.
Seeing a bounce to equities after 4 straight days of losses. It's coming from the tech sector after the tech has lagged behind. Micron giving a bit of optimism here. Meanwhile, yields bid, but not as much as earlier in the session. Now almost 4.14% on the 10-year. Take a look at Nike shares. Pre-market trading up almost 1% ahead of earnings after the bell. Those shares lower about 11% so far this year. Can they deliver on a turnaround strategy? And what do they say about the U.S. consumer in particular? Under surveillance this morning, inflation signals.
There seems to be this view in the Fed that inflation is really not a problem right now. I think it's a little too premature to think that inflation is going to take care of itself. We are yet to see the full effects of tariffs on the inflation data. And sure, while it may be a one-time price shock, I think it's a little too early to declare victory on inflation yet.
Here's the latest. The November CPI print dropping this morning, set to offer investors a partial snapshot of inflation ahead of the new year. Adrienne Yee of Barclays saying the consumer has shown resilience this year, but sees, quote, potential tariff-driven inflation on the horizon. Adrienne joins us now. Adrienne, thank you so much for being with us. We've seen this when parsing through all of the retail earnings, how different companies have managed through inflation. Do you think this is just the beginning in terms of being able to selectively increase prices on specific goods?
Yeah, actually, we have not actually seen broad-scale inflation across apparel and footwear. I'll talk about kind of year-to-date what we've seen inflation sort of in the hard lines, home furnishing sector, And then the footwear industry was actually ahead of the inflationary price increases. So they broadly, Nike, On, Hoka, they all took price increases up by about mid-single digit in July. Across apparel, we've seen virtually no price increases, but for just modest kind of normal way price increases. And so really what you're seeing with the strength of the economy is pricing that has been relatively benign in terms of inflationary pressure. And yet the cost side of it, the margin side of it, actually still hasn't come through on the P&L either. So all of this is horizon risk for the forward kind of spring season, when you'll see, the other 80% of apparel discretionary actually start to raise prices. And that's when we'll see kind of demand destruction.
Adrian,
yes.
Does Nike, though, have the ability within all of these macro headwinds to also deliver the innovation that should they need to readjust prices or should they not want to keep discounting, they can get consumers to the stores and buying new sneakers?
So this is so what you're describing is turning a product around and a brand around that has lost some of its brand heat and raising prices while doing so. Those two things are incongruous. They are very difficult to happen at the same time. And what I will say is that Nike has cleaned up the marketplace. Remember, there were this big three classics, the Air Force One, the AJ Air Jordan One, and the Dunks, which they removed because there was just lack of innovation. So what we're seeing with Nike is strength in their performance run. So the Pegasus, the Vomero, right, the Structure, the Invincible. In that performance run, they're sort of catching up to where On and Hoka had been with that thicker platform. So it remains really to be seen whether they can take that one portion of the performance piece of the business and then bolt on kind of the leisure lifestyle, right? The strength that they typically have seen kind of in the marketplace. Our preview would suggest that they are going to beat the quarter this evening. Usually when you're giving that guidance or giving it mid-quarter, you have a very good look at the wholesale order book in the quarter. I think they will talk positively about the forward spring order book. Having said that, they're anniversarying a lot of the reset actions that they did last year. And so they're going to forego some of these low quality sales in the third and the fourth quarter, their fiscal third and fourth quarters. And that may kind of cap the top line. Margins should be better, but the top line, probably will be constrained. And I'll say my final point here is not about FY26. FY26 ending May should be fine. We'll beat the second quarter. We'll kind of temper the back half. But it's really about the forward 2 years where we're looking for 400 basis points of margin expansion with 10% top line growth. Those things don't happen at the same time.
Adrian, I wonder when companies are trying to mount this turnaround, especially with all these headwinds, be it, locally with their innovation or the macro headwinds, how important it is at who's at the top. And I ask this because Nike, new CEO just last year in October 2024. This week, the discussions around Lululemon with an exit of their CEO and Elliott pushing for a new one from Ralph Lauren. Adrian, can these changes happen if you have the old guard at the top, or for apparel and consumer-facing companies struggling? Do they need to have a rethink of their C-suite in order to succeed?
Absolutely. It's one of the things that we're learning through all this tumultuous time, right, for the past 5 years, frankly, for the past 10 years. We've had the digital economy. We've had COVID. We've had, a supply chain, right? The supply chain was stuck for 2022. So you've had inventory issues, supply chain issues, everything. And what I would say is the guiding factor for investors and for us as analyzing companies is you are investing in the management and you are investing in the confidence that they can navigate each one of these successively, even though they don't know what the next shock event's going to be, that they have the wherewithal to do that over time. So absolutely. And the final thing that I'll say here is what you're looking for in that management. In consumer retail, you are looking for product, brand, customer experience. Those are the three things you want to hear the management's talking about. And you hear that from Elliott Hill at Nike. You hear that from the new Gap CEO, Richard Dixon. And it's no surprise that you're starting to see some of those changes happen at those companies.
Adrian Yee of Barclays, thank you so much for being with us. Tom Kennedy, a final word here ahead of CPI and jobless claims. What do you think we're going to be most surprised about heading into 2026? The resilience of the consumer or the consumer falling off?
I think we'll be surprised about the resiliency of the consumer thanks to the big, beautiful bill and the rate cuts coming through. I think consumer will be resilient. I think the things we need to be looking out for are How persistent can this tariff-led inflation be? The Fed's banking it won't be. It's going to be a one-time shock. So we need to look for that and then really think that the K-shaped economy will close a little bit in a positive way where the bottom end comes up. I think that's the most likely outlook for 26.
Tom Kennedy, it is a pleasure having you here. Thank you so much for spending the hour with us. Let's do it again sometime soon. Tom Kennedy of JP Morgan Asset Management. Danny Berger, I believe you're doing 45 hours of TV today, so we're going to let you go prepare for the rest of it. Always wonderful to see you. And a great interview with Ken Griffin earlier this week. Really interesting. If you haven't seen it, check it out on YouTube or the Bloomberg website. Coming up next hour, as we do await that economic data, Emily Rowland of John Hancock, Seema Shah of Principal Asset Management, Aaron McLaughlin of the Conference Board, and Brent Schutte of Northwestern Mutual. This is Bloomberg Surveillance. Good morning.
There's a very big difference between AI-enabled content and AI-originated content. Those are two completely different things.
There are a lot of tailwinds supporting the economy for next year.
You do have to see an economy that keeps chugging along. If it doesn't, you're going to have a problem.
One of the key themes that we've noted for this year is people really underpricing kind of the macro risk.
We still have a problem with inflation.
There's certainly a risk here that you could see inflation that's a bit more sticky.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. CPI on deck along with jobless claims in about a half an hour as we try to end the year on a high note. Also waiting for an ECB rate decision following that Bank of England rate cut about an hour ago. All eyes very much on the U.S. consumer as we suss out any sense of the U.S. economy heading into next year. David Gura back in the hot seat, I'm so pleased to say, joining us for the next hour. And David, really it is all going to be about what we get in a half an hour time. The first CPI report from the United States going back to September.
Absolutely, and an incomplete one, so we'll see sort of what actual tangible information we get from that. And of course, that dovetailing with, complemented by this ECB decision. Yes, Christine Lagarde's going to be speaking, but Isabel Schnabel, member of the Governing Council, looming large in light of the comments that she made to Bloomberg earlier this week.
The idea of potentially hiking rates, not cutting them. Nonetheless, as we were talking about with Tom Kennedy in the last hour, he was saying, look, there is a bias to cut rates right now because the labor market front and center is clearly showing signs of weakening, possibly beyond what's being shown by headline numbers. So at a certain point, what's more important, CPI or jobless claims with this kind of backdrop from the United States?
The debate continues. I took a few days off, came back. It seems like we're dealing with the same issues over and over again, the kind of preeminence of the central bank versus what's happening in the AI space. Lo and behold, good news in the AI space yesterday, and we see markets reacting strongly to that this morning.
Yeah, just a cheat sheet. We're going to be talking about the same theme for probably the next 6 months.
Beautiful.
So, David, if you take a break, come back. Hopefully you don't take a break. We love having you. Right now, you are seeing a bit of a snap in that 4-day losing streak as people try to get some optimism, as David was talking about. Maybe Micron helping to boost spirits, 0.4% gain on S&P futures. We are seeing just a bit of euro weakness ahead of that ECB rate decision, 117 on the euro-dollar cross, and 10-year yields lower by more than 2 basis points, 4.13%. Crude still in that $50 to $60 range, although climbing just a bit after yesterday, the potential for some sort of disruption in Venezuela. Coming up this hour, do not miss this. The great Emily Rowland of John Hancock Investment Management as stocks are rising. Seema Shah of Principal Asset Management as Europe's central bank is set to make its final rate decision of 2026. And Aaron McLaughlin of the Conference Board breaking down the November CPI data. We begin this hour with stocks looking to snap that 4-day losing streak. Emily Rowland of John Hancock Investment Management writing, we are constructive on U.S. equities into 2026. We still see an impressive earnings engine driven from AI productivity gains. The challenge we continue to face is that valuations are rich. And Emily joins us right now. Thank you so much for being with us. Great to see you. I'm curious about valuations. The fact that everyone is so worried about valuations, how much relief does that give you?
Yeah, I mean, look, we're at 22 and a half times forward earnings. The highest in history was 24 times. So we're not going to see a lot of multiple expansion into next year. But the good news is that the earnings engine in the United States is on. Analysts are looking at 14% earnings growth for next year. So the denominator is almost more important to us than the numerator here. And there are some tailwinds for U.S. companies into next year. We've got the provisions in the One Big Beautiful Bill, lowering the effective corporate tax rate. We have oil prices falling. That's great for the consumer. It's good for transportation costs for businesses. We've got the U.S. dollar falling. We just saw one of the weakest years for the dollar in modern history. Remember, 40% of the revenues of U.S. companies are derived from overseas. So there's a lot of things happening that I think can go right for companies into next year. It's just, is the bar too high?
Well, is the bar too high for big tech, and can big tech lead? Because all of the companies in the sectors that you just mentioned were consumer facing, were companies that were not necessarily in this haloed sphere of the Magnificent Seven. Yeah. I know you have been overweight big tech for the bulk of 2025. Are you shifting that heading into 2026 because of this type of thesis of strength elsewhere?
Yeah, I mean, we are looking for a broadening out in terms of market participation, and we're already seeing that with sectors like healthcare and industrials getting in the mix. We are always firm believers of following where the earnings are going, and we are expected to see earnings delivered by different sectors in the S&P 500 next year. We still want quality. We want to find it at a reasonable price. We want to look for relative value. And look, we still like tech, but there's no doubt about it. It's expensive. The S&P 500 growth index trading at about a 50% premium to its long-term average. We like the high quality parts of tech, but there's been a bit of a dash for trash as of late, as investors have just been dominated by technicals, by sentiment. I have personally been dusting off my technicals books because it's the only thing that's mattered. Valuations haven't mattered at all to this market. I think that gets a little trickier into next year, but it's been about technicals, been about momentum. If a chart's going up, investors are buying it. And that's pretty tricky for people that are focused on fundamentals and economic cycles like we are.
What's your takeaway from what we saw with Micron Technologies yesterday? So high bandwidth memory, I had to look it up. You talk about the haloed Magnificent Seven. We're moving beyond that. We're talking about the things that complement the chips that we spend so much time learning about and talking about on air here. Seems like a bright spot. Seems like something, again, beyond that core that has been such a focus over the course of this last year. Is there a lesson to take away from that in terms of breadth, moving into something like this?
I mean, it's a reminder that AI is real. It's producing productivity enhancing technology, which is really accretive for corporate earnings and for the U.S. economy. The challenge, again, is that tech is over-concentrated, it's over-loved, it's overbought at these levels. Tech kind of reminds us of it's been such a big driver for portfolios. You know, the S&P 500's compounding at 20% annualized over the past 3 years. So goes the S&P, so goes tech. It's kind of like, do you ever have one of those go-to outfits in your closet? We all have that. And sorry, I'm looking more at Lisa. I think that tie,
the blue suit and tie, that's a good one.
It's kind of like the way technology stocks feel to us right now. It's like you don't need to get rid of it from your closet, but people are like, did Lisa wear that jacket already?
Hey, this is getting really Emily. Carry on, though.
Maybe it's getting a little worn. It's about keeping your go-to piece in your closet, but thinking about what's the next best thing in Lisa's closet for next year. So maybe it's mid-cap stocks. Maybe it's, industrial companies that are benefiting from onshoring and investment in the United States. Maybe it's healthcare names that are cheap and have great return on equity. We got to find that next thing to round out the closet without throwing away the tech stocks.
A minute ago, you'll forgive me, you sounded a lot like the president last night, talking about what's to come in 2026. The rewards of the One Big Beautiful Bill, the tax incentives that are coming into effect, maybe more certainty when it comes to the economy based on the trade policy. How much of that is being communicated? We're at a moment here where we're poised to get, incomplete, hard data from the federal government, but the sentiment data is still not great, shall we say. How do you look at those two things in complement?
Well, sentiment data just, again, hasn't been helpful. People are saying that things are terrible, yet consumers continue to buy. We saw that in retail sales being pretty decent. We're seeing this incredible wealth effect. That's the thing that's driving this market. You look at back-to-back 25+% returns in 23 and 24. We're on track for 15+% returns this year. That is feeding into portfolios and helping that higher end consumer who has a record amount of stock holdings right now, feeding back into the economy. So it's almost like the stock market is like the tail that's wagging the dog of the economy right now, which is a twist on the way that we used to think about things. So I think that's really helping the overall picture, even though people are saying that things aren't great.
Which is a reason why people are so focused right now on the CPI report and the idea of what the Fed's going to do with this. How much leeway do they have to actually engage in some sort of rate cutting cycle?
Right.
And really the proof is going to be in how much inflationary pressure there is. You have been overweight bonds for a lot of this year.
Yeah.
You have believed in this bond rally. Are you pulling back from that because there isn't really this lip service being given by the Fed to the financial conditions aspect of this entire story, as you were just laying out?
We're actually leaning into bonds more as rates back up. It feels right now like bonds are sort of like dazed and confused. They're not acting right. You know, you have them being kind of jerked around by what's going on in Japan right now. You've got this sort of Fed chair bingo, like which Kevin is it going to be? That's impacting bond yields. You've got all sorts of dynamics, the lack of government data. Yes, we're going to get CPI, but a lot of people are just going to discount it. We're not going to get a month over month number because we didn't get the October data. So bonds are sort of backing up, and the bond vigilantes are coming in with concerns about the deficit and the one big beautiful bill. The bond vigilantes kind of feel like that uncle that's coming into the holiday party and disrupting the mood. You know, once bonds wake up, they should see bond yields move lower into next year based on the macro picture.
So you're talking about strength in the consumer, supporting a broadening out, at the same time that you're talking about bonds reclaiming their haven as some sort of defensive trade.
Yeah.
How do both of these things work together?
Yeah, well, I didn't say the consumer was doing awesome. The top 10% of earners are doing well, and they're controlling, 50% of spending. But we've got some real cracks in the labor market here. Things are not looking great. Investors are completely brushing past this, these negative months that we've seen in terms of non-farm payrolls. We think that's important. Layoff tallies are picking up significantly. But the thing that I don't think people are talking about enough is the housing market right now. Shelter's 35% of headline CPI. It is weakening notably, not according to the BLS data. That's probably really backward looking. But if you look at Zillow, for example, home prices are flattening. They're up about 0%. Apartment List is telling us that rental prices last month just dropped the most on a month over month basis in 15 years. Negative 1% on apartment listings. So what we're seeing is that shelter disinflation, we think that starts to show up into next year. Those layoff tallies we talked about, there's usually a 6 to 8 week lag in terms of when that shows up in initial jobless claims. So I think the labor market's probably weaker than it looks on the surface right now. And that shelter disinflation is also going to prompt the Fed to cut probably more than the bond market expects next year.
Emily Rowland, so good to see you. Thank you so much for being here. Emily Rowland of John Hancock Investment Management. And I will not be wearing this blazer next time that I talk to her.
I love it.
My go-tos, I've got to say, went very close home in the right way. I mean, truth be told, don't we all have that, though?
Yes.
I mean, honestly, some people really enjoy the shopping thing, but maybe I'm revealing too much of myself.
Fair enough.
Anyway, let's move on. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. President Donald Trump announcing a holiday bonus for military service members. In honor of the nation's founding year, those in the military will receive a warrior dividend, a check of $1,776 before Christmas. The president's also planning, quote, the most aggressive housing reform in American history. Those are expected to be rolled out in the new year. Meanwhile, Australia announcing sweeping new hate speech laws in the aftermath of the terror attack that saw 15 people killed at a Hanukkah celebration in Sydney. The laws include a new offense for aggravated hate speech, a new federal offense for vilifying those based on race, and making it easier for the country to refuse visas for those found spreading hate. And Washington, D.C. ramping up pressure on Caracas. President Trump ordering a blockade this week of sanctioned oil tankers going in and out of Venezuela. And according to data compiled by Bloomberg, the move is helping to push inflation in the country over 500%. This as a Chinese official expressed support for Venezuela, saying it opposes, quote, unilateral bullying. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahira. Up next, the ECB is set to make its final interest rate decision of the year. Seema Shah of Principal Asset Management with us to break down the results. After what we got from the Bank of England, a rate cut, don't expect a repeat from the ECB. It is likely to be a bit of a different tone. This is Bloomberg Surveillance. Welcome back to Bloomberg Surveillance. We are getting an ECB rate decision. They voted to hold rates steady, saying they're not pre-committing to any kind of rate-cutting path. They're looking at data dependency, meeting by meeting, keeping the deposit facility rate at 2%. That was the estimate. Let's get some details from that decision. Jamie Rush of Bloomberg Economics here with the results. Jamie, when you parse through all of the details, what stands out to you?
Well, I think it's more about what is it that Lagarde's going to say at the press conference about the outlook for inflation, how that appears to be weakening, and what that means for interest rates. Because, of course, they have held interest rates steady. That was widely anticipated. The question now is, what is the next move? Is there any more room for them to cut? Do they see more space to cut? Or are they going to endorse Isabel Schnabel's remarks on the executive board there? That perhaps in the future the next move could be a hike. I mean, I think those are the things we're going to be watching, looking for the inflation outlook, looking for her remarks about the near-term policy outlook. Yeah, especially, Jamie, given the fact that they're talking about economic growth accelerating next year, raising their economic growth forecast to 1.2% for 2026 in the Eurozone from 1%. Granted, it still is 1.2%, not necessarily 2 or 3% that you see in other regions. Nonetheless, how much does that indicate this focus on inflation that you did talk about with Isabel Schnabel discussing? Well, I think, the key thing here is that growth, as you mentioned, is still slow. It's still potentially even below the trend growth rate of the economy or very close to it. And, of course, it's not guaranteed. What we're seeing is significant struggle for economies like Germany to gain momentum as China is slowing and its exports markets are not keeping pace. And, of course, we haven't yet felt the full impact of higher tariffs, which are still feeding through to the Eurozone economy. So the outlook is, as usual, uncertain. Growth is tepid. This is an outlook where you need to be vigilant. You need to be thinking about whether you need to provide more support to the economy. So I would say that it's not a settled matter that the ECB has left rates today at 2%. There could be more to come in the year as we proceed through the year. JB Rush of Bloomberg Economics, thank you so much for being with us. Right now, what you do see in markets is the euro just pulling back from earlier losses, almost flat with the dollar, and you are seeing muted moves across the board. What stuck out to me was the fact that 2026 inflation is now expected to be 1.9% versus a prior forecast of 1.7%. Sure, an increase, but still well below that 2% goal. David, it doesn't seem like this is screaming inflation, even as they do upgrade some of their growth forecasts.
Absolutely. And again, I think picking up on what Jamie was saying a moment ago, I think we want to get more insight into what this good place, as Christine Lagarde has called it, looks like, how she sees it shaping up over the course of these next few months. Then just going back to those comments from Ms. Bill Schneider, hard to understate how seismic the reaction to those comments was, the prospect that there could be a rate hike here in the near-term horizon. Again, her relative comfortability with that, I think, is something that we're going to want to hear more about from the president of the ECB when she speaks in a few minutes. Yeah, let's talk to Seema Shah, Principal Asset Management, who joins us now about just that. Seema, thank you for being with us. We are seeing some forecasts here that are interesting. When you take a look at the ECB's projection for 2026, inflation, stripping out food and energy, they now see it 2.2% versus the expected 1.9%. How much is this an ECB prioritizing inflation above potentially allowing growth to truly accelerate in the euro region?
Hi, Lisa. Yeah, I think this is key. I mean, look, the ECB, unlike the Fed, is going to be solely focused on inflation. That is their mandate. So they're going to put a little bit more emphasis on that. And so to the point that, yes, growth is certainly looking a little bit stronger next year. There's been upgrades throughout the year. And in fact, unlike the US, where you've seen consensus forecasts drop since the beginning of the year, European forecasts have actually increased since the beginning of the year. So there has been an improvement. Their sole focus, though, has to be on inflation, which means that they're likely to keep, at least I think Lagarde is likely to maintain a slightly hawkish narrative, but I don't think that she's likely to kind of reinforce Schnabel's comments about the next move being a hike.
Won't reinforce them, but I wonder how she addresses them effectively. So we've seen kind of the moves since those comments were made in that interview with Bloomberg. And I think just the fact that they exist, that specter kind of looms large here over the shadowing itself over the course of this meeting is significant. What does she have to say? How should she address? How do you anticipate she's going to address those comments?
Well, I think she's going to allude to the significant uncertainties that there are about the outlook. You know, as we've heard her say before, they feel like they're in a good space. Good space being that they have managed to navigate this year's various challenges with regard to trade tariffs and managed to get to a spot where they feel like growth can be stronger next year without really suffering a major inflation shock. So that's a good space. What that implies is that they have the time, the patience almost, to sit it out and see how the economy responds, how inflation responds. So if anything, we do think that Lagarde is likely just to keep the door open, not really promising any kind of forward guidance, but just talking about almost the data dependency and seeing how inflation, above anything on the economic growth or labour market side, but how inflation expectations evolve over the coming months.
You'll forgive me for going back to growth, but I heard Jamie Rush characterize it as tepid growth and talk about all the uncertainty that Europe is facing. Certainly so many economies are facing right now. Yet if you look at all of these forecasts in aggregate, I think of OECD, IMF, World Bank, ECB now, even comments from the Federal Reserve that are rosier than they had been. There is this sense that things are improving and getting better. And I wonder how you square that with this overarching uncertainty that still looms large here. If it has to do with tariffs policy, if it has to do with fiscal spending, there's still so much that we don't know here. Given all of that, Seema, how much credence can you give to the forecast, the likes of which we see today?
Well, so the improvement in the forecast is something to do with the idea that, look, Europe hasn't been as badly hit by trade tariffs in 2025 as expected. And so some of that is expected to follow through to 2026. And some of the concerns that existed just after Liberation Day about Europe potentially being hit by a 30% trade tariff have faded, of course. So that's one thing. But I think the main reason that you've seen these upgrades to forecasts is around the fiscal stimulus, which is going to be coming through. Now, the uncertainty around that still exists in terms of what is the allocation of that fiscal spending going to be? How much does it feed through to the economy? But just the size of that fiscal stimulus is enough, I think, to lift economic growth forecast by a bit. But to your point, these are still quite small upgrades. This is still growth, which is expected to be meaningfully less in the US. So you don't want to get too excited about it. But certainly there does feel like there is a little bit more optimism than there used to be around the European story.
But is there a broader takeaway from central banks globally that see the fiscal impulse and are not shying away from either rate cuts or holding rates steady because they want to allow growth to take off? Does that make you more inclined to buy the equity side of the story than, say, the fixed income side of the story because there is this focus on growth?
Absolutely. You know, I think the equity market story has become more attractive for a lot of places. Of course, you've got to take it into the valuation side. But the fundamental stories for a lot of these countries have improved. And you can see a significant disparity with the countries which haven't really embraced that fiscal stimulus. And the UK is a perfect example where they have continued to tighten fiscal policy. And you've seen that equity markets and general investor sentiment towards the region has deteriorated, whereas it has improved for Europe. So I think that is a key narrative. It's one that's likely to persist through 2026 as well. There could, of course, be the ramifications for the bond market and how yields are going to be performing. But at least from an equity market side, a lot of these countries do look more attractive because of that fiscal story.
You know, the ECB just sort of underscores this narrative that's taking hold, certainly in the United States, that you can have growth without inflation. You can have a productivity-led growth that's going to allow central banks to hold rates either at neutral or even potentially keep cutting while growth is powered by the AI story. How feasible is that? Do you think that people have gotten a little bit too carried away with that narrative?
Well, I think it's a narrative which is important, but I don't think it's specifically very important for today. And I think there's two contrasting stories. For Europe, the concern isn't really around what the deflationary impact of AI is. I think the concerns on the deflation side for Europe is really around China's exports as they try and move their independence away from the US and trying to broaden their export partners. So then really flooding European markets with slightly cheaper exports could put some downward pressure on their inflation. For the US, I think the AI story is a little bit more pertinent because AI adoption has been so much more significant. But even in the US, certainly we are expecting that for 2026, for example, inflation is going to be somewhat elevated, certainly above the 3% level, but that is something that equity markets, general markets can actually absorb, and actually that central bankers can be fairly comfortable with, even if they don't specifically say that 3% is okay for the near term.
Seema Shah of Principal Asset Management, thank you so much for being with us and breaking down the ECB rate decision. I'm struck by some of these forecasts talking about growth of 2.1%, talking about inflation at 1.9% next year, and then getting concerned that maybe rates are too low and need to be hiked. I mean, it's such a different scenario heading into U.S. CPI that we're going to be getting in 5 minutes' time.
Absolutely. It's fun to look at all of these in complement because, of course, you had this Bank of England meeting on the heels of their CPI report yesterday, the way that colored their decision today or didn't, the degree to which inflation's weighing on the ECB decision. I don't know. It's fascinating to kind of, again, look at them all together, Lisa.
Yeah, you're looking at European growth expected to be 1.2% next year from an expected 1%. Is that a concern for inflation? In the United States, November CPI data set to cross with the expected 3% headline year-over-year number. Aaron McLaughlin of the Conference Board and Brent Schutte of Northwestern Mutual both joining us to break down the numbers. Right now, a lift to equity futures ahead of that decision. This is Bloomberg Surveillance. Good morning. 25 seconds away from that key economic data coming delayed. Nonetheless, better late than never. What we are seeing in markets is a positive lift, this expectation. Maybe we can restart this rally up about 0.5% on S&P futures. Yields decidedly lower after the ECB and Bank of England rate decisions, down 4 basis points on the 10-year to 4.12% as we do get that key inflation data coming out of the United States. Just crossing now. Let's head over to Bloomberg's Michael McKee with the numbers. Mike.
Well, better late than never is a good way to put it, Lisa, because the news is pretty good on a 2-month basis. Remember, we didn't get October CPI, and we're not going to get much out of that. 2.7% for the year-over-year move in CPI. That is down from 3% in September, the last release we got. The core CPI on a year-over-year basis falls from 3% to 2.6%. So good news on inflation. Meanwhile, good news on the job front with initial jobless claims falling to 224,000 from 237,000 revised the week prior. On a continuing basis, claims are at 1,897,000. That's up from 1,830,000. And finally, we've got the Philadelphia Fed numbers coming out now. The business outlook falls to negative 10.2 from negative 1.7. The prices paid index falls, though, to 43.6 from 56.1. Employment at 12.9 versus 6.0. So pretty much all of these numbers are better in terms of their trend. We'll break down what the CPI numbers are telling us while you break down what the markets are telling us.
Well, right now, Mike, the markets are cheering. We'll get back to you in just a second. Right now, this is a collective scream of joy in Wall Street because what you're looking at are yields substantially lower across the board on 2s, 10s, and 30s. And you're seeing equities with a lift. This is giving the green light to the Federal Reserve to cut interest rates. You can see that rally building at the front end, now down more than 3 basis points. The equity front, take a look at that rally, turbocharged, particularly for the Russell 2000. It had been up about, less than 0.33%. Now we're looking at more than a 1% gain, a similar move on the NASDAQ. S&P futures up by 0.6%. When you bleed this through the currency space, we did just get an ECB on hold. We are going to likely get a Fed that potentially could be cutting rates, which is leading to dollar weakness, as you would expect. Michael McKee, you've had a couple of seconds to look through this. Does anything stand out to you that really does seem to move the needle one way or another?
Well, one thing that is important to note about this is that October and November, there's no October data, so we don't have the month-to-month changes in most of the categories here. Some come in electronically, and looking at those, we can see that gasoline prices in November were up 3%. After falling 2.1% in the month of October. Another one we have is new vehicle prices. They were up 0.1% in October and up 0.2% in the month of November. Used cars up 0.7 in October, up just 0.3 in November. So an improvement there. Most of what we're getting is year-over-year numbers, and we can say that food, 2.6% was the increase on a annual basis there. And food at home, the grocery prices people are unhappy about, up 1.9%. So some improvement in inflation in all of these areas. I'll continue to dig into this as we try to figure out what really drove the numbers this time.
Michael McKee, thank you so much. What?
Yes, he's very fast.
It's just amazing.
Yeah,
he's absolutely
impressed.
fantastic. I am curious, though, about the line items. I do think the line items are going to matter more than usual, in particular due to questions around how this was calculated, given some huge gaps in the data collection.
Yeah, and just kind of what the use or utility or veracity of all of this is, I think is going to be an open question. We'll see sort of how maybe this gets colored politically over the course of the day, given the lapse that we've had.
I'll give you a hint. I'm watching Truth Social for cut rates now.
Some reaction there. Market reaction on that one as well.
100 basis points. Aaron McLaughlin of the Conference Board joins us now for more. Aaron, how should we view this in light of everything that we've been talking about with respect to the complications around data collection, but also this look to the Fed and potentially how much of a constraint this is or isn't on them cutting further?
Well, obviously good news for consumers, and that's important. I think that we were already anticipating a possible cut in January, once the employment numbers come in early January and we have some clarity, which we didn't necessarily get with the employment numbers due to the shutdown, due to the blip over the last couple months. So I think this would certainly support that theory a little bit more. When folks are thinking, well, how many cuts are we going to get next year? I think that's the big question, is what does 2026 really look like?
Well, and also, how much are you seeing some of this disinflation, or not disinflation, but this idea that we're not seeing inflation run away? How much are you seeing that reflected in sentiment? Because this is what David was sort of referring to, this idea politically there is a response to inflation that has been cumulative over 4 or 5 years, not necessarily a disinflation, right? So how much is this actually being felt?
Well, it's not being felt yet. So our latest consumer confidence numbers at the Conference Board, that is one of the main things that we do, has really moved sideways, after a drop in April, after Liberation Day. And then it did proceed to drop further in November. And so, and that was sort of on the heels of the government shutdown. And obviously, even within public policy and elections, the concepts around affordability are still being discussed. For American consumers, food costs more, insurance costs more, housing is still, double what it was 7 years ago. And so in medical costs as well, which I don't think we spend enough time talking about. So those really big costs are still weighing on the consumer.
I think that the president's going to like the collective scream of joy in markets that you mentioned a moment ago. Yes. But I think you're getting at something really crucial here, and we saw it during the last administration. That is, the data can be good or trending better. The White House politicians can tout that fact. Yes. But as you well know, sentiment is so crucial here, and it's hard to kind of make that up if people aren't feeling great about where things are and where they're headed.
Right. Your average American consumer is not necessarily paying attention to today's number, and they're paying attention to what their insurance costs are, how much it costs to buy a car. We've noticed that, the average price of a new car is now over $50,000. Wow. And people used to take out 5 or 6 year loans on a new car. They're taking out 6 or 7 year loans on a new car. So it's just sort of these big decisions that consumers face, and also the small decisions at the grocery store that impact them.
Just quickly here, the labor market side of things, the jobless claims, how much can the Fed cut if we don't see any kind of pickup in layoffs or real weakness accelerate?
Well, I think that's a great question. So we don't have great data for the last couple months. We also saw that a lot of the data that we saw most recently was due to the government shutdown and due to folks in the government workforce perhaps exiting at the end of that federal year at September 30th. Where we see growth is in healthcare and in some other industries. So I think it'll be really important to sort of look underneath the job numbers to see, if we're peaking at 4.6, what's growing, what's not growing, and then that will be able to tell us more about how next year is going to be.
Erin McLaughlin of the Conference Board, thank you so much for being
you.
with us. Really appreciate it. Brent Schutte of Northwestern Mutual Wealth Management joining us now. Brent, what's your first reaction to the CPI print? How much does it color how you see investing next year and the backdrop for the Fed?
I think it certainly helps the parts of the market that you mentioned before, small caps that have been harmed by higher rates. And so if you think about the economy the past few years, it has certainly been bifurcated, as has the market. It's been narrow, both in the economy and the markets, where you've had the heavy lifting done by a few stocks tied to higher income consumers and the AI theme. And I think as you look at 2026, we do see broadening, where you see small caps doing better, where you see the average S&P stock doing better. I think it's a risk management tool, but it's also in 2026 a return enhancement tool. And so that's my first thought. My second thought is what's happening underneath in the economy when you see inflation pull back this much? How weak is actually demand? And you mentioned the labor market, which I think people are giving coast-all clear because of non-farm payrolls being around 60,000, which I remind you, they were overstated by 70,000 in the data going through to March of this year. And the Federal Reserve Chair Powell mentioned he still thinks they're being overstated by 60K. So they are right around zero. And that's where I think there's some risks still that are out there.
Do you think that the market response, that if this gives the Fed the green light to cut rates, then that's positive for equities, is correct? Or do you think that it's coming more from the labor market weakness that you were just referencing?
I think it's positive for a broader set of equities. And that's where I think I come back to no one knows exactly what's going to happen in the next 6 months. I think forecasting is always difficult, but there certainly is this odd kind of mix of policy that is out there. And I think you can see that through the Federal Reserve eyes, where if you had all 19 voters voting, it would have been 12-7. And you see those dissents. And that's where I just think it's hard to figure out what's going on in the near term. But if I think about the long term, I do want to pay attention to valuation. And that's where I go back to those areas of the market that people have largely ignored. They haven't done as well because of the impact of higher rates. I think pushing forward in 2026, you have valuation with you, and you have potentially the impact of rising earnings in those parts of the market for the first time in a few years.
Brent, let's have some fun here with counterfactuals. You've opened the door, so I'm going to drive my truck right through it. I'm very curious, if we'd gotten these data before the last Fed meeting, how that conversation in the Eccles building would have been different, if at all. I mean, we talked a lot about this being an insurance cut. There were certainly a lot of questions about whether the Fed should move then or wait till January. Do the data that we've got today give you any sense that it would have the outcome would have been different last week had Fed officials gotten them?
Potentially, but I don't think people's concerns about inflation longer term are going away. This could be certainly tied to the government shutdown with inflation coming down. It could certainly be tied to the labor market weakening. Look, I think inflation is a longer term phenomenon. We have not yet returned to 2%. The Fed's dot plot doesn't show it returning till 2028, which is 7 years since. And this is where I think there's concerns about what happens next year when the stimulus gets layered on, what happens next year when we get a new Federal Reserve chairman, and what happens longer term to help pay back some of that debt. And that's just where I think inflation probably still is the longer term outcome. And that's where I think the concern of some of those people on the Federal Reserve would not have gone away. Perhaps you would have swayed one or two more people. But I think there are still legitimate concerns and questions about, do we get back to 2% inflation absent some sort of economic contraction in 2026, which no one is pricing in right now.
Brent, the overlay here, of course, is this AI story. We've been tracking that day in and day out, all the ups and downs. Certainly, Micron, the latest kind of chapter in that narrative. We heard policymakers engaging more with this issue of productivity, what this is going to mean for the economy or could mean for the economy going forward. How are you thinking about that in light of what you're talking about here, the kind of the persistence of inflation into 2026, the challenges facing this U.S. economy going forward?
I mean, we'll see on the productivity aspect of it. I think companies are still trying to figure out how to use it to increase employees' productivity. And I think that's a prime question as you head into 2026. I think the reality is you are starting to see it move through different parts of the economy. So it started out in the picks and shovels, I guess, and now it's moving along to companies like Micron. I eventually assume it will do much like the internet did, which is increase the productivity and efficiency of all companies who actually use it. And so that's where I think you're seeing winners and losers change. I think you will continue to see that in the future. And that's where I think anyone investing solely in AI right now or concentrating their portfolio in it is taking risks they don't need to be taking, because I think there are opportunities as it continues to shift, as it continues to spread, through the economy for those companies and stocks that have previously been left out to start benefiting from it. And that's where you saw this broadening in 2000 through 2007 that occurred post kind of the concentration in 1998, 1999, which is eerily similar to today, where a few stocks did the heavy lifting for a few years. People concentrated in those, unfortunately, and then the game changed going forward, which I think is what's going to happen as you push forward into 2026 and beyond.
We're talking as we do get that broadening out, at least in the initial price action this morning. If you are just joining us, we did get the CPI print from November, the first inflation read in the United States going back to September. It was well below expectations, coming in at 2.7% year over year versus the expected 3.1%. Core CPI, stripping out energy and food costs, looking at 2.6% year over year versus the expected 3%. Then that is good news. Disinflation, what we kind of would like to see. On the flip side, we didn't see initial jobless claims tick up. We actually saw them come in slightly below, the good kind of downside surprise, with 224,000 versus the 225,000 expected new jobless claims. The response in markets has been a screaming joy of success. You could see that gain right now. NASDAQ futures up 1.4%, a similar gain on the Russell 2000. Brent Schutte, do you think that this is sustainable into year end? Is this enough for what people need to see?
I think it is largely. I mean, I think the question of AI is still out there. And this is where I go back to 99, and I think the risk is similar today as it was back then, which I think was a very mild recession. What impact does the potential market have on the economy? So usually I think of the opposite. I think of the economy impacting the markets. That's why we pay so much heed to it. But this time, the markets are trading at record multiples. There is a lot of speculation that is still occurring with non-profitable tech stocks and all the other things that are out there. And this is where the economy now is dwarfed by the market, which I believe the market is now 2.3 times the economy. Is the risk there that the AI theme starts fizzling out just a bit? And that's where I think today's news is good, because I think it allows other parts of the economy potentially to have some life. But that's where I think this AI theme is incredibly important pushing forward. And we'll see what happens as we move through the day. If the market holds these gains, I think it's a positive. But certainly over the past few weeks, you've had trouble holding it based upon what's happening in crypto, what's happening in AI. Right. And that's where I still think that's a dominant theme to be seen.
Brent Schutte of Northwestern Mutual Wealth Management, thank you so much for being with us. Let's head back to Michael McKee, who's been digging through this report for details. Mike, what do you see?
Well, I think, Lisa, the most important thing here is that we don't have the monthly numbers for almost all of the categories. This press release has a lot of blank spaces on it. So you have to look at the year-over-year changes, and we'll have to do some math to figure out maybe what it is on a month-to-month basis. But when you look at the changes in some categories, they are good news. Food at home, for example, was up 2.7% on a year-over-year basis in September, but only up 1.9% in November, in the 2 months that we had no data, that they came back down again. The goods prices, commodities, ex-food and energy, up 1.4%. That's down from 1.5%. And services up 3% over the 2 months on a year-over-year basis. That's down from up 3.5%. And finally, the BLS measure of home prices, owner's equivalent rent, up 3.4%, down from 3.8%. So all of the categories, all the major categories that people watch, are down on a year-over-year basis. So it looks like in October and November we had some month-to-month declines, so some better stuff. And that's about all we can say at this point. And you asked the question earlier, does it change what the Fed might have done? I don't think so. There's not enough detail in here for them to really make any kind of decision on what it means for the future. But for right now, it is good news, and it does show unexpected progress on inflation.
Michael McKee, thank you so much, as always, for breaking it down. It does seem like markets are enjoying this. You aren't seeing, though, a huge pop in the expectation for a Fed rate cut come January. David, it seems like people are looking into the jobs picture as potentially the greater impetus to cut, given the fact that inflation still is well above that 2% target.
Yeah, still lingering there. I think that was telegraphed by the Fed chair during that meeting last week, that's likely to persist. And I think those concerns about cracks in the labor market persist here as well. Again, just looking, as Mike said, at this press report, seeing all of those empty spaces is certainly glaring. And again, I think over the course of the day, we'll learn more just sort of how this all fits together in that broader picture of inflation here in the U.S.
What a fascinating moment. We got a Bank of England rate cut going down with rates to the lowest going back to 2023. At the same time that we got an ECB 5-4 split decision to hold rates steady with concern about inflation, even though inflation is sub 2%. And we have now a Federal Reserve very much in focus to potentially cut rates because inflation didn't come in at 3%. It came in at 2.7% year over year. It just highlights how different the picture really is for everybody.
Totally disparate. It was earlier this week I was going through that long list of all the central bank announcements that we were going to get. And I think we talked about what would be interesting, what wouldn't. Certainly some interesting news today from all three of these.
Let's hear from the ECB President, Christine Lagarde, who is currently speaking at the news conference over in Europe. This is the new
Bloomberg Daybreak is your best way to get informed first thing in the morning, right in your podcast feed. Hi, I'm Karen Moscow.
And I'm Nathan Hager. Each morning, we're up early putting together the latest episode of Bloomberg Daybreak U.S. Edition. It's your daily 15-minute podcast on the latest in global news, politics, and international relations.
Listen to the Bloomberg Daybreak U.S. Edition podcast each morning for the stories that matter with the context you need.
Find us on Apple, Spotify, or anywhere you listen.
News when you want it with Bloomberg News Now. I'm Caroline Hepker.
And I'm Stephen Carroll.
European Union leaders have reached a landmark agreement to lend Ukraine 90 billion euros for the next 2 years. The decision came in the early hours of this morning after marathon talks in Brussels. Under the agreement, the EU will raise joint debt backed by the bloc's budget to fund the loan. That's a significant pivot from a previous plan favoured by many countries to use Russian assets frozen on EU soil. Speaking after the deal, EU Council President Antonio Costa set out how the agreement would still be tied back to those Russian assets.
As a matter of urgency, we will provide a loan backed by the European Union budget. This will address the urgent financial needs of Ukraine. The Union reserves its right to make use of the immobilized asset to repay this loan. At the same time, we gave a mandate to the Commission to continue working on the reparation loan based on Russian immobilized assets.
Antonio Costa speaking there as leaders hope the deal will strengthen Kyiv's hand at the negotiating table and keep the war-torn country afloat. Speaking after the agreement, German Chancellor Friedrich Merz described the deal as a pragmatic, good solution. French President Emmanuel Macron said the absence of this decision would have been a disaster, but that Europe will have to find a way to engage directly with Vladimir Putin as the US pushes ahead with peace talks.
Japanese bond yields have jumped after the Bank of Japan hiked rates to the highest level since 1995. While the bank's quarter-point move to 0.75% was widely expected, traders are focusing on the lack of clear guidance on the timing of future hikes. Here's our Japanese economics reporter, Paul Jackson.
It's not quite back to the 1980s, but it's certainly back to the 1990s. This is the highest interest rate since the 90s, 30 years since it's been this high. And we've seen the yen weaken a tad after the decision. And we've also seen benchmark yields rise above 2%. And they haven't really been at that level regularly since the late 1990s.
Paul Jackson speaking there as the central bank cited the rising likelihood of its economic outlook being realised and said underlying inflation is continuing to rise moderately.
The Bank of England delivered its expected rate cut yesterday, but its policymakers are warning there is limited room for more reductions. Britain's central bank has moved its base rate to a 3-year low of 3.75%. Governor Andrew Bailey says recent inflation data has been a positive surprise.
I think now that we're on a path where we'll probably be around this level for a few months
But we think that come the spring, April, May time, we should see another quite sharp drop and take us, I hope, to around target. So we're going to come back to target sooner than we thought. So that's encouraging. All of this is very encouraging.
Bailey's decision to cut rates for a sixth time comes as concerns in Britain shift away from persistent inflation and towards a stuttering economy and labour market. We've just had the UK retail sales data, which fell in November despite an optimistic forecast from most economists. The data from the Office for National Statistics shows retail sales, including auto fuel, fell 0.1% month on month. The estimate had been for a 0.3% gain. Excluding auto fuel sales, retail sales fell 0.2% in November month on month. Again, the estimate had been for a positive gain of 0.1%.
Officials have found the dead body of the suspected gunman in a shooting at Brown University last weekend. 2 people were killed and 9 were wounded in the attack. The Chief of Police in the town of Providence, Oscar Perez, said the suspected attacker took his own life.
An individual was identified as Claudio Neves Valenti, and he was a 48-year-old man. He was a Portuguese national, and his last known address was in Miami, Florida.
The authorities say there's no longer a threat to the public, ending a manhunt which has lasted nearly a week. Meanwhile, the Trump administration says it's halting the US green card lottery program, which it said was used by the suspect and in the killing of an MIT professor.
Now to other news. TikTok is being acquired by a group of buyers led by Oracle after a long-delayed plan to separate from its Chinese parent company ByteDance. CEO Shu Chu told employees about binding agreements to create a US joint venture, majority owned by American investors, in an internal memo seen by Bloomberg. The news comes after a national security law passed by former President Joe Biden mandated that ByteDance and TikTok US have no operational relationship. Our senior editor for technology and strategic industries, Michael Shepherd, says we still don't have all the information.
And yet the security guarantees are going to be one of the big questions out there. And the other will be, has China signed off on this as well? And we are waiting to see what Beijing will say and if it has been part of the trade conversation.
That was Bloomberg's Michael Shepherd speaking there. The terms outlined in Chu's notes to employees appear to leave the door open for ByteDance to potentially retain oversight of key parts of US TikTok. The deal is expected to close on the 22nd of January 2026, but Chinese regulators have yet to say whether they will approve the transaction.
Those are your top stories on the markets. We're looking at the 10-year government bond yield in Japan, 2.01%, up 5 basis points on the day. The Japanese yen, 0.4 weaker now against the dollar, 156.14. On stock markets, the MSCI Irish Pacific Index is up by 0.5%. Eurostoxx 50 futures down 0.1%.
That's news when you want it with Bloomberg News Now. I'm Caroline Hepker.
I'm Stephen Carroll, and this is Bloomberg.
So, what will Rachel Reeves's pivotal new budget mean for you?
Has an innovative think tank just come up with a solution for replacing stamp duty?
Hello, I'm Steph McGovern.
And I'm Robert Peston.
And we wanted to recommend you our podcast, The Rest is Money, where we answer questions like these to try and make sense of the UK's economy.
Look, we get it. You're a discerning sort of person. You're a Bloomberg listener after all.
So we're not going to waste your time. Here's why it's worth you searching for The Rest is Money in your podcast app or watching us on YouTube.
Twice a week, The Rest is Money tells you everything you need to know about the money matters affecting all our lives. Fiscal and monetary policy, housing, immigration, even the high street.
Yeah, we do conversations for curious minds. No dry discussions here.
That's why we speak to brilliant and fascinating people.
Yeah, recent guests include Dan Needle, Art Laffer, JP Morgan's Karen Ward, and even the Chancellor herself.
So why not give us a try? Search for The Rest is Money.
Bloomberg Tech
is that the FT is reporting that there's been some issues in getting the financing for one of their big centers, and that's giving investors a lot of anxiety that, hey, are these lenders seeing something that we are not? That's what's driving the fear this morning.
What's interesting is you've been writing about the sheer scale of leases, and I think leases is something different because it's off balance sheet.
Yeah.
We're not always seeing, we're hearing it in a 10Q that they could have up to $300 billion worth thereabouts in terms of their overall leases that eventually they're on the hook for paying. But
yes.
How is this different? How is this sort of financing different from capital expenditure and the like?
Right. So we're used to hearing about capital expenditures, which is I'm going out and buying computers, I'm buying wires, I'm buying the data centers themselves. But what's becoming more popular is renting the data centers, and that allows you to not pay everything up front and not have that be on your books directly. And so what we've seen is a big spike in these kind of future dated commitments that Oracle is the example that they have about $250 billion that they're on the hook for over the next 20 years or so. And most likely this Michigan data center would be one of them. It's just kind of, one more pool of spending that we realize quite how large this build out is going to be.
What's interesting, I think, is the Oracle is different from the other hyperscalers in that it's relatively new to this whole data center lease build out element. It used to be a software company. So is that something that also the market's trying to factor in? How good is it at this compared to Alphabet, Microsoft, Amazon, who've been in this game for a very long time?
Yeah, that's a huge part, right? I mean, if Microsoft has $100 billion in commitments, people don't bat an eye as much because their cash flows are quite a different style than of Oracle's, right? I mean, Oracle's spending is such a large percentage of its overall company size because it's making a very ambitious transformation. And now if you're a bull on Oracle, you say, yeah, well, they are doing what it takes to transform their business. But a lot of things need to go exactly as planned for this to go right.
You're going to be across how all of it does go right or as planned, Brody Ford, across the Oracle story. Look, let's turn to, the company that's buying a lot of the data center or needs the data center compute from Oracle, and it's OpenAI. It's in initial discussions to raise at least $10 billion from Amazon. And we'll use some of the cloud giant's Trainium chips as well. For more, let's go to Bloomberg's Matt Day, who covers Amazon. Is this a circular deal?
Oh, it sure looks like it. If you roll the clock back a month, OpenAI bought $38 billion of compute capacity from Amazon. That was a 7-year deal. It was primarily for NVIDIA chips. Per this news that emerged last night, it looks like Amazon may be giving some chunk of that back in investment to OpenAI.
So $10 billion in equity so that OpenAI can continue to afford to buy compute, of which it's going to be buying from Amazon and its chips. But go to the chips part of this, because, Matt, this could be a real endorsement once again for Trainium in the same way that Anthropic lent its name and its capacity for actually using them.
Yeah, that's right. Amazon, also a close partner of Anthropic. They've invested $8 billion in that company as part of a deal that got Anthropic to use Amazon's own homegrown AI chip for their models, right? So this would definitely be a coup for Amazon's in-house chip-making effort, which analysts are still trying to struggling a little bit to understand the effectiveness of to date, in part because there's just few enormous customers for this stuff. There's not a whole lot of big model trainers out there. So it goes without saying that if OpenAI can make the GPT suite work on top of Amazon's silicon, that's a big deal for AWS and for Amazon.
Because it was such a big deal for Alphabet, and we think about the endorsement that its vertical model seems to be getting from the market. What does it mean for NVIDIA? Because as you mentioned, the previous cloud deal between OpenAI and Amazon actually was a ringing endorsement for NVIDIA chips.
It means there's hunger for an alternative to NVIDIA. I mean, NVIDIA stuff works well, but it's expensive. It's in short supply, only one supplier. So you've definitely got increased credibility among the other folks who are putting out AI accelerators on the market. AMD has an OpenAI deal, for instance. Amazon and Google's TPUs are all making a claim for some of that big NVIDIA business.
All of this is about trying to finance the ever-needing compute coming from the likes of OpenAI. Matt Day, brilliant reporting. Thank you very much indeed. Let's get the market reaction. Let's get an investor perspective for you. Tony Wang's with us. He is portfolio manager at T. Rowe Price's $12 billion science and technology fund. You are named and own the who's who of the players within AI infrastructure and AI use, Tony. Are you worried? Let's start with Amazon and OpenAI. Are you worried about the circularity of deals once again at play here?
Yeah, well, I think that whenever there's some type of creative financing, there's always some scrutiny that's on there. But I kind of view it as there is a synergistic partnership here, and that OpenAI is growing rapidly. They need the compute, and it makes sense that they want to look for multi-source. And so I think going to Amazon does make sense. In addition, I think they want some of that upside. And so you're seeing, like, whenever there's like a new frontier of technology, there's often, companies that need to come together and build the ecosystem. And I think that this is an instance of this. And so, I think it's definitely something to watch. But I think that what matters at the end of the day is that AI continues to progress, the scaling laws hold, the use of, ChatGPT, LLMs continue to grow. And I think that when you look at these tools that are coming out of the companies, they are like transformational in terms of how we are rethinking work. So I think what really matters is that the end demand continues to be really strong and that we're seeing progress on AI.
I'm looking at your holdings, and the number one holding that you have at the moment is Alphabet. Interesting news with a new Gemini release this morning, which we'll get into. But NVIDIA is your second biggest. Now, are you worried about NVIDIA losing any sort of market share to Alphabet, to Amazon, to some of these other chip players?
Yeah, well, I think the market is growing. And so, this is an exponential growth curve. So I don't think that it's a winner take all. And so, multiple companies can do well. And in some ways, I think when you step back and think about what's going on, there is kind of a space race for AI, but they're going to multiple areas, multiple moons. And so they're all doing their own kind of domain expertise. I think like with the TPU, it's very optimized, for a specific stack and for the Google ecosystem. And then I think NVIDIA is like kind of more the merchant, like broader platform, can run everything. And I think both can have a place. And you can see that, Google's been doing really well over the last 5 years. So has NVIDIA, so has AMD, so has Broadcom. And so to me, I think that, there's not a winner take all here.
Okay, I love that sort of element of there are many races, maybe many moons, Tony. But talk to us about the moon shot that Oracle is making at the moment and the anxiety that people might not be wanting to lend to their future of leasing and the sheer scale of capacity that they're building with other partners, of course, out there like Related Digital. Have you got any anxiety around Oracle? I know it's in your portfolio last time that it was published.
Yeah, so I think that, Oracle definitely sees the demand signals that are probably really strong. And so they're looking to meet that demand, in the near term with leases, and then over the long term, probably with owning their own capacity. And so to me, they see this as a big opportunity that is once in a generation. And so they're building for it. And they're, kind of being creative with it. And so to me, it definitely, the market is super concerned. I think that there's probably somewhat an overreaction. And I think as long as the demand is there in years 3 to 5, I think that that's what will make kind of the Oracle bet make sense.
So all of this anxiety writ large around sort of whether it's more experimental financing, creative financing, circular financing, is it actually a buying opportunity for you, Tony?
I think we're constantly managing risk and, rotating the portfolio to what has the highest ROI, what has the best risk-adjusted return. I still think that AI is continue to be a really good area to place capital. It's a lot of multi-year inflection. That being said, it's also been 2-3 years since ChatGPT has been launched, and so we are kind of further along in AI, but I still think we're pretty early. And so, a lot of my views, are expressed over the multi-year and think that you want to invest in companies that have strong competitive advantages that capture the value with their ecosystem. And I think that not everyone's going to be a winner in the space race. Like some rockets might not make it. But to me, I think it still is a really great overall theme to be invested in.
Well, at the moment, you think the rockets to be betting on are in order of importance: Alphabet, NVIDIA, Broadcom, Apple, Microsoft. But how will that change as the application of AI comes? Thus far, it has all been about the AI infrastructure. But there's going to have to be proof in the pudding, the productivity. Are your science and tech fund going to end up looking like healthcare companies, like financial companies, like actually the users of this tech?
Hey, I think that's a great question. And, often I think about where the economic profit pools are shifting, or where is the second derivative, accelerating to. And you've been right. The last few years have been really heavy infrastructure build outs. And that's where a lot of the companies have accrued a lot of value. You think about, NVIDIA, Broadcom, those have been examples. And then you're also seeing the components that are going in the system, memory, HBM, networking. Those companies are seeing a lot of traction and economic profit accruing there. And then I think the next phase probably is on the application layer. And so, there are large language models like, ChatGPT, Anthropic, XAI that are all working on this. And so, yeah, I think it's going to be exciting. And I think you might even see some, previously, viewed as kind of on the wrong side of AI, perhaps be able to capture value. I think there's software companies that have kind of been written off here in enterprise that, if you're a Fortune 500 company, often you're going to go to your software vendor once you've figured out, what play you want to implement AI. So I think that there could be, new companies that form on the application layer, but there could also be incumbents that are now leveraging AI, seeing the compute costs go down and, the capabilities and models be more domain specific. So I think it's an exciting time to be in technology. It's constantly evolving. And I think that there will be also, great opportunities, that we don't think about right now.
Well, you're in some of the software play, in particular Salesforce, which has been a bit beaten up for perhaps being not at the tip of the spear of things, AI, in terms of the monetization. But where's really been monetizing has been the picks and shovels and memory of late. You just mentioned memory. We've got Micron after the bell. Are you feeling positive about how much more we're seeing price strength from these sorts of companies?
Yeah, we're definitely on an upward trajectory in memory prices. So I think what's going on there is that HBM, the stuff that goes into these GPUs and AI systems, they soak up a lot of wafer capacity. And so as a result, it's creating shortages in broader DRAM, and then also that's creating shortages in broader NAND. And so that you're seeing this ripple effect into other areas, like SanDisk, for example, has seen, tremendous appreciation in their stock price. So, I think that there will be these areas where, the economic profit can be distributed to even more that didn't participate as much over the last few years.
What's really interesting, and correct me if I'm wrong, but I've gone to the Bloomberg terminal and I've looked at the members that make up your fund. Lambda Inc., a private company, is in there. You, of course, at T. Rowe Price, know the opportunity there is in these crossover financings and the desire there is for private companies and exposure to it. So are you going to be seeing these companies going public? Are you looking more for private holdings as well as public?
Yeah, thanks for asking about that. At T. Rowe, I think one of our biggest competitive advantages that we are, both public and we're also one of the biggest financiers in the private markets. And so we partnered up with Lambda. I think that they've got a really interesting cloud stack that is unique. And they're on the right side of change of building these data centers really to what you would want a true AI data center to be like. So without a lot of the baggages that you would have to hold in traditional compute. And so, I think the future is bright for them. The team's executing extremely well, and excited that, they continue to progress, in terms of, timing on public markets. I think that they'll do it when they're ready.
We'll keep an eye on Lambda and the executive team over there as well. Tony Wang, he's portfolio manager at T. Rowe Price Science and Technology Fund. Public, private, we went everywhere. Meanwhile, coming up, the bidding battle for Warner Brothers is reaching a crossroads. That's up next. This is Bloomberg Tech.
There's a very big difference between AI-enabled content and AI-originated content. Those are two completely different things.
Warner Brothers Discovery. It is urging its shareholders to reject the Paramount Skydance takeover bid, favoring its original agreement with Netflix. Bloomberg's Michelle Davis joins us now on the latest. We're seeing the market reaction. Paramount Skydance off by 4.5% now. So what is the thesis of Warner Brothers Discovery as why the $30 Paramount is not living up to what's been offered elsewhere?
So what Warner Brothers is saying is
they reviewed the Paramount $30 a share offer. It's the same offer that Paramount had offered them 2 weeks ago when the board already deliberated and decided to go with Netflix. And in some ways, they're saying this offer, the tender offer, is worse than what was initially offered. The logic is they don't view it as certain as the deal they already have signed with Netflix. And part of that has to do with the fact that Paramount has lined up, okay, $54 billion of debt, but they also are going to need $40 billion of equity. And as detailed in this 100-page filing that came out today, Warner Brothers' board says that they tried multiple times to get the Ellisons to make basically a personal commitment, personally backstop the equity commitment, but so Warner Brothers said, refused to do that. They're using a revocable trust to backstop the commitment, which Warner Brothers says is risky. Assets could be moved in and out of it. What they want is something that looks a little bit more like what Elon Musk did in the Twitter deal, which, if you remember, helped Twitter close that deal when Musk tried to back out of it.
I mean, fascinating that everywhere in our show, it's questioning of Larry Ellison's financing for various things at the moment, whether it's his son's bid for Warner Brothers Discovery or whether it's his financing for future Oracle data center leases. It's interesting, though, also that others have been pulling back on the potential financing. Talk to us about what's happening with Jared Kushner's Affinity.
So yesterday, we reported that Jared Kushner's Affinity was pulling out of the equity commitment or the backing of the Paramount bid. And this kind of underscored some of the concern that the Warner Brothers board has around where all the equity is coming from, because Paramount has said that it's lined up, sovereign wealth funds across the Middle East, as well as Affinity, as well as others, to back the funding. And if those are falling through, what does that mean? It's also interesting because Kushner's involvement there had been seen as maybe something that would help Paramount clinch this if, he is the ally to Trump that Paramount needs to get this through regulators. Without him there, it remains to be seen what that means. Warner Brothers has said that actually they view both the Paramount deal and the Netflix deal as on equal footing from a regulatory perspective. They say both can get through, and we don't see any, marginal risk or difference between the two of them. And so it's kind of a moot point, I guess.
We'll see how the formal rejection of Paramount's offer continues in this unfolding story. Quite the drama. Michelle Davis covering it all for us. We thank you. Now let's turn our attention back to large language models for a minute, because Google is rolling out a more efficient, more affordable version of its most powerful AI model across its products. The company announcing today the release of Gemini 3 Flash. Now this comes just 1 month after the release of Gemini 3 Pro, which reasserted its leadership in the AI race. Since then, of course, OpenAI declared a, quote, code red and pushed out a new version of its flagship GPT-5 model, as well as an updated image generation model to try and keep pace with Google AI's offerings. Coming up, other parts of Alphabet, Waymo is in talks to raise new funding and a more than $100 billion valuation potentially, as the Alphabet unit looks to maintain its lead in the robotaxi space. More on that next. This is Bloomberg Tech. Tesla, it's facing a 30-day ban on car sales in California, the biggest U.S. market. State regulators say the company's ads, they've misled consumers about its self-driving technology. Tesla's lawyers insisted that the ads were protected speech. Now, a judge backed the DMV's complaint. The automaker has 90 days to appeal or comply before the ban takes effect. And Tesla has warned the ban could have major consequences for the business. Its shares have been on a tear before today. They hit your all-time high yesterday. Today, we just pulled back some, almost 3% lower. Now turning to other auto news, Waymo is in talks to raise more than $15 billion at a valuation that could exceed $100 billion. That's all according to sources. Now the robotaxi maker has discussed raising billions in equity from external backers, as well as its parent company, Alphabet. Let's get the details from Bloomberg's Sarah Fry, who helped break this story. And really, we're starting to see the race being on. $100 billion or in excess of is a lot more than what it was previously valued back in 2024.
And really, those numbers, in the AI race, they seem equivalent to what we're seeing from, OpenAI and Anthropic. There is a really big hope here for these companies. In Waymo, the difference is it has a product that is tangible. People are using it. People are taking their Waymos around San Francisco, right around, see them outside my window all the time. As regular transportation options. It is real. It is happening in many cities throughout the U.S. right now. And I think that is why they need so much money. This is a very expensive business. This is a business that's going to require a lot of capital to expand into other cities and also other types of roads, right? Like freeways, more rural areas. I don't know how quickly that's going to roll out, but we are seeing some international expansion in the next few months as well. So it's a very big moment for Waymo and for Alphabet.
Annual revenue run rate, you are reporting, is above $350 million. Tell us just very briefly the Alphabet relationship here. They are being able to go to external capital.
I've gotten a lot of questions about this because people are like, wait, isn't Waymo part of Alphabet, but Alphabet is investing in them? What's going on here? So it's one of Alphabet's so-called other bets. That's the division that includes these, we previously thought of them as moonshots, companies like Verily, the life science company, Waymo. And Ruth Porat, under her leadership, has tried to make this a more financially safe and smart line of the business. She's encouraging spin out. She's encouraging independence. Yes. And so Waymo is getting a lot of external support as well. And
Sarah?
The idea is, yes.
I have to leave it there. Sarah Fryer on all the news to do with Waymo. Congratulations on the scoop. This is Bloomberg Tech.
There's a very big difference between AI-enabled content and AI-originated content. Those are two completely different things.
You have to have very clear global strategy to bring progress for humanity. Thinking from the customer point of view and taking the right decision, taking the right action, it may cost you more money in the short term, but you are creating customers for life.
Welcome back to Bloomberg Tech. We check in on these markets that have some anxiety baked into them at the moment when it comes to the financing of the AI spend. Still, the question of bubble lingers. We're off by 1.2% on the NASDAQ 100. We're looking at some of the biggest draws in terms of the overall points perspective. And look, we've got a sea of red. Nvidia's off by 3.7%. When you're worth $4 trillion, that matters to an overall benchmark. We perhaps got some competition coming if OpenAI does indeed start using Trainium over at Amazon, a key story for us today. Broadcom, once again under pressure, this time by almost 5%. Remember, it had been sold off hard since its earnings. We see it now at 324. Micron has its earnings after the bell. We're off by 2.5% ahead of that number, but we're expecting 50% growth in revenue for this business as it's managing to really capitalize on memory and the price of. We'll dig into that in a minute, but for now, we focus in on what's happening with Oracle. We're down by 5%. Once again, there is concerns about how Oracle is financing its big pivot into the world of cloud computing, the data centers, the leases, and indeed whether Blue Owl is able to financing the latest one over in what's happening in Michigan. Let's talk about it with Mandeep Singh, Bloomberg Intelligence Global Head of Tech Research. And we are again questioning Oracle's capacity to get into this data leasing pivot. Are you worried about some of the intricacies? Look, the reporting from Bloomberg is that Oracle is still going ahead with the Michigan project. It's not being delayed from a financing perspective. It's just not Blue Owl behind it.
Yeah, and look, I think a lot of it is around what kind of OpenAI run rate will we see in 2028, 2029? Because, you know, we are talking about build out of data center infrastructure for things that are going to go live, you know, in 2028, 2029. And that's where investors who are funding this, do they have the patience to wait for revenues to show up, 3 years out? I mean, in the case of Oracle, had the backlog not been skewed to OpenAI, I don't think there would be as much anxiety. But because OpenAI seems to be losing its lead when it comes to, the model provider race, and now Gemini, Anthropic, xAI, they all seem to have caught up. And that's where the anxiety seems to be stemming from is, are you better off just, focusing on one LLM provider when it's going to be a race where, 4 or 5 providers are neck and neck? And if they diversify that, exposure in terms of having someone else like xAI use Oracle capacity. Then I think that may calm down that anxiety. But for now, I think that's one thing. The other thing is training versus inferencing. I mean, if Oracle is more exposed to training workloads, then you have to ask yourself how much ROI will OpenAI have with training the next version of their model, which is going to cost a lot more, but will it have the kind of returns that everyone expects in terms of the model intelligence and how much they're going to get out of that next training run? So no one wants to underwrite, training workloads, which is why Microsoft refused that to begin with, and all that OpenAI business went to Oracle. And now I think market is putting a question mark around why they should be funding Oracle, because training is not something that everyone is keen to invest in right now. Because training costs will plateau, and it's just a question of when, not if. And we don't know when it's going to happen.
There's also the question of what chips you can use for training, and we're questioning NVIDIA's dominance at the same time. What's so interesting, though, is the more we peel away the layers of the onion, the more we understand what this data center financing looks like. And a lot of it, we all talked about capital expenditure from all these big cloud companies. But actually, we've got to look off balance sheet. And we've got to look to 10Q reports, like with Oracle. How much is that being factored in by equity investors as well as debt investors?
I mean, even a Meta is looking to finance stuff off balance sheet. So that's
Blue Owl too,
yeah, exactly. So that's where, all these companies don't want to take too much debt. In fact, part of the reason why Oracle's equity seems to be going down is everyone is thinking maybe they should be, raising this money via equity. Why raise everything using debt? And so that's where, they're going to be creative, and sometimes you have to course correct. I mean, if, look, the CDS spreads keep expanding and the market is not ready to fund it, maybe Oracle may have to bring down its ambitions in terms of, how much they will be looking to build, because all this is for future capacity. I mean, if you have capacity right now, the neoclouds are doing well, CoreWeave has a nice backlog, and you're supply constrained. So the question is, will that demand pattern remain for the next 3 to 5 years? And if it does, then Oracle will be fine. It's just a question of, how much training needs these model providers will have, and how much are you going to make from the next version of the model training. Is it really worth the ROI in terms of spending 5x on the next training run when things seem to be closing down when it comes to all these frontier models? At the end, it comes down to who has the lead when it comes to models. And for a while, it was just OpenAI.
Mandy saying on Bloomberg Intelligence, the breakdown there. Let's focus in on some earnings after the bell. Micron scheduled to report fiscal first quarter results. And analysts expect the chipmaker to benefit from strong pricing trends. Let's get to Kim Forrest, Boca Capital Partners CIO. We're off ahead of these numbers, but a lot of optimism baked into Micron and memory makers right now.
Absolutely. And the price shows it. And there is a pattern to Micron's earnings, right? That, maybe a month before people, and it's probably in reaction to Micron's customers talking about, what they're buying from Micron. The stock generally, when things are good, this is a very cyclical stock, but when things are good, things are very, very good for Micron. And I think in the short term, things are going to be really, really good for Micron, but often the stock sells off right after just because of that buildup that has happened, in the recent past. So
I mean, year to date, Kim, the stock's up 168%. So that we've got a little bit of a dip into the earnings. There's kind of nothing in terms of its performance. But what are you looking for after the bell in terms of signals that the strength is there and that we don't keep questioning the AI bubble as we know it?
So there are very few providers of the big product that AI wants, which is high bandwidth memory, DRAM. And there's only 2 other players in the market. Micron has had a nice lead. The other players are coming up, but it looks like for at least the foreseeable future, infinite demand is there for this product. And I'm teasing, okay? I don't really believe it's infinity, but it's a very high demand. So we would like to know what that's doing. And you can see how Micron is shifting away from its older products and its more consumer-related NAND devices. They announced, one of their longtime franchises, they're going to be closing that in favor of putting all its effort behind DRAM. So that's what I'm looking for, is why do they have that confidence, and why should we as shareholders go along with the ride?
Because right now there is shaky confidence around certain names about the AI infrastructure build-out. Do you have shaky confidence about certain newer players to cloud, newer areas and data centers?
Well, this is going to sound like a Miss America kind of speech. I have I know AI is going to work out. I just don't know how. The large language models seem to be consumers of tons of bandwidth, which you talked about on your last segment, or not, computing power, not bandwidth. But I don't know that that goes on forever, because this whole scaling thing where just throw more compute power at it seems like the brute force method, and it's not very computer science. We like to think. I'm an ex-practitioner. We like to think rather than just, build. So I'm thinking that breakthroughs in the design of these things are going to help out and may make a lot of the demand that we assume is there for hardware not irrelevant, but not infinite.
Well, to that point, we've seen what China has been forced to do, because it can't just throw ever more compute at the situation, doesn't have access in terms of supply chain. What about Micron's own ability to the global opportunity here, and they're exposed to China in some ways?
Sure. I mean, it is a concern because we don't really want to allow them to sell the really good stuff into China because of military issues and, well, just, leadership. But that we're a capitalist society, so some of that kind of has to get pushed aside, and we let, companies work throughout the world. That is a concern. But right now, for the foreseeable future, let's say 18 months to 36 months, there doesn't look to be another breakthrough other than scaling. And it looks like, all things being equal, that scaling is the path forward, especially for large language models. So unless information comes to light tonight, it looks like the companies that are offering products to these big data centers are going to continue to have their products very much in demand.
What's interesting is we're trying to understand how much NVIDIA is still in demand at the same time as an Amazon builds out its Trainium, at the same time as TPUs come to the fore at Alphabet, and indeed Broadcom's used for ASICs. What do you make of if they can all win?
Well, I think they can all win because the training, test, and validation are parts of this process, and it can better use different hardware setups. So I think that there's a place for everyone. What you're trying to figure out is how much of a place for each one of these items. I think competition always makes it better for the end consumer. And I'm not talking about the people using LLMs. I'm talking about the people building LLMs now. So I am very heartened to see that the leadership of NVIDIA isn't overshadowing everybody else with an idea. I think it's also kind of interesting just from a performance standpoint that companies like Google and Amazon have been able to quickly come out with something that's very usable. And we all had the assumption maybe 18 months ago that was, the horse was out of the barn and over the hill and, so far away. NVIDIA was the clear winner. So actually, I love it as a capitalist.
Kim Forrest, Apoca Capital Partners. Capital's in the name. We appreciate it. Meanwhile, coming up, fintech startup Imprint. It's reached a $1.5 billion valuation after its latest funding round. We speak with the CEO next. This is Bloomberg Tech.
There's a very big difference between AI-enabled content and AI-originated content. Those are two completely different things.
Our ultimate goal was to turn the fridge from a storage box to a smart kitchen manager that helps the users.
That comes down to finding the optimal location for our camera.
I am most proud of our image matching algorithm. The entire user experience has to be fast and seamless. When it worked like we expected, it was really a breakthrough.
fintech startup Imprint Payments has reached a valuation of $1.2 billion. The company that helps retailers offer co-branded credit cards has brought in $150 million in a new funding round led by Khosla Ventures. CEO Dara Murphy joins us now for more. What are you using the $150 million for, Dara?
Hey, Caroline, great to see you. Thanks for having me. At Imprint, our bet has been the same since we started the company 5 years ago. We want to be the modern co-branded credit card and loyalty platform for the world's great brands. And we've raised this capital to allow us to double down on that strategy. Our bet was relatively simple when we started the company, that the world's biggest banks weren't building good enough experience for great brands to launch co-branded credit cards. And that's been true. And what you see is we've taken a siloed experience that used to live in the bank's app and put it at the heart of our partners' experience. And so when you open our partners' app or you open their website, you can engage with the card. You can pay your bill, you can check your balance, and that puts you one tap, one click away from buying your next bag of groceries and booking your next flight. And for our partners, that has meant huge increases in lifetime value. It's why brands like Booking.com, Rakuten, Crate & Barrel are choosing Imprint over legacy banks, and why we continue to focus on this mission with the money we've raised.
A mission that was actually incubated in Thrive Capital. They participated in this round. Ribbit did, Kleiner Perkins, Spice Capital and the like, Dara. But I've sort of got a bigger question of just how many of these credit cards am I going to have, or even a debit card that you're looking at now? Am I, as an individual, going to have a Booking.com one and a Rakuten one, and I'm going to have a Turkish Airlines? At what point do I become exhausted with all the offerings?
Well, what you see is we're working with partners that demand a lot of share of wallet from their customers, right? Like if you think about Booking.com, they're winning against airlines, they're winning against hotel companies, and customers are going there to book the full trip experience. And so by partnering with Booking, or by partnering with Rakuten, that's taking such a large share of online commerce for customers, we end up being a meaningful share of each customer's wallet. And so you're able to give them rewards for a huge portion of their spend. We would agree that very small fractional brands probably don't need credit cards, but more and more we partner with brands that are parallel winners in their categories. They're winning in all of e-com, they're winning in all of travel. And so we get to give customers way more value for a bigger portion of their wallet. And so more and more customers sign up for that benefit rather than thinking, I'm going to have 50 versions of a credit card.
Now, and do the inevitable AI question, but I imagine an awful lot of this is about personalization, understanding where my next offering or next purchase is coming from, making sure you're meeting me where I am at. So how much are you looking at AI? How much are you having to hire in AI?
Yeah, we think about it as kind of two sides of the coin, right? One is the customer experience that you've mentioned, and one is how we build the company. On customer experience, automation and AI let us, personalize how much rewards you get, how we talk to the customer, how the experience even shape shifts for the customer, and more investing in that. So it feels radically different to anything that a bank has ever provided in the past for these brands or for these customers. The really interesting thing, and maybe it's not as apparent under the surface, is we get to rebuild what looks like a financial company or even a fintech in the time of automation and AI. And so over the last year, we've grown the business by almost 300%. We've grown headcount by 20%. At every turn, we get to choose, are we going to build a new team here? Or are we going to invest in technology and automation so we don't have to hire a team of people? We can actually scale the company using technology, which is an amazing opportunity that I don't think anybody has ever had.
Wow. So I imagine that $150 million doesn't actually go that much on talent. It goes more on the marketing of your product. What does it double down on in particular?
Yeah, three things. One is we continue to grow, right? So we obviously continue to market to customers, but we're not burning all this capital. If you think about the market we're in, big brands can choose 100-year-old banks or they can choose Imprint. If you choose a 100-year-old bank, you probably sleep really well at night. If you choose a relatively new company, maybe you worry a little more. And so we just want to be very well capitalized to make that choice easy. Bucket two is more financial products. We have the credit card today that serves many of a brand's customers, but depending on your financial life, you don't want a credit card. Maybe you want a debit card with more rewards. So more of those products. And then the last thing is, as we've talked about, how do we build a company using automation and AI and scale without headcount, which is an amazing opportunity relative to where we would have been 10 years ago. You see public company fintechs today with thousands and thousands of employees. We get to make a decision every time. Do we hire or do we build? And more we get to build.
Dara Murphy, Imprint CEO. Fascinating talking to you. Congratulations on the funding round. Thank you. Now coming up, after burning through more than $1 billion, a space startup with turning to a tech veteran. More on relativity's Say that again. Relativity Space's new CEO. It's Eric Schmidt. This is Bloomberg Tech.
There's a very big difference between AI-enabled content and AI-originated content. Those are two completely different things.
It's time now for Talking Tech. First up, China's PDD Holding, its creator of the e-commerce site Temu, of course, it's fired dozens of workers following a fistfight between employees and Chinese regulators. And that's according to sources. 2 fights occurred during a government visit to investigate claims of fraudulent e-commerce deliveries. Plus, chip startup Mythic, well, it's raised $125 million to support its efforts to challenge NVIDIA. Take a look at some of the investors. Mythic's tech relies on analog chips with far less power consumption than the traditional brains of a computer. And sticking with chipmaker shares, China's Meta X jumped nearly 700% on their first trading day. It's the latest outsized market debut by Chinese chipmaker, as investors are really betting on the domestic firms that could become viable competitors to NVIDIA. Now let's talk about another startup, Relativity Space. It set out to revolutionize the rocket industry with 3D printing, but it burnt through more than $1 billion, and its big idea hasn't exactly planned out. Now the company is turning to former Google boss Eric Schmidt and an $800 million fresh funding round from him to turn around the company. Let's get more on this with Bloomberg space reporter Lauren Grausch. So a new exec, same thesis, still 3D printing of rockets?
No, unfortunately, that seems to have been changed, and now the company is much more focused on traditional manufacturing, which, as you said, it's a far cry from what they started as, which was supposed to be this SpaceX disruptor that was going to revolutionize manufacturing rockets with 3D printing. But what we found after months and months of reporting is that they were really struggling with the 3D printing technology for a while. And over time, they started to slowly incorporate more traditional manufacturing into the process, so much to the point that 3D printing is barely involved in the rocket making process anymore.
Well, this sort of speaks, therefore, more to Eric Schmidt's commitment that we've seen of late of competition versus China and supply chain and defense, space tech. But have you heard exactly why he's decided to take the CEO role?
The overwhelming theory, and what he has also hinted at on social media, is that he purchased Relativity for a trend that we've actually been hearing about a lot lately, putting data centers into space. So you might have heard that from SpaceX CEO Elon Musk, or Blue Origin CEO or Blue Origin founder Jeff Bezos, because they've also talked about putting data centers in space. And so it seems that Eric Schmidt also has that plan as well. There might be some other things that he's cooking up that he'd like to do with a rocket company, but so far that seems to be the prevailing reason he bought this.
And we're now looking at, well, his fortune, $52 billion. He has money to put to work into this. So this is his own bet on space.
Yeah, so he was actually keeping the company afloat for a little while, and then he is, so far from what we've learned, has invested a substantial portion of money into this company. And then we've also heard that the company is potentially fundraising again. So they're actually going out to high net worth investors to see if they want to be a part of the company. So it looks like they actually do want to grow and maybe have big plans. But yes, for a while now, he has been injecting a lot of cash into this endeavor.
Lauren Grausch for the latest space startup to keep an eye on. Thank you very much indeed. Now, that does it for this edition of Bloomberg Tech. Do not forget to check out our podcast. You can find it on the terminal, as well as online on Apple, Spotify, and iHeart. We'll continue on the theme of Oracle, of financing of data centers throughout the shows. From New York, this is Bloomberg Tech.
Bloomberg Daybreak is your best way to get informed first thing in the morning, right in your podcast feed. Hi, I'm Karen Moscow.
And I'm Nathan Hager. Each morning, we're up early putting together the latest episode of Bloomberg Daybreak U.S. Edition. It's your daily 15-minute podcast on the latest in global news, politics, and international relations.
Listen to the Bloomberg Daybreak U.S. Edition podcast each morning for the stories that matter with the context you need.
Find us on Apple, Spotify, or anywhere you listen.
News when you want it with Bloomberg News Now. I'm Valerie Teitel.
And I'm Caroline Hepke.
European Union leaders have reached a landmark agreement to lend Ukraine 90 billion euros over the next 2 years. The decision came in the early hours of this morning after marathon talks in Brussels. Under the agreement, the EU will raise joint debt backed by the bloc's budget to fund the loan. That's a significant pivot from a previous plan favored by many countries to use Russian frozen assets on EU soil. Speaking after the deal, the EU Council President Antonio Costa set out how the agreement would still be tied back to those Russian assets.
As a matter of urgency, we will provide a loan backed by the European Union budget. This will address the urgent financial needs of Ukraine. The Union reserves its right to make use of the immobilized asset to repay this loan. At the same time, we gave a mandate to the Commission to continue working on the reparation loan based on Russian immobilized assets.
Antonio Costa speaking there as leaders hope the deal will strengthen Kyiv's hand at the negotiating table and keep the war-torn country afloat. Speaking after the agreement, German Chancellor Friedrich Merz described the deal as a pragmatic, good solution. French President Emmanuel Macron said the absence of this decision would have been a disaster, but that Europe will have to find a way to engage directly with Vladimir Putin as the U.S. pushes ahead with peace talks.
Japanese bond yields have jumped after the Bank of Japan hiked interest rates to the highest level since 1995. While the bank's quarter-point move to 0.75% was widely expected, traders are focusing on the lack of clear guidance on the timing for future hikes. Bank of Japan Governor Kazuo Ueda says policymakers will continue to observe the situation.
It is difficult to determine the neutral rate in advance, and it is necessary to consider it within a fairly wide range. On that basis, we believe it is appropriate to continue monitoring how changes in short-term interest rates affect the economy and prices, while exploring the level of the neutral rate and adjusting the degree of easing accordingly.
Bank of Japan Governor Kazuo Ueda there speaking via a translator after the decision. The central bank cited the rising likelihood of its economic outlook being realised and said that underlying inflation is continuing to rise moderately.
UK retail sales fell for a second straight month in November, adding to evidence that the economy was damaged by uncertainty in the run-up to Chancellor Reeves' budget. Data from the Office for National Statistics shows the total volume of goods sold online and in stores was down 0.1%, following a revised 0.9% plunge in the previous month. Economists surveyed by Bloomberg expected a 0.3% increase in November. The pessimism, which is widely attributed to the uncertainty caused by the government's annual budget, comes after the Bank of England delivered a 6th rate cut yesterday. Governor Andrew Bailey says the recent inflation data has been a positive surprise.
I
think now that we're on a path where we'll probably be around this level for a few months, but we think that come the spring, April, May time, we should see another quite sharp drop and take us, I hope, to around target. So we're going to come back to target sooner than we thought. So that's encouraging. All of this is very encouraging.
Bailey's decision to cut rates for a 6th time comes as concerns in Britain shift away from persistent inflation and towards a stuttering economy and labor market.
Now, in other news, the Trump administration has halted the U.S. green card lottery program, which it says was used by the suspect in the Brown University shooting. Homeland Security Secretary Kristi Noem has asked U.S. Citizenship and Immigration Services to pause the program, which creates roughly 50,000 visas every year. The move comes after officials have found the dead body of the suspected gunman in the shooting at Brown University on Rhode Island last weekend. 2 people were killed and 9 9 were wounded in that attack. The chief of police in the town of Providence, Oscar Perez, says the suspected attacker took his own life.
TikTok is being acquired by a group of buyers led by Oracle after a long-delayed plan to separate from its Chinese parent company ByteDance. The CEO told employees about a binding agreement to create a U.S. joint venture, a majority owned by American investors, and an internal memo seen by Bloomberg. The news comes after a national security law passed by former President Joe Biden mandated that ByteDance and TikTok U.S. have no operational relationship. Our senior editor for technology and strategic industries, Michael Shepard, says that we still don't have all the information.
And yet the security guarantees are going to be one of the big questions out there. And the other will be, has China signed off on this as well? And we are waiting to see what Beijing will say and if it has been part of the trade conversation.
Bloomberg's Michael Shepard speaking there. The terms outlined in Chu's note to employees appear to leave the door open for ByteDance to potentially retain key oversight of parts of the U.S. TikTok. The deal is expected to close on January 2nd, 2026, but Chinese regulators have yet to say whether they'll approve of the transaction. Now, there's your top stories on the markets. European markets are opening up in the red, but just slightly. We're flat to the downside on Eurostoxx 600. The DAX in Germany is flat to the downside. The CAC in France, flat to the upside. The FTSE 100 is down 0.1%. So a fairly muted open here across Europe. A few single stocks to point out. Adidas shares are trading lower this morning, down 0.8%. That comes after Nike sank 10% after earnings on weak sales guidance after the bell yesterday. Over on Wall Street, we are still continuing to rebound after the softer than expected CPI. S&P 500 futures higher by 0.2%. NASDAQ futures higher by 0.4%.
That's news when you want it with Bloomberg News Now. I'm Caroline Hepker.
I'm Valerie Teitel, and this is Bloomberg.
18-minute address last night. Here's a taste of what he said.
For the first time in years,
higher today. Which companies are posting the biggest gains and losses and why?
Tesla's been a stock that's been in focus here.
Wages, just look at it. Wages are going up much faster than inflation. How big is that? Very importantly, there are more people working today than at any time in American history.
Do the data support what he said?
I think what he's referring to is real wages, so nominal wages adjusted for inflation. If you look at nominal wages, that statement is not true because the pace of growth has actually declined. We saw in the employment cost index a couple of weeks ago, now it's growing at 3.5% in the last quarter. But however, corrected for inflation, it is going up.
Anna, thanks for being with us, as always. Anna Wong of Bloomberg Economics, we thank you. The House is on the verge now of leaving town after passing a Republican-backed health care plan last night. That does not include an extension of Obamacare subsidies, one of the big sticking points among lawmakers, and in fact the grounds for the longest shutdown in American history. Last evening, we spoke, though, with one of the 4 moderate Republicans who crossed the aisle and sided with Democrats over the discharge petition for a vote on the extension of ACA credits. That would be Republican Congressman Mike Lawler of New York. His reasoning here for voting with his Democratic colleagues. Listen.
Unfortunately, we couldn't find agreement, and so I had no alternative but to sign the discharge. I've signed 3 separate discharges, 2 bipartisan bills, and 1, the clean 3-year extension offered by Leader Jeffries, has already failed in the Senate. But the objective is to force a vote on the House floor, pass something, and let the Senate come back to us with a bipartisan agreement.
And that might happen, but there's still a lot of gray area here. And joining us now with his reaction, Lawler's colleague from New York, Congressman Republican Nick LaLota, a member of both the House Appropriations Committee and the House Small Business Committee. Congressman, it's great to have you back on Bloomberg TV and radio. It looks like this vote will hit the floor, according to the Speaker, in January, the discharge petition. Do you share the view of Mike Lawler? What's your position on this?
I do. I do support Lawler's efforts. He's got his head on straight on this.
we do need a bifurcated approach. And last night here in Washington, Republicans passed the Lower Healthcare Premiums for All Act that, according to the CBO, who doesn't often score Republican bills quite favorably, said that premiums for everybody would decrease by about 12% as a result of that bill. That bill should get support in the Senate. We hope that it becomes law to help some of the long-term issues for all Americans' health care. But Lawler's right. We do need to do something in the short term for these expiring health care credits that, unfortunately, 3 years ago were said to be merely temporary and pandemic related. Nevertheless, millions of Americans have come to rely on these credits. We should extend them for some period of time in exchange, I think, in a bipartisan deal for some of the longer term reforms that can help Obamacare, which has some cracks in its foundation. Obamacare, in the 15 years that it's been law, has led to 1 in 3 claims being denied, premiums rising 60% more than inflation, and those healthcare companies are making a gazillion dollars along the way. All those things challenge constituents like mine, and we do need a bifurcated approach like the one that Lawler described.
Well, the way you just talked about that, and I know that there are a growing number of Republicans who seem to agree with you here. We're so close, Congressman. Is Speaker Johnson just a man out of time right now?
Listen, there's always time on the clock. When we get back in January, that bill will be on the floor, the clean 3-year extension. I expect it to pass with probably 230 votes or so, and the Senate will have to contemplate what it does with that. Of course, that bill failed a couple of weeks ago, maybe a week or so ago, but it'll have to contemplate what it does. Will it just shut that bill down again? Will it not take it up? Or will it provide the impetus necessary for a bifurcated deal that both solves the day for those who rely on those credits, but in the long term, for the 93% of the other Americans who are not on Obamacare, will we be able to get a conservative plan through like the one the House passed last night? I think there is a path to achieve both victories, and I'm hoping we could do so in early January.
You know, we heard from the president and have been hearing from him repeatedly about the approach to health care that he prefers. And at one point, he suggested a deal like the one you're talking about should be needed. Now he says he doesn't want the money to go to the insurance companies. And we may as well use his words. Listen to President Trump.
We have a problem. The insurance companies own the Democrat Party. They own it. And the Democrats having a hard time. They give a lot of money to the Democrats. Very little money to Republicans, by the way. A lot of money to Democrats. And they're going to have to decide, do they want to do the right thing or do they want to be beholden to the, insurance companies? They're making a fortune. I want the money to go to the people.
What do you make of this, Congressman? Because if you start sending money to the people and then they're all approaching the insurance company alone, I guess working out rates over the phone somehow, wouldn't that take leverage away from the consumer? Or is there a way to make this work?
President Trump, a populist president, is exactly right. The better method, rather than the U.S. Treasury cutting a check for tens of billions of dollars per year to these insurance companies who have profits in mind, not their patients. A better method than the Treasury doing that is to send the money directly to American citizens. I actually have a bill on that would create a tax incentive, a tax deduction, and an above-the-line tax deduction for those who are on Obamacare. I think that is a better solution to the cliff that is happening with the expiry of these credits. The president is right. If we're going to invest money, American money in this, we should give it directly to Americans and allow them to make smart decisions, allow them to have autonomy and discretion in what they do, and let them have leverage when they're negotiating and whatnot. I think that's the better path ahead, and maybe it's one that the House and Senate will undertake in early January.
Well, I know that money does cut both ways. Open Secrets has insurance PACs giving $10 million to Democratic nominees, $14 million to GOP nominees in 2024. But I want to ask you about the budget. We talked to Jody Arrington earlier today. He seems to think that there is a chance to not only avoid a shutdown, but do it with regular order, Congressman. Are we serious about this? It's been a generation.
Yeah, I serve on the Appropriations Committee. We had a nice meeting today where our understanding is there's a bipartisan, bicameral approach that we'll undertake in early January to get a series of 9 bills across both the House and Senate floor, 3 at a time, 1 per week for 3 weeks in January. I'm hopeful that everybody is operating in good faith towards passing those bills. We certainly can't avoid another shutdown. We shouldn't have another continuing resolution. Instead, we should get all 12 of our appropriations bills passed under the leadership of House Chairman Tom Cole from the Appropriations Committee. I'm confident that we'll do that path 3 by 3 by 3 in January.
That would be news for sure. Congressman, our listeners and viewers should know that we're talking to a former naval officer, and I want to ask you about the tensions in the Caribbean right now as the president announces the blockade is the word that he's using for these oil tankers that will now apparently be traveling with Venezuelan naval export. What are the rules of engagement here? Are we entering a shooting war with Venezuela?
The president is serious about securing our border and keeping America safe. He's serious about deterring Chinese involvement and over-influence in our hemisphere. And Venezuela, Nicolas Maduro, has been an adversarial to that end. And I think that what he's doing on striking the terrorist boats, the narco-terrorist boats, is in America's best interests. And ensuring that Venezuela doesn't continue to poach upon American lives is also in our best interest as well. And we hope to achieve peace through strength. Deterrence is the better option, and we hope to have a peaceful transition to that through Venezuela sometime soon.
You were a tactical action officer on the Carl Vinson, I see, Congressman. Thank you for your service. Are you going to go to the Trump Kennedy Center soon?
I don't have any plans to go to the Trump Kennedy Center anytime soon. I just heard about the renaming of it. I'm sure that'll anger some of my friends from across the aisle. I couldn't care less what the heck they call that center. I'm focused on trying to make prices lower, our nation safer, get out of endless wars overseas. I hope that my friends across the aisle don't take the bait on the naming of that center.
Well, I'm glad you could come see us again. Republican Congressman Nick LaLota of New York, we thank you for joining us again on Bloomberg. It was a busy afternoon on Wall Street. Nike and FedEx both with earnings results after the bell, and both stocks are moving. Nike exceeding earnings expectations, FedEx raising the low end of its full-year profit and sales outlook, but stocks are moving in separate directions here. For all the details, we turn to Power Moves with Bloomberg's Romaine Bostick live from world headquarters in New York. As goes FedEx, so goes the nation, Romaine?
Yeah, interesting. I mean, they are, both of these stocks to a certain extent, Joe, are bellwethers for the consumer economy, none so more than FedEx. And of course, this has also been a company that's been in a bit of transition, really trying to get its legs back after a series of missteps under previous leadership. What they've done as of lately, Joe, is to put much more of a focus on B2B deliveries, basically higher margin, larger packages that effectively they're going to make more money off of. And that appeared to work. In the most recent quarter, I could sum it up like this. It was pricing power, it was cost cuts, and it was higher domestic volume, particularly here in the U.S. That's why you saw the beat. And more importantly, that's why you saw the confidence they had in the guidance that they gave, the idea that some of the momentum they had in the quarter that just ended, in their view, is going to continue in the quarters ahead. So you get a modest bump in the stock here in the after hours trade. Now take a look at Nike, because this is also a turnaround story. They also beat on several key metrics. They also are trying to guide people slightly higher. But the shares are plunging largely because of concerns about two key components of the business: China and their direct-to-consumer business. Basically, when you go to Nike.com, for example, and buy something, those two businesses were down. They've been down for quite some time, and there's a lot of concern as to whether the new CEO, Elliott Hill, could sort of arrest that slide, bring it back into some of the growth rates that we're seeing in other parts of the business, like the wholesale business, as well as their domestic North American business, which actually has been doing better, Joe.
All right. Interesting turn for the cannabis stocks today. As Nathan Dean at Bloomberg Intelligence likes to say, these stocks have hot sauce on them, whether they're going up or down. The president actually signed the rescheduling order today, Romaine. Is this a sell the news kind of thing?
Oh, yeah, absolutely. I mean, you just take Curaleaf, for example, which is kind of one of the bigger publicly traded cannabis stocks. Remember, that they had rallied like almost 40% just over the last few days. They dropped about 30% today, kind of again, sell the news event, if you will, Joe. But all those names that you have on the screen there, yes, they are down today by a lot. But if you sort of look at the run-up that you had in some of those names over the previous few days, and if you were lucky enough to be at the start of that, you did okay, Joe. And, the president's order, again, it gets to this idea, the changes from that order really won't kick in for a while now. So it'll be interesting to see whether we actually see a material impact on actual sales going forward. But, I think overall cannabis investors have been relatively pleased with the direction this administration has taken with regards to regulation in that space.
Who would have thought it would be a Republican president making this happen? Bloomberg's Romaine Bostic. Yeah. Good to see you.
Strange bedfellows.
Yes, indeed. Coming up, we'll have more on the marijuana move today at the White House with Bloomberg opinion columnist Nia Malika Henderson. And later, could we see another government shutdown? Nick LaLota doesn't think so. But we'll discuss with a Democratic lawmaker coming up straight ahead on Balance of Power on Bloomberg TV and radio.
There's a very big difference between AI-enabled content and AI-originated content. Those are two completely different things.
I was honored by it. The board is a very distinguished board, most distinguished people in the country. And I was surprised by it, and I was honored by it. We're saving the building. We saved the building. The building was in such bad shape, both physically, financially, and every other way, and now it's very solid, very strong.
It's Balance of Power on Bloomberg TV and radio. I'm Joe Matthew in Washington, where we heard from President Trump a short time ago there, responding to news that the Kennedy Center, the board at the Kennedy Center, unanimously voted to change the name to the Trump Kennedy Center. It should be noted legally its name remains the Kennedy Center, after Congress established the living presidential memorial through federal law more than 60 years ago. Joining us now with her reaction to this and a lot more is Bloomberg opinion columnist Nia Malika Henderson, live with us here in Washington. It's great to see you. Tickets were already having some trouble there after the president dispatched the board, made himself chairman. A number of touring groups canceled. Is this going to make it worse?
Yes, it absolutely is going to make it worse. They were already down 50% year over year. Shows canceled. Alvin Ailey, for instance. Right. Hamilton. Also pulling out. So this isn't good. And the important thing to note, I think you led with it, which is this is by law named the John F. Kennedy Center, and it's a living memorial. It's like changing the Lincoln Memorial to the Trump Lincoln Memorial or something.
Well,
we'll see. I know. We'll see. So this was something he sort of joked about when he hosted the Kennedy Centers, and this was something that people in Congress and the House, they put forward bills to rename it, to rename the Opera House, the Melania Trump Opera House. Also, that wouldn't be legal. So we'll see. I mean, this is, it's kind of like the Department of War. It's kind of like, what is it, the Gulf of America now? There are all of these sort of renaming attempts happening. But, I don't suspect this will really go anywhere. They're not going to change the name on the building. But listen, we'll see.
Well, yeah, and they just might.
Yeah, they just might.
We'll see about that. It could take some time to remake all the stationery in a couple of years. But I want to ask you about what the president was up to today on a policy standpoint. He signed an executive order and surrounded himself in the Oval Office by pro-cannabis activists, largely medical marijuana activists, some of them wearing lab coats, which was interesting optics, to reschedule cannabis. This is something he floated on the campaign trail, but is undoing generations of Republican orthodoxy in the process. Who is this for?
Listen, I think it's for some of these MAGA folks. I think it's for some of his donors, quite frankly. I think for if you're in a state where it's legal, the fact that now it is changed its classification, this is going to mean something financially now because you can write down expenses in a way because of this classification. Right. So I think it'll mean something for these businesses that are popping up and they're doing quite well in these states. So, but it is quite a shift, and it'll be sort of a further destigmatization around cannabis use, I think. But it is a little bit surprising to see a Republican president do this. But again, this is a Republican president that has a sort of mixture of ideologies, a mixture of in terms of his base and who are the folks who voted for him, working class folks, African Americans, men in particular, the sort of podcast bros and the manosphere. So I think
and
there'll
Roger
be a lot
Stone,
of
while we're at it.
That's right.
In our remaining moment, you've surely watched the president in prime time last evening. He wasn't talking about this. He was talking about affordability. to a different crowd. This wasn't, I'm guessing, the MAGA base sitting at home watching the finale of Survivor, and suddenly Donald Trump's on your TV set in prime time. Did he succeed in delivering the message?
You know, I think once you start to get to thinking that this is a messaging problem, thinking that you can sort of message reality, it's a problem, right? You can't really reframe people's actual experiences of higher prices. We see some prices coming down. He talks about eggs, for instance. But overall, you know, if you go Christmas shopping, the prices are a little bit higher. You know, I got some Omaha steaks for my in-laws. They were a little bit higher this go round.
You know how to treat the in-laws. I'm still trying to figure out, why was he yelling? I don't.
Yeah, he was shouting. He was not happy. He did not want to give this speech. Apparently, he was forced to give it by Susie
ran
Lawrence.
through it. 18 minutes on a speedboat. Nia, great to have you. Nia Malika Henderson, only here on Bloomberg. Coming up, health insurance costs set to soar for millions of Americans. We'll address the cliff next on Bloomberg.
There's a very big difference between AI-enabled content and AI-originated content. Those are two completely different things.
Renewable energy is the only path to a future prosperity. Renewable energy is creating foundation for a renewable civilization. We just cannot put our civilization under limited fossil fuel resources. Renewable energy is everywhere. It's almost zero cost. It is unlimited and renewable.
Why is Mike Johnson and House Republicans leaving town when there is legislation supported by a bipartisan majority of the House that would extend the Affordable Care Act tax credits for 3 years? We should pass that bill and then send it over to the Senate before the end of the year, before the Affordable Care Act tax credits expire.
This is Balance of Power on Bloomberg TV and radio. I'm Joe Matthew. That, of course, House Minority Leader Hakeem Jeffries, who was speaking this afternoon about last night's passage of the Republican plan for health care, the proposed bill that does not include an extension of Obamacare subsidies. That passage coming, of course, after 4 moderate Republicans joined Democrats separately here to force a vote to extend the ACA credits for 3 years. That vote set to take place sometime next month. That's the way a discharge petition works. And joining us now to break down what comes next on Capitol Hill is Bloomberg's Eric Wasson. It's great to see you, Eric. You've been in the middle of this now for weeks and going back before it even caused a shutdown. It feels like we've got a half dozen bills here, some of them discharge petitions. Others are bills waiting to get to the floor. Is there a world in which lawmakers return in January and actually craft a deal?
I think there could be. You know, I talked to Senate Majority Leader John Thune about this, and he actually said he was looking forward to a compromise emerging. It would have to have reforms. He says the 3-year clean extension that the Democrats' discharge petition would set up is dead on arrival in the Senate. But if there are reforms, if there's some way to incorporate Republican ideas, he'd be in favor of it. He talked about people in South Dakota, where he is from, being affected by this. But Democrats certainly feel that they're in a win-win position. You know, Jeffries in that press conference said this is the Titanic for the Republican Party. You know, either they get a win on this, force an extension of the ACA, or they take it to the voters in 2026 and really make it a centerpiece of their campaign. Mike Johnson, on the other hand, is preparing to go to the voters and say Obamacare itself is broken and Democrats are responsible for 15 years of health care increases. So that's really setting the table for next year's campaign. You know, we had Nick Lalotta on air. I just talked to him off the camera, and he said Johnson's engaging with the moderate Republicans on trying to turn off this discharge petition, maybe offer them a vote, which they were originally seeking, on a compromise by Brian Fitzpatrick, which would extend it for 1 or 2 years in exchange for some income limits and other reforms. So this is very much a live ball. They'll be talking over the Christmas break, potentially coming back and doing some quick action to turn off the discharge petition through a rule and getting a vote on a Republican plan. So there's a lot of different options here. There is a chance, but as Thune said, it's not likely, it's not impossible, it's somewhere in between. I think that's about right.
That's really interesting, and that's pretty big news. Just to quickly, Eric, if that discharge petition was turned off, would the bill get a vote in January still the same?
No, it would not. The discharge petition can be turned off by a rule, but moderates would only vote for that procedure if they got a vote on their own preferred plan.
Got it. Great reporting. Eric Wasson, thank you so much. Live on Capitol Hill on the front lines for Bloomberg. Today on the early edition of Balance of Power, we spoke with another member of the Republican conference, Congressman Jody Arrington of Texas, who's in fact chair of the House Budget Committee. Talked about the prospect of another shutdown when Congress returns in January. Here's what he said.
I don't think that Democrats and Republicans are going to be able to work together. I think many of the Democrats, not all, but the leadership wants health care to be a wedge issue for November. There are others who want to actually address it. We have different ideas on that. But Republicans have the tool that actually Democrats use to create these COVID-era subsidies called budget reconciliation. It gives us the simple majority in the Senate, so we don't need Democrat support. We did that with the big, beautiful bill. Let's do it to make health care affordable. Health care's got to be addressed, and I think the only way to do it, Joe, unfortunately, because I think it's better when we can work together, but we shouldn't apologize for using reconciliation and having taking a unilateral approach as Republicans if we believe in our policies, and I certainly do.
So the chairman throws a whole new log on the fire. We wait to do it in reconciliation in the new year. Joining us now with her reaction to a menu of options, Democratic Congresswoman Melanie Stansbury of New Mexico, who's live on the Hill, a member of the House Oversight Committee. Congresswoman, it's great to see you. Welcome back to Bloomberg TV and radio. Do you support Hakeem Jeffries in suggesting that lawmakers stay in town to get this done before we go over the cliff?
Yeah, absolutely. I am still here in Washington, D.C. at our nation's capital, and I think it's reprehensible that the speaker not only sent his members home but canceled votes tomorrow. We're literally 1 week away from Christmas, and he had the opportunity to extend the Obamacare Affordable Care Act extension for millions of American families, and instead he canceled votes and sent his members home to go celebrate with their families while millions of Americans will lose their health care. So I believe we should stay here, get it done, and make sure that Americans can access health care.
Of course, what you believe and what you want, Congresswoman, is not necessarily going to be on Speaker Johnson's agenda, and it looks like we are going over the cliff. We come back in January. And I'm curious what you think happens in that scenario, because you've got the discharge petition. We've got the Fab Four on there already, and maybe there are more Republicans who sign on. But then you've got the Senate to deal with. Could there be a gang of 8 or a gang of 6 that comes from the discharge if it shows there's enough momentum here?
Yeah, absolutely. So the discharge petition will require that within 7 days of ripening of this petition, which basically, I know it's very complicated, puts us on January 6th for a vote on the House extension, which is a 3-year extension. That's the day we come back from the holiday recess. We expect that will be available to be brought to the floor that week. I think this changes the dynamic with the Senate dramatically, and I think it basically will require that the American people speak loud and clear to the Senate that they demand an extension so that millions of people don't get kicked off of their insurance. So yes, we could see a shift in the Senate, but I think it will require the American people speaking out and speaking loudly on that.
Interesting. Where are you on this idea of a shutdown potentially at the end of January if a deal is not struck, Congresswoman? I know there's a lot of scar tissue from that last shutdown, and Chuck Schumer today was indicating that he does not think that's a vehicle to apply more leverage. How about you?
You know, I think that all shutdowns are damaging. My background is actually as a budget analyst, a policy and budget analyst. I worked at OMB during the Obama administration. Shutdowns are harmful, and coming from a state that has a high proportion of federal militaries and active duty, federal employees and active duty military, it's devastating to our communities. So we never want a shutdown. But what I will say is that the Republicans shut down the House for weeks and weeks and weeks and promised that when we came back, they would allow a vote on health care and that they would pass appropriations bills. And here we are a week before Christmas, and they've done neither. They haven't passed a health care bill, and they have not passed appropriations bills. And so ultimately, this is on them. They control the chambers, they control the presidency, and we need a serious commitment to actually keeping the government open, operational, and serving the American people.
Well, to your point, we're a week out from Christmas, which means tomorrow is deadline day for the Department of Justice to release the Jeffrey Epstein files. Congresswoman, I know you serve on the Oversight Committee, and I would love to ask you about some of the decisions you've made on that committee. But do you expect the DOJ will make good on this or find a reason not to release them?
Well, I know what the law says, and the law says that they have to
Sure.
comply by tomorrow. We have seen zero signs of compliance so far, but they have essentially until midnight tomorrow. And I think it's important for anyone that doesn't know what's in the act that was passed by Congress and signed by Trump. They have to release all DOJ files, all of the FBI files, and the U.S. Attorney files. We know it is a voluminous and vast amount of information. It not only has to be released to Congress, it needs to be released publicly and searchable. And so we'll know by midnight tomorrow if they have released those files, and if they have not, we will have to look at what kind of compliance tools we can use as Congress.
Wow. Well, this is going to redefine a Friday news dump, Congresswoman. I'm curious about the process that you've been through on the Oversight Committee, because you've been putting out hundreds, thousands, in fact, of documents, photographs, and so forth. And there was another release of more photos just today. How does the committee discern which photographs to release and when?
Yeah, so the committee's investigation, which was initiated in August after Democrats made a motion to subpoena the Epstein files from the administration, from the estate, and subpoena a number of witnesses in this case. And the Republicans agreed to that vote. And so we have a bipartisan investigation is of the entire case. So this is much larger than just the disclosure of DOJ's files. It also now includes subpoenas that we've issued of financial institutions, which we know were complicit in not reporting financial transactions that may have been implicated in Epstein's crimes. And so as those documents are coming in pursuant to the subpoenas, the committee is processing them. And in the case of the last 3 tranches of documents that we've received from the estate, they were released in their entirety to the public. But last week on Thursday, the estate transmitted 95,000 photographs that came from Jeffrey Epstein's emails and iCloud account. And because of the nature of those photographs, some of which include potential photographs of victims as well as sex acts, the committee is undergoing a review process, talking to survivors to determine what is appropriate for disclosure for transparency purposes, but also to protect the identities and the safety of the victims as well.
Well, this is going to be quite a moment. I don't know what you think Americans should prepare for based on what you've seen, Congresswoman, but his chief of staff, Susie Wiles, told Vanity Fair in a rather casual interview or series of interviews that she's read the files. She's actually seen them, and Donald Trump's name is in them, but said that they show no untoward activity. Is that what you expect to see?
I don't know what we'll see tomorrow. We don't know if they're going to release all the files. We don't know if they're going to try to redact the files. We know that at some point Donald Trump said he was going to remove all mention of Republicans, probably including himself. So we don't know what they're going to release. We know what the law requires. But listen, we all know that Donald Trump was friends with Jeffrey Epstein for over a decade. We know from the estate's emails that they released from Jeffrey Epstein's own hands that he typed on a keyboard that he stated that Donald Trump knew about the girls in reference to young women that were recruited at Mar-a-Lago and came to his house. And he talks about in those emails and texts of having photographs of Donald Trump with young women. I mean, whether or not that is investigated and in the Department of Justice's files, we don't know. But what we do know is that they have a long association, and we know that the president has been actively engaged in a cover-up. He's threatened members of Congress. He tried to stop the discharge petition from moving forward, and he has tried at every single moment to bury this case and to distract the American people. And so all of that raises questions. What is he hiding if he doesn't want the American people to know what's in there?
Well, maybe we'll start getting some more answers tomorrow, Congresswoman. Thank you for joining us. Melanie Stansbury, the Democrat from New Mexico, here on Bloomberg. Breaking news just out. TikTok signing agreements to sell its U.S. arm into a joint venture. We've got details coming up with our Bloomberg reporters and with our political panel, all coming up straight ahead here on Balance of Power on Bloomberg TV and radio.
There's a very big difference between AI-enabled content and AI-originated content. Those are two completely different things.
This is Balance of Power on Bloomberg TV and radio. I'm Joe Matthew with breaking news this evening, a major development regarding TikTok. Yeah, the company telling employees in a memo today that the social media app's parent company, ByteDance, has signed a series of binding agreements to create a U.S. joint venture that will be majority owned by American investors. TikTok CEO telling employees, quote, TikTok Global's U.S. entities will manage global product interoperability and certain commercial activities, including e-commerce, advertising, and marketing. Joining us now to discuss the impact of this move, the man who's all over this story and has been for months, Bloomberg's Michael Shepard. Shep, what does this mean in terms of the countries involved in the politics behind this? Should we assume Beijing has signed off?
Well, we shouldn't assume anything based on that, because this memo that was circulated to TikTok employees by Xiao Chu, the CEO, there was no mention of China. It did make extensive mention of President Donald Trump's executive order from September 25th, really clearing the way for this deal to go through and giving his blessing, the U.S. imprimatur, on this transaction, and also codifying in a way some of the security guarantees that would be baked in and enforced by one of the investors, and that is Oracle Corp, who, of course, is very close to the president for a lot of other things and is involved in the AI agenda as well.
Is the rest of this investment group the same names that we've been hearing since the president rolled this out?
That's a great question, Joe, because a lot of people have been wondering who will end up as the TikTok owners. And it really is the same trio coming in as new investors, including Oracle, but also Silver Lake Management and the Abu Dhabi investment firm MGX. So it will be pretty much the contours that we had seen. ByteDance, the Chinese owner that currently controls the app, its stake will be diluted down to 19.9%, which would comply with the U.S. law mandating a sale. And then we would also see ByteDance's existing investors, many of them whom are American investors like Jeff Yass of Susquehanna. They would get a 30% stake. So altogether, you would see ByteDance's control of the company shrink below the legal threshold. And yet the security guarantees are going to be one of the big questions out there. And the other will be, has China signed off on this as well? And we are waiting to see what Beijing will say, and if it has been part of the trade conversation.
That would be a huge development. Did they get the algorithm, by the way? Did they lease the algorithm? They borrow the algorithm?
Well, that is another thing that is in the deal that may not satisfy U.S. lawmakers. The idea was to have the algorithm completely separate, perhaps even recreate it from scratch. Instead, the idea is that it would be a copy leased from ByteDance, but then retrained to some degree or another by Oracle and also walled off in a way. They would create some sort of a security firewall or barrier that would keep ByteDance from ever gaining access to U.S. data or to the algorithm itself out of concerns that there could be some manipulation going on.
Pretty complicated deal, which I guess is why we've been talking about it for so long. I suspect we'll update this tomorrow with you, and I hope that you'll have more for us. Shep, thank you. That's Michael Shepard live in Washington as we assemble our political panel now for their reaction to this story and more. We're joined by Bloomberg Politics contributor and Democratic strategist Adam Hodge, managing director at Bully Pulpit International, alongside Republican strategist Annalise Keller, partner at 7 Letter. Great to have both of you with us. Adam, based on your experience in the USTR's office, I'm just curious, your thoughts on this deal. Complicated, yes. Is it possible to keep the Chinese out? Do you trust it?
Joe, I just think back to what Xi Jinping has said himself, was that TikTok would never be sold. And in China, Xi Jinping tends to get his way when he says that certain things should happen a certain way. So the Congress is pretty clear what the law should be here. The president has clearly flouted that over the course of this year and saying he's going to do a deal. giving waivers to some companies that seem to contradict the actual law that was signed. I think I should go back to TikTok. Has clearly been a very effective partner in Washington trying to get their way. They've done an effective lobbying on this issue. The devil, as Shep was saying, will be in the details. That is 100%, because how it is structured, whether the source code, whether the algorithm stays in the U.S., really does matter at the intent and spirit of that law that was passed.
Statement from Chu this evening says the organization will, quote, operate as an independent entity with authority over U.S. data protection, algorithm security, content moderation, and software assurance. Annalise, do you trust the framework that you're hearing?
That'll be hard. I mean, we'll have to see more, and everyone here in the U.S. will have to, be able to trust that some of the data and privacy security issues are solved. But, so I think that's an open question. But what is clear is that President Trump, and especially going into the midterms, has, been effectively, it's been effectively argued to him that this is something that this is a platform that lawmakers are on. It's an effective tool for them to reach their constituencies. And I think that's really what was able to turn the tide of lawmakers here in Washington appreciating that this was something that their constituencies used in a way that they could communicate with them back home.
Interesting. We're going to have a lot more on this, I'm sure, as we learn more. This just broke after we came to air. But I do want to ask you both about the health care debate that's punctuated a lot of conversation this hour over the course of the day. And, well, I guess it's been months, because we did have the longest government shutdown in history. We heard from Hakeem Jeffries, knowing that he's got enough Republicans on the discharge petition now to get this thing to the floor and actually clear an extension of Obamacare subsidies. Here's what he said.
Our message to Mike Johnson is clear. You can run, but you cannot hide. The American people are horrified. Republican leaders are petrified. But House Democrats are unified, standing up on behalf of the American people to protect their health care.
Adam Hodge, Leader Jeffries is demanding that the Speaker keep everyone in town, and I guess John Thune as well for that matter, to get this done before Christmas. Surely he's not new to Congress. No one's missing their flyout day tomorrow, right?
No, Joe. I mean, I think the way that you nailed it, the way the House works, that seems unlikely. However, it sure would be in the Republicans' political interests to solve this problem before they went away for the holidays. I mean, you could see their own reelection ads running themselves, saying, "I stayed in Washington to get this done to lower your healthcare premiums." Instead, they're going to fly out of town, and there's no way that they address this in January. And in January, as they're suffering from this affordability crisis of some of their own making, they're going to have to deal with skyrocketing premiums. It boggles my mind that they haven't found a way to solve this political problem when you have members of their caucus who are the most endangered trying to actually get a deal. And it would be good for the American people if they did solve this problem.
Annalise, where's your head on this? Because it does seem like you've got the ingredients for a deal, but we're going over the cliff anyway, and everybody's going to come back in January and start pushing the rock. Couldn't we get this done now?
Well, I'll disclose that I work on this issue in my day job, but you're right. You're right on. Republicans appreciate that this is going to be a challenge for them when it comes to affordability and the midterms. I worked for an endangered Republican in the 2018 cycle in Detroit suburbs, and we were part of that landslide, the blue wave that lost re-election because of the pre-existing condition conversation. Democrats were really successful in pushing that narrative, and healthcare is an issue that the American people really do trust Democrats on. Republicans are typically stronger on the economy. Democrats typically are stronger on health care. So I think there are a lot of Republicans who realize that this is a really challenging place for them to be in and a really huge vulnerability. And that's why you have seen everyone coming out with their own plan. This is my plan. And, because people want to solve this problem. But what it takes is leadership in the House of Representatives and in the United States Senate to put these bills on the floor. Also, the last thing I'll say is the 3-year clean extension. Yes. I think people know that that's not going anywhere.
Failed already in the Senate.
It's already failed. I think it was really remarkable to see Republicans get on the discharge petition. I think that was a real rebuke of the leadership in the House right now. But there has got to be some sort of real decision from leadership in the Republican Party that they're going to move something forward.
This is an important moment for sure that we'll be looking back on at some point. Adam, I know you like a party, and it looks like the president's planning one. Have you heard about Patriot Games? This is not to be confused with Hunger Games. Kate Sullivan at Bloomberg out with this story. The president announcing a bunch of events to celebrate America's 250th birthday, including Patriot Games will be a parade and athletic competition for high schoolers, a fair on the National Mall, and what they say will be the biggest fireworks display in the world. What's the president doing making plans like this right now while we're talking about affordability? Don't we have a ballroom to build?
Well, I'll tell you, the one who's not happy about those fireworks is my dog, who's going to be going crazy on 4th of July when the fireworks are going off. But I think you have, this is in keeping with the administration, right? They had the secretary doing pull-ups in the DCA. This is kind of in keeping with some of the shenanigans that they've been up to. It seems to me you're right on the political side. If you have a budget problem, you got an affordability problem, spending hundreds of millions of dollars on fireworks in the parade.
I thought,
Annalise?
Yeah, I don't know. I'll try to make it. I thought this was AI when I saw it.
I'll meet both of you guys there. Adam Hodge, Annalise Keller, thank you. This is Bloomberg.
So, what will Rachel Reeves's pivotal new budget mean for you?
Has an innovative think tank just come up with a solution for replacing stamp duty?
Hello, I'm Steph McGovern.
And I'm Robert Peston.
And we wanted to recommend you our podcast, The Rest is Money, where we answer questions like these. We do conversations for curious...
Morning after marathon talks in Brussels. Under the agreement, the EU will raise joint debt backed by the bloc's budget to fund the loan. That's a significant pivot from a previous plan favored by many countries to use Russian frozen assets on EU soil. Speaking after the deal, the EU Council President Antonio Costa set out how the agreement would still be tied back to those Russian assets.
As a matter of urgency, we will provide a loan backed by the European Union budget. This will address the urgent financial needs of Ukraine. The Union reserves its right to make use of the immobilized asset to repay this loan. At the same time, we gave a mandate to the Commission to continue working on the reparation loan based on Russian immobilized assets.
Antonio Costa speaking there as leaders hope the deal will strengthen Kyiv's hand at the negotiating table and keep the war-torn country afloat. Speaking after the agreement, German Chancellor Friedrich Merz described the deal as a pragmatic, good solution. French President Emmanuel Macron said the absence of this decision would have been a disaster, but that Europe will have to find a way to engage directly with Vladimir Putin as the U.S. pushes ahead with peace talks.
Japanese bond yields have jumped after the Bank of Japan hiked interest rates to the highest level since 1995. While the bank's quarter-point move to 0.75% was widely expected, traders are focusing on the lack of clear guidance on the timing for future hikes. Bank of Japan Governor Kazuo Ueda says policymakers will continue to observe the situation.
It is difficult to determine the neutral rate in advance, and it is necessary to consider it within a fairly wide range. On that basis, we believe it is appropriate to continue monitoring how changes in short-term interest rates affect the economy and prices, while exploring the level of the neutral rate and adjusting the degree of easing accordingly.
Bank of Japan Governor Kazuo Ueda there speaking via a translator after the decision. The central bank cited the rising likelihood of its economic outlook being realised and said that underlying inflation is continuing to rise moderately.
UK retail sales fell for a second straight month in November, adding to evidence that the economy was damaged by uncertainty in the run-up to Chancellor Reeves' budget. Data from the Office for National Statistics shows the total volume of goods sold online and in stores was down 0.1%, following a revised 0.9% plunge in the previous month. Economists surveyed by Bloomberg expected a 0.3% increase in November. The pessimism, which is widely attributed to the uncertainty caused by the government's annual budget, comes after the Bank of England delivered a 6th rate cut yesterday. Governor Andrew Bailey says the recent inflation data has been a positive surprise.
I
think now that we're on a path where we'll probably be around this level for a few months, but we think that come the spring, April, May time, we should see another quite sharp drop and take us, I hope, to around target. So we're going to come back to target sooner than we thought. So that's encouraging. All of this is very encouraging.
Bailey's decision to cut rates for a 6th time comes as concerns in Britain shift away from persistent inflation and towards a stuttering economy and labor market.
Now, in other news, the Trump administration has halted the U.S. green card lottery program, which it says was used by the suspect in the Brown University shooting. Homeland Security Secretary Kristi Noem has asked U.S. Citizenship and Immigration Services to pause the program, which creates roughly 50,000 visas every year. The move comes after officials have found the dead body of the suspected gunman in the shooting at Brown University on Rhode Island last weekend. 2 people were killed and 9 were wounded in that attack. The chief of police in the town of Providence, Oscar Perez, says the suspected attacker took his own life.
TikTok is being acquired by a group of buyers led by Oracle after a long-delayed plan to separate from its Chinese parent company ByteDance. The CEO told employees about a binding agreement to create a U.S. joint venture, a majority owned by American investors, and an internal memo seen by Bloomberg. The news comes after a national security law passed by former President Joe Biden mandated that ByteDance and TikTok US have no operational relationship. Our senior editor for technology and strategic industries, Michael Shepard, says that we still don't have all the information.
And yet the security guarantees are going to be one of the big questions out there. And the other will be, has China signed off on this as well? And we are waiting to see what Beijing will say and if it has been part of the trade conversation.
Bloomberg's Michael Shepard speaking there. The terms outlined in Chu's note to employees appear to leave the door open for ByteDance to potentially retain key oversight of parts of the U.S. TikTok. The deal is expected to close on January 2nd, 2026, but Chinese regulators have yet to say whether they'll approve of the transaction. Now, there's your top stories on the markets. European markets are opening up in the opening up in the red, but just slightly. We're flat to the downside on Eurostoxx 600. The DAX in Germany is flat to the downside. The CAC in France, flat to the upside. The FTSE 100 is down 0.1%. So a fairly muted open here across Europe. A few single stocks to point out. Adidas shares are trading lower this morning, down 0.8%. That comes after Nike sank 10% after earnings on weak sales guidance after the bell yesterday. Over on Wall Street, we are still continuing to rebound after the softer than expected CPI. S&P 500 futures higher by 0.2%. NASDAQ futures higher by 0.4%.
That's news when you want it with Bloomberg News Now. I'm Caroline Hepker.
I'm Valerie Teitel, and this is Bloomberg.
Hello and welcome. This is the Michelle Hussein Show. I'm Michelle Hussein. I speak with people like Elon Musk.
I think I've done enough.
And Shonda Rhimes. That's so cute. This will be a place where every weekend you can count on one essential conversation to help make sense of the world. So please join me, listen and subscribe to The Michelle Hussein Show from Bloomberg Weekend, wherever you get your podcasts.
You certainly ask interesting questions.
I'm Barry Ritholtz, inviting you to join me for the Masters in Business podcast.
Hi, I'm Kim Vanell in Wanganui, New Zealand. It's the bringing you everything you need to know from the front lines in 10 minutes, 7 days a week. We start in China. Reuters has learned the country has secretly built a prototype of one of the world's most advanced chip-making machines, a project insiders describe as China's Manhattan Project. It's technology Washington has spent years trying to keep out of Beijing's hands and moves China much closer to producing its own chips to power AI, smartphones, and modern weapons. Fanny Potkin in Singapore is the reporter on the story.
So this is the first time that China has built a working prototype for this machine, which is the key to producing the world's most advanced chips. And it is years ahead of Western estimates. So how did they make this? China recruited former engineers from a Dutch company that's the only one in the world that makes those machines and had them reverse engineer the technology. So we actually learned that some of those engineers were given fake IDs to work in secret, and they worked with research institutes all across China to develop homegrown alternatives to parts that they couldn't get. So one of our sources told us that the team made a breakthrough once it built the prototype to be as big as possible instead of earlier attempts to replicate the size of the Dutch one. So it's made it huge. It feels nearly an entire factory floor. And it's been a 6-year government effort involving thousands of engineers, research centers, development centers all across China, with the help and coordination from Huawei, who has involved entire teams on this. This is fundamentally about China's push for technological self-sufficiency. What it wants is to protect itself. It wants the US 100% kicked out of its supply chain. It's about strategic independence. It's not about commercial competition, which is why some of our sources told us that this project is compared to the Manhattan Project, because it is seen as so strategically important to China and to China's leadership.
The sources spoke on condition they not be identified due to the confidentiality of the project. Chinese authorities did not respond to requests for comment. Speaking of strategically important to China, we now go to Taiwan and Washington's largest ever arms sale to the island nation. It's an $11 billion package that includes rocket systems, howitzers, anti-tank missiles, and drones. Taiwan's defense ministry says the deal is about boosting its ability to carry out asymmetric warfare as China ramps up military pressure on the island, which Beijing claims as its own. In the US, efforts to rein in President Donald Trump's aggression toward Venezuela has failed in the House of Representatives. It comes as speculation mounts that the president is going to launch an attack on the South American nation. President Nicolas Maduro has responded to Trump's order for a blockade on oil tankers by saying Venezuela will continue to trade.
Y Venezuela seguirá comerciando todos sus productos.
The Venezuelan Navy is now escorting some ships through its waters, and the country has requested a UN Security Council meeting over what Maduro calls ongoing US aggression. The House vote on Venezuela came ahead of a rare evening address from the White House where Trump, in the diplomatic reception room festooned with holiday decor, boasted of his accomplishments and blamed his Democratic predecessor for soaring consumer prices.
1 year ago, our country was dead. We were absolutely dead.
The Republican president offered few new policy initiatives to address high costs, instead railing about migrant invasions, violent crime, and transgender rights. Among the few policy initiatives, Trump announced his administration would send a warrior dividend of $1,776 to over 1 million service members in the coming week. Over in the Senate, lawmakers have voted to advance a defense spending bill, setting aside a record $900 billion a year.
The 65th consecutive year that Congress has come together across the aisle and across two chambers to send the president a bill designed to sustain and strengthen the national defense.
It's aimed at keeping the US competitive with China and Russia. The bill also funds boosting security in Europe and $800 million in military aid for Ukraine, moves seen as a break from President Trump. And in another House vote, lawmakers have chosen to let the Affordable Care Act subsidy expire. That's a tax credit that helps 24 million Americans lower their health insurance premiums. It means insurance costs could dramatically rise from January 1st. Democrats tried to force a 3-year extension of the subsidies, but failed. Republicans say the program funnels money to insurers, while Democrats warn millions of people could now lose coverage. The Senate isn't expected to revisit the issue or hold a vote until January. Now to markets, and BP has appointed its first female CEO, Meg O'Neill, after the abrupt departure of Murray Auchincloss. Elsewhere, US inflation data is big news on our sister podcast, Morning Bid. Here's Mike Dolan.
Hi, Kim. Yeah, look, government data is coming thick and fast. It's like uncorking a bottle. We hadn't data for many weeks during the government shutdown, and now we get a torrent. Today's November consumer price report is top of mind for anyone looking at the macroeconomy at this point, including the Fed. But it's also going to be interesting for the White House and for Donald Trump as well. Last night he was giving us a list of his economic achievements, including, as he described it, getting prices down. But the inflation rate that's expected today is going to be above 3%, and that's back above where it was in February, the month after his inauguration. So work to do, you might think.
You can listen to Morning Bid wherever you get your podcasts. In a court in Los Angeles, Nick Rayner, the younger son of Hollywood director Rob Rayner, has made his first appearance, charged with murdering his parents in their LA home. The 32-year-old appeared wearing a blue protective vest and did not enter a plea. If convicted, Nick Rayner faces life in prison or the death penalty. The hunt for the gunman who killed 2 Brown University students has entered its 5th day, and there's no indication that authorities have grown closer to identifying the suspect. Providence Police Chief Oscar Perez said of the killer on Wednesday, he could be anywhere. Warner Brothers Discovery has rejected Paramount Skydance's $100 billion hostile takeover bid, calling it illusory and accusing Paramount of misleading shareholders about financing. The board says Netflix's offer, a cash and stock deal which amounts to just over $70 billion, is binding and far less risky. Business of Entertainment reporter Dawn Chmielewski says as Warner Brothers shareholders have the final say, as far as Paramount is concerned, there's still time.
Paramount issued a statement saying, we're proceeding ahead with our offer. We disagree with the conclusions of Warner Brothers board. We are offering $30 cash. Our funding is guaranteed. We think we have a superior offer, and that, by the way, the winning bidder, Netflix, is going to be in for more regulatory woes. Paramount has a time period where its $30 share offer lapses. That's on January 8th. Meanwhile, Warner Brothers shareholders and Netflix's shareholders have a say in the matter. They're both publicly traded companies. Both of those companies will have to publish proxies describing the nature of the transaction fully to shareholders and giving them an opportunity to vote yay or nay. That's likely to happen next year.
And for today's recommended read, we travel to Japan, where AI romance has bloomed and a woman has wed the virtual partner of her dreams. There's a link to that in the description. For more on any of the stories from today, check out Reuters.com or the Reuters app. Don't forget to follow us on your favorite podcast player. If you're listening on a smart speaker, just ask for the latest news from Reuters 7.
Today,
This is Reuters Morning Bid, bringing you unfiltered market news and analysis straight from the Reuters newsroom 7 days a week. I'm Amanda Cooper in London.
And I'm Mike Dolan. It's Thursday, December 18.
So, Mike, let's dive straight into it. Another gloomy session on Wall Street overnight. This is probably not the vibe that traders wanted as we head towards the end of the year.
No, we've had many nights like this in recent weeks, and that whole worry about is AI in a difficult position? Is it overpriced? Is it a bubble? Is continuing to add year-end worries, I think, to the whole marketplace. The focal point of some of these worries in recent weeks has been Oracle, and again last night there was a media report that Blue Owl Capital, who's been a financier of a lot of the big data center build-outs in the States and for Oracle, had pulled out of a $10 billion data center that was planned. That was enough to take Oracle stock down about 5%, and it took the whole AI complex, if you like, down with it. With NVIDIA, Wall Street's biggest stock, most valuable stock in the world, down 3% as well.
No, for sure. I mean, you look at the S&P 500 and the NASDAQ, both of them trading below the 50-day moving averages, which I know is something that some traders keep a close eye on. But if you look at the rest of the market, the equal weight S&P 500, for example, you start to see that is actually outperforming the benchmark index, suggesting that while there's a lot of jitters around AI, there's still money in the market, people not taking capital off the table and perhaps broadening their horizons a little bit and looking at perhaps at some of those less loved stocks.
Yeah, but it does speak to the worry all for the past 3 years of just the scale of these stocks now and how they affect the overall index. Any disturbance in any one of these is enough to pull the whole market down. And I think that is a persistent concern. So if we get to the macro side of the economy, we get a big update on US inflation later today. What's the expectation for that, Amanda?
That's right. We get a look at November inflation. That will capture some of the price action, some of the dynamics in the economy throughout the run-up to the holiday season, Black Friday shopping featuring in there. Looks like the consensus is for an increase of about 3%, 3.1, I believe, which will be the fastest rise year on year for about a year and a half. And Mike, I think that you were taking a look at how inflation now stacks up to where it was at the beginning of Trump's presidency earlier this year, weren't you?
Well, we got this very big set-piece speech from the president last night, who was listing his great economic achievements of the year, of his first year back in the White House. And one of the things he did talk about is how he brought down prices. And so if you look at an inflation rate that's running above 3%, it's higher than it was in February, the month after he was inaugurated. So it's going to be a bit of a difficult sell with inflation running at this level. And if we look at next year, obviously a big midterm election year, it's very important how that's playing out in the polls, how cost of living and affordability issues are high on voters' minds. And Reuters' latest opinion polling on how Trump was doing showed last night that his performance on the economy was as low, or his approval rating was as low as 33%, which is the lowest of his second term so far. So there's a lot of work to convince the voters that prices are indeed coming down. And of course, a lot of that will rely on the Fed. And the Fed story from next year, or from as early as January possibly, will be about who runs the Fed next year. The latest twist on that is that Fed board member Christopher Waller is actually back in the game. It's not just the two Kevins. And he was speaking and talking about further interest rate cuts of up to 1 percentage point. Trump saying whoever wins will have to cut interest rates a lot. So how do you cut interest rates very sharply with inflation running a point above target? That's going to be a little bit of a conundrum for 2026.
But not all central banks are in quite such a difficult position, are they?
True.
We take a look at the Bank of England later today, widely expected to cut rates in the UK by 1/4 point. That weighed heavily on the pound yesterday, as we saw when those inflation numbers for the UK came through. Good news for anyone planning to travel to the UK, of course, from the US. The European Central Bank, on the other hand, expected to stand pat. The head of the central bank, Christine Lagarde, has stated the ECB is in, quote unquote, a good place with monetary policy. Let's see if she reiterates that message later today. For today's recommended read, check out Mike's column on how the Bank of England needs to rein in rising real rates. The link is in the show notes. And for more on any of today's stories, head to Reuters.com or the Reuters app. Follow us on your favorite podcast player. And if you're on a smart speaker, just ask for the latest market news from Reuters 7 days a week.
We'll be back tomorrow.
गाइस यहाँ पर ना क्रूड ऑयल में एक सपोर्ट है ये बट 2 times टेस्ट हो चुका है दिस इज द 3rd टाइम एंड द थिंग इज दैट ये फर्स्ट टाइम यहाँ से एक बाइंग में हाई बनाया था दूसरी बार लोअर हाई बनाया था ये 3rd टाइम आया है इसके जस्ट नीचे एक और सपोर्ट है वहाँ पर प्राइस अभी तक एटलीस्ट आया हुआ तो नहीं दिख रहा है मुझे एक ही बार आया है तो वहाँ पर भी एक सपोर्ट है अगर उस लेवल तक गिरता है तो बेटर है नहीं तो थोड़ा सा रेंज के अंदर फंस जाएगा क्योंकि ऊपर भी रेंज का ही सपोर्ट रेंज का ही रेजिस्टेंस जोन है ठीक है यहाँ से प्रॉब्लम क्या है ये भी एक रेजिस्टेंस ही है अब रेंज के लिए तो थोड़ा रुक सकता है इस रेंज में लेट्स होप किसी एक साइड पे ब्रेक कर दे दो पिछले 2-3 दिनों से रेंज के अंदर ही है क्रूड ऑयल मोमेंटम नहीं दे रहा बिल्कुल भी बिफोर ईयर एंड ठीक है यहाँ से एक बार पहले बाइंग आई थी जिस लेवल पे अभी है क्रूड ऑयल एक हाई बनाया था दूसरे बार लोअर हाई बनाया था तीसरी बार एक और लोअर हाई था अच्छा 4th टाइम है सॉरी दिस इज द 4th टाइम ब्रेक नहीं हो रहा अलग बात है पहली बार एक हाई है दूसरी बार लोअर हाई तीसरी बार ये 4th टाइम है अभी तक डब्ल्यू नहीं बना इसमें एक बार भी बट ब्रेक भी नहीं हुआ है तो स्टिल होल्डिंग इंडियन मार्केट भी हो गया है क्लोज लास्ट ट्रेडिंग सेशन था आज मोमेंटम अच्छा था निफ्टी बैंक निफ्टी दोनों ही बुलिस बैंक निफ्टी थोड़ा सा साइडवेज ज़्यादा कह सकते हो गैप अप के बाद ऑलमोस्ट 15 मिनट की कैंडल के अंदर ही क्लोज हो गया निफ्टी थोड़ा सा बुलिस गैप अप के बाद थोड़ा बहुत मोमेंटम में ही क्लोज हुआ है इंपॉर्टेंट रहेगा मंडे की ओपनिंग कहाँ पर होती है अब मैं थोड़ा एक्सपेक्ट कर रहा हूँ कि ये ब्रेक कर दे नीचे तो बेटर है इतने बार टेस्ट हो गया अगर ये लेवल ब्रेक हो जाता है हल्का सा और फिर फेक ब्रेकआउट देके ऊपर आता है तो नीचे ब्रेकडाउन भी हो जाएगा और फिर रेजिस्टेंस से दोबारा सेल करेंगे तो बेटर रहेगा या फिर ऊपर का रेजिस्टेंस ब्रेक हो जाए इस तरह से फेक ब्रेकआउट दिखा के फिर नीचे आए देन इट विल गो लाइक दैट इस रेंज में थोड़ा सा सही नहीं है एक फेक ब्रेकडाउन देन मूव अपसाइड देन सेल ओवर हियर अभी ये सपोर्ट ब्रेक नहीं हुआ है ध्यान रखना क्रूड में 15 मिनट टाइम फ्रेम पे ठीक है, मंडे के दिन अगर मार्केट मिलता है वापस से, निफ्टी स्पेशली फ्यूचर गैप अप या फिर फ्लैट होके अपसाइड जाता है, तो फिर 26,000 एक्सपेक्टेड है 250 की ओर एक बार और जाने की कोशिश। नेचुरल गैस थोड़ा नीचे आ रहा था, इसमें बाइंग का प्लान करेंगे। ये नीचे भी नहीं आ रहा है एग्जैक्ट लेवल पे। फिर ये नेचुरल गैस अब नीचे नहीं आता है ना, तो फिर थोड़ा सा इस लेवल से फिर अवॉइड करेंगे, बिकॉज हो सकता है प्राइस जिस तरह से कंसोलिडेशन कर रहा है 4 आवर टाइम फ्रेम पे एक हल्का सा लिक्विडिटी लेने 365 66 तक चला जाए, इन द सेंस ऑफ यहाँ तक चला जाए इस एरिया तक, और फिर गिरे। बेस्ट तो था पहले नीचे आता फिर ऊपर जाता, बट जिस तरह से जा रहा है ऊपर लग रहा है लिक्विडिटी लेने जा सकता है कल की तरह। एक कैंडल और देखते हैं बस 4 पीएम तक इन नेचुरल गैस, अगर नहीं आता है सेल ऑफ में नीचे यहाँ पे, तो फिर थोड़ा सा ऊपर के लेवल से सेलिंग का प्लान करेंगे। अभी भी आया नहीं है लेवल पे, लेट्स सी इस कैंडल तक अगर आ जाता है रेजिस्टेंस जोन पे। नहीं तो बेस्ट था नीचे जाके आता पहले, नहीं आ रहा है तो उसका मतलब लिक्विडिटी भी ले सकता है।
Bloomberg Daybreak is your best way to get informed first thing in the morning, right in your podcast feed. Hi, I'm Karen Moscow.
And I'm Nathan Hager. Each morning, we're up early.
Today, I'm Anna Szymanski. Well, Mike, the story in energy markets today is that oil prices have increased, but the story this week has really been how low prices have fallen.
Yeah, we got quite a sharp market reaction to the news of a potential U.S. blockade of Venezuelan crude. Prices rose more than 1%. But the real story this week, exactly as you say, has actually been the crude prices have been falling pretty sharply as well. You know, we have Brent crude and US crude benchmarks are at their lowest in almost 5 years. Brent falling below $60 a barrel, even lower for US crude. And that is already filtering into the retailer. Certainly the US price of gasoline is below $3 for the first time since 2021. So the overall picture is one of a building glut of oil on world markets and falling prices, which you would think helps that picture of inflation generally across the world and in the US too.
Yeah, as we look to next year, obviously what we're seeing towards year end, these moves up and down probably have more to do with repositioning than they have to do with a lot of these geopolitical events, although the geopolitical events are more interesting to talk about. But I think as we look to next year, it really looks like we should have a significant oil glut. So a little bit regardless of what happens in Venezuela, you should expect to see prices stay relatively low.
Yeah, you would. And of course, you know, apart from Venezuela, we were watching very closely. And I think one of the drivers of the latest drop in crude was the Ukraine peace talks, which there appears to be some movement in, not a breakthrough yet as such. But if you think that possibly down the road somewhere allows some Russian crude, for example, back onto the market, then that's what oil markets were looking at most closely. The Venezuelan story is very, I think in many respects, very short term. Venezuela provides about 500,000 barrels of oil to the market every day. And if you think that against a glut of almost 4 million that's expected next year, it's not enough to change the picture, even though it is an OPEC member. But you might also reasonably say, where does the whole US military intervention in Venezuela and the Caribbean, where does it end up? Does it end up in bringing more crude onto the market or more taking a lot of the sanctioned crude away? They're open questions. It's not obvious. Today's move is very much a knee-jerk.
Well, Mike, you mentioned that the lower crude prices is probably good news for U.S. consumers. Now, speaking of U.S. consumers and U.S. workers, we got some jobs data yesterday, but it really didn't shed much clarity on what exactly is happening. Frankly, I think the technical term would be clear as mud in terms of what we received.
Yeah, I think there was something for everyone, as they say. It's partly because we had 2 months of data, and the first month, October, and then bear in mind, this was all delayed anyway because of the government shutdown. But the government shutdown itself affected the numbers of payrolls because there was a very big drop due to the outage, as well as the timing of a number of the federal job cuts that had been announced earlier in the year. So there was a very big drop in payrolls in October, but a big bounce back in November. The number that everyone was focusing on, though, is that the unemployment rate has moved up to 4.6%, which is the highest in about 4 years. And that is potentially, for anyone thinking that there is a disturbance building in the labour market, is the most worrying point. But even there are worries about data collection and distortions related.
And some of it could be people coming back into the labor market or seeking to come back into the labor market.
Yes, there's an expansion of the participation in the labor market, which was supposedly affected that. But the numbers are very noisy. And I think the other thing people will focus on is that the private sector, whatever was happening with government jobs, private sector jobs in both months advanced. So there doesn't appear to be a great problem in private sector hiring so far, at least in the last couple of months.
Speaking of noisy, one of the biggest stories making noise this week and perhaps for next year is going to be the Netflix, Paramount, Warner Brothers saga. And we had a new move in this drama this week.
Yeah, look, it's one of the most watched sagas of the year end. Certainly a really big potential takeover deal. Netflix making the move first, and then Paramount coming in with a counter offer. It appears that Warner Bros. Will side with Netflix offer, even though it's a lower offer. And that's likely to emerge later in the day, according to Reuters sources. So it's a fascinating saga. We're not sure exactly where it'll end up, but it looks like Netflix will win the day based on the Warner Bros. Recommendation.
Yeah, so a cliffhanger potentially at year end.
Absolutely.
For today's recommended read, check out Mike's latest column on how big investors mostly got it right this time last year. The link is in the show notes.
For more on any of today's stories, head to Reuters.com or the Reuters app. Follow us on your favorite podcast player, and if you're on a smart speaker, just ask for the latest market news from Reuters 7 days a week.
We'll be back tomorrow.
Due to the shutdown. As well, we get November's full reports. It's a lot to shift through. What should really jump out for investors?
People are obviously going to be looking at that headline November number. I think the expectation is somewhere in the 50,000 workers added to non-farm payrolls in November. The expectation for October is sort of a weak 100,000 loss. But these numbers are likely to be noisy. People might be willing to forgive perhaps a softer number. They might be willing to look through something in October that isn't particularly positive. That's old data as well. November even is starting to feel a little bit old. The main thing that people generally look at payrolls data for, obviously, is for what it tells us about what the Fed might do. Fed has said the bar is high for a rate cut, but they've expressed concern and they've noted the softening in the labor market. Right now, January, the odds of a cut there are priced at about 25%. And the expectation is more likely that the Fed will go towards the middle of the year. They will get another reading of jobs. They'll get the December report before their next meeting in January. They'll have a little bit more information. But the picture for Q4 as a whole is quite patchy, as you said, because of the government shutdown, sort of interfered with some of that data collection. Could be, as I say, a noisy print today. And we're likely to see market volatility around that, I think.
Do you think this is going to be a case of bad news is good news for the markets, as in we see job numbers come in badly, maybe we'll see some more pricing for some more Fed easing next year?
The bad news is good news theory is a good one. And we've certainly seen that at play. At the Fed meeting earlier this month, we saw the Fed cut rates, expressed some concern about the softening in the labor market, and the stock market rallied because of that expectation of more favorable, more supportive monetary policy. But there does come a point always where bad news becomes bad news, that it tells us a story about the economy that is negative and that perhaps there's a risk that the Fed is a little bit behind the curve. We saw Stephen Mirren, Fed governor, yesterday say that he believes that rates are too restrictive. We know this. This is his argument. He consistently has voted for half-point cuts. He's expressed concern that restrictive rates could be hurting job growth. And then again, you've had other Fed officials come out and say they believe that monetary policy is in a pretty good position right now. Fed's data dependent. They'll see what's happened. But I think it's undeniable. This year, job growth has been a bit meager. If you take a look on average at what job growth has done in the first 9 months of the year, those are the months for which we have solid data, right, for 2025. This year has been the softest since 2010. That's excluding crises years like 2020, 2009. And, I think that tells us a lot about where the economy is right now. Like, we know that it's slowing down, but overall it's held up reasonably well. But yeah, people are going to be looking to see, what does this mean for jobs?
Well, let's look at some maybe more bad news, especially for tired financial journalists. The Nasdaq wants to keep extending its trading hours now to 23 hours per working week. Are investors cheering this news?
It's something that retail investors certainly want. A lot of it is coming from demand from investors outside of the United States that want the opportunity to trade those big, liquid, popular stocks. There are options for non-US investors to trade them. A lot of popular US stocks are listed in Frankfurt, for example, the equivalent of ADRs. But doesn't offer that same depth of market, that same liquidity as the US market offers. So we know that on the one hand. On the other hand, though, you have institutions actually wanting to shorten their trading hours. So it's a little bit of push and pull there, it feels like, from within the industry. But it does feel like the direction of travel. The New York Stock Exchange has put in an application for sort of 24/7 trading effectively. So NASDAQ following suit isn't that surprising, I guess. We'll see what it means for us as already tired financial journalists and how that pans out. But for investors, it feels like it's something that they want.
I mean, it seems that the problem is that now we'll be able to trade those big headlines after trading hours, and usually that's when earnings come through or some big headlines. Is there going to be some extra volatility coming ahead?
We often see volatility in after-hours trading anyway, because liquidity, as you say, is thinner than you'd expect during normal trading. But then at the same time, you have to argue that a trade is a trade, isn't it? And that perhaps with 24-hour trading, with easier access for perhaps non-US investors to take part, maybe we don't see that liquidity vacuum there and that extra volatility. It's a bit hypothetical at the moment. But as I say, it feels like it's the direction of travel for the exchange right now.
Well, Amanda, let's just finish up quickly on the latest EV news. Ford is leading the charge here. It seems to be changing up its EV lineup at the cost of $19 billion to make this more profitable. But Ford stock is up this morning, it seems to be, in the pre-market. Why is that?
Investors seem to like this. Ford has said it's going to take a write-down on its EV business. It's basically killing off its second-generation EVs, plans to concentrate on that more consumer-friendly budget end of the EV market. Perhaps it feels it's not competing effectively at the more luxury end. And the company has said explicitly this is in response to the administration's approach to EV vehicles, to lower carbon emission vehicle use and so on. It just is perhaps adapting to the state of play in the US market right now. For today's recommended read, check out Mike Dolan's column on why US Treasuries seem increasingly anxious about 2026. The link is in the show notes.
And for more of any of today's stories, head to Reuters.com or the Reuters app. Follow us on your favourite podcast player, and if you're on a smart speaker, just ask for the latest market news from Reuters 7 days a week.
We'll be back tomorrow.
Guys, you can see crude oil again take the support. This is the fourth time it is taking the support from this area. चौथी बार है सपोर्ट ले रहा है इस एरिया से. किसी एक साइड की रेंज ब्रेक करे तो बेटर, नहीं तो रेंज के अंदर ही चला जाएगा कंप्लीटली.
Bank of Japan expected to raise interest rates. In some respects, it's a story of fiscal policy rather than monetary policy. Bank of England is just fresh from watching the UK government deliver a pretty tight UK budget that a lot of people were worried about, but on net, it tightens the government position, and that allows them that opportunity to lay off the brake on the monetary side, and that's part of the reason it's still cutting interest rates, much like the Fed. Bank of Japan, after decades of near zero interest rates, is gradually pushing those up, and it's got a spur to do that from the recent fiscal stimulus that was announced by the new Japanese Prime Minister Takaichi. So that's part of the reasoning that they're going in different directions, but it comes against a backdrop, I think, where most people in the markets are now looking at the beginning of the end of the global central bank easing cycle overall. So perhaps the Bank of England is the outlier. But in currency markets, they seem to be taking it a different way. What's your take?
That's right. We've noticed that this is throwing up some interesting dynamics across the currency market. Taking a look at, for example, the pound against the yen. It's not a cross that perhaps a lot of people might be that familiar with, but that the pound rose to its strongest against the yen since about the mid-2000s, great financial crisis era, only last week. It feels like this is speaking more to people's concerns about Japan rather than a kind of a burning desire to own sterling. But I think it's true, isn't it? At these sort of close to turning point, end of cycle moments for markets, you do get some unusual things come up, don't you?
Sure. Let's flip back to Wall Street. The other big event of the week is the US payrolls. They're due on Tuesday, and we haven't seen a decent up-to-date payrolls or employment report for weeks and weeks and weeks and weeks due to the shutdown. It's expected to be relatively weak. How do you think the market will look at this?
I think it's a good question. A lot about it is uncertain. Everybody's so used to getting those numbers the first Friday of the month. They've been delayed. We're getting them on Tuesday, as you say. The consensus forecast based on our surveys is for a rise of about 35,000, which is a little on the soft side and certainly chimes with what we've seen from some of the private sector employment reports and so on. Definite softening happening there, which is probably behind that cut that the Fed delivered last week. But it's hard to say how the market will view it. Will it take the view that, well, it's kind of old data? We've got updated projections from the Fed. Maybe let's cling to those. But I think it's you'd have to argue it could well play in to some of those expectations, say, for January, the January Fed meeting.
Yeah, I mean, it does appear that the Fed has pushed the bar very high to move again. And I think probably one of the few things that would kind of jump that bar would be a big shock from the labor market. 35,000 probably isn't enough to do that. So there's so many different things and different ways in reading it. Jay Powell, the Fed chair, did make a point of saying job creation stats were not terribly reliable. So, there is a fog around data generally. But speaking of fog, the last few weeks of the year normally contains a Santa rally in stock markets, or the so-called Santa rally. What's your number crunch done to tell us how that pans out usually?
Well, usually, if you look over the last 100 years of history of the S&P 500, you'd see that, yes, more often than not, you do get that Santa rally, which is technically that pickup in the S&P in the final week of December and going into that first week of January. It's hard to say if we'll see that this year. December typically is a month where the index rises. If you look at the data set overall, it's one of the strongest months of the year on average in terms of percentage gain. But if you zoom in a little bit, that has changed over the last 25 years. December is very much middle of the pack if you look at sort of monthly performance, which suggests that the impact of the Santa rally may be more psychological than actually showing up in the numbers. But I don't think that stops traders from holding out for sweep higher in those final days of the year.
Okay, we'll wait and see.
It's time for the answer to yesterday's quiz. We asked you, who signed the Federal Reserve Act into law? Was it A, Theodore Roosevelt, B, Woodrow Wilson, or C, Franklin Roosevelt? The answer is B, Woodrow Wilson.
For more on any of today's stories, head to Reuters.com or the Reuters app. Follow us on your favorite podcast player And if you're on a smart speaker, just ask for the latest market news from Reuters 7 days a week.
We'll be back tomorrow.
Then we had Broadcom earnings, we had Oracle earnings, and Wall Street really took a dip towards the end of the week. It looks like maybe on Monday, futures look a little bit up, but clearly there's anxiety about AI, the potential for profits moving forward, and just all of the spending.
Yeah, look, it's the kind of worry that won't go away. If you were hoping for that kind of Santa rally, that last minute, which tends to happen simply because people put on bets for the year ahead in those final weeks, and this is the last full trading week of the year, in effect, then that AI story will be unnerving a lot of people. I mean, it's not, again, as we've said many times on the show, it's not about AI as a technology itself. It's the valuation of some of these companies. And I think we saw that from the 1-2 hit that we got from Oracle and Broadcom last week. Oracle fell again on Friday. It's the second day in a row, and it's down almost fifth. And the first stock that's over $500 billion market cap, that's a big move. And it's not just its equity; its bonds are being hit as well. And these are investment grade bonds, these brand new ones that are out, and they're trading almost at distressed levels. Broadcom's a different story, but a 10% shakeout on Friday for a stock that's, remember, it almost hit $2 trillion. It's a huge stock, and it's worry about margins and how much it's making from the kind of lower end of the AI processor scale. But it's again an issue around valuations. And if you spin that out, NVIDIA, the biggest company in the world, the most valuable company in the world, was down 3% on Friday too. So that whole complex, but there's a certain amount of rotation going on.
Right.
And as you can see, Dow Jones Industrial Average midway through Friday actually hit a record high. So I think you are seeing year-end behavior in that stock market of people trying to position for the runners and riders, winners and losers through next year. And AI doesn't look like the shiny thing it did mid-year.
Well, let's now move on to China. There's been a bit of negative economic news, obviously coming all year. But now one of the more interesting things we're seeing is really looking back to the issues with the property market, which has obviously been a problem for years now.
Yeah, I mean, speaking of problems that won't go away, I mean, this is a lot longer and it's a slow burn. And we know historically that property busts tend to be very difficult to resolve. It takes years in some cases. You remember the big property crash in 2008, 2009. It's taken almost 10 years for that to work itself out. In China's, it's only just beginning if you look at it on that scale. A big state-backed property developer, Vanke, in focus first thing this morning. There's worries about another missed payment, how they can resolve that. And you can see that play out in the Chinese economic numbers for November that were released this morning. Industrial growth, retailing, investment, all way below expectations. I think in retail, which is where China is really trying to generate domestic demand, retail is as weak as it's ever been outside of COVID, and you see that's filtering out. The combination of the two is filtering out across all Asian markets this morning. You see Japan and Korea down quite sharply. The tech sectors in both obviously are a factor from our first point. But also China's worries in the region is an issue. Interestingly, Chinese markets themselves are not doing so bad. They have fallen, but they are outperforming other regional markets because of the ongoing expectation that the Chinese government will come in with a very big stimulus. It's expected to have a 5% growth target for next year. It's going to do a lot of heavy lifting to get there.
So finally, we have some payrolls data coming out this week, and we're maybe seeing some jitters in the Treasury market ahead of this.
Yeah, that was really interesting on Friday. Just as Wall Street came off very sharply towards the close, the long end of the Treasury market itself was selling off too. So you'd normally expect one to be offsetting the other. So there is worries there. A big week this week for not only economic data, payrolls tomorrow. We got the CPI as well from October that's due. But also we're getting a whole series of central bank meetings around the rest of the world, which will have an effect on treasuries. The Bank of Japan in particular expected to raise interest rates on Friday. Other aspects of that Treasury move, there's so many different things feeding into it. Of course, the stories about how the Fed shapes up next year. I think the latest is that there may be two names, not one, in the ring for the Fed chair. So Kevin Warsh, as well as Kevin Hassett, now being
Battle of the Kevins.
The Kevins. One of the Kevins will win. I think I can bet on Kevin, definitely.
Long Kevin. That's
very long Kevin. And I think that from that point of view, you really have to look at what the payrolls throws us and how that split in the FOMC, the Fed's Policymaking Council, works out.
Yeah, so big week for the last trading week of the year.
Absolutely. Yeah, high stakes.
For today's recommended read, check out Mike's column on how the Bank of Japan and the Bank of England are going their separate ways. The link is in the show notes.
For more on any of today's stories, head to Reuters.com or the Reuters app. Follow us on your favorite podcast player. And if you're on a smart speaker, just ask for the latest market news from Reuters 7 days a week.
We'll be back tomorrow.
So, what will Rachel Reeves's pivotal new budget mean for you?
Has an innovative think tank just come up with a solution for replacing stamp duty?
Hello, I'm Steph McGovern.
And I'm Robert Peston.
And we wanted to recommend you our podcast, The Rest is Money, where we answer questions like these to try and make sense of the UK's economy.
Look, we get it. You're a discerning sort of person. You're a Bloomberg listener after all.
So we're not going to waste your time. Here's why it's worth you searching for The Rest is Money in your podcast app or watching us on YouTube.
Twice a week, The Rest is Money tells you everything you need to know about the money matters affecting all our lives. Fiscal and monetary policy, housing, immigration, even the high street.
Yeah, we do conversations for curious minds, no dry discussions here.
That's why we speak to brilliant and fascinating people.
Yeah, recent guests include Dan Needle, Art Laffer, JP Morgan's Karen Ward, and even the Chancellor herself.
So why not give us a try? Search for The Rest is Money.
News when you want it with Bloomberg News Now. I'm Valerie Teitel.
And I'm Stephen Carroll.
European Union leaders have reached a landmark agreement to lend Ukraine 90 billion euros for the next 2 years. The decision came in the early hours of this morning after marathon talks in Brussels. Under the agreement, the EU will raise joint debt backed by the bloc's budget to fund the loan. That's a significant pivot from a previous plan favored by many countries to use Russian frozen assets on EU soil. Speaking after the deal, the EU Council President Antonio Costa set out how the agreement would still be tied back to those frozen Russian assets.
As a matter of urgency, we will provide a loan backed by the European Union budget. This will address the urgent financial needs of Ukraine. The Union reserves its right to make use of the immobilized asset to repay this loan. At the same time, we gave a mandate to the Commission to continue working on the reparation loan based on Russian immobilized assets.
Antonio Costa speaking there as leaders hope the deal will strengthen Kyiv's hand at the negotiating table and keep the war-torn country afloat. Speaking after the agreement, German Chancellor Friedrich Merz described the deal as a pragmatic, good solution. French President Macron said the absence of this decision would have been a disaster, but that Europe will have to find a way to engage directly with Vladimir Putin as the U.S. pushes ahead with peace talks.
Japanese bond yields have jumped after the Bank of Japan hiked rates to the highest level since 1995. While the bank's quarter-point move to 0.75% was widely expected, traders are focusing on the lack of clear guidance on the timing of future hikes. Bank of Japan Governor Kazuo Ueda says policymakers will continue to observe the situation.
It is difficult to determine the neutral rate in advance, and it is necessary to consider it within a fairly wide range. On that basis, we believe it is appropriate to continue monitoring how changes in short-term interest rates affect the economy and prices, while exploring the level of the neutral rate and adjusting the degree of easing accordingly.
Bank of Japan Governor Kazuo Ueda there speaking following the decision through a translator. The central bank cited the rising likelihood of its economic outlook being realised and said underlying inflation is continuing to rise moderately.
UK retail sales fell for a second straight month in November, adding to evidence that the economy was damaged by uncertainty in the run-up to Chancellor Rachel Reeves' budget. Data from the ONS shows total volume of goods sold online and in stores was down 0.2%, and a revised reading from October was down 0.8% as well. Economists surveyed by Bloomberg had expected a 0.1% increase in November. The pessimism, which was widely attributed to the uncertainty caused by the government's annual budget announcement, comes after the Bank of England delivered a sixth rate cut yesterday. Governor Andrew Bailey says recent inflation has been a positive surprise.
I think now that we're on a path where we'll probably be around this level for a few months, but we think that come the spring, April, May time, we should see another quite sharp drop and take us, I hope, to around target. So we're going to come back to target sooner than we thought. So that's encouraging. All of this is very encouraging.
Bailey's decision to cut rates for a sixth time comes as concerns in Britain shift away from persistent inflation and towards a stuttering economy and labor market.
The Trump administration has halted the US green card lottery program, which it says was used by the suspect in the Brown University shooting. Homeland Security Secretary Kristi Noem has asked US Citizenship and Immigration Services to pause the program, which creates roughly 50,000 visas every year. The move comes after officials found the dead body of the suspected gunman in the shooting at Brown University in Rhode Island last weekend. 2 people were killed and 9 others injured in the attack. The chief of police in the town of Providence, Oscar Perez, says the suspected attacker took his own life.
An individual was identified as Claudio Neves Valenti, and he was a 48-year-old man. He was a Portuguese national, and his last known address was in Miami, Florida.
The authorities say there's no longer a threat to the public, ending a manhunt which has lasted nearly a week. The pausing of the green card program is the latest in a series of crackdowns from the Trump administration on the legal routes to immigrate into the United States.
TikTok is being acquired by a group of buyers led by Oracle after a long-delayed plan to separate from its Chinese parent company ByteDance. The CEO of ByteDance told employees about a binding agreement to create a U.S. joint venture, a majority owned by American investors, and an internal memo seen by Bloomberg. The news came after a national security law passed by former President Joe Biden mandated that ByteDance and TikTok US have no operational relationship. Our senior editor for technology and strategic industries, Michael Shepard, says that we still don't have all the information.
And yet the security guarantees are going to be one of the big questions out there. And the other will be, has China signed off on this as well? And we are waiting to see what Beijing will say and if it has been part of the trade conversation.
That was Bloomberg Michael Shepard speaking there. The terms outlined in the note to employees appear to leave the door open for ByteDance to potentially retain oversight of key parts of the U.S. TikTok. The deal is expected to close on the 22nd of January, but Chinese regulators have yet to say whether they'll approve the transaction. We're seeing shares of Oracle trade higher in U.S. pre-market on the back of this news, higher by 5.5%.
Well, those are your top stories. More details on the markets. The Japanese yen 9/10 weaker against the dollar after the Bank of Japan press conference, trading at 156.92. The 10-year JGB yield ended up to close to 2.02%, actually up 5 basis points on the day. Stoxx 600 is flat at the moment in Europe. In US pre-market, Valerie, you mentioned Oracle, but Nike shares down 10% in pre-market in the US after they warned sales will decline this quarter amid weakness in China. The S&P E-mini futures index up 0.3%. Nasdaq futures are 0.5% higher.
That's news when you want it with Bloomberg News Now. I'm Valerie Teitel.
I'm Stephen Carroll, and this is Bloomberg.
Hello and welcome. This is the Michelle Hussein Show. I'm Michelle Hussein. I speak with people like Elon Musk.
I think I've done enough.
And Shonda Rhimes.
Oh, that's so cute.
This will be a place where every weekend you can count on one essential conversation.
Had Oracle earnings, and Wall Street really took a dip towards the end of the week. It looks like maybe on Monday, futures look a little bit up, but clearly there's anxiety about AI, the potential for profits moving forward, and just all of the spending.
Yeah, look, it's the kind of worry that won't go away. If you were hoping for that kind of Santa rally, that last minute, which tends to happen simply because people put on bets for the year ahead in those final weeks, and this is the last full trading week of the year, in effect, then that AI story will be unnerving a lot of people. I mean, it's not, again, as we've said many times on the show, it's not about AI as a technology itself. It's the valuation of some of these companies. And I think we saw that from the 1-2 hit that we got from Oracle and Broadcom last week. Oracle fell again on Friday. It's the second day in a row, and it's down almost fifth. And for a stock that's over $500 billion market cap, that's a big move. And it's not just its equity; its bonds are being hit as well. And these are investment grade bonds, these brand new ones that are out, and they're trading almost at distressed levels. Broadcom's a different story, but a 10% shakeout on Friday for a stock that's, remember, it almost hit $2 trillion. It's a huge stock, and it's worry about margins and how much it's making from the kind of lower end of the AI processor scale. But it's again an issue around valuations. And if you spin that out, NVIDIA, the biggest company in the world, the most valuable company in the world, was down 3% on Friday too. So that whole complex. But there's a certain amount of rotation going on.
Right.
And as you can see, Dow Jones Industrial Average midway through Friday actually hit a record high. So I think you are seeing year-end behavior in that stock market of people trying to position for the runners and riders, winners and losers through next year. And AI doesn't look like the shiny thing it did mid-year.
Well, let's now move on to China. There's been a bit of negative economic news, obviously, coming all year. But now one of the more interesting things we're seeing is really looking back to the issues with the property market, which has obviously been a problem for years now.
Yeah, I mean, speaking of problems that won't go away, I mean, this is a lot longer and it's a slow burn. And we know historically that property busts tend to be very difficult to resolve. It takes years in some cases. You remember the big property crash in 2008, 2009. It's taken almost 10 years for that to work itself out. In China's, it's only just beginning if you look at it on that scale. A big state-backed property developer, Vanke, in focus first thing this morning. There's worries about another missed payment, well, how they can resolve that. And you can see that play out in the Chinese economic numbers for November that were released this morning. Industrial growth, retailing, investment, all way below expectations. I think in retail, which is where China is really trying to generate domestic demand, retail is as weak as it's ever been outside of COVID, and you see that's filtering out. The combination of the two is filtering out across all Asian markets this morning. You see Japan and Korea down quite sharply. The tech sectors in both obviously are a factor from our first point. But also China's worries in the region is an issue. Interestingly, Chinese markets themselves are not doing so bad. They have fallen, but they are outperforming other regional markets because of the ongoing expectation that the Chinese government will come in with a very big stimulus. It's expected to have a 5% growth target for next year. It's going to do a lot of heavy lifting to get there.
So finally, we have some payrolls data coming out this week, and we're maybe seeing some jitters in the Treasury market ahead of this.
Yeah, that was really interesting on Friday. Just as Wall Street came off very sharply towards the close, the long end of the Treasury market itself was selling off too. So you'd normally expect one to be offsetting the other. So there is worries there. A big week this week for not only economic data, payrolls tomorrow. We got the CPI as well from October that's due. But also we're getting a whole series of central bank meetings around the rest of the world, which will have an effect on treasuries. The Bank of Japan in particular expected to raise interest rates on Friday. Other aspects of that treasury move, there's so many different things feeding into it. Of course, the stories about how the Fed shapes up next year. I think the latest is that there may be two names, not one, in the ring for the Fed chair. So Kevin Warsh, as well as Kevin Hassett, now being
battle of the Kevins.
The Kevins, one of the Kevins will win. I think I can bet on Kevin, definitely.
Long Kevin. That's
very long Kevin. And I think that from that point of view, you really have to look at what the payrolls throws us and how that split in the FOMC, the Fed's Policymaking Council, works out.
Yeah, so big week for the last trading week of the year.
Absolutely. Yeah, high stakes.
For today's recommended read, check out Mike's column on how the Bank of Japan and the Bank of England are going their separate ways. The link is in the show notes.
For more on any of today's stories, head to Reuters.com or the Reuters app. Follow us on your favorite podcast player. And if you're on a smart speaker, just ask for the latest market news from Reuters, 7 days a week.
We'll be back tomorrow.
Patrols 6-7 hours a day. We were shot at, ambushed, and then we had to jump out of Blackhawks in the middle of the night into the heart of Taliban territory.
Lindsay Addario, Pulitzer Prize-winning photographer and chronicler of the extreme and the everyday.
My job is to bear witness to everything that happens. In conflict zones, women continue to deliver babies. I see marriages, divorce. I see death and life.
Do you love the job?
It's something that I do from my heart and my soul.
From Bloomberg Weekend, this is The Michelle Hussein Show. This latest episode of The Michelle Hussein Show is all about what it means to take great risks to tell other people's stories. It's the life's work of war photographer Lindsay Addario, who's documented conflict from Afghanistan to Ukraine and Sudan and been abducted twice on assignment, once in Iraq and once in Libya. There are not many women in her field, and she is also a mother with 2 children. In a new documentary film called Love and War, which is currently streaming on Disney+, we see her both at home and on assignment. The home part includes her children asking her difficult questions, why she has to go away, and whether her work is dangerous. That combination is what makes the film an unusually complete portrait, and, as I hope you'll agree, what makes Lindsay Addario herself so compelling. Lindsay, you've worked all over the world in so many really difficult places, and yet the title of the film that's out now is Love and War. That is also part of the title of your book. And I wondered, given that you are now a war photographer, how does love come into it?
Love comes into it in the balance with my family. I think that the focus was really, you have war and then you come home to this sort of nest of love with my children, my husband, also my sisters and my parents. But I think also the thing about war is that you see these incredible scenes of love and generosity and kindness and selflessness alongside brutality, of course. You get a sense of love that actually sort of binds people in these horrific moments.
You've witnessed birth, you've certainly witnessed death, you've witnessed grief. All of this is part of what you do.
Yeah, I mean, my job is to bear witness to everything that happens in conflict zones and also outside of conflict zones. And so I'm seeing daily life continue under these very difficult circumstances. So that means, yes, women continue to deliver babies. I see marriages, I see divorce, I see everything. I see death and life.
Do you love the job? Is that also part of the love that's in this?
I mean, I don't think anyone could cover war without loving the job. It's something that I do from my heart and my soul. It's something that I do because I believe in it.
Going back in time, I wondered if we could talk about 2 turning points. I think they're turning points. The first of which is 9/11, and you're already working as a photographer, but is that the moment where you become a war photographer?
Yeah. So I was photographing for many years, and then I moved to India in 2000. And in India, I started becoming aware of women's issues in Afghanistan.
Taliban had come to power.
Exactly.
Women's lives are being restricted.
Exactly. And so I was reading about that, and I was reading a lot about women's issues in Afghanistan. And as a young woman, I was curious, what do Afghan women think? Not necessarily what does the West think of what Afghan women must feel, but what do they actually think? And so I went to Afghanistan as I was 26 years old, and I borrowed money from my sister, and I started doing a lot of reporting and photographing what I could of women living under the Taliban. And I ended up making 3 trips to Afghanistan before September 11th. So when September 11th happened and the U.S. was gearing up for a war in Afghanistan, it felt very natural for me to go there because I was already quite familiar with it. And so
you'd had a hard time, hadn't you, selling those pictures?
Yeah, I couldn't give them away.
No one was interested.
No one was interested because it was before September 11th, and very few journalists were actually working in Afghanistan at the time. Photography was illegal under the Taliban. So the LA Times published some pictures, but really it was difficult to get them published.
And that all changed suddenly with international interest in the country.
Absolutely.
After 9/11. And was there a sense of excitement or thrill then for you that new opportunities are dawning?
Well, I think after September 11th, what became exciting for me is that I had this knowledge that I had sort of procured on my own, and then suddenly it was relevant on a world stage. And so the New York Times sent me on my first big assignment for them, which was covering Pakistan, sort of leading up to the fall of the Taliban. And then the New York Times Magazine put me on assignment to do the Women of Jihad. And so I started working pretty consistently for the New York Times then.
But that's when I guess you have to learn that there are risks involved in your work, right? You start to have to evaluate that, like covering a war is something completely different to you at that stage.
Absolutely. At that time, there were suicide bombers. There were smaller scale attacks. The U.S. started bombing Afghanistan, and then we had to navigate how to go in. There was a whole, when do you go into a country when the government or the Taliban was falling? When is it safe to actually move into a place that's very hostile? And so it's always a learning curve. Now with Ukraine, it's drones. And so I think it's ever evolving.
The other turning point I wondered about in your career was Iraq in 2004, because you had the first of your abduction, kidnap experiences then. Take me back to that time and that place, the really chaotic period after the US invasion, the year afterwards.
I mean, even leading up to the US invasion, when I was offered to go into Iraq, I really wasn't sure I could handle a military embed at that point. I had never been in combat. I was offered a position with the 101st Airborne. I did not take it.
Sorry, why did you think you couldn't handle it?
Because I was a woman. I didn't know if I'd be physically fit enough, if I'd be as strong as the men I was going in with. I didn't know what it would feel like to be under fire, because even though I covered the fall of the Taliban, it was not combat.
This is going to be frontline.
Yeah. And I didn't want to be responsible for holding anyone up or being scared, or I just wasn't sure how I would respond. And so I ended up going into northern Iraq from Iran. And many journalists did, and we were sort of covering the Kurdish territory, and there was a proxy war. It was Al Ansar fighting U.S. forces backed by Kurdish special forces. And it was there that I was in my first attack. That was a very close call that actually killed a journalist standing where I had been standing. And we were covering refugees fleeing this area. It was something that I've covered a million times now. And all the locals were warning us to leave. And we went to leave, and literally an incoming round came in and landed so close to our car that our entire car flew forward. And as we evacuated, we went to this school a few kilometers down the road, and a taxi pulled up and said, "Is there a journalist here?" And everyone was regathering. And the taxi driver said, "I have the body of a journalist in my trunk. Can someone help me identify him?" And I remember looking at him, and I ran behind the school and just started sobbing and thinking, I don't want to do this for a living. I don't think I can stay here. But there was no way out because Saddam was still in power. We couldn't go south. Iran wouldn't let us back in. And I basically had to learn how to deal with my fear and how to cover war in northern Iraq. Before the kidnapping in Iraq, there were like these gradual close calls.
Maybe that's almost a sliding doors moment, that one, because had there been a way out,
I probably would have.
And you might not have gone back to that kind of zone again. But then you were there in Iraq again, and you were out one day with other journalists, and that was when you got held up at a checkpoint near Fallujah.
Yeah. So what happened was I basically spent all of 2003 and the beginning of 2004 in Iraq. I was working with a colleague for the New York Times, and we heard there was a helicopter down, a Marine helicopter down. So we went. The only road open was a smuggler's route. And as we were nearing the outskirts of Fallujah, we turned a corner and literally the entire road was full of insurgents with keffiyehs, their faces wrapped, rockets on their backs, Kalashnikovs. They started shooting in the air. It was terrifying. They pulled all the men out of the car. I was dressed in full hijab, so abaya, headscarf, everything. And they left me sitting in the car. And I was sort of looking out the window, watching my colleague get led away. And
but this is where you did something really interesting. You said that colleague was your husband.
Yeah. I thought if I did that, they would take us as a couple and it'd be more complicated for them to kill us or to figure out what to do when you insert a woman into that situation.
It's a hell of a thing to do, Lindsay. I'm trying to imagine being in the same position and you're in not safety, but you're in a more protected position in this car and you're connecting yourself to someone who's being led away.
I guess, but you would probably do the same thing. I mean, you work in teams in these places. And when you work in war zones, there is a solidarity. And so I didn't think about it in terms of my own safety. I thought about it in terms of how can I help this situation?
And I think it did help diffuse it, didn't it?
I think it did. In the end, I think it did. They held us for a day. It was terrifying. Of course, we had guns to our heads. They questioned us repeatedly. And in the end, they ended up letting us go.
You've also been on embeds with the US in Afghanistan. And when you've written about it in your book, I think one gets a sense of the humanity of the soldiers as well as the civilians. You were embedded, I think, with one group for 2 months. And at the end of that, some of those you'd been with were killed.
Correct. I was embedded with the 173rd Airborne in the Korangal Valley, and that was in 2007. At the time, arguably the most dangerous place in Afghanistan. And we intentionally asked to embed there because we wanted to understand why there were so many civilian casualties in Afghanistan, given the incredible technology that the U.S. military had. And so we were very lucky because we were allowed as women to go to sort of the heart of the war. And we spent 2 months with them and witnessed, went on daily patrols, 6-7 hours a day. We were shot at, ambushed. And then at the end, we went on Operation Rock Avalanche, which was a battalion-wide operation. We had to jump out of Blackhawks in the middle of the night into the heart of Taliban territory. And it was really on these missions that you learn what war is about. It was one of the few times, ironically, in 25 years of covering conflict, that I really felt like I was at the heart of war, because you're on the side of a mountain with a group of young American men who are told they're fighting for democracy, and you just sort of see the cost. You really understand the complete disconnect between the Afghans who didn't want the Americans there and the Americans who thought they were helping the Afghans, and young American soldiers dying and Afghans dying. So what was it for? And you don't see those scenes unless you really invest the time.
But did you have those conversations? I'm wondering what the dynamic is like on an embed when you can clearly see this because you know Afghanistan and you know how the civilians feel about the presence, and it's evident in the fact that the attacks are taking place. But do you have those conversations with the soldiers?
Not really. I mean, I think for them, At that time, they were sort of despondent because they had been there so long. It was so incredibly dangerous. I mean, we were shot at almost every day on every patrol. They were living in bunkers on the side of a mountain, and everyone was really lonely. Their personal lives were falling apart. And so they would talk about, what are we doing here? But I think in terms of the greater political context, no, we never went there. It was very much about just kind of being there, having the trust of the soldiers, being able to access these embeds and these scenes.
Do you think your presence represents something to them, some kind of a semblance of a world outside?
Yeah. They kept asking us, like, you're really here because you want to be here? They could not believe it. I think they were very grateful that we were there, that the American public can see their service, could see what they were going through. I think that for them, it's like a validation of what they're doing.
One of the people who was later killed in action, you knew that he was planning to go home and propose to his girlfriend, and you end up photographing his body bag.
Yeah. We were ambushed in Operation Rock Avalanche, and it was so chaotic. And we heard that there was man down, man down, man down. And I'm photographing, and I realized I'd photographed 2 of the 3 wounded. And then as I was making my way to the landing zone where the medevac was coming in to take out the wounded, I thought, where's Rugal? Because I knew his call sign and he hadn't come out. And then I saw the scout team sort of emerging from the dust carrying a body bag. And it was in that moment that I thought, I can't believe he's dead. This young man who was so alive and talking about his future. And then seeing him be carried in a body bag was really, really devastating.
And the other soldiers are crying.
And then I was crying, of course, because you make that connection and then you think of his parents, you think of his loved ones, and you think they don't even know yet that they've lost their loved one.
Do you ever struggle with leaving any of that behind at the end of the day? Because you also you must need to compartmentalize, or do you not think of it that way? Is the emotion part of what makes you a great photographer?
I think a combination. I mean, I definitely allow myself to feel, and I have, I think, an extraordinary amount of empathy. I think I feel too much sometimes. I wish I wasn't so emotional, but I think that it's important, and I think that when I stop feeling, I really need to be worried. But I also compartmentalize when I go home because I have to be present for my personal life. And I owe it to now my children and my husband to not live in this very dark place of sadness and war all the time. I carry it with me. I make it a point to not just forget about things, but I definitely have to compartmentalize so that I can be present.
Should we go back in time then to your birth family, your parents and your sisters when you were growing up? I think because you're the youngest of 4, your older sisters have said that they deserve some credit for what you are because they toughened you up.
Yeah, they were really tough on me. I mean, anyone who has older sisters knows it's generally not an easy path. We grew up in Connecticut and a very sort of open, eccentric household. My parents are hairdressers. And we had very few rules in our house growing up. But my 3 older sisters, I'm now very, very close to, were really tough on me. I mean, they'd beat me up, they picked on me, they'd call me names. They were constantly sort of slamming the door in my face and telling me I couldn't join in. And I guess, yeah, in a sense, they did toughen me up.
You had to go really far from home to carve out your own path, I feel.
Yes, I did.
But your parents being hairdressers, I mean, I'm thinking hairdressers have to be good with people. They have to be able to talk to anyone. And perhaps that is a thread that you've brought into your professional life.
Exactly. It was really a household where we sort of opened our doors to anyone and everyone. And I think that made me who I am in terms of being able to walk into any situation, not be judgmental, really be able to accept people for who they are and where they're at.
What was the first time you picked up a camera? How did that happen?
My father gave me a camera when I was about 12 years old. A client of his gave him a camera. And I remember I had no idea how to use it. So I started reading all these manuals of like how to photograph. And so I started taking pictures of inanimate objects because I was too shy to approach people. And then I would sit on the roof and try and photograph the moon. But it was an awakening for me of sort of a different way of expressing. But it really wasn't until I graduated that I started photographing people and really started becoming aware of photojournalism as a way to tell stories.
But you hadn't grown up with photojournalism, is that right?
No.
I think yours wasn't a house which had newspapers coming in. You're not looking at images of like conflicts around the world or places around the world.
Really, it was not an intellectual family. We had no books in the house except for the encyclopedias. And it wasn't until really I went to university and I was determined to do something that was more intellectual, obviously because I grew up in such a creative family. And I studied international relations and I did not want to be a photographer at all. And then I graduated and the only thing I wanted to do was photograph. And it wasn't until I realized that photojournalism was sort of this great marriage between
that it existed.
art and that it existed, which sounds ridiculous. But if you don't grow up in a family with newspapers and where you're constantly sort of privy to what's happening in the world, why would I have known about photojournalism?
Your craft today, when you go out on assignment, and you've been on many tough assignments, including Ukraine and recently Sudan and Gaza and other places. But when you're going out and you presumably want to come back that day with something good.
Yeah, of course.
Of course. What do you set out to do? Do you set out to think, today I really want to capture a particular kind of scene?
Yeah.
Or are you going with the flow?
No, I guess what people don't understand is photojournalism and being a photographer is not just about taking photos. There is so much that goes into it. So as I'm gearing up for a trip, I spend an extraordinary amount of time doing research, updating myself on what's happening right now.
But are you looking for locations or thinking
everything?
That hospital is somewhere I'd like to go to. That kind of person is someone I want to find.
I'm looking for themes. I'm looking for contacts. I'm looking for hospitals. I'm looking for schools. I'm looking for what is the story of the moment? What is important and how can I advance the story? What's not being told? What's happening to women? Is rape being used as a weapon of war? I'm looking for sort of everything. So when I finally get on the ground in a country, every day I have a list of things in my head and I'm making notes, I'm doing reporting on the ground. I'm constantly updating my shoot list. And sometimes things are serendipitous. Sometimes I'll be driving and I'll see this extraordinary scene and I'll stop the car and that might be the photo for the day. But I always have an agenda somewhere.
But that shoot list, when you're thinking about it in advance and making that list, is it visual that you actually do you think in that way?
Yes.
Rather than, I think in words. Do you think in images?
I think in images. In Sudan, for example, I knew that, food is an issue and there is malnutrition. And so when I'm going in, I know I have to look for a communal kitchen, one of the emergency response rooms. I'm making a list because there are things I've read about. There are things that I know help comprehensively tell a story. And so it's not just about showing up somewhere and looking for pretty pictures.
There was a day early in the war in Ukraine in February 2022 when you were out and you ended up seeing the aftermath, immediate aftermath, actually being almost in the middle of a Russian strike on evacuated civilians. Tell me about that day, because it led to a famous image that you've taken. But I want to know the before and the after.
So it was actually March 6, 2022. And at that point, the situation in Bucha and Irpin was a bit of a mystery. Everyone knew the Russians were there. They had sort of encircled the area. A lot of civilians started fleeing to Kyiv across the broken Irpin bridge. The bridge had been broken intentionally by the Ukrainian forces to stop the Russian advance. And so I had seen these photographs of hundreds of Ukrainian civilians leaving Bucha and Irpin across the bridge the day before. And I didn't know about it. And I was really upset with myself because it was a really important moment in the conflict. And so I made a plan to go the following morning, and it felt incredibly tense. And I had been warned that there was shelling on the other side of the bridge. And so we took cover behind this wall near the bridge, and we were photographing civilians leaving. And it was a known civilian evacuation route. So when the first mortar round came in, I thought, well, the Russians know this is all civilians, so they won't kill them because, of course, Putin had said repeatedly, we are not targeting civilians. And so my security advisor said, would you like to leave? And I said, no, they're not going to target this. This is all women and children and elderly. And so I was shooting, and then another round came in a bit closer. And so we dove for cover behind the cement wall, and almost immediately a third round came in and landed with like 20 meters between me and this family. And I saw the flash of the round, the mortar round hit the pavement, and it was a sort of ball of flames, and dove behind this wall. And when I popped up, I thought that it was a soldier that had been knocked down because they were calling for a medic. And as I approached, I realized that there were children. I mean, I first noticed these moon boots, and I thought, I can't believe there was a family. And I'm scanning the scene and I'm shooting, and there's still rounds coming in. So I know I have to work quickly. Of course, my instinct is to leave, but I don't want to leave because I've just witnessed what I thought was a war crime. And so I'm shooting, and then I work my way around the scene, and I see the faces. And I'm thinking to myself, the New York Times will never publish civilians who have been killed, but I have to document this just for the sake of documentation. And I'm trying to do it in a respectful way and in a way that's dignified, of course. I don't know if the family is dead or alive. And then we have to run away because there are rounds still coming in. And when I get back to the car, I called my editor and I said, I've just witnessed this and I'll send you photographs if they're in focus. Of course, I had no idea if I'd even properly made pictures because I was still in shock. And the New York Times did make a decision to run the photos on the front page, and they were used on the House floor. They went sort of viral just to prove that civilians were being targeted.
Why was that so exceptional to publish those pictures? Because these are corpses, these are faces of corpses that are visible in your picture.
In my many years of covering war, it is always a huge debate whether to publish the dead, especially when their faces are identifiable. In this case, I tried to shoot in a way where their faces were not, but it wasn't very graphic. It looked as if everyone was sleeping. They had been knocked over by the sheer impact of the blast, that we had only been spared because actually the blast went in their direction and not our direction.
You said you were shocked, but were you also angry?
Oh, I mean, I was angry. I was upset. In the documentary, you can hear me cursing because I didn't even realize that Andre, my colleague, had been shooting the whole time. And so I somehow convinced myself from the time we got into the car to back to the hotel that actually it wasn't really a close call, that we were fine. We were quite a distance. And when I got back to the hotel, Clarissa Ward, who's a CNN correspondent, messaged me and said, "Are you okay?" And I said, "Yeah, I'm fine." She said, "I saw the attack." I said, "How did you see the attack?" And she said, "Andre posted it on Facebook." And my heart sort of sank because then I realized my family will have seen it. Perhaps my children will have seen it. And I realized it actually was as close as I thought it was.
In a situation like that, if your editor or whoever you're trying to sell the pictures to says, actually, we're not going to use that for whatever reason, maybe even sometimes because it's not interesting enough, like in the brutal realities of the way news is covered. What does that do to you?
Well, I mean, on these assignments, I can't do anything really. I mean, ethically, I have to just say, okay. In this case, I was terrified they would say that. And because I had survived the attack and I knew that it was intentional targeting, I really went to bat because this was a situation where I actually witnessed bracketing of mortar rounds onto a civilian evacuation route. And so for me, it was very important to publish these pictures.
I want to ask you to put on your headphones and listen to something that you said a few years before that. And it was when you had been in Libya in 2011 and you had been held hostage by Gaddafi's troops in, really, really difficult circumstances. And after you had come out of that, you went on CNN and you were asked whether these kinds of risks and realities of your work were worth it.
When I was blindfolded and bound and getting punched in the face, I said, why do I do this? Who cares about Libya? Why do I care about Libya? You know, these are questions I ask myself repeatedly. I do it because I believe in it. I do it because I think our policymakers need to have a firsthand view of what's happening on the ground to make informed decisions. I think it's very important, but is it worth my life? Is it worth doing this to the people I love? It's a difficult question.
They were traumatic days. I can see that from the descriptions you've given before. But how can you encapsulate what happened in those 8 days after you were abducted in 2011 with other journalists?
Yeah, I was taken hostage with 3 other journalists for the New York Times, 3 men. We were blindfolded, tied up, beaten up. As the only woman, I was groped repeatedly by numerous men. And the most terrifying thing about being in captivity is that you have no idea what will come next. And so it's really about getting through minute by minute. And can I survive being punched in the face and groped and breathed on? Punched in the face. Yeah. There was a moment in the very beginning of the captivity where they tied me up and put me in a vehicle on the front line. And they were sort of laughing at us because we were literally held on the front line while bullets and bombs were kind of raining around us.
In the crossfire.
In the crossfire. And at one point, a soldier came over and sat next to me. And I thought, very stupidly, that he was going to offer me water. Because even in Iraq, when we were held hostage, they were quite kind to us. You know, they weren't beating us. They were, I mean, the bar is low, but, you know, they weren't beating us and they were giving us water. And so in Libya, when he sat next to me, I looked at him and I thought, okay, he's going to offer me water. And instead he pulled his fist back and just punched me square in the face. And I'm tied up. And I remember just putting my head down and actually seeing stars like in the cartoons. And my first thought was, oh, that's where the cartoons get the stars from. And then I thought, I can't believe this man has just punched me in the face, a bound woman. And so I just started crying. And you don't want to make any noise because you don't want to offend anyone. So I was being very quiet and I just put my head down and sort of tears were rolling down my face. And then he just walked away. And another man came over and put his cell phone to my ear and his wife was on the phone. And she said, "You are a dog." And I said, "No, actually, I'm a journalist." And she said, "You are a donkey." And I said, "No, Sahafa, journalist." But it was mock executions. It was threatened constantly. There were moments where one soldier had a gun to my face and he was caressing my cheek with his finger, saying, "Tonight we will kill you." I mean, it was just a constant barrage of fear and emotions.
And you're hearing your colleagues being beaten up.
Yeah, exactly.
All the time as well.
Exactly.
I know you lost colleagues in other incidents in Libya, and I remember being there in May of 2011, close to where you were that day, but filming a documentary, so away from the front line. But I remember being in a hotel where there was a note saying, if anyone knows where the possessions of Tim Hetherington are, please let us know. And this was someone you know, you'd been with him, another journalist who was killed in that period. But I remember the effect on me because I knew him only by name, but seeing that little note on the wall and thinking he stayed in this hotel and one day he went out and he didn't come back and people are looking for his things. It was such a tiny detail, but it just made you think of the days when everything changes.
Yeah, I mean, that Tim and I were together in the Korangal, actually. We covered Operation Rock Avalanche together. And
that embed in Afghanistan.
The embed in Afghanistan that we spoke about.
He made a film about it.
Yeah, he made an incredible film about it, Restrepo, that's worth watching. Tim was an incredible photographer. He was a very thinking photographer, very sensitive. And on his way into Libya, he had been emailing me asking for advice on what the front line was like, how to cover it, what he needed to bring. And then I, of course, went missing. And he came in while I was in captivity. And so we never actually saw each other. And when I got out, I was dealing with the trauma of what we had been through. And then about a month after we had been released, I was in a meeting actually, and I looked at my phone and I got a message that he had been killed, along with Chris Hondros, who was another incredible photographer. And their deaths sort of sent me into this tailspin that my own captivity had not. And I think a lot of it had to do with survivor's guilt. You know, why do some people live and some people don't? You know, nothing really makes sense in those moments. And there's no reason why we should be alive after Libya. There were so many moments where we should have been dead, and then they got killed. And so you have to ask yourself why you survive and others don't. It's a really tough question.
Do you ask yourself that?
Yeah.
Because it's an impossible one to answer. So you're sort of torturing yourself by asking it.
Yeah, I ask myself in the same vein that I ask myself why I'm so driven to do this work, despite the costs, despite the sort of emotional toll and the fallout on my loved ones.
You've got young sons, and in the film we see you bathing the little one, and he says, do you have to go away like this? And please, can you only go away for 1 day or 3 days? And you're trying to explain to him that some of the places you go are really far away. But that's really hard.
It's really hard. It's so hard.
I mean, keep going away. You do keep going back to these really tough places.
I do. And he keeps asking me those questions. Now he's 6. And even the 13-year-old who will be 14, they both ask me all the time, why do you have to go? Lucas says, is it dangerous? Is there fighting?
What do you say to, is it dangerous?
I say it's dangerous, but I know how to stay safe, and I don't go to where it's too dangerous.
Is that true?
Look, there's an unpredictability in war. You never know. But there's also an unpredictability in life. I believe in this work, and I believe this is where I need to be. And I hope that my children can learn from that sort of dedication.
Would you have gone to Gaza, for example, if journalists had been allowed in?
Yeah, for sure. For sure. And I think I, like every international journalist and war correspondent, really struggles with the fact that no international media has been allowed into Gaza. And I think that for any of us who dedicate our lives to this work, the tools we have to dealing with witnessing this trauma and witnessing this devastation is to go and do something, to go and at least be a platform for the people on the ground, at least provide a voice for them. And to have those tools taken away is incredibly debilitating.
Palestinian journalists have been documenting the war
at great cost, and they've
dying.
Yeah,
some of them
dying.
Targeted
by
Israeli forces.
Over 200.
Do you think that there's been enough solidarity with them? The fact that this is the deadliest period documented for the last 30 years for journalists, and most of those dead have been Palestinian.
I mean, I hope so. I think we can only amplify their voices, and we can also point out the incredible work they've been doing. I think that we can point out the fact that many journalists have been killed and targeted, and hope that it's not with impunity, hope that at some point there will be someone called to be responsible for this. I think the fact that most Palestinian journalists are sort of dismissed as being part of Hamas, which is ridiculous. And for us to stand up as international journalists to say, no, these are accredited journalists. These are people risking their lives to bring the world the truth.
Can we talk, Lindsay, about images and what you've seen over your career? Because you began your work in the age before social media.
Yeah.
And the fact that we live in a world where people scroll from one short form video to another, that's how many people consume information and news for that matter. What does that mean for your work?
Yeah, it's a very different thing, because when I first covered conflict, we were the only way that a story could get out. People really relied on us to tell their stories. The responsibility felt even greater. Now we're in a situation where people can disseminate their own stories. We're sort of inundated by images and reporting. I think the main thing that we have to be conscious of is it's so important to understand where you're getting your information. And so when you see something on social media, one cannot automatically take it as truth. And now in the age of AI, it's hard to verify images. You cannot just look at an image and know that it's reality. And so I think that the role of journalists is more important than ever, because we really have a responsibility to make sure we're doing our job as responsible journalists, that we're doing the fact checking, we're getting the facts straight. And I think that it's very important.
Is it harder for an image that you or anyone else takes to have lasting impact? I'm remembering the National Geographic cover with the young girl in Afghanistan. Steve McCurry.
Yeah.
That's right. And then the image of the refugee child drowned on the beach. And Vietnam, you're mentioning other. Also, Alan Kurdi, yes.
Kurdi, yeah.
So images like that, which you and I both remember, is it harder now when, again, we have so much coming in for anything to have that kind of impact?
Well, I don't know. Aylan Kurdi was at a time where we did have social media already, and that image rose to the top.
But it was before TikTok.
It was before TikTok, but I think we were at that point already inundated by images. You know, there were so many images from the refugee crisis coming out, and that image was so poignant because of the position of that little boy, the fact that he looked like he was sleeping. He could have been any one of our children. It's very difficult with images because people need to find a window to relate. They need to find a way into an image. And so if it's too graphic, often people will turn away because it's too hard right now, especially right now.
And do you think of that as you're taking the picture?
I do think of that.
Have to frame it slightly differently to almost sanitize it a bit?
No, what I do is I'll shoot in many different ways. I mean, I will shoot the sort of pure graphicness, and I will also just shoot, I'll try to make it more palatable. I'll try to make an image that I think the public can handle and that the New York Times will actually publish, because most people will not publish an image that is gratuitously graphic.
But what is the change you've seen? I'm wondering if the appetite for the graphic image is less now.
Well, the appetite is less, but actually the tolerance is more because we see so many graphic images. If you look at the images that have come out of Gaza, I mean, they're horrific because what's happening there is horrific. I mean, you see children being pulled from the rubble. You see mothers over their children. There's no end to the horrors we see coming out of Gaza. It's not to say that those images will be published in print, but they certainly are out there. And I think we as a public are used to seeing them over and over. And that's a pretty devastating place to be, you know, where we are at a place where I can look at an image and say, that is the most horrible thing I've ever seen. But actually, I saw that same image yesterday.
In these interviews, I normally ask people about their weekends, but I feel like with you, you're laughing because I get it. Like, it's not a weekday.
What's a weekend?
What's a weekend? But is there a key dividing line between being on assignment and being at home? Is that the fundamental dividing line in your life?
Yeah. When I'm working, there are no weekends, obviously. And when I'm home, I'm still working all the time, but I do try to carve out time with my kids. Sometimes my 13-year-old wants nothing to do with me anyway, so it doesn't really matter, but I'm there and I'm cooking for them and I'm trying to be present.
But the work doesn't stop because you're doing the captions and you're processing the images and you're probably thinking about the next assignment.
I'm planning the next assignment and I'm writing another book right now. So that's taking up a lot of time.
And you exercise. We see you exercising in the film and it really made me think about the level of physical fitness.
Yeah.
That is not a nice to have. It's essential for your job.
It is. I mean, most people who do my job are men. Most of them are young men. And so I am in my 50s and I have to be fit. I have to be able to carry gear. I have to be able to run with it. I have to just not let my physical fitness ever get in the way of work.
How do you switch off?
I switch off when I'm with my friends and family. You know, I make a conscious effort to come home from 6 weeks in Ukraine and throw a dinner party for 25 people because it makes me happy. I mean, it makes me happy.
But I mean, the complexities of human life and your domestic life and human arrangements, that can be messy in a way that perhaps when you're on assignment, you're in a certain mode.
Well, when I'm on assignment, I try not to think too much about my kids and my family because then I feel like it will affect too much the decisions I'm making on the ground and I have to really stay focused. And so I'm not FaceTiming with my kids every day. I'm not talking to my husband. I'm trying not to be too distracted by my kids, really.
But when you picture them, because you do think visually, when you picture the home life, the perfect weekend, the perfect home moment, what do you see? What's the image in your mind's eye?
Just sort of me in the kitchen cooking or baking and the kids coming in and out doing their thing. We have a very unconventional life, much like how I was raised, because we let the kids have a fair amount of freedom in deciding how they want to spend their weekends.
But your life has these two extremes.
Yeah, it does.
And that's the way you want it, I presume.
I don't really have a choice. I mean, I think when I decided to have a family, that meant living between two very dramatic extremes. And it meant sort of being torn always between these two worlds.
Lindsay Adario, thank you.
Thank you. Thank you.
Hello and welcome. This is the Mission.
Ted Dox is special agent in charge at the FBI.
Karen Moscow.
Karen, we begin with the end of a manhunt in New England. Authorities say they have found the suspect in the mass shooting at Brown University and the murder of an MIT professor in his home. Ted Dox is special agent in charge at the FBI's Boston field office.
We got him. Shortly before 9 o'clock tonight, the FBI SWAT team executed court-authorized search warrants at a storage unit facility in Hampshire Road in Salem, New Hampshire. This is where we located Claudio Neves Valente, the individual who we believe was responsible for the Brown shooting.
FBI Special Agent in charge Ted Dox says Valente was found dead of a self-inflicted gunshot wound in that storage unit. Providence, Rhode Island Police Chief Oscar Perez says they tracked Valente down after identifying a vehicle rented near Brown in Massachusetts.
It was actually a video that provided us with a description of a vehicle. That was corroborated through a tip that was received to the tip center.
Providence Police Chief Oscar Perez says Valente studied physics at Brown in the early 2000s and went to the same university in Lisbon as the murdered MIT professor Nuno Loureiro. Authorities say it's unclear why he decided to attack the specific lecture hall where 2 students were killed and 9 others wounded last week.
Nathan, the suspect, Claudio Neves Valente, arrived in the U.S. in August 2000 on a student visa and obtained permanent residency through a visa lottery program in 2017. Now the Trump administration says it's pausing that lottery, known as the Diversity Immigrant Visa Program. In a post on X, Homeland Security Secretary Kristi Noem said, quote, "This heinous individual should never have been allowed in our country, and the pause will ensure no more Americans are harmed by this, quote, disaster program." The visa lottery grants up to 50,000 green cards a year.
Karen, President Trump has been rolling out a string of perks in the last couple of days as he faces growing political and economic uncertainty. This week, he announced holiday bonus checks for active service members, and now he's followed that up with a boost for the cannabis industry.
I will be signing an executive order to reschedule marijuana from a Schedule 1 to a Schedule 3 controlled substance with legitimate medical uses.
And President Trump's even gotten a perk of his own. His hand-picked board at the Kennedy Center voted to add his name to the venue, dubbing it the Trump Kennedy Center.
I was honored by it. The board is a very distinguished board, most distinguished people in the country.
With that honor for President Trump could face legal hurdles. The law that created the Kennedy Center would require an act of Congress to rename it.
Well, Nathan, President Trump has announced one other perk that applies to federal workers. He signed an executive order giving government employees a 5-day weekend for the holidays with days off this year on Christmas Eve and December 26th. The extra holidays will not apply on Wall Street, though. The New York Stock Exchange and the NASDAQ both say they will not alter their trading schedules on both of those days. All this as the president prepares to deliver more remarks on the economy at 9 p.m. tonight.
And ahead of a key deadline, Karen, with major political implications, the Justice Department has until today to release its files on Jeffrey Epstein. It's under the bill that the president signed last month, giving the agency 30 days to release most of its files and communications related to the convicted sex offender. Here's House Minority Leader Hakeem Jeffries.
Based on my conversations with some of the top Democrats who've been working on this matter related to full and complete disclosure of the Epstein files, we do expect compliance. But if the Department of Justice does not comply with what is federal law at this point, there will be strong bipartisan pushback.
It's House Minority Leader Hakeem Jeffries. Those records could contain a detailed look at government investigations into Epstein's sexual abuse of young women and underage girls, and whether any of his associates knew about or participated in it.
Let's turn now, Nathan, to a tragedy in North Carolina. Federal investigators will begin sifting through the wreckage of a business jet that crashed and killed all 7 people on board, including retired NASCAR driver Greg Biffle and his family.
Aircraft emergency. Aircraft is down. Unknown subjects. Runway 28.
Audio courtesy of Broadcastify. The cause of the crash is not immediately known, nor was the reason for the plane's return to the airport in drizzle and cloudy conditions. The 55-year-old Biffle won more than 50 races across NASCAR's 3 circuits.
Let's turn now, Karen, to the latest on the war in Ukraine. European Union leaders have agreed to a loan package for the next 2 years. Let's get more from Bloomberg Chief Europe correspondent Oliver Crook.
They're going to back a loan of 90 billion euros to the Ukrainians over the next 2 years, used by joint debt and backed by the European budget, saying that ultimately this is a loan that will only have to be paid back by the Ukrainians if the Russians pay reparations to Ukraine, which we know is a sort of distant prospect and probably an unlikely one. And if not, then it will still be backed by the Russian assets that are still being held by the Europeans.
Bloomberg's Ollie Crook adds the U.S. has largely cut off financial support to Ukraine. Without the loan, its funds will dry out by April.
Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. What a game in Seattle. The Rams and Seahawks playing for first place in the NFC. There were 3 late changes, and then the Rams built up a 16-point lead with just over 8 minutes to play. Seattle with 2 touchdowns and 2 two-point conversions to get the game to overtime where they trailed, but then scored a touchdown and added another 2-pointer. Seattle won 38-37. The college football playoff begins tonight with Alabama at Oklahoma. The Sooners beat the Crimson Tide a month ago. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm Nathan Hager, and this is
the description of fact. AI is going to be very big for politics.
Yeah, I think it's inescapable at this point. AI is sort of dominating the news cycle as well. I know it's a running joke on the podcast, but every time we record an AI-related episode, another headline hits the terminal about, some new billion-dollar,
and what's
billions.
the one that we just got?
Disney to make $1 billion equity investment in OpenAI.
Literally every time we do an episode, especially about AI, but even there's some headline about a new investment, which just goes to show. But, the fact that it's going to dominate politics is the least surprising thing ever because it touches on everything. Anything that's politically sensitive, the labor market, right? That's the obvious big one. Electricity costs, water consumption, wealth and inequality, and who has the power and who's accumulating more and more money in the tech industry and who's not, and all this thing. Like, there is hardly a political topic that in some way I feel like AI does not exacerbate in some way.
Absolutely. Meanwhile, the other big news politically when it comes to AI this week is that Trump issued an executive order for a national rule on AI.
Yeah.
Which a lot of people who are trying to safeguard the system and protect data privacy rights, that sort of thing, do not want.
Well, this is the other thing. So There's all this anxiety for various reasons. Pick your poison, whether it's going to displace the jobs, whether AI is going to be too woke and come up with versions of history that people don't like, whether it's going to, just rot our minds with slop, or, whether it's going to turn us all into paper clips. So you say, okay, we should regulate, but what does that even look like? Like, what is a sort of productive regulation look like, such that, okay, hopefully we could maintain positive aspects of the technological development while capping the downsides.
Right.
That would be nice. I would love that. But how exactly do you do that?
The argument that you hear from AI proponents is that any regulation needs to balance, safety with innovation, because there's also the question of China, which that's another hot button political topic, right? This idea that the U.S. is in an existential battle with China over AI, and we have to win at all costs. Therefore, the industry must not be tightly regulated.
Yeah, right. So it's also a geopolitical element. Anyway, so we mentioned AI is going to be big in politics. We really do have the perfect guest, because we're going to be speaking to someone that the AI industry is actually targeting, someone that the AI industry is actively trying to stop. There's this new super PAC, and I think it has some Andreessen money and maybe some executives from OpenAI, et cetera. Anyway, they want to make sure that sort of AI sympathetic politicians do well, but they're also targeting politicians that they perceive to be too negative, and they've even named names, I think is super interesting, and we have them. So we are going to be speaking with Alex Boris. He's a state assembly member here in New York. He's also a candidate in the primary for the 12th district, which is here in Manhattan, which I feel like 1,000 people are going to be running for this open seat. I feel like if you were targeted by the AI industry, that is probably some of the best advertising you could get in a very crowded field where it's just like there's going to be a million choices.
Well,
also,
I was going to say what you're going to say next, I think, but he used to work at Palantir as a data scientist, and Palantir is one of the companies backing that super PAC.
So you know what I think we should do? Can we talk about AI for like 5 minutes and then make this a 50-minute episode about what Palantir does for someone who used to work? That's my goal for this episode.
Why don't we just make it a series?
Let's make it a series. Anyway, Alex Boris, thank you so much for coming on Odd Lots.
Thank you for having me.
So what's the deal? Like, people are flying in from around the country just to run for this 12th district seat that's opened up?
Yeah, most recently, George Conway, who lives in Bethesda, Maryland, said that he was going to move to the district and run. You just have to live in the state. You don't have to live in the district to run. So last week, someone who lives in the Bronx also declared for this seat.
Is this the one, Jack Schlossberg? Is he running
Jack
for this
is also
one?
running, yes. I think there's 10 declared candidates now and more to come, I'm sure.
What a farce.
How did you actually transition from being a data scientist at Palantir to politics? It's not a natural progression for a lot of people.
Well, what brought me to Palantir in the first place was the ability to work with government and actually...
What year are we talking about, by the way?
So I joined Palantir in 2014. I left in 2019. And so many people think of government as just passing the bills, but that's not how most citizens interact with government. It's, can I get to the DMV and get my license renewed quickly? It's starting a business. It's the day-to-day interactions. And that implementation was an exciting thing to work on. So I was at Palantir for 4.5 years. I then went to a couple of startups afterwards, one that used early transformers, BERT and laser, to help banks with anti-money laundering, counter-terrorist financing, and then a startup that worked with municipalities to better distribute aid. So I had this through line of actually having government deliver on its promises throughout.
We're going to talk more about Palantir later. So I'm reading, this is from, there was a recent Politico Pro article. AI super PAC leading the future say they're spinning up a multi-million-dollar effort to sink Boris's nascent primary campaign to replace retiring Manhattan Representative Jerry Nadler. Okay, so what is it about your time in the state assembly such that you got on their radar?
Most prominently, I've done a number of bills while there. I've passed 27 bills in my 3 years, which coincidentally is the same number Congress as a whole passed in 2023. But there's one bill in particular that caught their eye, which is the RAISE Act. And this bill would, for the first time, put safety standards on advanced AI research. They really didn't like that bill. And so they announced me as public enemy number one. And the initial announcement said they're planning to spend multiple millions against me. Last week, they upped it to $10 million. I'm hoping if the campaign continues, I can use up all $100 million that they've planned, but we'll see where it goes.
what was in the RAISE Act? Like, what was the gist of this bill that they had?
Yeah, so it was requiring the major frontier labs. So we're talking Meta, Google, XAI, OpenAI, Anthropic. That's probably all it would apply to right now. I think over time, maybe Amazon gets in there and DeepSeek and maybe Mistral, but it's a single-digit number of companies. And they would have to have a public safety plan that they disclose and stuck to. Also disclose critical safety incidents, so things that go wrong that could lead to increased risk. Your model weights get stolen, you lose control of the model, et cetera. And that if your models fail your own tests, that you can't release that model. And that's designed to counteract what we saw with the tobacco companies, where they knew that cigarettes were causing cancer, but denied it publicly and continued to release the product. This is saying, hey, you companies, you're the experts. But if you're getting reports back that this is very dangerous, you need to take action on that.
It also proposes fines for violations, right? I think it's up to $10 million for the first, and then subsequent ones are $30 million. Does that actually matter to tech companies? Like, I know they
Probably
care.
not.
They care about money, but like, if Google is pulling in $100 billion per year, it can pay $3 billion fines.
Absolutely. In my opinion, those fines are too low. The original version had 10% of their training costs, and it would scale up with what they're investing. But generally in New York, we don't like an uncapped maximum fine. So that was part of the negotiations. I agree. I think there could be companies that just say, we're going to ignore this. I think the fact that they're spending nearly that amount lobbying against it suggests that they do think it has some teeth.
Talk to us a little bit more about what specifically would what would trigger the fines? Because I could see some very perverse things going on. First of all, I could see smaller companies that are right at the edge where it's like, okay, maybe this isn't a big deal for Google, but this is a bigger deal for a smaller company that's just starting out. We don't want to lock in just the handful of biggest players, right? Because regulation can serve that. It can perversely lock in the incumbents because they're the only ones who can deal with the regulatory thicket. There are also issues that could arise where, well, if I'm going to get fined really badly, I'm going to look the other way. I'm not going to notice what these safety violations are. But talk to us about what are, in your view, the formal triggers such that the bill does not have these sort of perverse incentives.
Yeah, I feel like this is the forum where I can really get into the details on it. So let's dive in. There's a two-part test for the RAISE Act to apply. The first is that you're a company that has spent $100 million specifically on compute, specifically on the final training run of models. So not the tests that lead up to it, but actually the final pre-training and post-training before you put the model out. That's one part. So it doesn't apply if you're an academic institution. It doesn't apply if you spent less than $100 million. The second part is, how do you define a frontier model? And the easy way is you have trained a model that by itself was $100 million in compute and had 10 to the 26 flops, computational operations in training, right? It's a measure of the complexity and the size of the model. That's a standard one that people have dealt with for a while. And so that's when I listed the 5 companies that I think it applies to. Those are the companies I think have trained one of those 100 million 10 to the 26. But there's a second way that you can be a frontier model, and that is you are trained via the specific process of knowledge distillation, and at least 5 million is spent on that. So knowledge distillation is a technique of training a small model based on the outputs of a larger model. And it's a way to kind of shortcut a lot of the training and get a smaller model that has similar capabilities. Importantly, it's the technique that China has been using to catch up to the US because of our limits on compute to China, because of the export controls. That's how they're making their advanced models. And so this is the only bill that I know of that would apply some regulatory scrutiny to, for example, DeepSeek.
How do you actually solve, I guess, the black box problem? This idea that, you have these models, algorithms, whatever, and no one really has very good insight into what they're actually doing. And even if you have rules against something like redlining, the models can use proxy data to determine, someone's race or someone's gender, income, whatever. How do you do that?
Well, on those kinds of questions around discrimination, you're right. It's very challenging to know what the intent of a model is. And, everyone, there's a whole subset of people that are really against when you anthropomorphize any model. But I'm just going to keep saying intent and desire, and we can have that conversation separately. So it's tough to know a model's intent, but you can know its impact. So to be clear, the RAISE Act doesn't deal at all with those questions of discrimination. There's other bills pending in the legislature that do, and I think it's an important one. But in that and in the safety aspects, you can do a variety of tests to see how does it behave in certain circumstances. And you've seen outside researchers, you've seen companies themselves set up their models in what appear to be compromising situations and see how it behaves. So there was one test that was done where a model was told it was going to be shut down, but was given access to what it thought was a company's email server.
Oh, I remember this. Yeah.
And they had planted fake emails that the engineer conducting the test was having an affair. And so the model, after being told it was shut down, sent a message to the engineer saying, I am going to send these emails to your wife if you shut me down. So I don't know the intent of the model. I don't know exactly what's going on, but I know that that is behavior you probably want to work out of the model before it's released.
It's pretty creative at the very least.
Yeah, to some extent it shows they're working. You know, you mentioned DeepSeek. It's an open source piece of software. They're in China. The people at DeepSeek are not going to concern themselves with some legislation in the New York State Assembly. Anyone with an internet connection can theoretically download that model and run it on any server. Intuitively, this feels like it hobbles the American companies who have to abide by American laws, et cetera, and advantages open source models that are just like, maybe not even have a company behind them in the future, et cetera. Why does this not have a negative, disparate impact on our own companies?
Well, DeepSeek open sourced the model, but they are still a company that wants to profit, and they sell things on top of it. So DeepSeek's available in the App Store. If they don't pay fines in the US, we can have an injunction to take them out of the App Store. And they want businesses to use it. So there is still a real reason for them to comply with the US. But on the flip side of it, how it could hobble these companies, we're not asking them to do much more than they've already committed to publicly. They made White House voluntary commitments in 2023 and 2024. They've had international summits like the Seoul Summit where they put forward basically plans to do exactly this. What the RAISE Act does is lock in place a floor so that when they're rushing for the next quarterly reporting or their next fundraising round, they don't have an incentive to cut out on safety. And I would say that the labs themselves, the lobbyists for the labs, did an estimate for what it would take to comply with the RAISE Act. And they have every incentive to expand that estimate, say this will hobble us, we're going to leave. And the estimate they came back with was that it would require Google or Meta to have one extra full-time employee.
Oh, wow. How would the RAISE Act actually interact with this new executive order that Trump just put out for a single national rule for AI?
So Trump is threatening to withhold funding from states and to sue states that do any sort of regulation around AI. New York already does a bunch of it. So regardless of whether the governor signs the RAISE Act or not, we would probably be in Trump's crosshairs. For example, the governor this year put forward regulations around chatbots, requiring them to disclose that they are an AI model at the start and every 3 hours of continuous conversation. And
that seems so basic.
So basic. And requires them to be on the lookout and to alert for when there's language that might indicate potential self-harm and to refer people to resources, which also seems really basic. But that would violate this executive order. And so we're sort of in for a penny, in for a pound at this point, and I think we need to stand up for New York families.
Joe, I get notifications if I watch too many episodes of a show on Netflix, right? You can imagine people constantly talking to chatbots needing reminders too.
I feel like I've never had a 3-hour conversation with a chat. If I ever have a 3-hour conversation with a chatbot, Tracy, let me.
I'm going to keep an eye on you in the office.
You know, talk to us a little bit more about the politics of AI within Albany right now. Is this the kind of thing? Is there a bipartisan sort of anxiety? Talk to us about the vibe.
Yeah, I think it's similar to what you see nationally, which is there are some, especially on the right, that just think the only thing that matters is how fast AI moves and not who it hurts. There are some, especially on the left, that don't want this technology put back in the box, right?
Yeah.
And then there's most people in the middle that say, hey, we need to balance the benefits of it and the potential safety of it. And the RAISE Act is squarely within that realm. It passed with co-sponsors who are both Democrats and Republicans. The majority of Republicans voted for it in the Assembly, and every single Republican state senator voted for it. So, Tracy, at the start, you were mentioning that proponents are the ones who are balancing safety and innovation. By that measure, everyone voting for it is a proponent.
Why do you think Trump is doing this?
I love, why do you think Trump questions? No.
Honestly, it's a basic question, but I'm very curious to hear your answer.
I for so many reasons, wish I understood that man better, but also feel like it would not be good for my mental health if I did. It is tough to understand because it's so different from his policy everywhere else.
Right.
Right? He is putting forward tariffs and having this nationalistic, protective, sort of anti-trade agenda on food and on diapers and on toys. But then when it comes to AI...
Pencils now.
Pencils?
Mm-hmm.
Oh, well.
He says we don't need so many pencils.
My wife and I just had our first kid who's 4 months. So you see where my head's at with diapers and toys as we come into the holiday. Pencils are still a few years off. And then when it comes to AI, he just wants to push America's agenda everywhere and say no regulation whatsoever. So it's confusing. What I can say is that a number of the people behind the super PAC targeting me are the same people that were funding his campaign. You had Mark Andreessen put $5.5 million into his campaign. You had Joe Lonsdale put $1 million into his campaign. You had Greg Brockman, the president of OpenAI, put at least $2.5 million into tearing down the White House to build the ballroom. And so you have a lot of people around Trump at fundraising.
Welcome. This is the Michelle Hussein Show. I'm Michelle Hussein.
Conversation and even expanding that out to AI's effect on our kids broadly in our education system. You can imagine a really positive world where every student has an individualized tutor at exactly their level and teaches them in the exact way that they want to learn to supplement what they're getting from teachers. But what we have right now is we haven't updated our pedagogy, and so a lot of people think assigning an essay still teaches critical thinking.
Yeah.
Right? We need to do a lot on the education system. We need to do a lot on the workforce, as you mentioned. We need to do a lot on the environment, and we're missing a golden opportunity here because our grid is extremely old, and we need to pay for the upgrades, and government doesn't really know how to do that. We've been passing off the cost to ratepayers. Now you have an unlimited set of private capital, it seems, that wants to invest to build data centers. Why aren't we using that to actually upgrade our grid and to require renewable energy and have it there? Instead, we're building these data centers, but saying ratepayers have to pay for the interconnects. It makes no sense.
Does this issue, just AI in general, does it actually resonate with voters at the moment? Because in some sense, you're trying to get ahead of things, right? Because in the future, I know we said AI is all over the news and we see it everywhere, but in the future, it's going to be more embedded in our lives. So you're trying to get ahead of that. Do people care at the moment?
It's already embedded in their lives. They're seeing it. And it's not just, their kids in school. It's not just the entry-level unemployment at 9%. We just saw a teddy bear that was sent out with ChatGPT embedded in it that taught a kid how to find matches.
It's Teddy Ruxpin upgraded. Do you remember that?
I was walking down St. Mark Street the other day.
Mm.
I have to say, unfortunately, I thought those were pretty clever. Someone set up a thing where there was like a animatronic puppet that had a camera in it, and that it was embedded with an LLM. It was doing insult comics of the people who were walking by.
Oh my God.
So someone would walk by and they'd be like, so you think you bought it, with a big Uniqlo bag? It's like, so you think you bought enough at Uniqlo today? But I was like, oh,
what did
that's
it say
clever.
to you?
It was super clever. My kids loved it. It was I was like, oh, this is like a really clever thing.
Wait, what did it say to you, Joe?
What did it say? I think I stayed out. I knew. I watched the other people go by. I stood on this side. I was like, oh, this is actually. I was like, oh, my kids loved it. They thought.
Well, we'll leave that as an exercise to the listener to walk by and
what
report
it would
back.
have said.
Yeah.
What it would have said.
What does it say to you?
Are you optimistic about AI? Are you pro AI in the sense that you think that this will be important, productive, positive technology that is important to continue developing?
It can be, but only if the American people have a voice in how it develops. It is the technology that has the widest bounds of what could potentially come from it. And the only thing that comes close is nuclear energy and nuclear fission, right? So if you put yourself in the mindset of someone in the 1930s, you had one set of people saying, nuclear fusion is coming. We're about to have clean, unlimited energy and live in utopia. And you had another set of people that said, we're all going to be dead from nuclear bombs in 10 years, right? And the reality is we've ended up somewhere in the middle. AI, we're at that moment right now where you have people saying basically that wide of a potential outcome. And it's up to us in our policy to make sure that the worst case doesn't happen so that we can have as much of the best case as possible. Like what AI could do for medical research, for curing diseases is remarkable. My mom has multiple sclerosis. Autoimmune diseases are some of the hardest for modern medicine to deal with. I am incredibly optimistic of what could come from some of this research. It's just that the same capabilities that will allow us to cure diseases could, in the wrong hands, allow someone to build a bioweapon. And we just need to be thoughtful on how we go.
I guess I'm worried about bioweapons. I'm also worried about very mundane things. Just like the new Gemini image generator is just stunning to me in terms of the degree of fidelity, like how easily you really can't tell anymore. Like a year ago, you could say, oh, that looks like an AI image. We're basically past that. Other things like bots and stuff like that, things that replicate our voice. These aren't like ultra science fiction things like a machine that's going to like manufacture a bioweapon or something like that, but they're day-to-day pervasive phenomenon that's sort of like, they're going to make me trust people less. They're going to make it harder to communicate. Like this sort of, what do we do about that?
Can we nerd out about deepfakes? Because this is a solvable problem and one that I think most people are missing the boat on. So it's always been presented to us as like, oh, you'll have to learn how to see what's wrong with an AI image. Like that's never going to work. They're going to get better and better. Maybe we're already past the point where a human could see it. But that's not how we've solved these problems in the past. If you go back to the 90s, people said we'll never have internet banking because you don't know that the computer on the other end is actually the one that you're talking to. And then we moved from HTTP to HTTPS. That was a solvable problem. That basically same technique works for images, video, and for audio. So there is a free open source metadata standard that industry has created called C2PA, Content Credential Provenance Authority, that you can attach to any standard file format that cryptographically proves whether that content was taken from a real device, generated by AI, and or how it was edited over time. The challenge is the creator has to attach it. And so you need to get to a place where that is the default option.
So if you see an image and it doesn't have that cryptographic proof, you should be skeptical. Like that would
we should get to that place.
That would be the idea where it's so pervasive that the expectation is I can test very quickly whether the creator has attached this.
It'd be like going to your banking website and only loading HTTP, right? You would instantly be suspect.
But you can still produce the images. And I guess I've been reading a book called The New Age of Sexism, and it's about technology and discrimination against women. And it has some awful, awful stories of schoolgirls whose classmates, like, you know, put them in porn videos and things like that. And one of the problems is there's no rule saying that you can't actually do that. So even if you know that it's fake, it can still be harmful. What do you do about that?
Well, there are laws in New York State that ban it, and in other states have taken action. And that's yet another reason why this AI preemption is such a scary thought, because states are leading the way right now in stopping some of these absolute worst uses. I'm very excited for Congress to actually solve these problems, for there to actually be federal standards. I'm running on the platform of creating these federal standards. But until they do, stopping states from taking action like against deepfake porn of children. I mean, that's the stakes of what we're talking about.
Can we talk about Palantir for a second?
Definitely. So it's a rough segue, but yeah.
What'd you do there?
So I joined Palantir as a data scientist in 2014, and I left as one of the 5 overall leads of the government business. I spent the vast majority of my time in the federal civilian side of it. So I worked with the Census Bureau and the Bureau of Economic Analysis on updating how they calculate GDP. We actually made a change to the way they account for spending around moving holidays that are sometimes in Q1, sometimes in Q2, like Easter. A paper I'm very, very proud of, and it's a rounding error of a rounding error on how we calculate GDP, but it did actually lead to a change. I led our work with the Department of Justice to go after the opioid epidemic and to solve some violent crimes. I worked with Veterans Affairs to better staff their hospitals to make sure that veterans get the care that they deserve and need. I worked with the CDC to better track epidemics. It was about allowing government to make better use of the data that they already had to serve the American people.
And what does Palantir actually do? I feel like we ask this question a lot, but...
Well, I think it's because it's a fundamentally unsexy thing and people like to dress it up, but it's data integration and analysis. It's making it different data sources that you have access to talk to each other, be updated constantly. Like Palantir was founded around a time when data lakes and data clouds were like the big thing.
What's a data lake again?
Yeah, exactly. But it's just putting.
Actually, I'm asking, what is a data lake? I've seen this term,
right.
I don't know what that means.
Putting all of your data in one place.
Okay.
People can access it, right? And that was supposed to revolutionize everyone's ability to do anything. But just putting data in one place doesn't actually make a change. Some of the things that Palantir has really put at the forefront, like an ontology, right? A view from on high of what each piece of data is supposed to mean can actually lead to better analysis. So I'll give you an example from my work at the Department of Justice. And I have 2 software patents for this project, which was we were helping them analyze banks' behavior leading up to the Great Recession and how they were packaging mortgages into securities, and each security would have a loan tape. Here's the 1,000 loans that are in it. And some of those loans would not be up to the standards that were required. And that would occasionally be flagged before an issuance. Hey, this loan isn't up to your standards. They would pull the loan out, and then their next issuance put the loan back in, right? And so if you could find that pattern of behavior, you could maybe prove that they had knowledge that that loan wasn't good and were still putting it out there. The problem is that e-discovery software, right? All of the data was there, but it was just taught to think of an Excel document as a document that a lawyer would read. And so there was no way in the software to track those individual loans. But if you think of an individual loan as its own object, that should be something that can be searched and tracked across the database, then that analysis becomes very easy to do. So that was something that we enabled at Palantir, was putting this ontology of what's the right level for each object. Oh, a loan is a meaningful instance. Let's make it so you can search and analyze an individual loan versus a document.
How has your experience at Palantir actually informed your approach to government? Because we've done episodes on why government software is so bad. And I think you're one of the few politicians out there who actually knows how to code, possibly the only one.
No, there's got to be a couple others.
You think?
2 or 3.
Okay.
I don't know.
We'll find them.
Yeah.
I am the first Democrat elected in New York State at any level with a degree in computer science. I do think there have been nationwide like 4 or 5 Congress members that have that. So they're out there. But my time at Palantir informs what I do in government, I think, in 2 main ways. The first is the work isn't done when the bill is signed, right? It's about the actual implementation. Everything Palantir does is about implementing things that have already been passed, and there's huge challenges in getting it to work. But the second thing is that basis in data and actually tracking your results and seeing how you've done over time. So few politicians will say, hey, that bill I passed 2 years ago, here's how it's working. And even more rare is here's how it's not. I did my town hall 3 weeks ago. I once a year get up in front of my entire constituency, spend 2 hours answering any questions people have. We don't screen it at all. But I led off actually with, hey, here's a bill I passed a year ago, and the data shows it's not working. And here's what I've learned about that and how we're going to change that.
How exactly do you judge performance by the government? Because I like the idea of like tracking, I guess, alpha in the civil service in some way. But would it just be based on the bill execution or, I guess, response rates from the public? How would you do that?
So I'll give you an example. We passed a bill to raise the statutory maximum fine on telemarketers. By far my most popular bill. But the question is, that's the statutory maximum. Does that actually lead to more fines, to higher fines, to more negotiated settlements? Right. Is raising that pressure. And so we just looked at the Secretary of State's data of how much were the fines before that bill was passed and afterwards, and we found there were 4 times as many fines actually there. So raising the statutory max brought the bad companies to the table to actually negotiate, and hopefully is changing that behavior. The example I gave of one that didn't work was around mopeds and e-bikes in New York. So I'm going to be very local to New York. I know there's a nationwide
primary, but it'd be nice if there were some talk of actual relevant things to the 12th district.
So we have these delivery vehicles that are whizzing all over, and people are scared as they see them go the wrong way, et cetera. And there's a lot of discussion about what we can do to make people safe on the streets. One aspect is that mopeds were already required to be registered in New York State, but almost never were. So I passed a bill that would require mopeds to be registered at the point of sale, right? So think about how many mopeds you think exist in New York City. The number that were actually registered when the bill came into effect this January was about 1,700.
Wow.
I feel like, by the way, this would be like one of those like hedge fund interview questions. How many mopeds are in New York City? I want to see how your brain thinks.
And I think if your answer is 1,700, the hedge fund's not hiring you, right? Like that is not what you would estimate. Right. My thesis was that people were walking out of the store without registering and being told to do that. We looked a month ago, the number that are registered is now 1,400. So it's not that people weren't registering when they came to the store. It's that registration expires after a year and no one's re-registering. So that was an example of like, I had a thesis, I passed the bill. I think the bill's still overall good. People should register as they leave the store, but it didn't actually solve the problem we were out to solve. And here's now what I'm going to do about it. And I think we need a lot more of that in government.
Wait, what are you going to do about it?
Well, we're thinking about how we can encourage the actual the re-registration over time. So one of the aspects is requiring all of the delivery apps to actually check that the drivers are registered when they sign up and to make sure they keep that up to date.
Makes sense to me. You know, it feels like we're like in this sort of era of every day, you mentioned telemarketers, like we're just like wading through the muck of like low-level scams everywhere. Every day I get text messages and they'll say like from an unknown number, I'll be like, Joe, are you coming to barbecue? And I'm like, I don't know. I might have agreed to eat barbecue with someone. That sounds like something I could have done, but I'm like pretty sure it's fake. You go on like Amazon and there's AI generated books about books and every author. Just generally, it feels like we're in a culture and economy and era of like persistent low-level grift across almost every dimension of our lives. And I'm sure there's many reasons for it, but when people talk about a low-trust society and what's happening, how much of this do you think is just because like we're inundated with people trying to rob us every day in some way, digitally or otherwise?
I think that's a big part of it. And the only way to solve that problem is you need actual enforcement. You need there to be consequences.
To follow up on this. Like, I guess the reason I'm asking is because, it's like someone running for office, they move to the 12th district and they're like, I'm going to call out Trump's corruption. And there are all these like, Trump is a lot, all this like big stuff. And, whatever, many of these issues are like, legitimate, et cetera. But almost nobody in elected office seems to be just like talking about like, who's going to do something about the text message scams? Who's going to do something about the AI books? All of these like big national issues, but that doesn't affect me on a day-to-day basis the way the sort of like persistent abuse of technology constantly does every minute of my life.
I think that's why podcasts like this are great because you get into the details. No, but the top level news doesn't cover a lot of that, right? I have a colleague, John Rivera, who has a bill in the state assembly on requiring disclosure for AI generated books on Amazon. Like that specific example is a bill that exists in New York. The telemarketing bill I passed also applies to text messages. And so we tell people how to report those and maybe get fines coming from that. I think this is key to both parties in 2026 is talking about just government's effect and trying to make life a little bit better. I think my other most popular bill besides the telemarketing one was my click to cancel bill this year to allow New Yorkers.
I would love that.
It's now you're right. As of October 1st, New Yorkers need to be able to cancel a subscription the same way they signed up for it.
I have a Condé Nast subscription that I've been trying to cancel for like a year and I cannot log into the site. I can't find the original email where I like actually signed up for it. And that's, I think, $12 a month that I'm just wasting.
I mean, government needs to get big things done, absolutely, but we also need to get small things right.
Masser. And I'm Tim Stenevec, inviting you to join us for the Bloomberg Business Week Daily Podcast.
Now, every day we are bringing you reporting from the magazine that helps global leaders stay ahead.
We've got insight on the people, the companies, and trends that are shaping today's complex economy.
That's right, Tim. We're all over global business, finance, tech news, all as it is happening in real time. And we've got complete coverage of the U.S. market close. Gotta say, basically, if it impacts financial markets, if it impacts companies, if it's impacting trends and narratives that are out there, we are on it.
We also have a lot of fun
We
doing
do.
it. Bloomberg Business Week also brings you the analysis behind the headlines through conversations with our expert guests.
And we are doing this all live each weekday. And then we bring you the best analysis in our daily podcast.
Search for Bloomberg Business Week on YouTube, Apple, Spotify, or anywhere else you listen.
Check it out on your way home from work to catch up on the conversations that you missed during the business day.
And on the weekend, check it out for a complete wrap-up of your business week.
That's the Bloomberg Business Week Daily Podcast. I'm Carol Masser.
And I'm Tim Stenevec. Subscribe today wherever you get your podcasts.
Apropos of nothing, this is a completely random seg, but one of the interesting things about Eric Adams was his interest in digital assets and cryptocurrency and tokenization and all of that. What did you think about those efforts? Do they actually matter to the industry and to New York more widely, or is it just sort of a pet project?
I have not seen the direct results of what he was working on. That doesn't mean they weren't there. It's just not where I have been focused. I actually worked on a different bill this year around crypto in the legislature, where New York really took the lead in creating legal structures for many of these companies through the limited purpose trust and the BIT license. But now with new action at the federal level, they have said, there's going to be federal licensing for these trust companies for stable coins, and they will defer to states, but only if the states have detailed rules in legislation or regulation, in statute or regulation. And New York's done it almost all by guidance. And so I really fought for a bill this year to standardize what DFS had done in random opinions, put it into statute so that people know what the rules of the road are, and so that New York can keep its regulatory structure. It passed the Senate. Unfortunately, we didn't get it done in the Assembly. And now most of the companies in New York are just applying for the federal charter. And we as New Yorkers are going to lose our ability to engage. So I think regardless of your broad view on crypto, finding ways to set rules of the road that allow for innovation and allow for us to have a say in how it develops is something everyone should get behind.
I'm looking at a map of the New York 12th Congressional District. I think one thing that really stands out, it's not some weird snaky district. It's just a real big square in the middle of Manhattan. Like, people who don't live here might not appreciate this. This is prime real estate you're running for. This might be the highest GDP district in the world, or in the country, or pretty close to it, right?
Pretty close to it, if not the one, yes.
Yeah.
There's more Fortune 500 companies headquartered there than I think at least 37 states.
You're a few blocks away from me, by the way. I'm in the East Village. It looks like it just cuts off a few blocks.
We'll fix it in redistricting.
Yeah. It must be weird, thinking about going back to the beginning with the tech industry and criticizing you. And it must be sort of weird that, you're a politician who could actually, talk in, gigaflops and stuff like that, because there's a lot of anti-AI people, et cetera, whatever, or open standards for digital encryption. It must be kind of interesting that, okay, here is someone who wants to hold the industry to some legislative standards, who is frankly
knowledgeable,
informed. Yeah, knowledgeable. Yeah, that must be sort of weird for them.
I think it is, and I think it's why all of their spending against me so far is backfiring, because people are like, oh yeah, who is this guy who doesn't understand tech, who's doing uninformed things? And then it's like, wait, it's the guy with software patents who worked at Palantir, who has a master's in computer science. There is a disconnect there. I think, I have support from a lot of the people that are my age that work in the tech industry, the ones actually building it, because they see the power of what they're building and think there should be some protections for it. It's really those at the top who are, I think, primarily focused on profits that don't want government getting involved at all.
I have a theoretical question going back to the idea of hedge funds asking random questions to see how you think. If you had, a Bloomberg terminal equivalent of government data, what would you be most excited about looking up? Or what correlation would you be most excited about finding?
That is a great question. I'm going to stall at first by pointing out that I actually do have a certification in the Bloomberg terminal from my first job.
Oh,
so
well done.
I'm imagining this realistically.
So you know that all we do on the terminal is just look at two lines that correlate. I've proved correlation here.
I think ways of running more, not maybe running more natural experiments, but looking at over time how investments the government pays off. So we only budget year by year. And so you have things like investing in early childcare that boosts your immediate who can be employed, but also like will help the kids if you have universal pre-K, et cetera. But that payback in the government, if you're just thinking fiscally, is not going to come for 20, 30 years. And as we budget year to year, we think of that as a cost. I think if we had more ways of tying the effects previously in budgets with what we're seeing now, it would change radically where we would invest.
Have you played around with the AI code generation apps much?
Yeah. So when I came into office, one of the things I really wanted was a coder on staff. I was like, there's so many creative things we could do of doing prototypes of government software or playing with the data, but we don't pay legislative staff nearly enough. It's one of the positions I've been most radicalized in office. But I had this idea of all these projects I wanted to get done. And finally this year, Hunter College gave me an intern that was a CS major. And so I gave her this list of like 10 projects, and she got through 3 of them, and they were great. But then I looked at the other 7, and I was like, these are things that I know how to do, but it's not like worth my time at the moment versus all the things I have to do. But has AI coding sped up how quickly I can do these that it becomes worth it? And I mostly use ChatGPT, which, I know Claude and Gemini I've played with, but I was able to knock out 3 of those projects this year because of how more advanced the coding has become. So
it's pretty cool.
Yeah.
Alex Boris, thank you so much for coming on Outlaws. That was a lot of fun.
Thanks for having me.
It must be kind of weird, I said it near the end, but an AI critic that knows something about tech, because there are a lot of AI critics out there, and I don't get the impression a lot of them are particularly actually well-informed and do not actually understand the sort of strongest version of the argument that they're running against. So it's interesting that this PAC, this pro-artificial intelligence PAC, has decided to target someone who I think a lot of people listen to. It's like, oh, actually, he knows what he's talking about. He sounds pretty reasonable.
He's also the first one they're targeting, right?
Yeah.
So it'll be interesting to see who they go after.
Yeah.
After him. The other thing I was thinking is, if you think about one of the threats to big tech's business models, it's always regulation, right? Or at least they say it's regulation.
Sure.
They seem to hate regulation. Or over-regulation, I should say. So if you think about proposing some basic safety guardrails and privacy, that would seem like a good thing to me, in the sense that maybe you could restore some of the trust or faith between the general population and the big tech companies, and then you wouldn't get these massive fights about everything else. But that's probably a long shot.
It does seem like, I have to say, that while a lot of what he said made a lot of sense, or sort of sounded very reasonable, I do think that it's legitimate concern, like, these issues aren't going to hobble DeepSeek. Now, does DeepSeek want to be in the App Store, and can U.S. laws enjoin them from being in the App Store? Sure, but they're not going to hobble DeepSeek's development of a model. And if they want to be a dominant player in every country but the U.S., and they're completely unconstrained, and the American advanced labs are constrained, I do think that is a legitimate concern that the industry might have. I also think it's probably a legitimate concern that you don't want to disincentivize the reporting of safety issues. That if a company gets penalized for acknowledging that something in their model like violated some safety line, you do not want to have the risk of like, oh, we're just going to ignore this. And I think it's reasonable that the industry might be concerned that regulations could benefit the incumbents. He argued against that. He's like, oh, no, like, this is not going to affect like startups, et cetera. But there is always that risk that a monetary fine is something that's very easy for big companies to pay, and more marginal ones are more difficult. So, these are very tricky things. But as on the surface, more than on the surface, an extremely knowledgeable guy who, what he says, none of it sounds particularly ridiculous. And I have to say, if I were running in a primary that had like 25 people, including like a Kennedy heir and some guy on Twitter who like posts Orange Man bad a lot of times, that sounds like a good way to stand out from the crowd to be the AI industry's #1 target.
I agree with you on the incumbent point, but just in terms of US versus China, I think people forget that China has its own restrictions, quite severe ones on censorship, right? And trawling, I guess, every single communication in the world in case someone mentions a certain cartoon character seems like that's a big regulatory
That's also
burden
a barrier,
as well. So I don't know. I find the competition aspect of it overhyped in some sense. But anyway, we could talk about this for ages. And a lot of these issues are clearly like ongoing and no one has the solution yet. We're trying to work that out. All right. Shall we leave it there?
Let's leave it there.
This has been another episode of the Odd Lots podcast. I'm Tracy Alloway. You can follow me at Tracy Alloway.
And I'm Joe Weisenthal. You can follow me at The Stalwart. Follow our guest, Alex Boris. He's at Alex Boris. Follow our producers, Carmen Rodriguez at Carmen Armand, Dashiell Bennett at Dashbot, and Cale Brooks at Cale Brooks. And for more Odd Lots content, you can find all of our episodes in a daily newsletter at Bloomberg.com/oddlots. And you can chat with fellow listeners in our Discord 24/7, discord.gg/oddlots.
And if you enjoy Odd Lots, if you like it when we do these AI episodes, then please leave a positive review on your favorite podcast platform. And remember, if you are a Bloomberg subscriber, you can listen to all of our episodes absolutely ad-free. All you need to do is find the Bloomberg channel on Apple Podcasts and follow the instructions there. Thanks for listening.
I'm Barry Ritholtz, inviting you to join me for the Masters in Business podcast. Every week, we bring you fascinating conversations with the people who shape markets, investing, and business. CEOs, fund managers, billionaires, Nobel laureates, traders, analysts, economists, everybody that affects what's going on in the market. Whether you own stocks, bonds, real estate, commodities, crypto, you really need to hear these conversations. Sometimes it's behaviorists like Dick Thaler or Bob Schiller. Sometimes it's fund managers like Peter Lynch, Bill Miller, Ray Dalio. Sometimes it's authors, Michael Lewis, author of The Big Short and Moneyball. Regardless of the conversation, these are the folks that move markets each week. That's the Masters in Business podcast with me, Barry Ritholtz. Listen on Apple, Spotify, or wherever you get your podcasts.
गाइस 6:30 हो गया. न्यूयॉर्क सेशन इज ओपन नाउ. लास्ट ट्रेडिंग सेशन. ज़्यादा रिस्क मत लेना. देखो यहाँ पर एक नेचुरल गैस में कंजक्शन जोन बनने की कोशिश है. 6:30 की कैंडल है. यहाँ पर काफ़ी देर से रुक रहा है. एक बाइंग थोड़ा बहुत एक्सपेक्ट लग रही थी, बट वापस से वो कैंडल ओपन इक्वल टू हाई बन रही है. अवॉइड ही करना, छोड़ दो, क्योंकि फंस जाएंगे. बाई करते हैं तो फिर ऊपर सेम ही रेजिस्टेंस है, वो सेम रेजिस्टेंस फिर से सेल ऑफ दे देगा, तो फिर कोई टारगेट नहीं मिलेगा. थोड़ा रेंज ब्रेक कर दे ये भी नीचे तक, बेस्ट के सिनेरियो वही रहेगा. कैंडल ओपन इक्वल टू हाई है. 6:30 कैंडल. न्यूयॉर्क सेशन इज ओपन. डेटा 8:30 पर रहेगा. 8 PM पे यूएस मार्केट ओपन होगा उसके बाद. बाई क्रूड भी रेंज के अंदर ही है मॉर्निंग से. मॉर्निंग पे रेंज पे था, कल भी रेंज में ही था, आज भी रेंज में ही है अभी भी. क्रूड में भी देखोगे ओपन इक्वल टू लो कैंडल है. एक छोटा सा ट्रेड बनाया है छोटे से एसएल के साथ. ज़्यादा रिस्क मत लेना इस ट्रेड में. कैंडल का ध्यान रखना. ओपन इक्वल टू लो कैंडल कंटिन्यूसली बन रही है. करंट कैंडल इज ओपन इक्वल टू लो. इसकी प्रीवियस कैंडल जिसने रेजिस्टेंस को हिट किया था, दैट इज आल्सो ओपन इक्वल टू लो. सॉरी.
Hello and welcome. This is the Michelle.
Interesting questions.
Federal agents breached a storage locker in Salem, New Hampshire, in search of Claudio Neves Valente, a Portuguese national we believed shot and killed two Brown University students and an MIT professor in Brookline, Massachusetts.
U.S. Attorney Leah Foley says Valente studied physics at Brown in the early 2000s and went to the same university as the murdered MIT professor. She says investigators identified a vehicle that Valente rented in Massachusetts and tracked financial records that led to the New Hampshire storage facility. Authorities say a person who was spotted on surveillance photos near the suspect was key to steering the investigation. Valente was a legal permanent resident in the U.S. after obtaining a green card through a visa lottery in 2017. Now the Trump administration is suspending that lottery, known as the Diversity Immigrant Visa Program. Homeland Security Secretary Kristi Noem posted on X that the move will ensure no more Americans are harmed by this, quote, disastrous program. President Trump has been announcing a flurry of perks this week as he faces declining poll numbers and economic uncertainty. One of the latest is an executive order to reclassify cannabis as a Schedule III controlled substance for medical purposes.
Hopefully this reclassification, which, by the way, polls at 82%, will help many of those patients live a far better life.
And the reclassification comes after President Trump announced $1,776 bonus checks for the military this week. The president's gotten his own perk as well from his hand-picked board at the Kennedy Center. They voted to add his name to the venue.
I was surprised by it. I was honored by it.
President Trump named himself chairman of the Kennedy Center board after he purged it with his allies at the start of his term. Officially renaming the memorial to John F. Kennedy would take an act of Congress. President Trump has signed an executive order giving government employees a 5-day weekend for the holidays, with days off this year on Christmas Eve and December 26th. The New York Stock Exchange and the NASDAQ both say they will not alter their trading schedules on both of those days. The Justice Department has until today to release its files on Jeffrey Epstein. That's under the bill the president signed last month, giving the agency 30 days to release most of its files and communications related to the convicted sex offender. The Trump administration appealed a judge's ruling that it illegally froze more than $2 billion in research funding to punish Harvard University for refusing to comply with a host of demands from the federal government. U.S. lawyers filed a notice of appeal yesterday that was more than 3 months after U.S. District Judge Allison Burroughs ruled that the Trump administration had violated Harvard's free speech and due process rights. Vladimir Putin said he's willing to discuss bringing Russia's war in Ukraine to an end, even as he ruled out changes sought by Kyiv and Europe to a U.S. peace plan drawn up in Moscow. The Russian president today has emphasized that Moscow's troops are advancing across the battlefield in Ukraine and has voiced confidence that the Kremlin will achieve its goals militarily if Kyiv does not agree to Russia's conditions in peace talks. In Europe, leaders have agreed to provide a massive interest-free loan to Ukraine to meet its military and economic needs for the next 2 years. And we get the details with Bloomberg chief European correspondent Oliver Crook.
What this does is it satisfies many of the goals that they were trying to go into the meeting. The first is to actually deliver that funding and financing to the Ukrainians, getting that. We know that sort of it becomes mission critical in the first quarter of the year. That's when Ukraine runs out of money. It circumvents the very difficult conversations about seizing the assets today that the Belgians had thrown up. And also within that, within the backing of this sort of loan, it sort of has carves out for the Czech Republic, Hungary, and Slovakia. So they did actually get unanimity on this issue.
And that's Bloomberg's Oliver Crook, who says the European Union will provide $106 billion in aid to Ukraine. Federal investigators will begin sifting through the wreckage of a business jet that crashed in North Carolina and killed all 7 people on board. Among the victims, retired NASCAR driver Greg Biffle and his family. The cause of the crash was not immediately known, nor was the reason for the plane's return to the airport in drizzle and cloudy conditions. TikTok's long-delayed plan to separate from Chinese parent ByteDance has been put in motion. The video-sharing sensation says it's signed agreements for a new U.S. joint venture. It's being bought by a group of buyers led by Oracle. Chinese regulators have yet to approve the transaction, which is expected to close next month. Mark Zuckerberg's philanthropy has cut ties with the pro-immigration advocacy group that he founded more than a decade ago. It's a move that parallels other sweeping changes that he's made to his company's policies and his financial giving in the wake of President Trump's re-election. Nike investors running for cover this morning. The stock is falling. The world's largest sportswear company warning sales will decline this quarter. It blames persistent weakness in China and softness at its Converse brand. AbbVie, Bristol-Myers Squibb, Gilead, Merck, and other drug makers are expected to announce agreements with the U.S. to lower certain prescription drug prices. That's according to Reuters, which said the announcement will come this afternoon. And the Bank of Japan raised its benchmark interest rate to the highest level in 30 years, and more increases are in the pipeline if conditions allow. The bank increased the rate by a quarter percentage point to 0.75%. It was a unanimous decision. U.S. stock index futures on the rise. S&P futures up 0.1%. Dow futures little changed. NASDAQ futures up 0.25%, and the 10-year Treasury yield at 4.14%. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
I'm Barry Ritholtz, inviting you to join me for the Masters in Business podcast. Every week, we bring you fascinating conversations with the people who shape markets, investing, and business. CEOs, fund managers, billionaires, Nobel laureates, traders, analysts, economists, everybody that affects what's going on in the market, whether you own stocks, bonds, real estate, commodities, crypto.
Here in Sydney, it's right now 2 p.m. This is Insight with me, Paul Allen, where we dive deeper into the stories that matter with crucial context and sharp analysis. The moment.
That the BOJ will want.
Market Insights now with Janet Rilling, Senior Portfolio Manager at Allspring Global Investments, which manages more than $500 billion in assets. Janet, obviously got to ask you the question of the moment. I mean, look, we're not expecting any change from the Bank of Japan today, but we're expecting an increase from the Bank of Japan today. So used to saying no change, but where are we heading next is the key question, because the pace of increases has been very slow.
Yeah, we, like the market, expect a 25 basis point hike here today, and that's really based on the economic data that we've seen. It's supportive of normalization, and economic confidence is strong. As we move into 2026, likely that the BOJ will want to slow things down, probably leaning more hawkish, but not in any rush to raise rates higher.
Do you think, considering inflation's pretty strong there, that, not, strong by historical standards, there is a case for the Bank of Japan moving a little bit faster on tightening, because this is the first increase since January. It's really moving at a crawl, right?
It is a slow pace. I think there's a number of crosswinds that will need to be absorbed. There certainly can be a case for them to move a bit quicker, but as data unfolds, particularly regarding global economic data and the impact to their economy, given exports as well as tariff pressures, I think there could be some reason for restraint.
So how about your outlook for the yen as well? That's been parked in that range between 150, 155. I mean, we are obviously anticipating a rate increase today, but when it comes to the commentary, do you anticipate you're going to hear anything that might move the currency out of that range?
I think being range bound is the likely base case. However, if there's increasingly inflation pressure, I would lean towards more of a weakening trend as we look forward to the next, call it 1 to 2 quarters.
What is your outlook for yields in Japan as well? Because it feels as if every time we have a JGB auction, there's a lot of nervousness in the markets, and then when it actually happens, it goes off quite well. But where's the demand coming from? Where do you see yields heading in 2026?
Yeah, we would expect continued upward pressure on yields. We think some of that will come from issuance that's going to be required to fund fiscal stimulus and just overall increasing government debt levels. Also, when we look at Japanese yields, we would expect more curve steepening. In other words, the front end being a bit more anchored, but the long end moving up a bit more.
Do you anticipate CPI in Japan remaining elevated, or, and I'm thinking particularly in terms of the amount of fiscal stimulus that the Takaichi government has signaled coming in 2026? What does this mean for CPI? Do you think it's going to cloud the thinking at the BOJ?
I think that the amount of stimulus and that being a key focus is a risk and will lead to upward pressure on the inflation metrics as we move forward here.
Look, I wonder if we can talk a little bit about some of the other central bank news that we had today. Well, it wasn't really central bank news, but it's going to impact the thinking at the Fed. And that was that CPI report. Shows the lowest pace of increase in core inflation in 4 years now. But, how much confidence do you have in those numbers, considering it was impacted by the shutdown?
Yeah, so on the face of it, it was an encouraging number, and the U.S. markets responded favorably to it. But as you have noted, the integrity of that data is in question, given the lengthy government shutdown and the delay with which it was released. So certainly no one number, we can't put too much weight on any one number. And I think given the questions around the integrity of the data, this one in particular, we have to be more cautious on. However, on the margin, I do think it is positive in that it came in cooler than expectations.
Well, the following month, we should get a more clearer picture. What are you expecting those numbers to show?
We expect that inflation, as we look out into 2026 in the U.S., to remain elevated and sticky at these higher levels. It wouldn't be surprising to us for it to remain in that kind of 3% area, and that will cause difficulty for the Fed in balancing what they're trying to do with rates.
So in 2025, we did see a Fed that was moving much slower than anticipated. Do you think we might see a repeat of that in 2026?
Our expectation for the Fed is that they will lean more dovish into 2026, given the change in the makeup of the committee. Clearly, we're going to get a new Fed chair, and that Fed chair will likely lean more dovish. But that said, because that doesn't happen until well into the second quarter, we wouldn't expect much movement until the latter part of the year. Our expectation would be for some additional rate cuts as we move into the second half of 2026.
Do you have any concerns about Fed independence?
I think that the makeup of the Fed does provide checks and balances, but we're also aware that the appointee for the chair will likely be someone with more view towards the dovish camp. But there is a number of other participants who vote, and that does provide some checks and balances in terms of the independence.
What's your growth outlook for the U.S. in next year?
Yeah, our expectation is for U.S. growth to come in between 2 to 3%, with it more likely to run a bit hotter than cooler. We've seen really impressive results out of corporate America working its way through the tariffs throughout 2025, and we think the momentum is building into 2026. We see a fair amount of stimulus coming through, whether that's fiscal stimulus, monetary stimulus. And then, of course, there's the CapEx cycle, which has been accelerating, and we'll expect that to also impact the growth.
More stimulus, more CapEx. Does that potentially mean more inflation?
It can, and that's why, at the outset, I mentioned that our view is for inflation to stay elevated and sticky, and that's where we arrive at kind of that 3% area as we look into 2026.
Well, there's another wild card here as well, and that is, of course, U.S. politics. I mean, we've got the midterms coming up towards the end of next year, but also more imminently, the potential risk of another shutdown at the end of January. How is that factoring into your thinking?
Yeah, in terms of politics, we do think that is going to be a story in 2026. We do think the first half of the year sets up for a better market environment, given the economic data and more of the stability. But as we round into the second quarter, uncertainty about the midterm elections and the potential for the House to flip could really lead to increased volatility, given it would lead to more policy uncertainty.
All right, Janet Rilling of Allspring Global Investments is sticking around. We'll talk a little bit more about some of the investment calls, movements in bond markets as well. But staying with rate moves for the moment, the European Central Bank left policy settings unchanged for a fourth straight meeting, with inflation in the region hovering around target. ECB President Christine Lagarde spoke after the decision.
The economy has been resilient. It grew by 0.3% in the third quarter, mainly reflecting stronger consumption and investment. The pattern of services-led growth is likely to continue in the near term.
Meanwhile, the Bank of England lowered rates to a 3-year low in a narrow vote. Governor Andrew Bailey told us room for further moves next year is limited, and the central bank will face closer calls on its decisions.
Well, I've been very encouraged by the progress that we've made on inflation. I've been saying for some time that we had this, what we called hump up this year. I thought it was going to come down, and it has. And the good news is it's actually coming down a bit faster than I think we thought it would. I'm particularly pleased because there's been an easing of food price inflation, which is really very important. I mean, all inflation is important, but we know that food is salient. It's very salient, and of course it hits those on lower incomes a lot as well. I think now that we're on a path where we'll probably be around this level for a few months, but we think that come the spring, April, May time, we should see another quite sharp drop and take us, I hope, to around target. So we're going to come back to target sooner than we thought. So that's encouraging. All of this is very encouraging. And for me, certainly, it was a strong basis to cut today. It's the sixth cut we've made. Now, looking forwards, I do think we'll continue to have something of a gradual downward path. We'll have to judge the evidence, as you know, at every meeting. We'll come back for the meeting at the end of January, early February, and do that. The calls do get closer, but because as we come down, we will approach a level which is going to sort of, in a sense, maintain inflation. It's not going to be too hot or too cold, if you like to borrow that phraseology. It's very hard to know exactly where that level is, but we will approach it. We're approaching that level. We must be approaching that level in a sense mathematically. So the calls will become closer, and I would expect the pace of cuts therefore to ease off at some point. But I'm not going to judge exactly when that is because it's too uncertain at the moment.
And that is the Bank of England Governor Andrew Bailey. We have plenty more ahead. This is Bloomberg.
There's a very big difference between AI-enabled content and AI-originated content. Those are two completely different things.
Let's get to some of the top tech stories that we're tracking. TikTok says it has signed deals to create a joint U.S. venture, majority owned by American investors. An internal memo from CEO Xiao Chu tells employees that agreements have been made with Oracle, Silver Lake, and MGX. Oracle shares jumped in after-hours trading on the news. The new venture will operate as an independent entity that will control data protection, content moderation, and algorithm security in the US. The deal is expected to close in January, though Chu says more work needs to be done before then. Chinese regulators have also yet to say whether they'll approve the deal. OpenAI is reportedly aiming to raise up to $100 billion to fund its next big push in artificial intelligence. The Wall Street Journal reports the round could value the company at $830 billion if it hits the target. The fundraising comes as investor excitement around AI starts to cool. OpenAI has already secured major deals, including $30 billion from SoftBank and $1 billion from Disney, and it may tap sovereign wealth funds next. The company says it needs massive capital to build advanced models and stay ahead of rivals like Google. Well, Janet Rilling is still with us, Senior Portfolio Manager at Allspring Global Investment. Janet, thanks for sticking around. I just want to pick up on that AI theme in terms of OpenAI potentially approaching sovereign wealth funds. Do you expect to see more of this kind of thing? Because as the CapEx needs just keep piling up, where's the money going to come from?
Yeah, the AI supercycle is certainly showing no signs of letting up, even though some of the investor sentiment seems to be coming off the highs. As we listen to recent earnings calls, there's really been no evidence that they're looking to slow down. And that does raise the question, with all this AI-driven CapEx, where will it be funded? Tapping sovereign wealth funds is one avenue. Within the credit markets, there is concern about how much debt will be issued year 2026.
Sorry, I just need to interrupt you there because we have got the moment that we were all waiting for. It is the Bank of Japan decision, and BOJ has expected raised rates by 25 basis points. The overnight call rate now 0.75%. The decision unanimous, 9-0, and in fact, leading up to this decision, all of the economists surveyed by Bloomberg also expected the rate to go up by 25 basis points. A few other headlines coming in. The BOJ saying Japan's real rate is at a significantly low level. The Bank of Japan will keep raising the rate if the economy and price outlook is realized. It will raise rates in line with economic and price improvement. But accommodative conditions are needed to keep supporting the economy. So the BOJ judged it appropriate to adjust easing for the price target. We've got the Nikkei rising following that BOJ rate hike. Now, I do just want to divert now to another guest that we have standing by who has spent 35 years at the Bank of Japan, including serving as an assistant governor. Let's get to Mizuho Research and Technology's executive economist, Kazuo Moma. Kazuo, I know you've not had a lot of time to digest those headlines coming out of the BOJ, but the headline decision, very much as anticipated. I just wondered if you could give us your reaction to that off the bat.
Yes, as you mentioned, today's decision has been well telegraphed since the December 1st, Mr. Ueda's speech. And actually, the decision was not any surprise to anybody. But at the same time, a little bit surprised in the statement is that the usually statement does not include the policy principles going forward. But actually, this time around, a statement paper actually add one additional paragraph that is say about the interest rate is still very low, significantly low in terms of real rate, and also BOJ is going to continue raising interest rate in a gradual manner. That kind of thing has never been seen in the first statement, but it is actually there today.
You mentioned the policy principle going forward missing in the headlines so far. Do you anticipate that might come up in Governor Ueda's press conference later? And what sort of answers do you expect to hear around that?
Yeah, actually, usually that final statement, final paragraph of the statement is usually referred to by Governor Ueda in the press conference this afternoon. But actually, that paragraph is put forward in the statement this time around. I think this is indicated that the BOJ is trying to make a lot of effort to convey their guidance of the monetary policy going forward, so that market people will not be confused by the first headline of the BOJ today.
Janet, I just want to bring you in here as well and get your initial reaction to what we're hearing from the Bank of Japan. Is there anything that stands out to you so far, particularly in terms of where we might be headed next?
Yeah, I think a lot of what has come out here is quite in line with what Mark... Yes.
I'm sorry, please continue, Janet.
Hi, can you hear me okay?
Yes, please carry on.
Yeah, so what we've heard today so far, I haven't dug into the details yet, seem largely in line with expectations. Again, as we look forward, it would expect continued upward pressure on rates in Japan.
When you say continued upward pressure, I mean, where is the potential ceiling? How many increases would you expect to see in 2026, and what would be the cadence of those? Where do you see the neutral rate?
Yeah, in terms of increases, again, not expecting a rapid pace, but in terms of increases, maybe a couple more within 2026. Over the course of the year, timing is a bit uncertain.
Kazuo, I want to take it back to you if I can. I mean, you are a former Bank of Japan assistant governor. That decision today, as I mentioned, unanimous, 9-0 in favor of lifting rates by 25 basis points. I mean, you've sat around the table. Can you give us an idea of what might have been discussed at that meeting and what the tone of the conversation might have been like?
Well, I think the main focus of this meeting is that what kind of information the BOJ will talk about in terms of the forward guidance or the future prospect of the BOJ's policy going forward. And the one obviously important factor around that is that how strongly the price is going to move up in 2026, 2027. Today's CPI data, which was revealed right before the meeting, was 3.0% year-on-year, which was in line with the expectation. But actually, the underlying trend of inflation is still probably below 2%. So how quickly that underlying trend of inflation is going to converge around 2% is one of the discussion points this meeting. So I think the Takata-san is actually dissenting on the view about the inflation outlook. So that might indicate that how hectic the discussion might be in this meeting about the future prospect of inflation.
Yeah, talk to us a little bit more about the inflation outlook. How do you see that unfolding? Because today's numbers that we received earlier this morning came in bang on line. Do you think that we're going to see CPI continuing to track the way it has been?
It has been, but actually how to interpret what has been in the price front is really actually a sticking point in the discussion. Because on one hand, headline inflation is really strong, around 3% today, but a lot of the upward pressure has been coming from food prices and energy prices. So once those price pressure will fall out, the underlying trend of inflation might be revealed as astonishingly low, actually. So I think that's the very focus of the discussion of price outlook going forward. In my view, the December print and also February meeting next year is going to have some kind of the non-linear drop in the CPI inflation on the headline basis that will converge around 2%. So how far it could go, stop around 2% or even deeper in the low level below 2%, I think that would be still something we don't know yet.
Look, there's also fiscal stimulus coming from the Takaichi government. How will that be factoring into some of the BOJ's deliberations?
Of course, it is to some extent taken into account in the discussion of the price outlook and the inflation outlook. But at the same time, in my view, that the fiscal stimulus of the Takaichi administration might be interpreted by the market as a little bit exaggerated way, because the size of the, for example, fiscal supplemental budget actually is not really big. I mean, it is to some extent big, but at the same time, it's not really surprisingly big. And also, the stimulus to the economy is probably 0.2 or 0.3% on the year GDP basis, and the inflation impact might be relatively limited. So I don't think you have to really overvalue the stimulus, size of the stimulus from the government. So I think that would be around the view of the BOJ in the policy board members.
Also connected to the stimulus, obviously we might see a little bit more debt needing to be issued. So what's your opinion on what we might see in terms of bond issuance from Japan? Where do you think yields might be heading?
Yes, bond issuance is in line with the expectation, at least reasonable range. Actually, it's not really increasing so much. Compared to last year, for example, combined with the initial budget and supplemental budget, JGB issuance is actually less this year than last year. So I don't think there's any spooking factor with regard to the issue of the JGB. But at the same time, there is increasing pressure of inflation and the underlying trend basis, and also the pressure of the currency weakening the yen. So that could actually translate into higher yield of JGB. But still, you have to remember that current level of JGB yield is only 1.92% level, which is still significantly low compared to, for example, Germany bond yield. Germany actually has a very excellent fiscal condition, but still a AAA paper, still 2.8, 2.9% range, and the JGB is only 2%, or less than 2%, so still very low. So there is a lot of room for the JGB yield to move up, even without any fiscal stimulus or further issue in the JGB. Just reflecting fundamentals, I think there is a room for going higher.
Do you have any concerns about the amount of debt that is building up in Japan? And I'm thinking particularly in terms of the debt to GDP ratio.
Well, actually, the GDP ratio has been around more than 200% of GDP for almost 10 years or so. So you should have been worried about that level 10 years ago, actually, if you are really worried about that. If anything, actually, for the last 3 or 4 years, debt GDP ratio has been declining. That's what Takaichi-san said, and that is true. So I don't think there's any clear reason why we have to be worried about debt level now if you did not worry so much about the debt level 10 years ago.
All right, well, we're just going to check in on Japanese markets as they do reopen from lunch. Ahead of the open, we were pretty much higher by about 1.1%, but we're seeing a big jump in the Nikkei now better by about 1.5%. A lot of those gains very broad-based as well. Just a couple of areas that are in the red, one of them consumer discretionary, not performing so well. Financials better by 1.1% now. So I want to take a look at the yen also. That has softened a little bit off the back of this decision, 156.07. Kazuo Moma, I do want to get back to you on the state of the currency at the moment. The yen range bound, really, at between that 150, 158 level. Where's the path of travel from here?
Well, I think there is a chronic pressure for weaker yen because the interest rate in Japan is still low even after today's hike. And also there is a we shared view that the U.S. economy is going to be resilient going forward. So I think that is the fundamental around the currency market. So that's why I think the currency movement is fairly range-bound. So if anything, I think any surprise in the U.S. side or any fiscal spook coming from potentially next year from Takaichi administration, those two things could be potential game changer, but I don't think there is any imminent element that could move currency really dramatically.
You mentioned earlier that there was no mention of policy principle going forward. Also, no mention of timing either. One assumes that Governor Ueda is going to take a lot of questions about that in the press conference as well. So where do you see the pace of rate increases heading from here in Japan?
Well, Governor Ueda in this the press conference this afternoon probably doesn't tell any specific cadence of the policy trajectory going forward. There's no dot chart or something like that in Japan. He probably referred to the willingness of BOJ to just continue raising rates at a gradual pace as the economy improves and inflation pressure going to converge around 2%. My view is that around about the same as the average view of the market, probably I think the BOJ will continue raising rate at pace of around once every 6 months or so. So maybe 1 or 2 rate hikes 2026 and 1 more in 2027, and reaching the level of 1.5%. I think that is the most likely view at this moment. But actually, so far, really conspicuous fact is that all of the decision of the hike of the BOJ coincided with the phase right after the sharp depreciation of the yen, including this time. So I think the exact timing of the decision next year is also likely to depend on how currency market is going to evolve.
That's an interesting point. Do you feel as if we see another sharp depreciation in the yen? Could that bring the timetable for rate hikes forward?
Yeah. For example, as I mentioned earlier, U.S. economy is surprisingly strong the first quarter of next year, and the yen is under the pressure toward 160, maybe February, March, or April. I think in that case, BOJ is likely to put forward the rate hike in March, April. If the other thing happens, for example, deceleration of the U.S. economy is more pronounced than many people think right now, and Fed might be cutting aggressively interest rate in the lower territory, maybe BOJ has to wait until end of next year.
We have had a very slow pace of rate increases so far, as we've been discussing. Do you feel as if there was an argument to maybe speed things up a little, or has the BOJ got the pacing just right?
Well, I think this is about right. The reason is that Japan's real economy itself is not that strong. Consumer spending has been lackluster, while investment is clearly improving, but at a moderate pace. So overall, real GDP is hovering around 0.5% growth, which is very low, even historically speaking. So I don't think there's any clear reason for the BOJ to rush in a rate hike cycle in terms of the impact on the real economy. So only thing BOJ is now continuing raising interest rate is that the concern about the possible upside risk to inflation, most likely coming from the exchange rate deepening, the depreciation. So that's why I think that the BOJ's hike every time actually coincides with the depreciation of the yen timing.
You mentioned the real economy is not particularly strong. Can you give us your outlook for growth in Japan over the coming quarters?
Well, actually, the third quarter was negative, minus 2.3 or something like that. Obviously, the fourth quarter, that will come back to positive territory, but probably not compensating enough for the negative growth in the third quarter. I'm sorry. So I think the overall the trend growth is somewhere between 0.5 or 1%. So it's not really fantastic. Of course, continue to recover, but not that fantastic.
Look, I mentioned a minute ago when markets reopened that we're seeing a broad-based rally in the Nikkei at the moment, with the exception of just a few sectors, the most obvious one being consumer discretionary. So look, as we've got an environment of rising rates, levels of inflation that Japanese consumers are not used to, where do you see consumer sentiment heading in Japan?
I think consumer sentiment is now gradually improving. The reason is that the headline inflation, as I mentioned earlier, is going to likely to decline over the next 6 months. And the wage growth is continue to be around the same level going forward. For example, right now, nominal wage growth is around 2.5% year-on-year increase. And this level of increase of wages is likely to continue based on the information available so far from labor side and the management side with regard to the next wage spring negotiations. And the inflation, as I mentioned, headline term is going to decline from 3% to around 2%. So sometime early next year, wage growth is going to be higher, is going to become higher than the inflation rate. So far, real wages has been in a negative territory by year-on-year basis, but next year, real wages is likely to be in positive territory. That could support consumption to some extent next year compared to this year.
All right, Kazuo Momo, former Bank of Japan Assistant Governor, thank you so much for joining us today with your time and your really excellent analysis. That's much appreciated. Let's take a look at where markets stand. In the meantime, I did mention we are seeing the rally pick up a little bit of steam in Japan. We're up a little bit more than we were before the lunch break and before the BOJ decision. The Nikkei now up higher by 1 1/3%, and that rally, as I mentioned, very broad-based. The best performing sector, communication services and IT. Utilities and materials lag. Consumer discretionary is pretty soft as well. The other asset that moved, of course, the Japanese yen, 156.07, so starting to weaken again. The Bank of Japan saying in its statement that real interest rates are expected to remain significantly negative after the change in policy rate. Accommodative financial conditions will continue to firmly support economic activity. So if you're waiting for further tightening, well, you might want to continue waiting a little bit longer. Take a look at some of the other assets that are moving on that board. It is a mostly positive day across the Asia Pacific because the other piece of key data we got out earlier was the US CPI numbers. It's been described as a Swiss cheese read, full of holes because of it is affected by the shutdown that occurred towards the end of the year. However, encouraging in that it did show core CPI at a lowest pace of increase that we've seen in 4 years. The Fed's Austin Goolsbee described the data as encouraging. It wasn't exact words, but that was certainly his sentiment. So the hopes of further Fed easing building, and that gave a tailwind to US equities, and we're seeing that propelling many of the markets in the Asia Pacific higher as well. We have the Kospi better by 2/3%. Hong Kong's Hang Seng Index better by 0.5%. Just seeing crude continuing to lose a bit of steam as some of those geopolitical concerns that we're adding to some of the supply pressure begin to back off a little, and the narrative about the glut starts to resume. But there at the bottom of your screen, the headline of the hour. Everybody saw that coming. The BOJ raising the overnight call rate to 0.75%. So we got that 25 basis point increase in rates from the Bank of Japan as everybody expected, and that decision was also unanimous. Right, let's get to some more top global stories that we're following. Canadian Prime Minister Mark Carney says a deal to lower US tariffs on sectors such as steel and aluminium is unlikely in the near term. Instead, those talks may be rolled into broader negotiations around next year's review of the US-Canada-Mexico trade agreement. Canada has been hit particularly hard by the tariffs due to its reliance on the US export market. President Trump has signed an executive order moving cannabis into a less restrictive federal category and a potential major shift to the legal and commercial landscape for the plant. The order instructs the Justice Department to move cannabis to Schedule 3 for drugs with accepted medical uses and lower abuse potential. Marijuana is currently in the highest class alongside heroin and LSD.
I want to emphasize that the order I am about to sign is not the legalization, or it doesn't legalize marijuana in any way, shape, or form, and in no way sanctions its use as a recreational drug. It has nothing to do with it.
US police say a man suspected of last weekend's shooting at Brown University has been found dead at a storage facility in New Hampshire after taking his own life. Let's bring in Bloomberg senior editor John Harney now with more on this. So, John, tell us about the latest and the circumstances that led to this discovery.
Paul, as our colleagues Miles Miller and Greg Ryan report, there was a remarkable conclusion to two manhunts regarding shocking crimes at two prestigious universities. Brown University in Providence, Rhode Island, where last Saturday a gunman shot 11 students in a campus building and killed 2 of them. Then on Monday, a professor at MIT was murdered in his home. And it turns out that the person responsible for both these crimes is one and the same, according to federal authorities and authorities in Providence and Boston, and state authorities as well. The motive is as yet unclear. However, there are connections. the suspect who was found dead, as you pointed out, in a storage facility in New Hampshire, went to school in Portugal with the professor, the MIT professor, and he was a PhD student in physics at Brown about 25 years ago.
You mentioned that we don't have a motive for this yet. One assumes investigators are continuing to look into this. Are there any leads at the moment?
Oh, there are many. I mean, this, as I used to say in my police reporting days, this was a result of old-fashioned detective work. A witness in Providence came forward and told the police that about someone she had interacted with after seeing videos that had been distributed to the media of someone who they thought might have something to do with this near the Brown campus. That led to a rental car that had been rented, leased in the suspect's name, and after that, they knew who they were looking for, and that led them to New Hampshire. Now, as far as motive, again, we really don't know. The suspect was last known to live in Miami, Florida. And why he would shoot students in a classroom who are studying for final exams and then go kill a professor near Boston is one of the things that the authorities are looking at right now.
Yeah, still a lot of unanswered questions in this case, and I'm wondering to what degree has that been hampered by, there's a lack of security camera footage, isn't there, which seems extraordinary considering the size of the campus.
Yeah, so this was an older building on the campus, apparently, so there wasn't any security cameras. However, as the president of Brown pointed out tonight, the suspect had some familiarity with the campus quite a bit, and I believe, as I understand it, had taken classes in that very building. So he knew, he wasn't a stranger to the campus at all, even though he was a student quite some time ago. And of course, this was very frustrating because unlike in a lot of these cases where these mass shootings, the suspect either kills himself right away or is caught immediately, this person took precautions, apparently, though not enough, fortunately, and was able to escape, at least until tonight.
All right, Bloomberg senior editor John Harney with the latest developments on that case, the shooting at Brown University. Right, let's get you to some live pictures out of India. It is the listing ceremony in Mumbai for ICICI Prudential Asset Management. That's about to get underway as India wraps up a sizzling year for IPOs with another potential blockbuster. I'm going to bring you a little bit more on that as well, including the company's official start of trading. I want to take a look at the Indian Open also. We have got a couple of idiosyncratic stories to watch in India as well. There's been a change in policy when it comes to nuclear energy. Any private investor showing interest in building nuclear reactors in India now can, with a change to the law allowing private ownership of nuclear energy. We're seeing some tailwinds for Indian equities at the moment. The Sensex higher by 0.4%. Nifty Bank Index a little bit slower there by about 0.2%, but follows on from the broader theme that we're seeing across the region today. This risk-on sentiment, one presumes, being driven by the encouraging CPI data we had out of the US, even though that was, as I mentioned, likened to Swiss cheese due to the number of holes in it, inspired by the US shutdown. Okay, we'll bring you the latest on that ICICI Prudential AMC debut in a moment. You can see those live pictures in Mumbai. We have that and plenty more ahead. This is Bloomberg.
There's a very big difference between AI-enabled content and AI-originated content. Those are two completely different things.
Global electricity demand is set to surge 75% by 2050. Infrastructure alone won't keep up. To power the future, we must change how energy is used, not just how it's generated. The missing link? Demand-side solutions that unlock efficiency, productivity, and resilience. The Bloomberg New Economy Energy Technology Coalition is uniting industry, innovators, and investors to scale these technologies for a future-ready energy system. Learn more at bloombergneweconomy.com/NTech.
Let's check in on crude prices. It looks like normal service is being resumed. Prices hitting lower again. We did see a geopolitically inspired bump earlier this week with the U.S. Armada off the coast of Venezuela. Also, not a lot of progress on Russia-Ukraine trade talks. Not trade, what am I saying? Peace talks. Trade on the brain. But we've got prices now declining again as glut concerns continue to pressure prices. For more on this, let's get to Stephen Stapczynski. Stephen, those geopolitical pressures that I mentioned seem to have reversed somewhat. Is the world thinking more about oversupply again?
I think the world can't stop thinking about oversupply. I think it's on everyone's lips. We had a huge big take story about the incoming glut and really where it's coming from. And it's a story of supply. And when you read that story, the analysts, the traders, the people are saying prices could go lower. The only thing kind of keeping us in that $60 range for Brent appears to be that geopolitical risk, that war premium that we have from the ongoing war in Ukraine, and also what Trump is saying about Venezuela. Even though Venezuela isn't a huge supplier in the grand scheme of things, it does add a level of risk to the market. But right now, we're looking at an oil market that is facing increases from major suppliers almost across the board. You've got OPEC Plus increasing supply through much of the year. You also have the U.S. supply, which is going to potentially hit a record this year and then continue kind of that level for next year maybe. And then on top of that, you have other countries that you wouldn't normally think of as suppliers also boosting their oil output. You've got China, which is producing essentially as much oil as Iraq, which is enormous. I mean, China's still a big importer, but they're developing more of their own domestic resources. You have Argentina developing their shale oil resources as well. They're requiring less supply from other countries and looking to even export some of their oil and gas, specifically gas as LNG maybe later this decade. So we're entering a market, especially next year, that is oversupplied. And while we do have these geopolitical events kind of kicking around that might increase prices one day, it does seem that the trend is oil prices are going to go lower.
Stephen, it begs the question, which of these big producers can produce supply at the lowest cost?
Well, that's a very good question, because when you look at OPEC, for example, oil prices are below where they need to balance their budget, right? I think you would often hear $70, $80 for some of these Middle Eastern countries for Brent. We're below that. For oil majors as well, you've got big producers out of like Shell and others that need oil to also be higher to balance their portfolio. I think one thing to look at specifically is what happens with shale drillers, because they're the ones who are going to be able to more nimbly take on and off supply.
Stephen, I just want to interrupt you briefly, get viewers across some more news out of Japan. We've got the 10-year yield now rising to 2%. This is at a level that we have not seen since 2006, and it does, of course, come in the wake of that Bank of Japan decision to lift rates by 25 basis points to 0.75%. That is the highest level we've seen in 30 years. Still pretty low by global standards, but it's certainly moving markets in Japan at the moment. Yields rising across the curve, but that 10-year now punching through that 2% level. That's something we haven't seen for getting on for 20 years. All right, Stephen, I just wanted to get back to you now. You were talking about who can produce at the lowest cost, the pressure that must be being felt on some of these OPEC countries' bottom lines. What's OPEC going to do in 2026? They've already signaled a pause for the first quarter to wait and see what happens, but then what?
Yeah, I mean, certainly, I think the question is, will they continue this pause? So the pause is through the first quarter. So that's just a quarter of the year. What do they do for the last 3 quarters of the year? And also, are they going to increase adding barrels to the market? Do they want to continue capturing market share at the expense of cost, at the expense of keeping their budget kind of underwater? Or are they going to go the opposite way, which is start to kind of reduce supply? They've done that before in the past. Doesn't seem to be Saudi Arabia's strategy at the moment. Of course, things can always change, but the big question will be, what's Russia doing, right? Because Russia's that one wild card where if there is a Ukraine peace deal, then potentially you have the United States pulling back some of the sanctions that they had on LukoIl, on Rosneft. You could see more of their supply entering into the market kind of uninterrupted, even though a lot of it still is going to India and China. Without the war risk, without that happening, you could really see prices fall. And then that goes to OPEC saying, are you going to also be reducing your output? That will be something that they're likely going to have to discuss if that happens. There are a lot of ifs in that statement, but I think going forward, a lot of eyes will be on OPEC on how they react after the first quarter.
All right, Stephen, thanks for your analysis there. Stephen Stapczynski leads our Asia energy coverage from Singapore. He's going to join us in the next hour as well to talk about that policy change that I mentioned about nuclear energy in India. As we leave you, let's take a look at how yields are performing across Japan. We've got the 10-year punching through that 2% level for the first time since 2006. Still to come, veteran money manager Ed Rogers joins us live to react to the BOJ decision, also to give us his outlook for markets in Japan and beyond. Also a look at what lies ahead for India's embattled currency in 2026. Those conversations in a moment. This is Bloomberg.
There's a very big difference between AI-enabled content and AI-originated content. Those are two completely different things.
Welcome back. You are watching Insight, and there you see some live pictures from the Bank of Japan with the big story of the hour. Bank of Japan lifting rates by 25 basis points to 0.75%. These are levels that we have not seen since the 1990s. Everybody saw it coming, though. All economists surveyed expected this. The Bank of Japan 9-0 unanimous in this decision. The Bank of Japan also saying the price trend is in line with target and the outlook in the second half. No real signalling on the cadence and future path of rate hikes, although it looks as if the Bank of Japan is going to remain on its cautious, slow and steady path towards tightening. We've seen a few movements in asset prices, though. The Nikkei moving higher. The yen briefly fell through 156, although we're back at 155.84 now. But the really interesting move was the 10-year yield. That's risen to above 2% now, and it's the first time we've seen it there since 2006. So we'll be waiting now for Governor Ueda's press conference, where he'll be taking that in a few hours' time. He's almost certainly going to be taking questions on what the future path of tightening is from here, particularly with an eye to what's going to happen on the fiscal stimulus side as well, and what that might mean for inflation. Elsewhere, we're seeing asset prices more broadly moving higher. The Kospi having a reasonable day, better by 0.9%. We've got the Hang Seng Index also in positive territory. We've got Indian stocks just opened a short time ago. They're also pushing higher. And I mentioned the 10-year yields just hanging on above 2% there in Japan. Right. The Bank of Japan, as I mentioned, raising that interest rate to the highest level since 1995. Let's get a bit more context on how the market is digesting those moves. We're joined by our senior equities reporter, Abhishek Vishnoi. Abhishek, we did see a little pop in the Nikkei. Safe to say this wasn't completely priced in. What were markets reacting to there? Was it some of the commentary?
Well, yeah, the decision was no surprise, but it looks there is an element of position clearing here. People were overly cautious, so that's why you're seeing yen actually weakening a little bit. There is a bit of a move even in the U.S. futures. So net Nikkei also jumped, while banks, which are probably supposed to gain from a rate hike, saw some bit of profit taking. So there was an element of position clearing that was there, and then you have to keep this context in mind that this is the fourth 4th rate hike under the current central bank governor of Japan, right? And despite that, this narrative that rate hikes are going to change, the trajectory for yen, the weakness that we have witnessed for so many eons almost, that hasn't changed. So, this is more of position clearing, more of, that over caution that existed before this decision came out. As you mentioned, Japanese 10-year bond futures also extended drop, bank stocks also extended drop, and Nikkei has been a bit firm.
We've also got the yield on the 10-year above 2% there, which is something we haven't seen since 2006. What's the bond market telling us about what the Bank of Japan's doing about inflation?
Well, we are getting, commentary which says that there is no imminent threat of, more rate hikes, immediate ones. But given yields are rising and given, how markets are reacting, there are obviously more rate hikes expected. More is expected to come in. Even Bank of Japan has become a lot more comfortable about its assessment of the economy, its assessment of inflation. So there may be more rate hikes that are expected to come in 2026. But like I said, 4 rate hikes have come in, but yen has not stopped weakening. So, we'll have to wait and watch.
Speaking of waiting and watching, the press conference up next for Governor Ueda in a few hours' time. What sorts of questions is he likely to be taking there?
I think markets and investors are pretty much looking at what he makes of the fiscal of Japan's fiscal health, and what he makes of the yield, what kind of assessment he gives on inflation, the descents. So overall, I think these are the kind of things that people are watching out for. Let's see how yen reacts after that. This first initial move has largely been because of position clearing. So what happens during the press conference now becomes even more important from an asset price point of view.
All right, Bloomberg senior Asian equities reporter Abhishek Vishnoi there. Let's get some more on the corporate impact of higher rates and a weaker yen in Japan. Let's get to Ed Rogers now. He's CEO and CIO of Rogers Investment Advisors, an Asia-focused alternative investment, asset management and advisory group. Ed, thanks so much for joining us today. I'm hoping you've had a few minutes to parse the headlines from the Bank of Japan. I'm just wondering what stood out for you.
Good morning, or good afternoon, Paul. Thanks very much for having me on the show. I think what stands out is, again, the Bank of Japan can be very depended on to be predictable. The directionality and the price movement here, everything is pretty much as expected. We've seen a very small move in dollar yen, as you noted. I think we punched through 156, and we're now back a little bit above that at 55.80 odd. But the Bank of Japan's been very clear in their telegraphing, I think. I think the market this is not a shock and awe sort of Bank of Japan. This is as expected, and they want you to understand that they're trying to be predictable and encouraging, if you will, of where you should be thinking about future raises and how much and when.
Yeah, top marks for communication. Everybody saw this coming, and that was clearly the intention that the BOJ had. But the question now turns to what's next. Do you expect this, let's call it a plodding cadence of rate increases to continue? When's the next one coming?
Yeah, I'm in the camp that says it's probably 6 months from now. Again, this is not a shock and awe Bank of Japan. So the things that we really should be focusing on is what is the fiscal outlook. Prime Minister Takichi, how I think has been also very declarative and very clear. The spend is real. And what does that mean? It means the inflation that is embedded, if you will continue. I think how that spills into things like wages and watching where the government is going to be allocating significant sums of money in the supplemental budget. Those are the things you want to start to think about. And we'll see the impact of that. Again, I very much like looking at the 10-year to truly understand what the market thinks about this. So going back to what more normalized numbers, one might say, on the yield side. I think that's something that people should understand what that means with regards to both fixed income and equity investment in Japan.
Now, what does it mean to you in terms of fixed income and equity investment? What's a good allocation? Where do you put money to work in Japan now?
Sure. I think given the amount of incoming calls we have from global investors that seem to have rediscovered Japan as an investment destination, I'd say the vast majority of the world of global investors is still very underexposed to Japan. So what does that mean? It means good news for Japanese equity markets, for example. On the fixed income side, it's a relatively stable place. It's not where huge fortunes are going to be made. They're not going to be massive moves. It's going to be 6 months till the next rate raise, and it more than likely will be another incremental raise. Again, no shock and awe coming there. What makes it super exciting from our point of view is that investors en masse, if you will, global investors, I think some of them are going to change from being investment tourists to more committed to the Japanese space for the medium to long term. And that implies a significant potential step up, particularly in the public equity space, where it's easiest and quickest to gain access for most of those investors.
Well, look, a week yen has certainly seen plenty of real tourists visiting Japan. Do you expect this to attract more so-called investment tourists, as you just mentioned? How appealing are Japanese equities when the currency is so soft?
100% I agree with that statement. We're telling our investors, just go ahead and buy it at 156 yen to the dollar. That's not where we will be in 2 years' time. In 2 months, I don't know. Maybe we're going to go up to 159. Maybe we test 160. But at some point, the incremental rate raises here, coupled with, again, I think you very much want to be aware of where, to understand dollar yen, you have to understand the other half of the equation. Where is U.S. dollar? Where are U.S. rates? There's much more potential volatility, frankly, coming out of a new Fed chair and the run up to the midterm elections in the United States. So what we are telling our investors is this is just such a super cheap entry point. Go ahead and buy it. Some of it is just to park your money in yen trade, and we will eventually go back to the 140s, maybe the 130s, but it's not now, and it's not 6 months from now. It is 1 to 3 years from now. But position yourself ahead of time. Don't wait.
I want to talk a little bit more about specific equity plays in a moment, but just in terms of dollar yen and the trajectory there, do you think entry points could get even more attractive? Is your base case for more weakness, or do you think we're going to be trapped in this range for a while?
Yeah, look, I would be in much more concerned that dollar yen's going to 160 right now than going to 150 for sure. So if you want to be the perfect market timer, you could potentially wait a little bit and get a little cheaper entry access point. If you have a 1 or 2 year viewpoint, I think it's only marginal, the amount of FX gain that you have. So my advice would be allocate now rather than trying to market time the FX rate.
Okay, well, normally when we talk about equities, we often speak in terms of, the need to be selective. Do you need to be selective in Japan at the moment? Could you just buy the index or an ETF? Is there anything particular that you'd look at or anything that you'd avoid?
It truly depends on your goals. There is a beta tailwind that's undeniable that I think will continue given the interest rate scenario for both the United States and Japan. And I think if you look at just general earnings and a lot of the basic fundamental metrics that you would look at for Japanese corporations, it's a very healthy environment. So you could just buy your beta tailwind that's a cheap ETF. If you really want bang for your buck and you're really actually understanding where Japan is as far as corporate development, where's the Tokyo Stock Exchange, what's their role, and what's the desire for the Japanese government, where do they see improvement in investment? They want more unicorns. They want a better venture capital ecosystem. They are in a great position to leverage, if you will, the existing 20% of Japanese GDP, which is based on manufacturing. How do you get the most out of that? How do you become what's the leverage point, if you will, for the light manufacturing that the United States gave up on 30 years ago that China took over and that because the geopolitical realities, Japan is now front and center. One of the reasons why Japan is front and center with so many global investors is the geopolitical situation. It's not just the metrics on the economy, it's the metrics, if you will, on geopolitical risk and the need for Japan, and I say need very specifically, to become, if you will, the vital industrial engine of manufacturing for the United States and many allied countries, such as NATO, formal military allies. But let's talk about economic security, which would include AUKUS and from Australia to the Philippines, all the way up to South Korea. Japan should be the engine of growth for many, many, many sectors that are in the manufacturing space, where they have a leverageable capability that simply does not exist, frankly, in the United States right now.
Yeah, Japan also one of those many countries that are currently building out chip manufacturing capabilities also. Do you see anything in the tech and the AI space that stands out for you in particular, where you could see some outsized gains?
Absolutely. On chips, I think the robotics space, I think certain parts of the energy space. Look, Japan is very focused, and people should be paying a lot of attention to Prime Minister Takichi. They should be what she says and what she's focused on. I think there's a much more unified government stance, if you will, in Japan about the need to understand the goals and what's the role of METI, what's the role of Ministry of Finance, what's the role of private, if you will, businesses, public businesses, private space, meaning venture capital. I think there is a really, really healthy ecosystem developing here for allocation of risk capital. And if you believe that, that's why if you want alpha and you want outsized returns, you're not thinking about buying a Japanese ETF. You're thinking about what are the Japanese companies that are going to potentially be lined up to IPO and be a unicorn IPO over the next 3 to 5 years. That's the most interesting space in Japan for us right now.
Ed, you've laid out a very bullish case for Japan, but are there any sectors of the economy that you feel may lag? And I'm thinking, we're seeing inflation, although, for many parts of the world, 3% would not be considered outrageous, but for Japan, it's at levels that many consumers are simply not used to. What's your attitude towards consumer stocks and other sectors of the economy that might be feeling the pain from unfamiliar inflation?
And 30 years of deflation, to be honest, has left what is normal. Again, if you're trying to compare apples to apples, inflation, Japan versus other G7 or G20, that's a very challenging, frankly, comparison, because the Japanese consumer has been used to the price of eggs being the same for 30 years, and then it goes up 5 times in the course of 16 months, 17, 18 months. That is a cause for concern potentially, I think, as far as political ramifications, as we see playing out in the United States, the affordability discussion and how that will impact midterms. Our view, the Rogers Eye view, is that Japan is far more politically stable. The goal of achieving this inflation, and the reason why the Japanese Bank of Japan has been very slow and steady on their interest rate increases, is it kind of suits everybody to see this ongoing inflation in Japan. It's meeting a goal that is 30 years old to try and create some sustainable inflation. And if it goes a little bit over for a little bit longer, that's okay. No one here is going to panic about that.
Ed, before we leave you, I'm just curious, if you were sitting in that press conference a little later on today with Governor Ueda, what would you ask him?
I would say what might change your view on that slow and steady, if you will, outlook to something that requires you to be much more proactive. Can you give us any guidance, perhaps, on areas of concern, a number that inflation would hit that might really trigger, if you will, a more than an incrementalist response? Because that is possible. Our view is that there could be a possible surprises to the upside on that inflation number going forward.
All right, Ed Rogers, great to talk to you. Ed is CEO and CIO of Rogers Investment Advisors. Right, let's get you back to Mumbai. ICICI Prudential Asset Management set for its official start of trading in a few minutes. Shares are set to jump 20% according to pre-market figures. We're going to have a little bit more on this in our India focus later on this hour. So that ICICI Prudential priced at 2,165 rupees at the high end. And we are anticipating quite the pop when that gets going. All right, we have plenty more ahead. This is Bloomberg.
There's a very big difference between AI-enabled content and AI-originated content. Those are two completely different things.
You have to have very clear global strategy to bring progress for humanity. Thinking from the customer point of view and taking the right decision, taking the right action, it may cost you more money in the short term, but you are creating customers for life.
I have one aim, to get an answer for the question, what will the United States of America do if Russia comes with aggression again? What these security guarantees will do? How will it work out? What will all partners do? How, with what pressure, with what power they will stop Moscow?
That's Ukrainian President Volodymyr Zelensky speaking in Brussels as European leaders seek a deal on the use of frozen assets to fund a loan for Kyiv. Well, Bloomberg's been told that the US and Ukraine's European allies have put together a plan for security around any peace deal with Russia. Sources say an 800,000-member Ukrainian army would be the first line of deterrence. The US would provide intelligence, and a European coalition would station troops behind the front lines. Ukraine's president says Washington will make the plan legally binding with a vote in Congress. Well, EU leaders meeting in Brussels have agreed to a 100...
Okay guys, 8 p.m. होने वाला है. US market is going to open. Put your SL on cost to cost. 8 p.m. US market is going to open. Expected a volatility in the market. So if you have any open position, put SL on cost. Area of interest, AOI means. Natural gas 345 को 356 पर देखो 356 तक जाने से पहले अभी यूएस मार्केट ओपन होने वाला है, तो अपना एसएल कॉस्ट पर रख लो. इतना ही सजेस्ट करूंगा. ऊपर ये रेजिस्टेंस भी है, यहाँ पर ये पूरा जोन ही रेजिस्टेंस का है, कोई एक पॉइंट नहीं होता. एसएल कॉस्ट में रख लो. यूएस मार्केट से ओपन से पहले अगर ऊपर जाता है यूएस मार्केट से पहले तो प्रॉफिट बुक कर सकते हैं, नहीं तो कॉस्ट टू कॉस्ट निकाल देना. ओपन इक्वल टू हाई बन के नीचे नहीं आना चाहिए, अदरवाइज प्रॉब्लम हो जाएगी. मार्केट ना थोड़ा सा साइड में चला गया. नेचुरल गैस का ऊपर रेजिस्टेंस है, नीचे सपोर्ट है, यहाँ फिर जाएगा, फिर यहाँ से रेजिस्टेंस दोबारा मिल जाएगा मार्केट को. ये थोड़ा सा रेंज बना दी है इसने. रेंज ब्रेक करता तो बेटर था. मॉर्निंग पे जिस तरह से गिर रहा था ऐसा लग रहा था डायरेक्टली नीचे आता बाइंग करते, बट वो आधे से ही वापस हो गया. लिक्विडिटी मिली नहीं है उतनी, तो या तो नई लिक्विडिटी क्रिएट करेगा या फिर सेल साइड लिक्विडिटी लेने जा सकता है अप साइड पे. के 2 मिनट लेफ्ट, 2 मिनट है यूएस मार्केट ओपनिंग में. 8:30 का डेटा भी ध्यान रखना, वो भी काफ़ी इंपॉर्टेंट है. लास्ट ट्रेडिंग सेशन है वैसे भी आज, कल परसों वैसे मार्केट क्लोज रहेगा. एग्जिस्टिंग होम सेल्स का और कंज्यूमर सेंटीमेंट, दैट इज़ वेरी इंपॉर्टेंट. ये कंज्यूमर सेंटीमेंट का डेटा जरूर देखना, विल इम्पैक्ट. बाकी देखो क्रूड भी मुझे सुबह से वो 2-3 दिनों से रेंज बाउंड ही है, अभी भी मुझे रेंज बाउंड ही लग रहा है. ये नीचे भी लग नहीं रहा ज़्यादा गिरेगा, ऊपर भी ऑलरेडी रेजिस्टेंस पर ही है. 5030 टू 5040 डे लो के आसपास. 40 seconds. ठीक है, बाकी देखो नेचुरल गैस में बेस्ट के सिनेरियो मेरे अकॉर्डिंग ये है कि थोड़ा ऊपर चला ही जाए फिर गिरे अब, क्योंकि ये लेवल ही मल्टीपल टाइम टेस्ट हो गया है, अब ये भी रुकेगा नहीं अगर वापस नीचे आता है. एक थोड़ा सा लिक्विडिटी ले यहाँ से और फिर सीधा गिर जाए, देन फिर लोअर एंड से दोबारा बाई करें. हो गया. Yes. Okay, US market open now. Dow Jones. Jaya Krishna VG, I think व्हाट्सएप पे कॉल मत कीजिए, डोंट कॉल ऑन व्हाट्सएप बिकॉज मैं व्हाट्सएप चेक नहीं करता हूँ रेगुलरली. चैनल मेंबरशिप पर्क्स मेंशन इन द फ्रंट ऑफ ऑल मेंबरशिप प्लान. हर एक मेंबरशिप प्लान के आगे लिखा हुआ है उसके पर्क्स क्या है, यूट्यूब पे अगर आप देखोगे तो. ठीक है, ज़्यादा कुछ नहीं है उसमें, यू कैन जस्ट इजीली सी इन फ्रंट ऑफ ईच प्लान, लाइक 89 rupees plan for month, you can send your message on live stream actually. Okay, US market open.
And it continues to benefit from consistent household inflows into stocks through mutual funds. India has been receiving over $3 billion per month from dedicated mutual fund investment plans, and that makes ICICI Prudential attractive to investors.
So, Ashutosh, you mentioned there the pipeline for 2026. Can you tell us what this successful listing today means for the sort of enthusiasm that we have around the IPO environment in India more broadly at the moment?
Sure. More than 60 IPOs have already been approved by Indian regulator, and big names that are expected to take place next year include a similar money manager unit operated by State Bank of India, the country's top lender, which is also exploring IPO for its mutual fund unit. Apart from that, we are expecting the country's biggest stock exchange, the National Stock Exchange, is among names that could explore IPO for the next year. With this, the pipeline for 2026 looks pretty strong.
All right, Asia Equities reporter Ashutosh Joshi there in Mumbai. Let's take a look at how Indian markets are performing at the moment. Obviously,
also question whether the board has the power to change the name. U.S. Trade Representative.
We do all this live each and every weekday, then bring you the best analysis in our daily podcast. Search for Bloomberg Surveillance on YouTube, Apple, Spotify, or anywhere else you listen. On the East Coast, listen at lunch, and on the West Coast when you wake up. That's the Bloomberg Surveillance Podcast with me, Tom Keene, along with Paul Sweeney and Lisa Mateo. Subscribe today wherever you get your podcasts.
News when you want it with Bloomberg News Now. I'm Karen Moscow. Investigators say the suspect in 2 deadly crimes connected to 2 prestigious universities has been found dead. The body of 48-year-old Claudio Manuel Neves Valente was found in a storage unit in Salem, New Hampshire. Officials say he took his own life. Rhode Island Attorney General Peter Naronha says some key information came from a person who had been spotted near the suspect on surveillance video.
That person came forward and said he had information, that he was that person, and he had information that could help this case. And he blew this case right open.
Rhode Island Attorney General Peter Naronha. So far, officials have not offered a motive for the attacks. Valente at one point was a student at Brown and also went to the same school in Portugal as murdered MIT professor Nuno Loureiro. 2 people were killed in the shooting at Brown University. The Trump administration is suspending the U.S. green card lottery program after it said the suspect in the Brown University and MIT professor shootings used it to remain in this country. Homeland Security Secretary Kristi Noem announced the pause in a post on X. Bloomberg Government's Jonathan Tamari has more from Washington.
We know that this is a program that allows in roughly 50,000 people annually, and we know that obviously this is part of a much broader crackdown on immigration that the president and the administration has undertaken, including after an Afghan national shot 2 National Guardsmen here in Washington. And so it's part of just increasing restrictions on immigration, and I think we'll have to wait for further details from the administration that go beyond this quick announcement on social media.
And that's Bloomberg Government's Jonathan Tamari, who reports about 50,000 people received green cards through the Diversity Immigrant Visa Program every year. The Justice Department has until today to release its files on Jeffrey Epstein. That's under the bill the president signed last month, giving the agency 30 days to release most of its files and communications related to the convicted sex offender. The Trump administration appealed a judge's ruling that it illegally froze more than $2 billion in research funding to punish Harvard for refusing to comply with a host of demands from the federal government. U.S. lawyers filed a notice of appeal yesterday, more than 3 months after U.S. District Judge Allison Burroughs ruled that the Trump administration had violated Harvard's free speech and due process rights. There's new controversy over the Kennedy Center for the Arts, specifically over the name. The board there has voted to rename it the Trump Kennedy Center. Members of the Kennedy family have attacked the move, as well as some Democratic lawmakers. Here's Democratic U.S. Representative Shelley Pingree of Maine, who spoke with ABC News.
This would be like saying, I'm going to rename the Jefferson Memorial for Barack Obama. You just don't do that. This is our living memorial. It is in statute.
And that's U.S. Democratic Representative Shelley Pingree of Maine. And some legal experts also question whether the board has the power to change the name. U.S. Trade Representative Jamieson Greer is saying that the administration will do whatever it needs to do to keep its trade deals in place.
I think that the tariff plan is in good shape. I think we have a lot of the tariffs we want in place. You know, if there are countries here and there that don't comply with their deals or don't want to finish a deal, then maybe we have to have another conversation. But I think the economy's booming, inflation's down, wages are up. We're on a really great track.
And Greer made the comments in an interview with Bloomberg Television. President Trump is set to deliver more remarks on the economy tonight. That's after a speech this week where he announced bonus checks for active duty service members, an executive order rescheduling cannabis for medical purposes, and another announcement that could be coming later today as we hear from Bloomberg Government's Maeve Sheehy.
Drug makers, AbbVie, Bristol Myers Squibb, Gilead, and Merck are expected to announce agreements to lower prescription drug prices, which would be another massive win for the administration, given that that's something that they've really called on drug makers to do.
And that's Bloomberg Government's Maeve Sheehy, who says neither the White House nor the drug makers have responded to that report from Reuters. All this ahead of the president's speech tonight in North Carolina, set for 9 p.m. Wall Street time. Ukraine's president calling it an important victory for his country. The European Union has agreed to a 2-year, $106 billion loan for Ukraine after marathon talks in Brussels. And we get more with Bloomberg's Oliver Crook.
After 16 hours of negotiations at about 3 a.m. this morning, they came to a conclusion on how to actually deal with this. And the headline is, and this is kind of the most important point, there's going to be a loan to the Ukrainians at zero interest for 90 billion euros for the next 2 years. That funds basically 2/3 of all of Ukraine's needs militarily and budget otherwise for the next 2 years. So that is sort of the crucial point.
And that's Bloomberg's Oliver Crook, who reports EU leaders agreed to back the loan with joint debt raised through the capital markets, not through frozen Russian assets. He says Ukraine would not need to repay the loan if it receives repatriations from Russia. Otherwise, the frozen assets would come back into play. Meanwhile, Ukraine hit an oil tanker from Russia's shadow fleet in the Mediterranean Sea for the first time. It's a fresh escalation in its drone strikes on ships, helping carry barrels from Moscow. Federal investigators will begin sifting through the wreckage of a business jet that crashed in North Carolina and killed all 7 people on board. Among the victims was retired NASCAR driver Greg Biffle and his family. The cause of the crash is not immediately known. TikTok's long-delayed plan to separate from Chinese parent ByteDance has been put into motion. The video-sharing sensation says it signed agreements for a new U.S. joint venture. It's being bought by a group of buyers led by Oracle. Chinese regulators have yet to approve the transaction, which is expected to close next month. Nike shares are falling. The world's largest sportswear company warning sales will decline this quarter, and it blames persistent weakness in China and softness at its Converse brand. Futures, meanwhile, higher mostly. S&P futures up 0.1%, Dow futures little change, NASDAQ futures up 0.25%, and the 10-year Treasury yield at 4.15%. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
In our new podcast, Everybody's Business, we talk about the business news that concerns everybody.
From Bloomberg Business Week, I'm Stacey Vanek Smith.
And I'm Max Chafkin.
Each week, we unpack what is happening on Main Street and Wall Street, all the streets. WrestleMania has taken over the U.S. economy.
Poetry that executives write on LinkedIn.
A little actual magic in our underrated story of the
single
week.
greatest marketing campaign the music business has ever seen.
I decided to ask people how they felt about the penny going away. Listen to Everybody's Business wherever you get your podcasts.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
We've got behind-the-scenes conversations with sports' greatest business people and athletes, from Serena Williams and Stephen A. Smith to Bill Belichick and
This is really scary. At Planet Money, we get the story behind the money to explain how money works. Listen on the NPR app or wherever you get your podcasts.
Bloomberg Audio Studios. Podcasts, radio, news.
Peptides are the P in GLP-1s that are so popular.
I think I do. Yeah, I think I knew GLP-1s was a peptide, but I still don't. What is it? Anyway.
All right. The reason you're hearing about it a lot is because a lot of people seem to be using them in various ways. And there are all these different types of peptides that supposedly do different things for the body. This one apparently makes you better at eye contact and more sociable. So
you know what's really funny?
Mhm.
Back when I was I could have used this like 25 years ago. When I was younger, like in college, it didn't happen very often, but I occasionally went on a few dates. And very rare.
I'm not going to say anything.
Very rare occurrence. But one of the things I would notice is if I was out on a date and like the girl would start like messing with like her hair a
That
little
means
bit.
she likes you.
No. And she's like, is there something wrong with my hair? Because you keep looking like 3 inches above my eyes.
Oh.
And I'm like, no, I'm just very awkward. It's very difficult for me. And she's like, oh, I was like, it's just very awkward for me. I'm not very good at eye contact and so forth. And so I just assumed it was something in my hair that I was like trying to get out. And I was like, no, I'm sorry. I'm just like that.
This happened to you more than once?
Yes. So I could have really used a chemical that would solve the eye contact problem. Now I've grown up. I've grown out of it. I can look someone in the eye now.
I will say I have tested it I'm not entirely convinced of its effects, but, in the name of science for all thoughts, I have been a guinea pig.
So we know GLP-1s, whatever they're called, Wegovy and all those are good for weight loss. And we know that it's almost a miracle drug, right? Everyone's like incredible. But in theory, there are other peptides out there that could be equivalently miraculous. We just don't really know about them, and maybe they're not sort of medicinalized the way that the weight loss ones are.
Yeah, and also not distributed the same way as GLP-1s in America. And we're going to get all into that because it's actually a really interesting topic, both culturally and from a supply chain perspective. And we love supply chains. So
we love supply chains.
All right. So for this particular topic, we're actually going to have two guests.
Great.
Because it's so interesting. And I got so into
there's
the
so much
peptide
there.
world. Our first guest is Jasmine Sun. She is an independent writer covering AI and San Francisco culture. And this is definitely a San Francisco cultural thing. So, Jasmine, you are truly the perfect guest. Thank you so much for coming on Odd Thoughts.
I am so excited to be here.
So, first of all, why don't you just tell us a little bit more about what peptides actually are and how they first came onto your radar screen?
Right. So peptides are basically short chains of amino acids. They are the building blocks of proteins. They're peptides that are naturally occurring in the human body. So, for example, oxytocin, like you have right there, we produce it during pregnancy when you hug somebody, hug your partner, hug your family member. But there are also synthetic peptides that are manufactured in labs, or people can take these peptides that already exist in the human body and inject extra of it if your body, say, doesn't produce enough. So insulin, for example, is an example of a peptide that's been used, obviously, to treat diabetics for a very long time. So peptides are actually a very broad class of drugs, but I think the interest in more experimental peptides and within biohacking communities and things like that has really exploded in recent years. I would trace it to basically the boom in GLP-1 use. A lot of folks who I spoke to over the past few weeks who have been experimenting with peptides and injecting them themselves first started getting comfortable with even the idea of injections, which were previously seen as a bit intense for people.
Yeah, you're injecting yourself with drugs. That has certain connotations.
Right. But I think that GLP-1s and Ozempic and Wegovy were what really popularized it and made people comfortable. So it first came on my radar, aside from the GLP story, because I started seeing tweets that I'm sure you guys have seen too, all over SF Tech Twitter about how everybody has a Chinese peptide dealer now. I thought this was kind of a joke until I started mentioning it in conversations, and I realized that my friends were on Chinese peptides. They were like, wait, Jasmine, are you not on these? They're amazing. I got to get you on these peptides. I got a dealer. I got my guy. And I'm like, what are you on about? And I think the first one that I heard about people using, which is the most popular that I have since heard, is retatrutide, which is what some people call a GLP-3. So basically, GLP-1s are through the FDA process. People are something like 12% of Americans, depending on what survey you look at, are using them. But there are now next generation weight loss drugs that work on not just the GLP-1 receptors, but also the GIP receptors and the glucagon receptors to encourage even faster weight loss. And these GLP-3s, like retatrutide, are still in phase 2 clinical trials. But because people have been watching this space, they're seeing really good results in those clinical trials. Some folks have thought, okay, let me go straight to the source. I'm going to find a Chinese manufacturer that makes retatrutide for cheap, and I will import them at a low cost of maybe $100, $200 a month from one of these gray market suppliers and use them myself for weight loss for 1/5 of the cost that I was getting my prescription Ozempic at, or something like that.
I promised you this was a supply chain episode.
This is already great. Obviously, we want to talk more about peptides. That's what we're here to talk about. But I actually just want to back up one second because you're a San Francisco culture reporter, among other things, and you write great stuff about AI and communication, all that stuff. One thing I think about a lot these days is that we all know that people in San Francisco really have a very big influence on all of our lives, right? Because they design the digital products that essentially constitute what makes modern living distinct. But one thing I feel like, and I struggle around my articulate this, all of these other things that are part of the contemporary San Francisco lifestyle, whether it's sort of like believing in AI doom scenarios, et cetera, it's like weird cults that they form. Like, to some extent, this is such an important beat that you're on because we are all living in the shadows of what has going on in these people's brains, right? Like these ideas that they think about body hacking and so forth, they become the sort of like consumer products and so forth that everyone just sort of uses without ever thinking about like some of the philosophical gestalt behind it all.
Totally. I mean, I think that's totally right. That's why I love the San Francisco beat. I've sort of collapsed it too. Like, honestly, I just report on San Francisco, whether that is, in the beginning of 2025, a lot of it was about the young tech right. And why did that happen? It's about AI, all the weird sub-ideologies from AI doom to the successionists who actually think that AI has a moral duty to replace the human species because they're superior to us. There are all these weird strains of thought. And I think SF, especially this year, increasingly prides itself on sort of being the place where the future comes first. They've sort of re-embraced that identity of like, we're going to have funerals for AI models that we miss. We are embracing robotaxi abundance with Tesla robotaxis and Zooxes and Waymos. And we're going to be the ones to trial this stuff first. I'm going to a peptide rave this Saturday with a cyberpunk dress code.
Sounds very San Francisco.
It's very San Francisco. There are underground robot fights that I'm sure you guys have seen videos of. But I think San Francisco is really leaning into its identity these days of we're kind of going to be the place that is not sort of suffering under the regulatory decelerationist burden that's plaguing the rest of the Western world. And we're going to embrace the frontier. And I think peptides are part of that. It's a signaling thing as much as a health thing.
Well, okay, speaking of the tech community, is it true that something like oxytocin, it actually improves your eye contact? And the way I heard it was this could be helpful for people who are in tech and maybe aren't that sociable.
Oh my God. Yeah. So the oxytocin is the only peptide that I've personally tried. I think I first heard about it because Will Depew, who's like a young AI researcher at OpenAI, tweeted about it as, I think nasal oxytocin is going to be Ozempic for autism, which is an incredible line. what the hell is this? And it's been tested on people with Asperger's to help improve, again, those feelings of social connection, empathy, warmth that comes as a nasal spray you can get for $50, $60 off Amazon or something. So I also, like you, Tracy, when I tried it, I didn't think it worked, but my friends did insist that I was a little bit friendlier than I normally am. And I was, in fact, making more eye contact. So maybe
we're going to have to do some experiments here at All Thoughts and just have a bunch of conversations where we're on and off the oxytocin and see what happens.
We got to try. I really could have used that in college. For sure. So there's all kinds of ones, right? So, okay, GLP-1's weight loss. This one supposedly helps you with eye contact and connection. What are some of the other things that people are using peptides for?
So aside from the GLP-1s and the GLP-3s, which are the most popular, there are all sorts of peptides. They are a really, really broad class of chemical. So the most popular other than that is BPC-157, which supposedly helps with muscle healing and regeneration. So after a really hard workout, that one has been experimented with in bodybuilding communities for many years. So there's all these crazy bodybuilding forums where people are playing with this stuff and human growth hormone and things like that. There is melanotan, which supposedly increases melanin production in the skin. So I talked to a founder, a CEO of a unicorn logistics company who told me that his first peptide was melanotan because he hated being a ginger. He had always wanted to stop being a ginger, so he cured it by taking this thing that increases your melanin production and makes you tanner. Another person described it to me as the hot, horny, and tan peptide. So that one, for those who aren't getting enough sunlight, shut in an office, maybe that's your pick. There is epitalon, which folks have credited with improving their sleep. There's CMAX, which people believe helps with their anxiety. To be clear, most of the peptides, aside from the GLPs, have not been in any human trials whatsoever. So a lot of this sort of comes from anecdotal evidence and people experimenting rather than from like FDA approved or like RCTs. And some of these, only have animal trials or cell culture in vitro tests.
Yeah, I wanted to ask you about this actually, because my impression is peptides, there's not much profit to be made from them for the pharma companies. And so it's just not worth it to them to actually test on humans. And yet they're still commercially available.
That is one of the stories I heard because, I asked, well, GLP-1s have been so profitable. So why aren't people trying to push through FDA trials these other peptides that people have been crediting with like transformative health improvements or whatever. And the story I heard is that because peptides are these very small, very basic chains, they're too commoditized, basically, like at the point where these Chinese factories are able to, without a ton of like extremely advanced scientific knowledge, be able to manufacture them en masse. No company is going to want to invest like 100 million, $1 billion in getting it through the like excruciating FDA trial process. And so that sort of left peptides in this gray market environment where people are saying like, okay, like I might as well go import this stuff from China, maybe get it purity tested myself. It's going to cost a few $100s in total. And let's just see.
Yeah, let's talk about that, because I don't love the idea of sticking myself with needles, but then also I don't love the idea of like sticking myself with needles for some random thing that came from a factory.
Or having a dealer, right?
Yeah, like
that has certain connotations.
My thing. And I want to get into the legal aspects of all this as well. But yeah, talk to us about I guess just the comfort that people have with, frankly, injecting themselves with chemicals that they probably have no idea what's in there, can't verify it, or have no idea how the quality of the lab in China that they're getting them from.
Yeah, I mean, so I've interviewed probably a dozen plus people, peptide users in and around the tech community over the past few weeks. And I will say that almost everyone I spoke to, I'd ask like, hey, are you scared? Are you worried? Did you have to like get over a mental hump with this stuff? And most of them would tell me, you know what, like I have a higher risk tolerance than most people.
Yeah.
I think this is something that, say, startup founders in particular really pride themselves on. And a lot of these people were startup founders, right? They think I'm the kind of person who is willing to take risks. I'm the kind of person who doesn't really need to wait until I'm given permission to do something, whether that's by a regulator or by some boss. I can sort of study up in my own way, and that's good enough. So like, I think people were they were very comfortable telling me there is some risk. I know that there have been some negative side effects, but you know what? I keep a journal every day. I have friends who have used it. I'm going to suppliers that are showing their testing certifications from top peptide testing firms. And that's good enough for me, even though I wouldn't recommend that everybody do this. But you're right, Joe. This is a legal gray area. Some people would even say black market. So use of the vast majority of these peptides, particularly the non-GLPs, no human trials, no FDA approval, whether for pharmaceutical use or for use in compounding pharmacies, which GLPs have been somewhat approved for. What that means is that it is an illegal gray area because they're also not on DEA lists. So they're also not in the sort of illicit drug list. It's sort of we don't know. And so one funny thing that people joke about is all of the vials for these peptides will say for research use only.
Right.
Because
everyone's conducting peptide research, apparently.
Exactly. So these Chinese manufacturers, what they are allowed to do is to ship peptides around the world for research use, for scientists, for medical researchers, for bio researchers. And so as long as you're not saying it's for human use, you don't have to prove a certain level of purity standard. You don't need necessarily a factory that follows CGMP protocols, which are an FDA approval to know that a factory meets certain quality standards. But again, research use has a lower bar. So people are basically importing the peptides for research use. And then what they'll sometimes do is then ship it separately to purity testing firms. So they're different ones that people trust and don't, located in the US, located in Europe, but they'll basically take their batch of peptides that they got from the Chinese manufacturer, take a few samples, ship them off to a testing site, get a certification that it's pure or it's impure, and then they will go mix them themselves. Certain suppliers will basically serve as the American middlemen. They will be US-based companies that will negotiate with the Chinese factories themselves, sort of figure out which ones are trusted by running purity tests on like 10 different Chinese factories they find, pick the one that they trust the most, and then sort of offer their brand's guarantee of running the purity testing process for the US buyers. And so like it really depends on people's risk tolerance. I've spoken with people who are going direct and literally just being in contact with the manufacturers themselves. I've also spoken to people who have said, I'm willing to use this US middleman supplier that my friends are all using and say is legit and is providing these tests and certifications, but I'm not going to go straight to the factory.
Talk to us about the info sharing a little bit more, because this is one aspect of the peptide community, I guess you would call it, is everyone is sort of sharing maybe their personal dealer, personal supplier, and also info on their personal experience with efficacy.
Totally. I think the sort of epistemology of the space is super interesting because it's very word of mouth based, very anecdotal. And I think it is rooted in a growing distrust of the medical establishment and established sources. So people are sort of embracing this do your own research. So I would say that quote unquote bro wellness influencers like Joe Rogan or Andrew Huberman have both talked extensively about these peptides to their very wide audiences. So followers in those communities are learning about them. There's a lot of word of mouth, for example, at certain gyms, trainers and people who train together will be sharing their peptide stacks. One of the folks who I spoke to learned about the peptides at Less Online, which is a rationalist conference that happens every spring. There was a GLP-1 session that she went to. She then discovered this person that everybody else was on retatrutide instead. And they all decided to tell her, hey, we're all still alive. So like, you should get on this. There's less wrong posts on the rationalist forum describing people's day-by-day experiences with peptides. There are amateur Substack blogs. There are very shady Telegram and Discord groups where people are advertising their suppliers. Though honestly, I think I would not choose a supplier off like a Telegram or Discord group personally, but it is kind of the Wild West out there in terms of information. And most people are really just going off social proof and the people that they personally know.
You know, we did an episode a while back about Adderall. And of course, a lot of people who are, you know, work in front of a computer feel that they can get some edge on Adderall. Is there like a level of competitiveness, though, in the culture such that you feel like, look, other people are, maybe they're more locked in, maybe they're better at office politics or maybe better at pitching a VC because you know, they've got where people feel like they have to be on these, or they feel like they have to optimize their peptide stack so that they can compete and sort of be at their best.
Oh, yeah, absolutely. I mean, one of the YC founders I talked to, she literally said, it's another thing I can optimize just like my SEO. Yeah. She runs a SaaS business. That's her day job. Or another thing that somebody in these communities told me is these people, like, sometimes they're not overweight. In fact, a lot of the time, these folks are not actually overweight. And the reason they're taking, say, retatrutide or a weight loss peptide is because they want to eliminate the food noise so they don't have to take a break for lunch. They can just be locked in for 16 hours straight. Or like, why do you have to go to the gym, which is going to, you know, drain your ability to run a few more experiments or whatever, when you could just be taking one of these? And so I think there is a lot of this optimization ethic that is driving people's desire. Another piece that I'm sort of thinking about is whether the looks maxing trends, you know, have impacted Silicon Valley as well. So one of the founders who I spoke to who was using a weight loss peptide mentioned that she watches YC launch videos and she realizes none of the founders are overweight anymore. And I'm going to have to be on video if I'm a founder. I'm going to have to go on podcasts. And I want to make sure that I look my best. So I do think that these sort of optimization trends are impacting peptide use as well.
Yeah, this is something we've discussed on the show before, but this idea that looks maxing is going to become more important as information gets commoditized or the knowledge economy gets commoditized via AI, then your only edge is going to be basically what you look like and how you interact with people. By the way, I'm a big fan of no lunch in the office. Joe knows this. Yeah. I refuse to eat like the sad salads that cost $20 over here in New York. I find it's better just to save my calories for like a really nice dinner. But anyway, talk to us about how you see the future of peptides kind of unrolling, because it does seem to be, it's kind of a weird thing where these are becoming more popular. And presumably we're just at the beginning stages of people hearing about this and more people consuming them. But there's little to no sign of FDA approval or these becoming sort of, I don't want to say legalized because they're in this gray market area, but made official in some way.
Right. It's hard to say. Everyone I spoke to, whether suppliers or doctors in California, definitely said that they saw peptide use booming this year. I've been seeing more news in mainstream newspaper outlets about personal peptide use. I think that peptide use is going to explode. I mean, as soon as people realize that I can be paying $200 for the same semaglutide that I am currently getting for $1,200, I find it very hard to imagine that that is not going to explode. There are TikTok influencer niches telling you how to mix the bacteriostatic water with the powdered stuff in the vials and how to inject it if you've never done it before. As for the policy environment, I think it's hard to predict. Last year, RFK Jr., the Secretary of Health and Human Services, said that he would end the Biden administration's war on peptides. He sort of has embraced these take your health into your own hands, like experimental therapeutics. At the same time, there hasn't actually been action so far this year by the Health and Human Services Administration to bring peptides into a more legal zone. So while RFK has signaled that he will, there hasn't been policy action yet. I did reach out to the HHS and the FDA for comment, and they said that they cannot predict future regulation, but that they are actively revising the list of bulk peptides that are allowed for compounding and compounding pharmacies. So sort of classic, we don't know, maybe looking at it language, but folks in the peptide community are really hoping to see a more, at least laissez-faire regulatory stance where they're not going to be shutting down these peptide suppliers.
Jasmine Sun, that was absolutely amazing. You were truly the perfect guest to talk about the intersection of peptides and San Francisco culture.
Selling you a future where you're obsolete, or worse, identical. At Palantir, they're witnessing something different and revolutionary. From reindustrializing the nation's defense base to shipyard workers building faster and frontline workers boosting productivity, AI is transforming work across the nation. AI is not replacing American workers or flattening them into conformity. It's unleashing what makes each one irreplaceable: their judgment, their craft, their creativity. When American workers become more powerfully themselves, they own the future. Palantir, making Americans irreplaceable.
You can get the news whenever you want it with Bloomberg News Now. I'm Amy Morris.
And I'm Karen Moscow, here to tell you about our new on-demand news report delivered right to your podcast feed. Bloomberg News Now is a short 5-minute audio report on the day's top stories. Episodes are published throughout the day with the latest information and data to keep you informed.
Yes, there are other products like this from a variety of news organizations, but they usually rerun their radio newscasts throughout the day. That's not what we do. We create customized episodes that can only be heard on Bloomberg News Now.
And we don't wait an hour to publish breaking news. When news breaks, we'll have an episode up in your podcast feed within minutes, so you're always getting the latest stories and developments.
Get the reporting and the context from Bloomberg's 3,000 journalists and analysts who are all over the world. Listen to the latest from Bloomberg News Now on Apple, Spotify, or anywhere you listen.
So, Joe, Jasmine did a great job of introducing us to the peptide space, about which we don't really know anything, but I think we need to talk to someone who's actually in the business.
Yeah, this is one of those stories where it's obviously a cultural story, but it's also a supply chain, regulation, marketing standpoint, which is like, where are they all coming from? How are they getting them? And for me, it's like, how do people have any confidence like what they're literally injecting into their bodies?
Right.
Where is this coming from?
So I have the perfect second guest. We're going to be speaking with Zach David. He is the managing partner of Persec Technologies, which runs Peptide Partners, which is a supplier of peptides. So, Zach, how did you get into this space? Because you've had an interesting career path.
Right. I got into this space basically solving the problem for myself. A few years ago, my health was very poor, and I started working with a specialist in the wellness and longevity community and functional medicine. And I noticed the peptide therapies that she was prescribing were highly effective, but also extremely expensive. So then I started doing a little supply chain sleuthing of my own and found a much better solution to that. And the question that she asked was, do you think it would be legal for me to do that for my patients? And the answer is, of course, no. But that set off a 14-month investigation on how to bring that into the legal market, which is what we're eventually working on.
Why don't you tell us just sort of the basics of what you do? What is the service your business provides?
So very similar to what I went through. A lot of these peptide therapies are either multi-year or lifelong, and they exist, and people are going to Chinese peptides to find cheaper solutions. And so we started pushing for independent testing, for endotoxin screening, for heavy metals testing, which the incumbents in the industry were not doing at all at the time. And now pretty much everybody is.
So I have so many questions already, but how do you actually go about finding a supplier for a particular peptide? Because I imagine, you're dealing with people who are all the way over in China. There's probably a lot of different companies to choose from and not that much information out there about them. How do you even begin to go about doing this?
There's a good mix of how to find them. A lot advertise on, say, TikTok, or they'll find you on WhatsApp. They will hunt down your website and then introduce themselves as suppliers. And so we go through a long vetting process. By some estimates, there are 10 major manufacturers. There are a handful that manufacture in-house. And then there's something called lyophilization, which is kind of like the finishing step that puts it in the bottles. We're just constantly talking to new potential suppliers, and we'll give them a try. We'll send everything out for testing. And the labs that we use are based in the US that follow USP standards and FDA guidelines, which is a little bit different than some of the more popular testing labs that are overseas.
Okay, talk us through the step-by-step. Okay, you find a supplier based in China, you like them, whatever, etc. Where does it arrive when it gets to the U.S.? Does it go to the lab first? Does it go to you? And if it goes to you, what percentage of vials or what percentage of whatever is actually checked such that you can say, okay, this is a good batch?
Right. So we randomly sample from, say, we order 1,000 vials, we'll randomly sample between 3 and 5.
Okay.
And if the variance in the quality is very tight, then we consider that a good batch. We famously throw out batches we don't consider up to our standards. And sometimes we'll post pictures of us dumping it in the trash on Twitter, which gets us a little cachet. But it's not fun to dump money in the garbage, but sometimes you have to do it.
Can I just ask about the sequence of the chain, in particular, because it is a peptide? What is the type of storage that it has to be involved in, from the container on the ship to the dock? Is it a temperature type thing? How do you ensure that sort of quality doesn't degrade during the shipping process?
Yeah, it's a great question. If you were shipping very large amounts, you would want a cold chain supply the entire route. However, the lyophilization process keeps things shelf stable for quite a long time. And recent studies have shown that it doesn't degrade as fast as people initially thought. So when we use commercial grade freezers, as soon as we get it in, and then we'll label the vials, and then we'll randomly sample.
Tell us more about the manufacturers in China, because I'm having a sort of hard time wrapping my head around who they actually are. So I take it most of them are not big pharma offshoots. They're sort of independent manufacturers. But how are these companies actually, I guess, coming into being?
Yeah, so there's an interesting mix of what are the gray market manufacturers and, well, let's call it the lit market manufacturers. There are a handful of $10 to $15 billion publicly traded companies in China that do contract manufacturing, but they only sell to FDA supply, like FDA registered companies with supply chains. The major gray market labs, they only sell to other companies within China who then finish it with the lyophilization and then sell directly to the consumers.
And what's the actual material that makes up a peptide? When we're talking about peptides, like what are the building blocks of a particular, I get a vial in the mail. What is it exactly?
So the FDA definition is an amino acid chain of 40 or less. That definition was added to the Federal Register in 2020. And it is no surprise that things like semaglutide, otherwise known as Ozempic, Mounjaro, otherwise known as tirzepatide, and the next generation that everyone is currently using called retatrutide, all happen to be exactly 39 in length. So I think there was some clever lobbying, but also things less than 50 tend to be very stable, unlike larger proteins, which tend to fold in on themselves. And the manufacturing process called solid phase peptide synthesis is almost a solved problem.
But how do we actually make amino acids?
That is a good question. I would have to follow up with you on that. Some are naturally derived and some are synthetic. the resurgence in peptides from its original heyday is partially due to synthetic amino acids.
Just talk to us about law and regulation. What is the stance of these things? I actually still don't totally understand. Are they legal to be sold? I don't know what this term gray market means, et cetera. Just walk to us about how the government, whether we're talking criminal authorities or just FDA type authorities, think about these things right now.
So the guidance is very careful. There has to be a lot of disclaimers about not for human use on anything sold for research purposes. Doctors can prescribe them. For example, there's one called sermorelin, where it was abandoned by the manufacturer for economic reasons, not for safety reasons, in around 2008. But you can get it from compounding pharmacies in the United States. And so doctors it was formally FDA approved. However, things from compounding pharmacies do not undergo the same safety standards, but doctors will still prescribe stuff like that. The FDA, I think, how should we put this? When it's for research use only, and you're legitimately selling for research use, it does not fall under there.
So a lot of people are conducting peptide research in the comfort of their own homes.
Yes, as I'm sure most Odd Lots listeners are aware, the market for micropipettes is growing 8% year over year, projected through 2030. So I do believe that a lot of people have the home labs. Yeah.
Wait, micropipettes? What are we?
Yes.
Little pipettes.
What is that? Oh, that's like a little thing to extract some liquid? Is that what we're talking about?
Yeah.
So this is our proxy for peptide consumption, is the booming market for micropipettes.
Is the booming market for micropipettes.
I'll take it.
It's a little tongue in cheek, but
No, but this is useful. It's like, okay, like if we see this thing rising, then intuitively this is what they're using for. So in your marketing, what do you have to say, such as that you don't run afoul of people in DC or wherever?
We have strict terms and conditions for research use only, labeled on the boxes, labeled on the vials, labeled on their website. We do not even use the term dosing. We only talk about sample sizes, and we are very, very, very pro-research. But there is a big movement of people who self-organize in Telegram and Discord communities who are experimenting on themselves.
Longtime internet friend of the podcast, Chairman Burb.
Oh, yes.
I saw she had a Chinese peptide rave in San Francisco this week.
Yes.
Were you there, Zach?
Yes, we sponsored it. It was nice. We had a great time. She's a very, very, very good friend of mine.
I'm guessing that's the same one Jasmine went to, probably.
I assume.
Unless there are...
I don't know, San Francisco. Could there be 2 Chinese peptide raves in one weekend? It would not surprise me at the slightest.
So, Zach, how do you actually decide which peptides to stock? Is it whichever ones are getting the most buzz on TikTok? Do the manufacturers approach you with new things that they're making and then you test them out?
That's a very good question, because the formularies change a lot. Although between the manufacturers and the suppliers, they do have very, very similar formularies. The ones who deal with the controlled substances and anabolics, we tend to stay away from. But the ones that we stock, we look for good safety profiles in humans. Unfortunately, for almost all of these, there are not a lot of good randomized control trials, but a lot of them have good safety studies in humans. But so certain things, like there's a popular one called AOD 9604, which has not had a successful human trial ever. And so we just decided not to stock that for ethical reasons.
Okay, so we know that in theory, well, we know more than in theory, that the most famous peptides can curb your appetite and therefore facilitate weight loss. Tracy had a little thing of a spray that ostensibly helped autists make better eye contact, which is, of course, a valuable skill if you want to live in human civilization. What are some of the other popular, what are the other things that people are consuming peptides? Are there any that might surprise us?
So there is a class called growth hormone releasing peptides or growth hormone stimulating peptides. They have very short half-lives. Rather than like HGH replacement therapy, like human growth hormone replacement therapy, which will eventually cause your body to naturally stop producing its own, this class works with your pituitary to make like an impulse and release some growth hormone rather than replace it. So that would
be good for like weightlifters or bodybuilders or anyone who just wants more strength, or that what we're talking about?
And and it's also been increasingly prescribed by physicians for improved sleep as well.
Could use that.
Why don't we manufacture peptides in the US? How is it that China seems to dominate this particular market?
That is a great question as well. I believe it's the input materials and the labor and expertise required to engineer it. What happens is a lot of the raw materials are produced in China, and then over here they're finished in facilities like doing the lyophilization and purification steps by compounding pharmacies.
Okay, everyone who uses these, they have to inject them. Is it all needles and vials?
Mostly at this time. However, we've seen an increasing amount of oral formulations. The problem is because these are small molecules, the digestive system breaks them down very quickly. So creating reliable oral formulations for peptide therapies has been
This is the Michelle Hussein Show. I'm Michelle Hussein. I speak with people like Elon Musk.
I think I've done enough.
And Shonda Rhimes.
Oh, that's so cute.
This will be a place where every weekend you can count on one essential conversation to help make sense of the world. So please join me, listen and subscribe to the Michelle Hussein Show from Bloomberg Weekend, wherever you get your podcasts.
You certainly ask interesting questions.
How do you reduce costs in this space? Is it buying in bulk from a particular supplier or, I don't know, finding cheaper manufacturers of vials and the ionization process?
Lyophilization.
Lyophilization.
It's just a fancy word for freeze drying.
Okay, all right. Yeah. The freeze drying process then. That's easier.
Right. Yeah. So it is buying in larger and larger quantities. One of our manufacturing partners over there, they created a novel method of being able to produce large quantities of raw materials. And the next step in our company's evolution is going to be buying a manufacturing facility and starting to do that finishing step here and slowly over time bring this above board and fully FDA compliant.
Am I stupid for not using peptides? I work in a very competitive industry. I have a very demanding schedule. I have 2 children. I'm 45, and so I'm at the second half of the curve where my body is getting a little deteriorating and getting a little bit closer to death each day. Like, am I stupid for not tasting the fruits of advanced science?
That is a question between you and your physician.
Okay. That is a very smart answer. Do you feel that it is an important element of your ability to thrive and compete, your research into peptides?
I do. I like them a lot. I've noticed a lot of good changes, especially my health, my energy over the years. But I also do work closely with a physician and under the care of one.
Can I ask you a little bit about marketing? How do people discover your company?
How do people discover? So let's see. Word of mouth has been great. Several influencers have written about the cost effectiveness of our product. And then there's a website called Finric, which has started to offer this wonderful service where people can send in vials from anyone that they buy from off any of these research use only sites. I think they've covered over 140 companies now. And we've started to take number 1 slots on their site just left and right. So I think we're doing something a little bit better than everyone else.
So people are crowdsourcing a lot of the research and reviews. And also, I guess you hold peptide raves, right? That's a marketing thing.
That was once. It might happen again. I'm not much of a dancer, but I did field some questions.
Something that sort of works a little bit like human growth hormone. I get it's very appealing. Weight loss, again, concentrate. Are there any surprising peptides? What's the most unexpected thing that a peptide might, in research, suggest could benefit someone?
I don't know if I should say this out loud.
Yeah, that means you definitely should say it out loud.
Yeah, okay. Well, there is one peptide that goes under the name PT-141, Its brand name, it's actually an FDA approved one. It's called Vyleesi, and it is meant for low sex drive.
That's completely legitimate. Nothing wrong with saying that out loud. For men and women?
Okay. It's meant for women, but according to people that who have told me, it works for men as well.
Many people are saying, what's the customs process actually like for this? Because I imagine, customs is a pain at the best of times. And I imagine for something like this, it's potentially even more complicated. And then also, have you been impacted by tariffs at all?
Yeah, it was really fun to see the first time a UPS driver ask for cash on delivery since like 1998. You know,
why is
remember cash on delivery? That was when tariffs first came back, and no one really knew. No one had the infrastructure to charge in advance. Now they'll let you know, hey, you're gonna owe $30 here, $60 here.
There's like an online payment portal too, right? It's not.
But originally there wasn't. Yeah. The driver showed up and wanted a check.
It's interesting. This PT,
it was crazy.
I'm reading about this PT-141. So unlike Viagra, which famously opens up blood flow pathways, this one, its method of action is actually to increase the underlying sexual excitement itself, which is sort of different. Anyway, it's interesting.
I have heard that it works.
You've heard that it works.
Yep. I don't have any experience with it, but I've heard that it works.
Wait, so what does the customs documentation actually look like? When the stuff arrives at a port, what forms are you filling out?
They're fun. They're half in Mandarin, so it's a little difficult. But...
Well, scan it, ChatGPT, we're fine. Language doesn't matter these days.
How long do you think it's going to take, if it happens at all, for these sorts of peptides to become, as you put it, above board in the U.S.?
So there's an interesting history there. So the most popular ones, basically in September 2023, we call the peptide Armageddon. About 20 of the most popular ones that were prescribed by doctors in the wellness and longevity community were put on this, what's called the 503A banned list. And they banned the prescribing of, or the compounding of certain peptides. And according to my physician, it was not for particularly good scientific reasons, but the explanation that they give is that it can trigger immune responses, the adverse immune responses.
Last question for me. Has there been any change in D.C. since the changing of the administration in terms of either at the FDA or otherwise?
So I go through all of the enforcement letters that so you can go on the website and you can see every enforcement letter and every warning letter that they send to every single website. And I believe the last one ever sent was December 2024. So there has not been a lot of enforcement.
Yeah, that's a pretty big hint. All right, Zach, we're going to leave it there, but thank you so much for coming on Odd Lots. That was super interesting.
I'm such a huge fan of yours. It's been great.
Thank you.
We're going to use that in the sizzle reel. Thank you so much, Zach.
So, Joe, that was really interesting.
So interesting.
Fun episode. Obviously, it intersects with a bunch of Odd Lots themes, primarily competition with China in the biotech space and also supply chain issues and medical regulation.
Are we going to see the White House adopt a industrial policy to wean us off of our dependence on China for experimental peptides? Does anyone talk about that?
What I was about to say is actually, we've talked about this before, but you could envision a world where knowledge becomes very commodified because of AI.
Yeah.
And so everyone's competitive edge is basically what you look like, how you present yourself and interact with others. So maybe in that economy, peptides have a lot of value.
Absolutely. I could totally see it. The way I think about that question is we don't even need to talk about AI in the sense that we are already on this path, right? People have been looks-maxing prior to the invention of chatbots. People have felt ever since maybe since the iPhone or maybe since Instagram, et cetera.
Looks
all
have
of this
always
pressure.
mattered, but I think we're at a sort of different point. Yeah.
No, what I'm saying is this already feels like it's accelerating some of these trends. Absolutely. Looks have always mattered. People have always been anxious about their weight, etc. But it does feel like this pressure is just building where everyone is thinking about these things. Everyone feels very competitive, all of these things. And everyone is open about how competitive
Very
they are about
open.
these things.
It's kind of surprising.
Yeah.
Right? There was a time when people didn't talk about things like their plastic surgery, but now it seems more transparent than it used to be. The other thing I was thinking about just in terms of regulation, I mean, it's notable that it's a gray market, right? As we described. And ostensibly, everyone is doing peptide research in their basements. And that's kind of a joke, right? But on the other hand, it's not really a joke because what we're doing is kind of outsourcing human trials, I guess, to like citizens who are opting in. They're the ones opting in to test these new treatments.
You know, it's interesting. We did that episode with D.A. Wallach, and he talked about how we could have a model of sort of market for pharmaceuticals and therapies in which the only thing required to sell something is the safety trial. Because right now, for any therapy, we do safety and then efficacy. But it is you could argue that really the only thing that should be required is a safety trial, and then it's up to the consumer or whatever. I think you could make that argument that then it's up to the doctor and the consumer together to decide, is this worthwhile given the price of what we know about it, et cetera. But what it feels like to me is we're sort of entering this era in which, regardless of what the formal law states or what regulations state, there is a cultural move towards letting people experiment as they want with things that, by and large, it doesn't sound like there's much evidence of particularly harmful, dangerous with a lot of this stuff. Maybe
no one has died from peptides that I know.
As far as I know, I haven't seen that, et cetera. And so it feels like we're sort of, this is part of the hacker culture. It's like, okay, there's probably not much danger, I suppose, but what it does for you, that's on you to figure out.
All right. Thank you, everyone who is experimenting with peptides. You're doing it for the greater good, I'm sure. Shall we leave it there?
Let's leave it there.
This has been another episode of the Odd Lots podcast. I'm Tracy Alloway. You can follow me at Tracy Alloway.
And I'm Joe Weisenthal. You can follow me at The Stalwart. Follow our guest Jasmine Sun. She's at Jasmine New Sun. And Zach David. He's at Zach David. Follow our producers Carmen Rodriguez at Carmen Armin, Dashiell Bennett at Dashbot, and Kale Brooks at Kale Brooks. For more Odd Lots content, go to Bloomberg.com/oddlots. We have a daily newsletter on all of our episodes. And you can chat about all of these topics 24/7 in our Discord, discord.gg/oddlots.
And if you enjoy Odd Lots, if you like it when we talk about the peptide supply chain, then please leave us a positive review on your favorite podcast platform. And remember, if you are a Bloomberg subscriber, you can listen to all of our episodes absolutely ad-free. All you need to do is find the Bloomberg channel on Apple Podcasts and follow the instructions there. Thanks for listening.
a busy past 72 hours. Of course, we just mentioned the Bank of Japan wrapping up what has been a busy 72 hours for central banks, but then also for economic data releases, as we were just mentioning there. And that softer than expected delayed CPI print that we got from the U.S. really still digesting for investors, and some of the questions still looming about how much weight to put on some of the data that we did get. Let's take a look at U.S. equity futures trading marginally higher right now. Notably, though, we should point out that S&P E-minis are in the green after ending a 4-day losing streak. We had talked about some of the concern around tech valuations in the AI trade earlier in the week, but we did actually see the S&P closing in the green on Thursday. Micron also helping to bolster some of that sentiment with its best day since April, closing up more than 10%. We also have the U.S. 10-year yield right there up, about a basis point there. Notable because after we did get that CPI print on Thursday, we did see yields pulling back ever so slightly. So we're watching closely where that goes. Right now, the U.S. 10-year yield at 4.1412 there. Dollar yen also, of course, in focus. The yen extending losses against the dollar after we did get that BOJ decision earlier today. We still are awaiting Governor Ueda's press conference later on today. But right now, it's notable to just see where we are at right now at 156 right there. Of course, extending some of the declines that we've been seeing for the yen. And really quickly, let's just bring you Brent crude, headed for a second weekly loss despite some of the tensions earlier this week between the U.S. and Venezuela. Brent crude down now just over 0.1% there to trade below $60 a barrel there. And we've actually seen Brent slipping more than 2% this week. Let's just zoom in, though, quickly on that delayed CPI report that we got out of the U.S. One analyst describing it as one of a kind. And despite some very suspicious holes that we did get, notably in shelter costs, there was enough that we did get in this report for the doves to shift yields lower, as we mentioned. But still, the question is, now that we have seen a bit of retracement in the Asian session, clearly there are some doubts about the quality of the data, especially given that this was coming at a time during the shutdown in the U.S. Now, let's just stick on this story. Underlying U.S. inflation rose in November at the slowest annual pace since early 2021. Meanwhile, the core consumer price index grew 2.6% last month from a year ago. But the report, which has been described as, quote, Swiss cheese by some analysts, comes with some credibility issues. That's due to the lengthy U.S. government shutdown, which limited officials' ability to collect data. Joining us is Anita Krishnagupta, CIO at WealthBricks Capital Partners. Anita, thanks so much for joining us. We just mentioned some of the descriptions that we are getting for this data print there. But, some people are noting that potentially this print does signal some genuine easing of price pressures. I wonder what, if anything, it signals for you.
Good morning, Jennifer. Absolutely right. You can describe it as Swiss cheese, but the trend is downwards for inflation, whether it's driven by shelter rent and, of course, oil prices coming down. So the trend from a 3% coming down to a headline 2.7 and a core 2.6. Now, whether the 2.6 or 2.7, it's still a downward trend. And I think that's what's very important for the Fed to continue cutting rates. While the dot plot shows one cut, more analysts, and we're also in the camp of two cuts. And if we get a dovish Fed governor in May to replace Chair Powell, I think that's definitely going to happen.
So, Anita, when we look forward, then what's your sense of the economic the state of the state of the economy in the U.S. Moving into 2026? Are you confident maybe that it is in fact on a path to stability?
Actually, yes, we do think it's on a path to stability. So, in 2025, tariffs was the word of the year, no longer. I think in 2026, we are actually going to be focused on productivity, on growth. Consumer remains very important. We have had the Fed raise their expected GDP growth numbers for 2026. Now, if we're getting GDP growth in the US at above 2%, that is a pretty good clip. What we are also seeing is any kind of an infrastructure buildup in the US. We are seeing defense spending. We are seeing, other consumer indicators are still strong. We're also talking about, money coming into accounts in the US. Now, that's still a possibility. But every way that we look at it, the US is stable. Of course, there are always, black swans that, could emerge. But it's looking pretty positive with all the data that we have seen recently, inflation ticking down, growth coming up, and of course, the big boost from AI spend and productivity, which is off and on, but seems to be more on the upside.
Right. Anita, I do want to talk about AI in a minute, but I do want to move to the BOJ, our other top story, because you went overweight in Japan in October. Given what we did see from the BOJ earlier today, do you stand by that move? Do you reposition? Are you waiting to hear from Governor Ueda?
No, absolutely. We went overweight. We are going to stay overweight. There's a lot of positives for Japan at this point, and the weaker yen actually is playing very favorably for exporters. So we've had the short-term, hike at 0.75% overnight. In spite of that, the yen actually hasn't strengthened. You've got the 10-year JGB finally at about 2%. You've got inflation, which is a little, still high at around 3%. So real rates are, still, something to worry about in Japan. But all these are pointing towards, Prime Minister Takaichi's, the fiscal stimulus, the boost to industry, and that's going to continue. And Japan remains an industrial nation, and we think that the equity markets there are going to continue to perform well. It's a leader in robotics. It's leader in some of the automobiles, the hybrids. And the weak yen, again, I reiterate, is positive for Japan industry.
Let's stay on that, because we talk about a weak yen, we talk potentially about a weaker USD. What does that mean for your positioning for risk assets moving into 2026?
So we have a fairly clear view at this point. We would never be out of the US in technology. US remains a growth story for us. At the same point, we do have a weaker US dollar. And when we're looking at growth, it's coming from India, it's coming from the UAE. So some of these emerging market economies have very high growth numbers, whether it's India at an expected about 6.7% for the next fiscal year. The last number was 8.2 for the last quarter. You've got the UAE at, over 4.5 to 5% economic growth. So there's a lot outside the US, and the weaker dollar, though the UAE, of course, the currency is pegged to the dollar, but India is not. So the INR has been weak. So it's a mix for us in terms of equities. We would say be diversified. These are our three top, allocations: the US, India, and the UAE. And within fixed income, be like emerging market local currency debt. So that's where the weaker dollar comes into play, because EM currencies this year, EM local currency debt is about 15%. That's been a call for us. We also like steepeners in the US. So these are our favorite plays going into 2026.
Great to get your insights this morning. Anita Krishnagupta, WealthBricks Capital Partners CIO, joining us there in Dubai. Anita, thank you so much for joining us. Now, let's move on to tech. We're watching Chinese stocks related to TikTok after the company signed deals to create a U.S. joint venture majority owned by American investors. An internal memo from CEO Shou Chu tells employees that agreements have been made with Oracle, Silver Lake, and MGX. Let's bring in Bloomberg's Edwin Chan from Hong Kong. Edwin, thanks so much for being with us. So this is a Bloomberg scoop. Give us some more insight into some of the details that we know about this memo.
As you just mentioned, it kind of laid out the key details, much of which actually we already knew about. The Oracle, Silver Lake, and MGX were the main drivers of a new joint venture in which U.S. investors will essentially take 50% stake. ByteDance will retain 20%, or actually 19.9% below the threshold as required by law, and then existing ByteDance backers, some of which include U.S. entities, will take the other remaining stake. And I think we knew the broad contours of this deal. What Shou Chu's memo actually did not go into was how the Chinese side views this framework. And I think since September, when the US president mentioned that he had secured a deal and that China looked favorably upon it, it's interesting that Beijing has still not publicly voiced its opinions on the matter.
Do we know yet, Edwin, what this means for ByteDance? Because this had been an issue and a discussion for quite some time. Where does this potentially leave the company in their oversight of TikTok?
So ByteDance will not be operating the data or the algorithm. According to Bloomberg's previous reporting, what's going to happen is they're going to license the algorithm. This is assuming Beijing is on the same page as the U.S. Negotiators. What's going to happen is ByteDance will license the algorithm to this joint venture, which would then adopt it and retrain it and operate it going forward, including any data that's generated from it, which would be stored in country in the U.S. In terms of ByteDance, they retain a stake. I think we've reported that they will retain also a sizable share of the profit contribution. They will get a large proportion of the profits going forward from this joint venture. It's also important to note that TikTok Global, i.e. ByteDance's international division, continues doing, we think, some of the more attractive businesses such as e-commerce and live streaming and live shopping. TikTok Shop, for instance, remains very much under ByteDance's purview. So it's not like they're completely relinquishing the U.S. market.
Interesting. It's a fascinating story and very massive in the tech world, of course. Edwin Chan in Hong Kong for us, bringing us that scoop. Edwin, thanks so much for your reporting. Now, for a look at some of the other stories we are following today, starting off in Dubai. Dubai police have urged workers and residents to stay home this morning after heavy rain and thunderstorms lashed the UAE. Roads and highways across the city are flooded, and a safety advisory has been issued for motorists and pedestrians. The unstable weather has caused some flight cancellations and delays ahead of one of the busiest travel days for Dubai International Airport. President Trump has given federal workers 2 additional days off this year, closing the federal government on Christmas Eve and December 26. The holiday order is effective for this year, excusing employees from duty for 3 consecutive days unless agency heads determine they need to work. The New York Stock Exchange, though, issued a statement on its website noting stock market hours will remain unchanged on December 24th and December 26th. And U.S. police say a man suspected of last weekend's shooting at Brown University has been found dead at a storage facility in New Hampshire after taking his own life. Earlier, authorities identified the 48-year-old former Brown student as a person of interest in both the university killings and the later murder of an MIT professor in the Boston area. Saturday's attack at the Ivy League school in the state of Rhode Island killed 2 people and wounded 9. Now, coming up, we turn back to central banks. The Bank of England governor warns the pace of interest rate reductions will slow as the central bank approaches the end point of its cutting cycle. We hear from Andrew Bailey next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. The Bank of Japan has raised its benchmark interest rate to its highest level since 1995. Governor Kazuo Ueda and his board hiked to 0.7% 75, sorry, the 0.3% there. Well, hiked after its 2-day meeting, sending yields higher. Joining me now is Bloomberg's Paul Jackson for a deeper dive into this. So, Paul, give us a sense of how markets are reacting to this.
Well, this decision, like you mentioned, it's not quite back to the 1980s, but it's certainly back to the 1990s. This is the highest interest rate since the 90s, 30 years since it's been this high. And we've seen the yen weaken a tad after the decision. And we've also seen benchmark yields rise above 2%. And they haven't really been at that level regularly since the late 1990s. Now, I think at this point we've had the decision out, not much commentary around it. This is a heavily telegraphed decision. All our surveyed economists expected this rate hike. So the yen hasn't moved that much from where it was before. So you could say that for the Bank of Japan, round one has gone okay. But we've got round two to come. That's the press conference of the governor this afternoon. And really what the kind of view he gives about the trajectory of rates going forward is going to be key to how the market responds subsequently.
Right. And Paul, what is the expectation for what Governor Ueda might telegraph, if anything?
Well, I think the message he must convey is that interest rates will continue to rise as long as the outlook is realized for the Bank of Japan. Now, we have two board members saying that the outlook is a lot more robust than the bank overall is thinking. In fact, we've got one board member saying they've already reached a level of inflation in line with the price target. So that would suggest that the trajectory for interest rates is upward. And I think markets will be wanting to get a feel for, is this going to be something every 6 months? Or is it going to be slower or perhaps even faster than that? And I think that Ueda must get through this press conference keeping the idea that interest rates could be as fast as once every 6 months or faster.
Well, we'll wait for that press conference, as we know you will too. Bloomberg's Paul Jackson joining us. Paul, thanks so much for walking us through that. And let's just stick on the central bank bonanza. The Bank of England has lowered rates to a 3-year low in a narrow vote. While the rate cut was widely expected, the dose of caution was not, and that sent gilts tumbling. Governor Andrew Bailey told us room for further moves next year is limited, and the central bank will face closer calls on its decisions.
Well, I've been very encouraged by the progress that we've made on inflation. I've been saying for some time that we had this, what we called hump up this year. I thought it was going to come down, and it has. And the good news is it's actually coming down a bit faster than I think we thought it would. I'm particularly pleased because there's been an easing of food price inflation, which is really very important. I mean, all inflation is important, but we know that food is salient. It's very salient, and of course it hits those on lower incomes a lot as well. I think now that we're on a path where we'll probably be around this level for a few months, but we think that come the spring, April, May time, we should see another quite sharp drop and take us, I hope, to around target. So we're going to come back to target sooner than we thought. So that's encouraging. All of this is very encouraging. And for me, certainly, it was a strong basis to cut today. It's the 6th cut we've made. Now, looking forwards, I do think we'll continue to have something of a gradual downward path. We'll have to judge the evidence, as you know, at every meeting. We'll come back for the meeting at the end of January, early February, and do that. The calls do get closer, but because as we come down, we will approach a level which is going to sort of, in a sense, maintain inflation. It's not going to be too hot or too cold, if you like to borrow that phraseology. It's very hard to know exactly where that level is, but we will approach it. We're approaching that level. We must be approaching that level in a sense mathematically. So the calls will become closer, and I would expect the pace of cuts therefore to ease off at some point. But I'm not going to judge exactly when that is because it's too uncertain at the moment.
And that was Bank of England Governor Andrew Bailey speaking there. Now, the European Central Bank has left interest rates unchanged for a 4th straight meeting as inflation hovers around target and the euro area weathers global shocks. ECB President Christine Lagarde says policymakers will act one meeting at a time based on incoming data.
We reconfirmed that we are in a good place, which does not mean that we are static. There was a unanimous decision that was taken today concerning the rates that we decided to hold, but there was also a unanimous view that all optionalities should remain on the table.
And coming up, oil heads for its biggest annual drop since the pandemic as tankers sit idle with nowhere to offload their crude. We'll bring you that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Angola has secured $753 million in financing to speed up development of the Lobito rail corridor, ending months of delays tied to talks over government guarantees. The U.S. International Development Finance Corporation and the Development Bank of Southern Africa are providing the funds to upgrade about 1,300 kilometers of railway linking the mineral terminal at the port of Lobito to Luau on the border with the Democratic Republic of Congo. Liberia has approved a major rail agreement that clears the way for U.S.-backed Ivanhoe Atlantic to develop an iron ore mine in neighboring Guinea. Lawmakers ratified the deal, giving the company access to a key railway that links the Guinean deposit to Liberia's port of Buchanan. Ivanhoe Atlantic plans to start building the mine in 2026 and begin shipments the following year. And Ghana's unemployment rate rose to 13% in the third quarter, up from 12.6%, creating a new challenge for President John Mahama. Youth unemployment climbed sharply to 34.4%. The increase comes despite signs of economic improvement, including slower inflation, a stronger cedi, and solid growth. And those were just a few snippets of the stories we'll be covering in our monthly show Next Africa.